throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola, V.
How are you?
I'm good.
Oh, you are fired up. You're ready to go.
Well, I've been here for like an hour already. I got up. My schedule's still off. And
From your trip to
from my worldwide trip to Santa Monica. Yes.
the 48 hours that you were there.
48 hours in Santa Monica. Yeah.
Since you left here pretty early yesterday, I mean,
I
you're
had another meeting.
yeah. That's
They
what
were
you said.
installing my all the equipment in the in my coffee shop.
Oh, okay.
You I saw pictures. You changed it, and I don't think you.
I didn't change it. Same. You saw what you saw yesterday was Christy
Pop up like a pop
pop up. She was doing a pop up.
Okay, so this is pop up, and this is equipment.
Oh, she was
Son,
doing a pop-
like so.
Christy
Got
was
it.
doing a coffee pop up.
Because if you do any changes to the space, you have to speak with me. I mean,
Know that.
I do have a vested interest.
I know.
In the
So
space.
what equipment was going in?
Water.
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 What I thought everyone just got hose water.
That's for sale.
Not for free.
That's not for free. That's if you want the free water, got put in.
Do you know how to work any of these machines?
I don't have to.
Okay, but you should still. You should still
It's
know.
got a person.
Right, but
They're still installing everything. So
yeah, but that's
trying to get-
exciting.
Trying to get ready for the Democratic National Convention because since the whole area down here is going to be closed down, for
Your
what
people
they
are going to
say.
move up north by you a little bit.
No, so
Locals.
So I'm on a street with all these breweries. There's like 3 different breweries on there.
Yes.
So what they're doing is they're blocking off the whole street, I guess. And during the convention, because it's like, it's 4 miles from the convention, so there's not going to be any traffic up there. And they're just offering companies can come in and rent out the breweries, the whole street, whatever.
Oh, that's cool.
Oh, so you decided to rent out a brewery for all of us here at Tasty Trade to have a little team bonding?
A little close. I decided to rent out bad coffee.
No, I got that email from Premier 1K JJ who was like, listen here, baby girl. He's like, you too fine to come to work during that week. He's like, you could take the whole week off. I'm like, oh, JJ.
JJ.
So peace out. I will be live streaming
He didn't say-
from the woods somewhere. He said, I'll show you the receipts. He said that I don't have to be here. And that it's mandated and approved. I can't get in trouble.
And
You can't
can work
penalize
from home
me.
if you want to.
I'm going to work from home, but my home might be on an island.
Yeah, I
With
think
internet.
Yeah, of course.
we are probably
I'll still work, but
we're
it's,
probably the closest office building to the United Center, right? Is there anybody
West of us?
west of us?
I think Rush University would beg to differ. Like
Yeah, maybe.
a hospital.
That's
Those are offices.
Are they offices?
Yeah.
Yeah, I'm sure there are.
I mean,
We're one of the, whatever. We're one of the closest for
if
sure.
you're in the West Loop,
Sure, yes.
there's nobody closer than us.
Let's just put it this way. There's not going to be anybody on our roof. That's what, yeah, we're close enough where they're going to say, nobody on your roof, okay?
Yeah.
Not going to happen.
Let's put it this way. It might be hard to get in our parking lot. But,
Yes.
Yeah.
Yeah. So, I'll see you when I see you.
Beautiful.
Good times.
Yeah.
So what else did you do last night?
Forget about us. You got your T minus one more day, and then you're out of here for a week. You become a Swiftie for 7 days. This
Yeah.
true?
All of my dreams are coming true. Please knock on wood that the world holds its shit together for just another few hours. Because we've been going through some unprecedented events, and it's like, of course. So the rumors are true. It is cheaper to see T-Swizzle, Taylor Swift, in Europe than it is for me to see her in Indianapolis, which is physically the closest city to me. I cannot get tickets for Indy, Miami, New Orleans,
Tell it,
Canada.
Walken. You're going to Europe so you can.
I'm going to Germany. So I'm leaving tomorrow. I'm going to Germany.
Play in Chicago?
She did 3 nights, and tickets were $1,800 for behind the stage, not backstage, but you were behind the stage, and I couldn't make it work. But she expanded to 3 nights. I mean, I can tell you my whole lore of trying to get tickets, and I tried in Detroit, and I tried in Cincinnati, and I tried in Philly. I tried everywhere in like a 800-mile radius when she was here in America, and it was no go. But I got tickets, so I'm going to Germany. I've never been to Germany, but I speak German. It was my minor. I'm very excited for the history.
You'll like
and so
you'll like Munich. It's a cool city.
Yeah, I'm very, very excited. So
yeah, it's a cool city.
Yeah.
I mean, it's first of all, it's big, it's modern.
Yeah.
Yeah.
That's very
well said, Tom.
Thank you.
I have a vision now, and I don't think I'll ever be able to.
Do you want me to bring you back like Das Boot?
No. No.
Do you think without being told, you would remember how to drink a yard of beer or a boot of beer without it spilling on you? You have a 50-50 shot.
What do you mean, remember?
Oh, never mind. You would never be able to do it.
I don't.
What are you trying to say?
Well, I assumed that you had some sort of
Home training.
young adulthood where you had some fun in your life and you drank a boot of beer. You talk like you'd been to Germany. Let me backtrack a little bit here.
I've been to Germany. I've been to Austria.
Okay, so I'm assuming you drank some beer while you were there.
Yes.
I
Lots.
probably assumed wrong that you drank like a boot of beer. You know, like
I drank half pint.
half pints. You're
Aw,
so
you're so
ladylike.
dainty.
You really are.
You're so dainty.
Anyway, you have a 50-50 shot. If you point the boot one direction, it spills all over you. You point the boot the other direction, heel up or heel down.
Oh, I didn't know that.
Yeah, it'll just.
I don't ever remember having a problem. I mean, I spill generally, but I don't remember.
It's food. Usually not too much to drink. Yeah.
Yeah.
I'm sorry I even brought it up. It just feels back a little
I
more.
mean, I have a tendency to spill, but I don't think that I had a problem drinking beer. No.
Not in little pints. Half pints. Sorry.
I
A mini pint.
So last time when we were in London,
I saw you.
and they made
You saw I was adorable.
Yeah,
They made fun of me.
you were drinking a beer and your hand was like this.
because it was like 11 o'clock in the morning, and I'm like, I don't really want to drink beer.
You could tell
Oh, but the
you
time
didn't really go to a state school then. Because that's not
11. That's
11. Yeah, that's late. You're getting a late start. But anyway, but thank you, Bat, for that. I hear congratulations are in order for you, Bat.
What?
From a transactional perspective.
We
gotta update everybody.
Betsy, Betsy's gone. The RV.
Betsy,
She gets transferred today. Yeah.
Wow.
30. Yep.
So you sold
I
it.
had to sign the glove compartment. Like they do that a lot of times with race car drivers and stuff like that.
No one
When
asked
they
you to
sell
do
a
that.
car,
No, that's not true. No one asked you to do that. So wait, so the bid, did it come through RV Trader, or did you just have it parked in your yard and someone just pulled up? Like,
RV Trader. I can't have it parked in the yard. No.
the HOA Karens will come after you. So how was what was
Real
the
smooth.
ROI?
Showed it one time, sold it one time.
That's pretty good.
Yeah. Take that, sad enough. Give me $20. You owe me.
Did you make money? Did you break
Broke
even?
even. Sold it for like $1,000 less than, but I put a little money into it too. So
That's pretty good,
a
though.
couple years, 2 years, 2.5 years, something like that.
Does the buyer know that you're a local celebrity?
That's why I had to sign the glove compartment.
Okay, got you. Okay,
You
cool.
know how it is.
Cool. All right, that's
that's
You slept here, Bat? I'm like, yeah.
okay. All
Look
right.
at her. Okay, she doesn't want to go any further.
You're gonna miss it, aren't you?
no, not even for 1 second.
Just a little.
Now his stupid
The camping family's really going to miss it. It's not the one I live with
impulsive
presently.
buying is
It's my
done.
future.
He's done with his impulsive buying.
I mean, you got to. I'm gonna sneeze. Oh,
No,
Gesundheit.
thank you.
no,
See, I'm
Danke.
starting in German already?
Danke.
that's
Dankeschön.
probably the best buy and sell that he's ever going to make.
100%. 100%.
Yeah.
100%.
It's the best negative scalp.
Yeah. For sure. Yeah. I call it green, healthy scratch or something, whatever you want to call
Yeah.
it.
Well, I am am glad that it worked out.
Me too.
Me
too.
In this economy, I don't know.
This economy. Yeah.
Well, that's.
I could have seen you just driving it into a pond or something. Just
It was gonna be
merging
close.
it.
It's gonna be close.
Yeah. Okay.
Close. Yep.
Well, hey, we got a great show for you today. It is a terrific Tuesday here on Tasty Live, and a lot of good stuff is headed your way. And hey, at the top of the 8 o'clock hour, we're going to do an options jive, the Sharpe ratio in options trading.
Ooh.
What is the Sharpe ratio? I hear it, but I don't
See it all
know
today.
what it is.
You're going to see it all about the Sharpe ratio today.
You don't know what it is either, then.
We've talked about it before.
Love
We've talked about
So,
just
but
about
what is
everything.
it, though? So can someone tell me what it is?
I'll give you the actual definition.
Okay, but you don't know off the top of your head.
No, I just always forget the perfect definition. I want to give it.
Okay.
You
all
want
right.
something like if the ratio is 1.0 or higher, it's considered a good
The
investment.
ratio of what?
That's a great question.
I hope they don't get into the actual formula.
SA equals E over R squared divided by something else by
Okay, I'm going to tune right in.
It's basically, think about it like Sharpe ratios, like a ratio to figure out risk-adjusted returns.
See, that's helpful. Okay. All right, so that's going to be at 8 o'clock. Then at 8:40, we got Chris Vecchio in the house for Let Me Explain.
Let me explain.
What are you going to talk about with Chris?
Ooh, Chris is a little bit of a numbers geek, so he likes to talk about stuff that's coming out this week.
Sure, yeah, well, there's a lot. There's GDP, there's PCE.
Did you know me?
Yeah.
Yeah, I don't know if we're going to go that direction or we're going to talk,
I don't see how you cannot, knowing who Chris Vecchio is, but okay.
so we'll see.
Well, so you're going to talk to Chris. It's going to be at 8:40. And then 9 o'clock, we got a market measures, overnight VIX, and zero DTE strategies. What's overnight VIX?
That was basically from a customer. What we do is when people write emails to us about zero DT questions, we kind of like prioritize them and see how many fall into the same kind of group.
Okay.
This was a series of questions from a number of customers that wanted to do like look at overnight position, like one DT on the zeros.
Mm-hmm.
So like you do it with at the end of today for tomorrow.
Yeah. Okay. All right. That is coming up for market measures. And then around 9:20, we got Scott Sheridan in the house. Big boy Scotty S counting down all the top trending tickers over at Tasty Trade. Programming note tomorrow is Assume the Position Wednesday. And if you would like to participate in What's Your Assumption, we would love to hear from you. Write in with an underlying and a directional bias. Tom and Bat are going to try to do as many trades as possible. And that's for tomorrow's show. But in the meantime, and in between time, do you want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, coming
news.
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's July the 23rd. It's part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
We got a bunch of them, but you're really only going to want to hear about Google and Tesla.
Okay.
That's it. That's all you really need to know. But
That's
we did have
it.
some
That's
last
the
night.
tweet.
FCX up around $1.50. General Motors up around $2. UPS would be the one to the downside, down around 11.
FCX, I see it up 50 cents. Is there something?
FCX on the bid is 50. Okay, yeah, around 50, 60 cents. It was up around buck, a little bit more, just a moment.
UPS was down like $10, $12.
11 is what I saw last time I looked. GE up 6 and Coke up $1. Those numbers are about 15 minutes old.
Hey, getting to the first headline of the day, Chicago's SIBO Global Markets wants to give traders another way to hedge against volatility in the U.S. markets. The exchange, which already has options and futures on the VIX, expects a revamped S&P 500 variance future to begin trading on September 23rd. The contracts will allow traders to hedge against realized volatility calculated from the trading range each day in the S&P 500. Your thoughts?
I just saw this yesterday for the first time.
Everyone just saw it yesterday for the first time because that's when the news came
So
out.
I'm not sure what it is exactly.
I thought you would
Don't
tell
worry,
me.
we're gonna have our investigating reporters, Liz and Jenny, take a look at this when they get down.
Do you know what it is?
No, but we're gonna have our investigating performers.
I didn't know if you read the thing. I didn't get a chance to read the art.
So they're like variant swaps.
Yeah, I'm just not sure what the two sides are.
Oh, okay. Well, I was hoping for. I was really hoping.
I know, I didn't get a chance.
Do the old razzle dazzle here during this part.
You know what? I only saw the headline. I only saw the headline come across, and I didn't see the actual what the product is. So I'm not sure.
Okay. So we're aware of it. We're gonna do some more research,
I don't
and
know
then
if
maybe
it's realized versus real. The spread between realized and implied. I'm not sure.
that I do not know. It does. It's
I have
a
to
very
look at it.
short press release.
Yeah.
And then that's all I have.
I mean, I think anytime you get into variance swaps with retail customers, like I can't believe they think this is. I'm not sure how many people are going to understand this. Let's put it that way.
Like, who is this for?
I'm not sure.
Yeah. Okay.
I have to look at the product. I don't know what it is yet.
Well, talking about degular volatility, what are you guys doing in the VIX, or what is the VIX doing in you?
VIX
Killed yesterday.
VIX got killed yesterday. Today it's like
Why do you think that is, Kamala?
Yes.
The Kamala before the storm?
Oh, ba-dum-bum.
No, but seriously, why did volatility
know,
get
but
crushed
It
yesterday?
expanded the prior 3 days, and then you
Okay.
had an up day of.
You think of her name just as a comma and law.
Okay. Cool. Thanks, Boomer.
Thank you.
Yeah.
Oh my God, you're so simple.
You're like, you think of it as golden in a corral. You're like, it's all you could eat. Okay, Grandpa, let's get you to bed.
What do you want to say?
Okay.
You asking?
I was asking about volatility and why you think
I-
of the contraction, and if that benefited your positions yesterday, and what
Well, it absolutely benefited our positions yesterday. There's
all right.
no question about that. The
Sadly, we got today's move right so far too. We thought it was going to be a non-event, kind of go sideways for the day.
those would be a non-event. They were down over 20 last night. The S&Ps.
Oh my goodness.
They rallied back. They're only up one right now. The Nasdaq
Had
was
a
down 100.
25-point range all night.
Yeah, the Nasdaq was down 100, and it was just up this morning. But to get back to your point, I think a combination of volatility being up last week and the market being down, and then all of a sudden yesterday, everything kind of normalizing, and when the market didn't react to Biden
Exiting the race.
exiting the race, I think that
Getting down.
I think the market, there wasn't anything left to speculate on, so the market they just killed vol.
Okay. Getting to the other news of the day, Ether ETFs appear set to launch today, 6 months after a massive debut for Bitcoin-based ETF. The Ether ETFs come about 6 months after the launch of Bitcoin ETFs. BlackRock, Fidelity, and Grayscale are among the firms slated to launch funds. The SEC did give the green light for ETH to start today.
I'm not sure how they're going to price these, so we'll see. But Bitcoin's getting hit a little bit this morning, so we'll see what ETH. Actually,
Well, it's down 1,000. I mean,
down 1,600 the futures, and ETH this morning is unchanged to up a couple ticks, just tiny.
Okay.
Bitcoin trading 66,600 on the cash.
Yeah.
It was 67,000,
Yeah.
6,700 yesterday on the close.
Yeah.
What are you doing in Coinbase?
So
Nothing.
it just got an upgrade, and it looks like it's lower. It was just
Oh.
a minute ago. Down. It's on the offer, 263, down around $2, $2.50.
It was really strong yesterday. I kind of think that might have come out yesterday, but I don't know.
Oh, did it? Okay.
Oh, the upgrade? It could be. I was just curious, just asking.
Yeah.
Hey, something that was not as strong yesterday. Let's talk about gold. Gold slips as, I don't know, just gold does what it wants to do.
Back up today, so it's just
$13,
kinda-
yes.
Yeah, it's really the same price it was yesterday.
What are you doing in gold?
Short and at the money strangle.
And just the straight up gold future, or are you using
Gold
another?
futures.
Okay. How about for you?
I'm in the options in GLD. Horrible product to trade, to be stuck in
GLD
the-
sucks.
It does. It really does.
Yeah,
Are you in
I'd rather trade G's. I have GLD.
I agree with you.
I'd rather trade
gold
G's.
futures. I agree.
Are you in any of the gold miners?
Yes.
No, I don't have anything in there.
I'm in GDX and GDXJ.
And how's that going? Because those can be not great as well sometimes.
Well, because I haven't made any adjustments in there, I think it's fine. Because in the end, not much has happened.
Okay.
I think we're up on all of them, but I could be down in, like Tony said, GLD. I hate that.
That pig.
DC,
that
I think, has been fine.
Okay. Hey, well, sticking with the metal theme, copper hit a new 3-month low with Chinese demand in focus. Copper dropped as base metals extended the worst weekly slump in almost 2 years, with a modest rate cut in China doing little to offset worries about the demand in the world's top commodities consumer. Let's talk. You'll never get me, copper.
Copper. So I'm short copper strangles. I talked about this yesterday, and they actually have been fine.
Okay.
It ranks high in there, 92. Copper's been on a free fall.
Yes, except that it's been orderly.
It has been.
So I've been able
stepping down. Yep.
Like, here's an example. If it's always hard to say because you get chopped up. But copper's an example. If you don't roll the calls down, like you got killed. If you roll the calls down, there's so much premium in the calls that the trade has actually worked out. I don't love the trade now, but Ivy ranks still high. So yeah.
Okay. How about for you? Do you trade copper?
I have not. I'm the world's worst commodities trader.
Yeah, that's right.
I admit it, and I'm abstaining.
Hey, this is interesting. What did you guys want to be when you grew up?
I wanted to have a talk show online.
Okay, Donahue.
I wanted to be a weatherman.
Seriously, no. What did you want to be when you grew up?
I mean, when I realized that, what's the old Seinfeld episode? I always wanted to be a banker. Remember that one?
Oh yeah, when trying to get out of the parking ticket. Yeah.
What did I want to be? I mean,
I wanted to be a cop, and then I realized we were on the wrong side of the.
In any age, but this article's talking about the next hot jobs for Gen Z. So if you want to say, what did you want to be like when you were in high school?
I didn't really know what I wanted to do, but we had when I was a little kid. I had this one friend. His name was Andrew Friedman. Okay.
Go figure.
We were like 5 years old, and he was determined.
Joey Barbati was taken? Go ahead, yes.
He was determined he was going to be the first. He was going to be a president of the United States.
Oh,
He's the only kid I knew that had
good for Andrew.
Yes, Andrew Friedman. That said, the rest of us didn't really think about.
I wanted to be a cop or an attorney.
Okay. Oh, good.
Cop or an attorney.
Yeah.
Because both were involved in your life.
That's right.
Yeah.
I saw a lot of both.
You saw a lot of both. So yeah.
I didn't know what I wanted to do.
Okay. I wanted to work in advertising. Like I wanted to make commercials and I wanted to like make funny commercials. Yeah, when I was growing up. Or I wanted to be like an astronaut, and then I found out it was like a crap ton of math. But here's something interesting. So for years, the top spots of when you ask people where they want to work by generation, normally the most aspired employer is a company like Google. But this year's rankings, based on more than 10,000 Gen Zers, Google.
Don't tell me Tasty.
No, Google fell to number 7. Amazon fell to number 8. Tesla was number 33. Instagram was 48. And Facebook barely made the cut. It fell past Dow Chemical. So
hold on. So you want 1, 2, and 3 then, you're saying, right?
Yes, yeah. So this is
wild.
And so these are in vastly different sectors. So none of these top 3 are in the tech sector at all. They're in the health sector. Which I was like, what?
The health sector?
That's what these are the words that are coming out of my mouth. The top 3, yes.
Moderna?
No, like more like literally like local health sector. Like this is
I don't
wild.
even know. I can't even name it.
Yeah, I know, this is wild. So the number one place that Gen Z wanted to work, this is crazy, St. Jude's Children's Research Hospital. Which is amazing.
I never would have guessed that in a million years.
Number 2, the Mayo Clinic.
Never would have guessed
These
that.
kids, oh my God, I thought all they did was make TikToks. Number 3 was Healthcare Service Corps. Number 4 was just like their local hospital. Number 5, God bless these little narcs, FBI. Kids, the massive shift. So kids want to work in healthcare and government sector.
never-
You know what? Get government jobs, kids. You get a pension. So number 5 was the FBI. Number 6 was NASA, which is actually my dream when I was a kid, wanted to work for NASA. Number 7, CIA.
Does anybody want to work for like the Yankees?
No, this is, and then the CDC made the list. The U.S. Air Force, State Department, the Army. It's just you can look at the study online. I was just surprised, but
That's surprising.
these kids, they want to be like autocrats. I guess I don't
where's
know,
Tasty
bureaucrats.
on the list? Where's Tasty on the list?
Tasty's of course number 1 in all of our hearts.
Okay.
So, but yeah, actually no finance on here at all because we're kind of like
He wants
the
to work
evil,
at Goldman Sachs?
kind of like the evil empire. I mean, no one wants to work at Facebook. Could you imagine?
Yes, I can totally understand that.
I mean, I guess. I don't know. I just thought it was interesting, but I got to keep it
No one
moving.
wants to work at Tasty.
Hey, what are you going to do in Google? What's your plan?
I do not have a plan in Google.
Okay.
At this point, I'm thinking that I'm probably not going to do very much in Google at all because, like I mentioned yesterday multiple times, the Google odds don't look very good for the earnings play. I mean, Tesla looks better than Google. I'll just leave it. That's what we came up with yesterday on our research.
Okay.
There's a little more edge in there.
Alphabet is going to report double-digit Q2 growth, analysts expect, and AI adoption and ballooning costs will come into focus. They're expected Google is expected to report a nearly 14% rise in quarterly revenue, its 4th straight quarter of double-digit growth. But again, they might have to offer some guidance because, ad revenue and other things might be coming down, and also how much they're spending on these AI-based projects, but they've already had some layoffs, some other things. How's the IV in Google and what's the expected move?
IV's good, 79. Expected move is only $10 on a $180 stock. On the other side of the coin, you've got Tesla, which has.
Hold on, 2 seconds. Literally 2 seconds. I'll get to Tesla, but I just wanted to stay on Google. So you're not gonna do anything. So do you have a big white string? What do you have in Google?
I have a big wide triangle in Google.
Big white string. Okay.
But I haven't done anything extra in Google or anything. Like I just have an old position on. I don't know what I'm going to do yet.
Okay. Well, also Google is planning to kill off cookies. They're canceling their plans to kill off cookies for advertisers. On Monday, they said they will no longer cancel third-party cookies after years of delays to find an alternative for its Chrome browser. By canceling third-party cookies, the change impacts anyone involved in online advertising. So this is good news for advertisers, bad news for anyone who's like trying to close one of those spam ads. Anyway, moving on to Tesla now. Tesla margins likely dipped in Q2, and their robo-taxi and AI ventures will be in focus, as well as their humanoid robot. Also, just the comments of their increasingly unhinged CEO. Tesla's second quarter margin hit more than a 5-year low. The EV maker is likely to report, and Elon Musk is expected to double down on the company's robo-taxi plans and AI products. What are you going to do?
I'm surprised the stock is back to 253, 254, where it's trading. I'm sorry, 150.
254 in the orders.
Yeah, 254 in the orders. I'm surprised the stock's back there, honestly, with all the stuff going on with Elon.
Market don't care.
Earlier this month, the stock was $190.
I know. And, with California, with him pissing off California, somebody wrote me an email last night. They said, if you had a chance to ask Elon one question at the investor conference, what would you ask him?
Ooh, that is a good question. What would you ask him?
I would just say my question to him would be like, as a Tesla shareholder, because I assume you have to be a shareholder to ask a question. As a Tesla shareholder, like, how do you reassure the shareholders that your focus is actually on Tesla shareholder growth?
Right.
Because you're
seems so scattered.
Your time is so distracted, and you seem to be so focused on. Did you read his quotes last night at talking about like his trans son? What's he talking about?
Yeah.
He's totally losing it.
Sure. Yeah. I'm just curious. What's the expected move?
Wouldn't you want him to just focus on Tesla?
I do, because I think the company is a valuable part of the the economy and of the environment, but it's.
I know 3 Tesla owners who will never buy another Tesla, and they like their cars a lot.
Sure. Sure. Expected move in Tesla?
Tesla's, as Tom said, $254 stock, up around $3 and change right now. Expected moves around $22 or so. Same thing it was yesterday, maybe a skosh higher.
About $33 in August, about $22 in July.
That's
Okay.
correct.
Hey, NVIDIA is preparing a new version of a flagship AI chip for the Chinese market. They're working on a version of its new flagship AI chip for China, so it would be compatible with current U.S. export controls. Analysts saw just the first few words and they're like, upgrade. Stock by a couple of people yesterday. What are you doing in NVIDIA?
I think NVIDIA is. I'm a hair short it, but on any rally, I plan to get short NVIDIA. I think it's
more short.
It's a good trading vehicle. Markets are nice.
a good trading vehicle. I think that AI. I see so much risk in AI. I don't understand how anybody is going to monetize AI. Like I sit here and I'm just like, I just look at our own stuff and all the AI and all the money that we commit to AI and all the stuff we're building, and I'm like, we're a content marketing firm, so I get how we can monetize it.
Sure.
But how's everybody else going to monetize it?
I don't know. NVIDIA's giving away 9 courses you could take on AI.
Yeah, TBD.
They have like 9 courses.
Who's this?
NVIDIA, if you go on like their investor page.
Yeah. I don't know.
Hey, well, investors see Broadcom as catching up to NVIDIA as the next big AI play. That's according to the geniuses over at Citigroup. The bank said Broadcom is seeing an uptick in its AI business as it gains new customers like OpenAI and ByteDance. We also believe there's some investor fatigue with NVIDIA. Could Broadcom be the next big hot chip play post-split?
Sure, could be.
AVGO was a great pre-split, post-split trade, meaning volatility just contracted.
Oh, sure. Then it all worked out. Yeah.
Very nicely.
But how's it been just post?
I haven't had a position since I took that one off because
Okay.
it worked out so well. Vanetta,
Right.
you just.
I mean, it's hard when
you
you
take
already
it off.
when you capture the
you just
magic
stay
like that.
mechanical.
Yeah.
That's correct.
But today's Tuesday.
Yeah, today is Tuesday. Now it happens every Tuesday and Thursday.
That's right.
Option trades today. That's right. Sound enough. Stay tuned. Before noon, you'll get your trade.
You were on the IR last week, but now
I
you're
was.
now you're healthy.
Yes, I was.
Tom, what are you doing in Broadcom?
Ooh, no.
Down about $1, 160. Give it to me.
Give it to me, baby.
AVGO.
Yes.
Ivy rank 38. Earnings coming out August 29th after August expiration.
Ooh, that's
Short the
nice.
152, 170 strangle. I don't think there's much there.
Okay.
Wah, wah.
Womp womp. Hey, Intel says that they found the issue that causes their 13th and 14th generation CPUs to crash. Now, Intel plans to address the processor's troublesome elevated operating voltage with a microcode patch. If that means something to you, congratulations. What are you doing in Intel? I love microcode patches. No idea.
Down about 20 cents, basically unchanged, $33.10. Earnings coming out August 1st, about a week.
We do not have an Intel position on. We've had one on for the longest period of time. Where's Intel trading right now?
You literally have the biggest screen I've ever seen in front of you.
I know. I'm just not looking at Intel. Yeah, it's kind of weird, but I don't think that I'm not ready to reload an Intel yet, quite yet.
Okay. Hey, this is interesting. Who should have to pay for all of the shenanigans that CrowdStrike caused with its massive global outage? Well, Republican representatives want the CEO, George Kurtz, to answer a couple of questions. They're like, come on down to Congresstown, because we'd like to talk to you, boy. Republican representatives called on CrowdStrike CEO George Kurtz to testify after a defective software update caused disruptions that we thought we weren't going to see except for like Y2K, but everywhere blue screens of death appeared, bricking things. And RIP to anyone who's just tried to fly Delta over the last 5 days, because I have friends that are stuck in a multitude of places, some better than others. But who should pay for all of this? Because also the insurance companies, they're like, we're not on the hook, because I guess this is an interesting insurance loophole. They're like only on the hook if the outage is only like 8 to 12 hours. But since this was beyond that, they don't have to pay out. is what I heard on NPR. And I was like, that is the scam of the century.
Malarkey.
I was like, that is the scam of the century.
I love insurance companies.
Yeah.
They really are good. They really are.
They figured out
a way not to pay.
But here's the thing. But it's the insurance companies.
They figure out a way not to pay for everything.
But it's the insurance companies screwing the airlines who also figure out ways not to pay you. So
it trickles down.
Right. Yeah. It is. I mean, 100%.
You know what's funny is the Republican representatives call on CrowdStrike CEO to testify. I mean, it's pretty hard to testify that, hey, we made a software release and it had a bug.
Yeah.
Like, but there's got to be some accountability. Like, but it's billions of dollars. Like, this is a massive global. Like, so who? I'm just asking, who pays for this?
Who pays for what?
Who pays for all
technology?
Okay.
Breaks. So
that's it. You can't use it anymore. How about that?
The question is, I mean, there's a certain responsibility to companies if they're going to put themselves in a situation where they have a single point of failure, then you almost have to take the consequences from that. I mean, you get to decide what technology you want to use.
Sure.
We don't use CrowdStrike. Now, that's just probably by luck that we don't use CrowdStrike, because how would anybody know?
Right.
But there are companies that have multiple, ways to access whatever their business is. They have a disaster recovery plan, whatever it is.
Yeah, but a lot of the issues that stem from this is the only fix, in my understanding, is that it's manual. So if you're an institution and you have 10,000, 15,000, 20,000 connected devices, and someone has to manually reset all of it, who pays for this who pays for all of the man and woman hours that it's going to take to get all these systems on? Because there's not a global, I don't understand if CrowdStrike could be like, yeah, it's our bad, we pushed a bad release, but if there was an over-the-air fix and they could push it out, but to manually have to reset all of these devices with a very intricate
it's
rebooting process,
it's called business.
Okay, but that's fine, but you're going to pay your devs time and a half?
So are you going to then say every time that there's a software malfunction that
I'm just saying if they pushed out this release in less than good faith, then
they didn't.
I don't know. It's not my business again. My business is to serve looks, make jokes, and do the news. Shut up, Bat.
I was trying to make the percentages of how much you would get done there.
Okay.
If there's fraud involved with anything, then that's a different situation. I do not think that.
But it's just not just fraud, but just what about gross incompetence? There's got to be. I'm just saying, how.
Well, they didn't have me code it.
I mean, if a developer makes a mistake, okay, and they push it out, how's that necessarily gross incompetence?
I'm just saying my level of knowledge. I'm just saying, again, that's why they're probably getting asked to testify, because they're just like.
They had a software bug. It happens.
Okay.
I look at it as an opportunity. You got crowd trading down at $267.
Thank you, Bat.
It's up around $3.50, but it's lost about $120 worth of market cap. I mean, right now.
Yeah, but you know what? You might think it's an opportunity, but unless you waited until the close yesterday, it's not an opportunity.
Oh, 100%. I mean,
because I put the position on after the first $40 down move, and I'm out. I'm only out $1 on my spread. Hopefully,
which is nothing because the implied volatility is so high.
I hope it comes in more than $1 today on an up move.
Exactly.
So need to make $1.
An opportunity. So
okay, so we'll
Microsoft also up small, 443, bucking this little move lower in the market. Even the S&P's down 7.
Yeah, so hopefully that all works out. Hey, Apple is trying to rein in Hollywood spending after years of losses. The company Apple has their streaming service now has 277 million subscribers and reaches more than 600 million people across the world, but they were spending massively, millions, tens and hundreds of millions of dollars on shows that no one watches. Disney, Netflix, Paramount, Warner Brothers, they're all cutting back to reduce their streaming losses. Amazon does have the resources to compete with Netflix, but they're still trying to figure out the best path forward for streaming sustainability. Do you care about the streamers?
I don't.
I mean, but this is sad. I mean, they have good shows, but they're spending a massive amount of money. I know you don't.
I don't watch TV, but here's the thing. Last night, I forgot to tell you.
Did he get an earlier flight?
No,
his flight was delayed, right?
Delayed till next week. So
his flight's delayed till next week.
Who, Anton's?
No, the guy that broke my TV.
Oh, because he went to
The guy
Florida.
who's fixing his TV.
Okay, so he calls me. He goes, "Listen, I got bad news. My flight, I can't supposed to be back tonight, but it looks like I'm not going to be back until I can't get to your house till next week."
Okay.
So he goes,
Well, there are flight issues.
"Told me you didn't watch much TV anyway." I go, "I don't, but it'd be nice, whatever." So,
If the Gumata comes over or something like that. Yeah.
so I told him, I go, "Well, maybe I can figure this out on my own." He goes,
You're like, the finale of Love Island is tonight. You're like, I need to figure this out.
"I'll call you, and then we'll try to walk through the problem."
Oh, sweetie, God bless that man.
So I fixed it.
You did.
Yes.
With his help.
It had to have been an easy fix.
He helped you.
He had to.
Right, yeah.
What did you do?
I just spliced some wires together.
Well, crap.
You don't know how to splice
There's no
anything.
way you sliced a piece of cake, okay, without hurting
Yeah.
yourself. No way.
Hey, I gotta keep it moving.
Sliced a few wires together.
Yeah, there was one thing you had to turn it on.
Hey, I gotta keep it
Guarantee.
moving.
What'd you
Hey,
I had to flip on the off switch
I knew it.
from one of the
I knew it.
like battery bars, whatever you call those things.
I knew it.
great, cool. Oh,
Battery-
from your surge protector, battery
bar.
bars?
Yes, the circuit.
Oh, sweetie. Oh, you were so precious. Battery bars.
It didn't have any electric, so you didn't realize that that the controller wasn't on.
No. This
power strip
down to
was
my
off.
power. Somebody had knocked out the power strip or something.
Somebody, gremlins.
Was that you? Was it a
Not
squirrel?
me. I don't go down there. There's monsters. in the
Scary.
basement.
Hey, can I finish my news, boomers? Thank you. Hey, Reddit up on news that it has struck a deal with sports leagues, to attract more advertising dollars. Reddit is bringing more sports content to its platform through a deal with the NBA and the NFL. Shares of the social media company were up 4%. They also cover Major League Baseball, the PGA, and NASCAR. It could help Reddit capitalize on the loyal audience and star power that sports commands.
Hey, Brett's doing good.
Okay. Can I tell you, for the Eras Tour, it has been amazing with so many helpful, wonderful Swifties. So when you go on Reddit, there's a whole subreddit, it's just r/Eras Tour. And then you can type in I'm so glad you asked, hold on. So you can type in your city, and then people are meeting up in their cities, and they're like, hey, any
Killing you.
Swifties want to go to a beer garden? So I'm going to meet up with some Swifties.
Please don't go to that.
And why? It's a public beer garden.
You'll be fine.
It'll be fine.
What are you wearing?
So what am I wearing?
You sicko.
No, so everyone dresses in costumes. And so he opened the door counselor. So I'm going to be dressing from aesthetically like my favorite era, but I also really love the album. So it's from The Lover.
She has an era.
Yeah, so there's so many eras. There's 12 eras, there's 11 eras. Anyway, so I'm going to be dressing from the Lover era,
What
which
identifies
is
an
what
era?
she opens the show with. So it's like pastel, like pinky, yellow, blue. It's very cute. It's very Vanetta. Lots of just going to serve eye makeup. And it's going to be super cute.
Why don't you dress as Tom or I? Someone.
You guys are in your boomer era. What are you doing in Reddit the stock?
RDDT, $68 and change, basically unchanged. It's had an okay time this year so far. I still don't understand Reddit when I go on it. Like, I don't know.
This is helpful. This is what I'm trying to tell you. This is helpful for me because I've been going on and I've been learning so much about like.
I want to learn. I want to know.
I've been trading a little Reddit.
Yeah.
Yeah. It's okay. It's all right. It's not the greatest stock, but I've been trading it.
Hey, El Cateron, the private equity firm backed by the luxury goods giant LVMH, has approached Mattel, the toy maker behind Barbie and Hot Wheels, with an acquisition offer. The move could prompt other potential suitors to consider bids for Mattel, including rival Hasbro, Mattel MAT, Hasbro HAS.
No, I don't trade either of those.
Did you see the Barbie movie?
I did not, but I heard it was great.
Barbie movie?
It is 1 year. It's our 1 year
Not
anniversary.
great.
Okay.
I saw it. Did you see it?
I have not actually seen it yet. Maybe we'll watch it on
Call
the
yourself
plane.
a Swiftie and not see the Barbie movie.
I
What's wrong
know.
with
I know.
you?
Yeah, that's fine. Taylor's not in the movie, though.
The Barbie movie, well, I don't know. I didn't see it. Corinne saw it. She loved it.
Oh, good.
Really?
Loved it.
Really?
You like it?
I've never seen it.
You don't listen to her when she speaks? She just said she didn't.
I've never seen it.
Oh.
But it's not because I just
I
didn't
don't know.
get around.
She loved it. I don't see
seeing
it.
Oh my God, it was horrible. Almost as bad as Horizon.
Can you trade Mattel, M-A-T?
I don't trade it.
I haven't.
I don't know. I'm just asking.
Years. It's not tradable.
All right. Well, something that you can trade is MCD, and that's McDonald's. Mickey D's is extending their $5 value meal in most U.S. markets as diners return to restaurants. They're extending the promotion as rivals such as Burger King and Starbucks have started offering value meal deals to entice diners and boost traffic. McDonald's set to report earnings July 29th.
The $5 meal now is just the French fries.
It was like, you get one fry.
Yep.
But your boy, Mike Golick Jr., he does TikTok food reviews. I love it. Did you know Mike Golick Jr., this is true, he's a huge Swiftie. Like, he rides with us, and we stan him, so shout out to you, Mike Golick Jr. Anyway, he did a TikTok review of the new McDonald's Kit Kat Banana Split McFlurry, and he says it's great, 9 out of 10.
Kit Kat.
Banana Split McFlurry.
I don't like Kit Kats or banana
But
split.
he says it's good because he says that...
Not really. Not my favorite. I mean, I'll eat it, but I don't like it.
Anyway, but Mike Gold Jr. says it's good, so I'm inclined to listen to him. Hey, the U.S. Olympic Committee is hitting Logan Paul's drink brand with trademark infringement suit. This is funny. The YouTuber is being sued by the USOC in a federal lawsuit in the District of Colorado. The committee alleges that Paul's company Prime Hydration used trademark phrases such as Olympic, Olympian, Team USA, and going for the gold, and ain't nobody could do that except for Coke.
But he fought the other night against.
He won.
I know, but against some, like, the guy never boxed before. Did he? It's like an old. You didn't watch it? Oh, it's like
No.
an old sport.
I watched the fight.
I just
It's
saw.
not him. This is his brother.
Oh, it's his brother. I got it.
Yeah, not him. His brother fought.
Oh, Jake Paul?
Oh,
I get them mixed up. I'm just saying Logan Paul.
fought, not Logan.
Jake Paul fought.
Yes,
Yeah.
yes.
Why did he fight at 1 o'clock?
Guy was 40 pounds lighter than him. 40 pounds.
That seems like a
Fought him
mismatch.
at 1 in the morning.
This
I don't
seems
know
like
what
it's,
time they
it's like they fought in the parking lot and then
40 pounds.
That's a
The
lot.
guy-
I never even boxed before, had he?
No, he's more of an MMA.
Hey, just real fast, I don't want to go too much over my time. Warner Brothers Discovery has notified the NBA that it will match Amazon's $1.8 billion offer to carry league games. People just want Sir Chuck back. But Warner Brothers notified the NBA that it will pay the $1.8 billion per year to match an offer from Amazon to carry a package of the league's games. I'm not sure what Amazon's doing because you don't really trade WBD, so.
No. Amazon.
Amazon's trading 183 and change, up around 50 cents or so. It's had a bad 4 or 5 days, highs around 200, but it's looking like it's getting its feet underneath it. James and our production team says he's with you on the Barbie movie. He liked it a lot.
Good job for the NBA getting $76 billion for all of their games. So congratulations to you. I am headed to the airport tomorrow. That's right. Auf Wiedersehen. Yeah, because I'm going to Germany, Deutschland.
What are you going to bring us back?
Taylor Swift. Look, I can already say it. Ich bin ein Swiftie. But I'm going to the airport
Can
and
you bring a pretzel back for Tom?
I'm a little nervous because things in the skies and at airports have been less than great. You're headed to the airport this weekend because you're going to Toronto for the Wears Bat.
Everybody's going somewhere.
Everybody's
Nobody
going
gives a crap
somewhere.
Anymore, except
But
for that, huh?
check this out. This happened last week at the Vancouver airport. Get it together, Canada. Literal snakes on a plane. What is happening?
I don't like snakes on a plane.
So it's just a box that they apparently just like maybe folded the flap shut. And then so just snakes are flying off this conveyor belt. Straight up nightmare fuel.
Oh, that's going to scare.
Who sends a box of... No.
That's going to freak out people on the plane.
Who has to clean this up?
Not those guys.
Yikes.
There's going to be some really uncomfortable
Did you
people.
make a movie like that once?
Yeah, snakes on a plane. Yeah, starring...
There's going to be some people looking out that window going, you got to be kidding me.
I would quit right there on the spot.
You don't like snakes, do you?
Snakes, I can actually, I'm okay. Like I can look at snakes and I come across snakes like on the trail and camping. It's like spiders and like crawly bug things. No.
I don't like snakes. Really.
Snakes don't bother me. Have you seen the guy on TikTok that just goes through like the Everglades and he just goes yoink and he just like picks up snakes in the swamp? And
he's not on my TikTok feed, thank God.
Okay, well. Hey, that's my time for today. Bat, what's coming up next?
I'm not making any snake jokes, okay, for those people who are writing into me. We'll be back in 90 seconds. We got more Tasty Live after this with Confirm It's End.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Come on, Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's take a quick look at the market. Even the S&Ps, what are they doing? They're down $2.50. NASDAQ is down $38. Russell down 11, a little weaker than the rest of the group, and the Dow down 14, but I consider it basically unchanged. Volatility in by 9 cents, selling off yesterday after that 4-day run to the upside, just over 16. Volatility flirting with going under 15, down 9 cents. Bonds up 12 ticks, seems like 119. I've been talking about it forever. 119 and change, 119 and change, 119.05 right now. Relatively tight move in bonds overnight too. Bitcoin a little softer, 66.4 after trading up to around 67.7 last day or two, down around 1,000 or so from those numbers. Ethereum up 50 cents right now, 35 and change where it's been sitting. Oil down 75 cents, 77.65. So I don't know if I think oil's been a little weak the last 3 or 4 days, going from around 82 to 77. Gold catching a small little bid, up $12.50 after selling off the last 3 or 4 days. Also, silver bucking that up move in gold, down 12 cents. We had a couple of movers. Spotify is the biggest one. So I don't know if Spotify looks like it was up around $40. Let's see what it's doing right now. It is up around $40 or so. Spotify, 336 and change.
Yeah, I mean, I'm looking at crude oil. Maybe there's something to do here, but it's marginal at best. It's not that rich. And
Tesla and Google have earnings, sorry.
Yeah, and also another day where Spotify earnings way outside the expected move, UPS earnings way outside the expected move. Another day where earnings are just, not worth it. Let's put it that way.
Unless you have a directional bias, for sure.
Yep, unless you have directional bias. Unless you were right with your directional bias.
Sure.
These are emails that came into us overnight. We got tons of them. Let's go through them quickly here. Where are we? Hold on. Let's see. Screen. Perfect. This person says, I was just wondering, at what price would you consider the VIX high enough to deploy 50% of our buying power?
That's a fairly big number. Remember, you have a lot of leverage with options and options futures. So I guess it would be that kind of over 35 to 45 number if we're looking at /VX. Is that what you're looking at?
Yeah, no, my answer was different. If you're going to deploy in the 50% range of buying power, like we don't like to go much over 60 no matter what, but if you're going to get up in that 50% range, my answer to this person was, I would like to see volatility somewhere between 22.5 and 25 in that range, because it doesn't get over 25 that often.
It does not.
But I would say 22.5 to 25. I start to ramp up my position, my money that I have in play if volatility gets over 20, but 22 to 25 would be my 50% range. We got up over 30 or 35, then you go up to like 60%. Because that's
it also depends on the size of the account too.
Yeah, of
course. If you have a smaller account, you're going to be at 50%, maybe now. You know what I mean? Depending on how small your account is. A large account, a lot of money to put into the market.
Yep. Let's go next slide. So I was assigned on some short puts as part of a put spread. My long puts are also deep in the money, and they expire this Friday. What are my options?
Again, 95% of the time, if you just right-click on that option that you're long, exercise it, you can be out of this whole position and be done with it.
But why would you get out as opposed to
buying power, using a lot more
Okay,
buying
that's the whole reason. So the reason
it actually gives you a free call or a free put to one side.
If you hold on to this trade, you have a free shot.
Yes.
It's a free shot. But it just depends what you want to do with that money. So if you close out the position by exercising out of the position or closing out the position, you free up all your capital. If you hold it till Friday, you have a free shot to the upside.
That's correct.
So
it's a free, worthless shot. Let's be pretty clear there.
Last expiration, I had a free shot in Lilly, and it paid off. It dropped $50 on expiration morning or the day before. That happens like once a year. So it could happen. But you have a free shot if you don't need the money. If you need the money, then just close the position out by exercising out of it. Let's go to the next slide. I'm confused about the idea of volatility getting added or subtracted to a stock. When you say they sucked vol out of IWM, what exactly do you mean by that? And how exactly do you know? Are you just comparing it to yesterday, or is there something on the chart that tells you?
I show it on the bottom of the screen every day. It's that IVR, the implied volatility rank. It's on the top left next to the stock symbol. If you have it on the bottom of the chart like I do, that I show, gives you a graph of the IVR, and that's what we're looking at. And it is the move from one day to the next, or the last 48 hours to today. We usually stay in a pretty tight time frame when we're looking at volatility contracting. That's the easiest way to look at it.
Yeah, so what I wrote back to this person was, look at your P&L. And if your P&L is up, they probably took vol out of IWM. I'm talking about your P&L for your day P&L for IWM. If you're up money, they probably sucked vol out, unless you have a directional position on. If you don't have a directional position on, if you're up money, they took volatility out. And that's kind of that's one of the things we're looking on. Also, you can chart IVR. And so you could see, if you want to, you can see what IVR is doing. And if IVR is going lower, because you can't be expected to remember it from day to day. But if IVR is going lower, clearly they're taking premium, they're taking volatility out, they're taking premium out. But Tony and I really look at P&L. And on a day like yesterday, I had an IWM position on money on it because we didn't have any deltas. They just sucked out vol.
Mm-hmm.
That's it. Let's go to the next slide. So we know that the mean on the VIX is around 16. It's actually a little higher, but that's close enough. But I believe that is for the monthly measurement. What is it for something like the VIX one day? Is there a way to figure that out?
You can look at, what is it, dollar sign, or is it just 1D? It's VIX 1D. You can look at the volatility of the one-day option if you want to.
They want to know what's a normal average.
Oh, what the average is?
Yeah.
No, I don't know. I mean, I can look at the chart and just see over the last month. I would say the average, again, I'm just extrapolating out, is around $10, but I don't think I have it.
Okay. So is there a way to figure this out? Of course there is. I mean, you can probably, hold on. I'm just going to do this really fast. I don't know if you can ask Siri, but VIX 1D average price. I'm guessing somebody has that. Well, I don't want to take a lot of time here to do. I don't want to take a lot of time, but I'm sure I'm sure that number exists, and you can just Google it. But we could figure it out. There's only 1 year's worth of data, just so you know. So it's not like that complex. The range has been 5% to 25%. I'm guessing it's going to come in somewhere around 11 or 12. I'm guessing, but I'll ask the research team. We did a study that shows you really don't want to sell one-day premium if it's under 15 or 17, and 12 is like kind of very marginal. 10 is a loser. So we'll do a study on this, or we'll find out for you. I don't know what it is offhand. I'm guessing it's a bit in the 12 range, but we'll see.
You think it's up to 12?
No, the average for the year.
Oh, for the year. Maybe.
Last 12 months.
Maybe.
Yeah.
There's going to be a little less.
Let's go. Yeah, it's been lower lately. Mm-hmm. With a normal margin account, you say use 25% of net lick for most trades. At most for trades. In a normal margin account, you say use 25% of net lick at most for trades. Actually, we're a lot lower than that. We don't like to use much more than 10 or 15%. But for a specific trade, 3 to 7%, something like that. But total usage, yeah, you can do 25, 35, 40, 45, whatever. But how about for span margin trades, futures options? I think we should not use more than 10% of net lick for futures options. What are your thoughts on this?
I mean, again, it's a subjective number, but I think that 10% seems to be pretty good. I mean, you're looking at span margining. What is span margin? A little over 2 to 1 leverage to regular margin?
Oh, it could be more than that. It depends.
I mean, so that's how I'm getting it. I think it was a little more like 2 to 3.
Yeah. The response that we give to this question is typically a third less. So if you're using 25%, then 10% is a third less. But or 15%. I would just reduce everything by between 30 and 35% for portfolio margin and for span margin. Okay, for both of those. Portfolio margin, span margin reduced by, a third. Let's go next slide.
So 10% would be good.
Yeah.
Yeah.
I know you like to trade in higher IVR underlyings. I assume this is because you get better premium on the options. Is the trade-off that you expose yourself to higher risk in terms of swings in stock price of the underlying compared to lower IVR underlyings?
In a nutshell, yes. Higher expected moves in the stock. Remember, volatility is more mean reverting than the stock price itself. So when we're looking to sell something, how do you want to do it? You want to sell high, right? I mean, I don't want to sell low. I want to sell high and expect it to go lower. No telling what the future is going to bring, but that's what you want. So you're looking for your entry, which is the only thing you control. So we look for high implied volatility to sell and hope that the stock doesn't beat us with a move outside of the expected move, and that volatility will contract because volatility is mean reverting over time.
Yeah.
If you have high implied volatility, it is expecting a larger move than normal.
Yeah. So we like the higher implied volatility because we get better premium and we get to move a little wider. The trade-off is that you expose yourself to a higher risk in terms of the swings you're going to take because, there's the swings and there's the adjustments to the swings and everything else. You take more risk, you make more money. That's as simple as simple as the equation gets. Want to make more money, you got to take more risk.
Awesome. Let's take a quick 90-second break. We'll come back. We got more Tasty Live with an option jive. Next, we'll be back in 90 seconds. Even the S&P's up $1.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41. You got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
If you missed the live show, here's our cherry on top weekly recap. How come I'm the only person in the office?
Tell you why.
Yeah, what happened, girl?
I had been waiting for a year and a half for Tony's guy, this is the truth, to come fix my HVAC system. Nobody else can fix his heat and air conditioning. He's had other people there. It's too complex a system.
What time is he supposed to be there?
Hold on, it's him texting. Oh, yeah. We need to stop meeting on Mondays because last Monday it was the debacle with the RV. This Monday, the debacle with the missus. Next Monday, Hey, update on the RV. I got a bid for it. Oh, reasonable? No, 30% below asking price, but I got one.
It's literally 78 degrees and muggy outside, and you guys look like you're going to Vail.
Well, I wore a t-shirt underneath mine, which I never usually do because Beth says I never wear a t-shirt under mine. So I did it for...
We appreciate it.
I had a white t-shirt on, but I didn't want to, I thought it was like too revealing, showing all the muscles and, you know.
All the muscles? Oh, sweetie.
Have you seen? I did bring the video in. Have you seen?
No, can you play the video?
Really?
Beth, do you have the
Is this
video?
happening?
You have the video?
For the past few months, she's been trying to get Scott Sheridan together with a woman you will meet in just a few moments. Scott, your age?
25.
Occupation?
Trade at the options exchange.
How important is physical appearance to you on a scale of 1 to 10 when you meet a woman?
10.
Hey, that's some good hair.
Was that the weekend that you two met?
Yes. So Al, who was in that video, invited me. And he's like, there's a bachelor's party, and said, come with. And I said, but I don't know anybody. He's like, doesn't matter, you'll stay in my room. So we went, I'm in Al's room. It's just a regular room, 2 beds. I'm like, okay, great. And I said, what's that door for in the corner? And he's like, that's the Tom's room. And I opened it up, and it was a Rain Man suite, the 2 split level. I couldn't see Tom, it was huge. I just turned around, I looked at Al, I said, who's Tom? And 36 years later, we're sitting here.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It's option jive.
Tomas, it is time for Option Jive. 8:13, by the way, so get moving. Let's go. Sharp ratio.
It is. So I found the what I believe is to be the
VIX one-day mean.
The VIX one-day average.
Oh, average. Got it.
Yeah, it's interesting because I've searched around just to see, because nobody's ever asked that question before. But I found somebody that claims it's 11 and 2/3, 11.666, let's say. But I just don't know. I haven't been able to see how far back they go.
Yes, understood.
I was guessing, like I said to you,
I'll give you the win. You said 12. I said closer to 10.
Yeah.
I'll give you the win.
Yeah, I said around 12, but somebody says it's 11.666 one site. I can ask Jacob to just run it through our through a calculation that we have. So I mean through our historical data just to check it out. Yep. But to that person that asked what's the average, so it looks like it's around 12 for probably. But if I went back to 2022, I'm thinking it would be significantly higher. So
you would think.
Yeah. All right, let's do this. So we have a piece today that is going to talk about the Sharpe ratio. and options trading. Let's take a look. We don't usually cover this, so it's kind of fun. I mean, we have before. Julia has covered it a couple times, and I think Jacob's covered it once or twice. But let's see what we got. The Sharpe ratio is used to evaluate the performance of a strategy per unit of risk, calculated as the average return of a strategy divided by the standard deviation of returns. Okay, that's the Sharpe ratio. It's just a way to give context around how much risk you're taking for whatever it is that you're doing. Let's go next slide. So the ratio is generally a simple, effective tool for comparing strategies. The higher the Sharpe, the better the expected performance for your portfolio or your strategy. And just to give you some context here, RP is the expected return or the historical return. RF is the risk-free rate, and the standard deviation is the measure of risk based on the volatility of returns. That's your variation in returns. Let's go to the next slide. So we decided to look at, I think they've chose 3 different underlyings here. The SPY, the XLK, which is a technology, which is like a technology ETF, and the QQQ. And we're comparing the returns for similar ETFs. We can see that the ETFs with the larger weightings have a greater standard deviation of returns, and this can present more risk or more volatility. So the underlyings where it's more spread out, like SPY, they're obviously going to have, where the underlyings are more spread out, there's more underlyings, they're going to have less risk. And the underlyings, like the Qs and XLK, are going to have greater risk because they are going to have bigger percentage positions on certain stocks. That's all it is. Let's go to the next slide. So here's where we start getting into discussion, to kind of the crux of the discussion. So as you can see here, again, the risk-free rate, the annualized return, the annual standard deviation, and the Sharpe ratio of looking at these 3 underlyings, the SPYs, the Qs, and XLK. The risk-free rate over 10 years, okay, the average is 3%. Even though it's 5% now, its average is 3%. The annualized return, the more risk you take, the more money you're supposed to make. So XLK has the smallest distribution, meaning the smallest amount of diversification. So you take the most risk. It's the most concentrated underlyings. So you should make the most money. The Q's obviously next, and then the SPY third. So then you see the standard deviations go up, so everything looks accordingly, and then you can see the Sharpe ratio. You take less risk in the SPY, and you take more risk in XLK. You take more risk, you deserve to make more money.
This XLK, right? The annualized return, is that
what?
They're looking at the annualized return.
The annualized return. So over 10 years. So this makes sense. We calculate the Sharpe ratio for each ETF. XLK has the highest Sharpe ratio and thus the most volatility. Even though it has the highest annualized returns, it represents the most risk. Okay? And again, for the same reasons, you have the most concentration. Let's go to the next slide. So this is a cool little graph. So the Sharpe ratio isn't just used for a single strategy. It is most useful for testing the risk-adjusted returns for your entire portfolio. As you add more strategies and underlyings to your portfolio, the standard deviation of returns reduces. This is another reason why we talk about product diversification, strategic diversification, durational diversification, volatility diversification, everything you can think of. Capital diversification, because as you diversify everything, the standard deviation of your returns goes down dramatically. It's also number of occurrences, the whole deal. They all factor in. Is it perfect? No, but you can see here it looks really clean when you graph it out.
How do I use this in my option trading?
Well, until we build it into the platform, you really don't. I mean, this is something we just have to, this is the next generation of what trading platforms will encompass when they look at, we're building stuff right now that will allow you to look at your positions, and it'll break down your positions, your strategies, everything else, and it'll kind of give you version of a Sharpe ratio. Like that's some of the stuff we're working on. Let's go next slide. So the takeaways. The Sharpe ratio is a nice way to determine risk-adjusted returns for a potential strategy, as certain strategies might produce more volatility than others, even with similar returns. Portfolios that have a higher return also come with significantly higher risk, but are not necessarily the best portfolio for a specific investor. And as in most things in life, there's no free lunch in markets, and traders need to determine their risk tolerance. Now, if you talk to somebody that manages like a hedge fund,
they look at this all the time,
or portfolio, their strategies are really simple. They just basically either have, they're mostly just different forms of long equities that are diversified by sector. So it's very easy for them, since there's only one strategy, to give you what their Sharpe ratio is.
Even on the last slides that you looked at just a moment ago with SPY, Qs, and X, when you look at those three, you're looking at it from a bullish point of view, right? Like it's a return on a bullish point of view.
Yeah, 100%.
Okay. Not necessarily from a trading strategy standpoint of view at all.
But if you think about portfolio managers in a sense of hedge funds, portfolio managers for like mutual funds, investment advisors, and all that stuff, since their strategies are so simplistic, they can actually figure out a Sharpe ratio if all their stuff's audited, if it's legit and all this kind of stuff.
Yeah.
It is very hard to do it with a complex trading platform where we use 10 different strategies, and all the strategies have adjustments on every trade that you make. And if you think about the complexity there, what we do is next to impossible to give you a Sharpe ratio and like a breakdown of everything we do. But we are trying to build technology right now that will tell you how effective you are using certain strategies and how effective your overall approach is and how to make it more effective. Like that's some of the technology we're working on. It's hard.
Very good, sir. Good job out of you. Good job out of the team. We're going to take a quick 90-second break. You basically have an unchanged market with even the S&Ps down 2, the NASDAQ down 27, the Russell down $10 and change, and the Dow down 18, volatility in by 10 cents. We'll be back in 90 seconds. We got more Tasty Live with the opening bell next.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, with the opening bell sound enough, let's take a look at what's going on. Got about 3.5 minutes before the market opens. Even the S&Ps, there you go, down $3. NASDAQ down $33.
Down goes Frazier.
Russell down 12. That's the leader of the clubhouse to the downside by a 0.5 percentage point. Everything else basically unchanged. Dow down 38. Volatility in by 5 cents. Bonds up 10 ticks, 119.03. Corn, wheat, and soybeans, I didn't quote them last time. Look like a mixed bag of tricks. What's the euro doing? /6.
The euro's down a little bit, but the yen is up big today.
/6J. Interest rate cuts on the yen. Yeah, you got a little bit of footing on there.
Yeah, I actually for the first time sold a few out of the money calls today in the yen, and I also rolled from August to Sep. If you have a yen position on options, it's 18 days to expiration. You want to roll from August to Sep.
You are 100% correct. There's August, got 17 days. You go to Sep. Still trading the same future, so there's nothing to do there.
Yeah, it's the only one I have where you're inside of 21 days. HG copper's down 2 today, by the way.
/HG. Yeah, you talked about it a little earlier.
Copper's down. Natural gas is down, but it was up yesterday. Silver's down. Commodities are heavy.
Copper down significantly too, 5.5 cents, a little bit more. That's a good move.
Yeah. Yep. On the opening today, we have to deal with UPS, moved outside the expected move, down about $14-15.
Oh, it was only down 11 earlier. Let's take a look at it.
FCX inside the expected move, down $1.
Beautiful.
But we didn't do Spotify, thank God. And
is it still up around 40?
Yeah, something like that.
Mm-hmm.
And CrowdStrike, hopefully we can get out of that this morning for a small profit after getting beat up for the last 2 days in there.
CRWD trading up around $6 or so.
Yeah.
$6.
And I'm kind of thinking about doing something in crude oil. I'm not there yet. I don't think there's enough juice to I don't think there's enough juice.
Have you rank at 22 here to that person who was doing the confirm and send question, or
I don't think there's enough juice in crude oil to sell strangles. I think anything right now, if you wanted to sell puts just to get a little bit long, or you want to sell put spread to get a little bit long, or I was thinking
right in the middle of this range from June, where we're like trading around 7.
I'll tell you what I'll do in there. We got a minute. I'll do a put ratio spread because that.
Sorry, did the beginning of my sentence, or was it the middle of my sentence that got?
Probably the middle.
Probably the middle.
I think you can do SEP.
Your sentence.
I think you can do SEP. Expected move in SEP is $5.30. Subtract that from 77.20, takes you back down to about 72.5. So you buy the 72.5 puts and you sell the 70.5 puts twice. You do that spread 1 by 2, 47-cent credit is mid price. Nothing done. No need to wait because it's all electronic. Move it a tick. 46. Boom, boom, boom. Bada bing, bada boom. Right?
I'll go to lights.
I'll go to lights.
You are correct. 46. And there you go. Right before the opening bell. How does that happen? Well, that's because futures trade before futures options and futures trade before the equity markets open. Let's take a look at what's moving this market. Let's look at
boom, boom. Out go the lights. Can you tell me who first sang that song? Boom, boom. Out go the lights. I don't know.
Oh, I don't know either.
I wanted to say the Pat Travers Band, but I don't remember.
Oh, I don't know.
If that was it. This is where we need JJ.
We'll look in 1 second. UPS down 14.70. So I don't know if you said you had to do something in there. SMCI down 5. Disney down another $3. Coin down $2.60.
Yeah. What's going on in Disney? What a PIG pig that is.
Yes, sir. Ivy rank going up to 80, and it definitely has earnings coming on August 7th.
I don't think, are the options open?
Down in Baidu also. Baidu down $2.29.
I took myself down to Baidu because I didn't want to take profits yesterday.
Me too. Same place. Same place. Yep. I'm like, can this sound enough be correct just one time? Can the stock go to closer to 95 to 90, please?
UPS, definitely not a winning trade, just for the record. And by the way, these option prices, they are bad.
In
UPS markets,
it's going to take a minute to tighten up. I'm sure. I mean,
markets on the opening are
seconds.
Markets on the opening are about $4 wide.
No bid at $4.30. Yeah, you can wait a minute there, sir.
Yep. So
Dell down $2 after trying to get one little uptick over the last couple of days. ARM down $1 and change. Let's see what's moving to the upside. Meta only up $5. GE up almost $4. That was for earnings. Lilly up $3. Tesla up about $1.50. Amazon up $1.50. Two earning stocks. Tesla is up 69 cents, and Google is up 90 cents. Those are your two earnings plays for today.
I don't think FCX is open either.
What is?
I don't think the option's open in FCX.
Stock still up $1 or so?
Down $1 or so.
Down $1 now. Is up $1 or so.
Yeah.
Pre-market then it was up around 50 cents.
Yep. I don't think the option's open in there yet. Let's take a look and see what's going on as we open here this morning. What did you just talk about? What stock?
Say again?
What stock were you talking about a minute ago?
Baidu down $2.
Oh, no.
Apple down $1. Nvidia
Disney.
Down, was it?
Disney's the stock that surprised me.
Down another $2 and change, right? Oh, $4 now. Disney's getting out to the woodshed.
What's going on there?
No love for the mouse.
Is there something going on that I'm missing?
I don't want to say it. You get mad when I say it.
What is it?
The PIG pig.
Oh, no, I know it's a pig.
Disney Ivy rank of 80 and climbing. Earnings are coming August 7th. Would you be looking at if you were putting on a new position in August or September? I would probably go to September. You look at a roll with 21 days if you're going to do anything with earnings coming August 7th. Crowd down $1.30 now after being quoted higher earlier this morning, going down $1.
Yeah, I haven't really done much this morning yet. UPS opened at like 131. The option markets were too. This is one of these questions. This is one of these times when like I wanted to do something on the opening, I couldn't do anything. The markets were just too wide. Mm-hmm. Tesla, they actually pumped a little premium into it with earnings coming out tonight.
Tesla?
Yeah.
I mean you're right. Kind of the norm, right? Expected move $23, just over 22 earlier. That's one way of looking at it. You can look at it here. You can see a little uptick in the IV rank that I have charted here. You got IVR high and low for Tesla.
Yep. I have not done anything yet this morning. I thought I was going to have a chance to do something.
Thought I was going to be somebody.
I thought I was going to be somebody. I thought I was going to be somebody spectacular, and I'm not. Let's take a look.
Yeah, we were hopeful, but we weren't expecting anything from you.
Yeah, I know. Well, S&P's down $2. I needed them down about 30. And why hasn't FCX opened yet?
SPX?
FCX. Oh, there it did. It just opened.
Okay.
There you go. Luther.
Phone also has earnings. If you're interested in that, I don't think you were.
Not really. FCX, where did this strangle close last night? 163. Well, let's put it this way. The markets are too wide.
Way too wide.
Yep. Okay. Nothing you can do in there yet either. So
even the S&Ps with a fairly tight range all night and this morning. They're down around 4.5. They've only had about a $4 move so far this morning. It is only the first 5 minutes. NASDAQ, same. Russell down 12 and hanging in there. And the Dow down 100 now.
Yeah, I don't see any like gigantic movers.
No, Meta up 6 is pretty good. GE for earnings up $3.55. Tesla's now up $1.50 or 60. It was only up around 50 cents a moment ago.
CrowdStrike, which was up $8 earlier, is now down.
Down 4.
Yeah.
I'm really surprised by this move lower in Crowd.
I know. Down a little money in there today.
Netflix down 2.
Disney's probably my worst performer. And Disney and UPS, again, always getting into trouble with earnings. UPS is in the 126 handle.
No bueno.
No bueno. And, you know, it's funny because I know better than this because I'm a professional.
Yes. Don't try this at home, kids. He's a professional.
I'm a professional. And I already know that I shouldn't be trading any earnings play.
You already know your limitations.
I already know. I mean, thank God it's small, but I already know my limitations. And yes.
Imagine how we feel. We watch you and know.
I know.
We let you do it anyway.
Shouldn't be trading earnings ever. FCX, we'll go back here and we'll just close out this crazy little trade because I don't really care about it. FCX came in a little bit. Won't make up for UPS, but it's something. What else you got?
That's it so far. I think we're in a holding pattern until you get Tesla and Google later today. I would expect volatility to actually uptick a little bit today. It's unchanged right now. What do you think? After yesterday's sell-off in volatility, I don't think it's going to go anywhere. But I'm not surprised if it upticks ever so slightly.
What's Google doing this morning?
What's what?
Google up tiny, about 50 cents, looks like. Yeah.
It is.
I mean, I'm kind of expecting they'll make a little run for the roses, not much. Maybe a couple handles. Like try to goose them at some point. I mean, the S&Ps are only down $1.25. FCX we covered. It was a small winner, 40 cents. Guess it beats a sharp stick in the eye, as you would say.
Yes.
And I'm not so sure these earnings plays are worth it at all. Let's see. Looking around, I'm just looking at my watch list, and the one stock that stands out to me today is Tesla because I thought that they would bring those strangles in a little bit, but they did not. I sold a strangle yesterday afternoon, the 185 puts and the 350 calls, and that strangle is it's up about 25 cents at least.
It's really no movement in the stock, yeah.
Oh no, the stock's up 250.
Yeah.
But stock's up 250, but the strangle's up 25 cents. It's kind of that's a little bit weird for a one dayer. S&P's up on the day now. NASDAQ's only down 8. That does not surprise me, but it will be a sale. Not yet.
You sold them once today and bought them back.
Sold them once today up around 15, 16, and 17. And bought them back about $10 lower or whatever. I also, I think you guys saw. Well, let's say Russell sure doesn't look good yet, but yesterday it rallied late in the day, so maybe today it'll rally late in the day. But I don't know. S&P's up around 56.20-ish, 56.17, 56.20.
That's the high that they made earlier this morning. It's only 5 or 6 handles from here.
And the NASDAQ maybe 20 or 30 handles higher than where they are right now. They're pretty interesting to me. I also think looking at the markets this early, the most interesting stuff on the board would probably be, if you want to get long something, maybe selling puts or a put ratio spread in Disney.
Oh, you're just talking your book.
I haven't done it yet.
Disney has earnings. I think it was said August 7th.
It was down 4 this morning. It's only down 3 now.
Only down 3. Stock was only $120 in April.
That was after the last earnings. NASDAQ futures up 11 now. Now they're coming for a little bit. All right. We're holding off. We'll be there.
All right. Let's take a quick 90-second break. We'll come back. We got more Tasty Live with Let Me Explain and Chris next. We'll be back in 90 seconds. This is Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy. What's that?
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
If you have any questions, feel free to toss them in the chat.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Tomas, we are back, my friend. The market's catching a little bit of a bid here. Even the S&P's up 5, NASDAQ up 20. On the other side of the coin, you got the Russell down 8 and the Dow down 56. But all that means nothing when you got Let Me Explain and Chris in the house. Chris, how are you, my friend?
I'm doing well, guys. Good to see you again.
Good to see you again.
All right, Chris, what you got for us today?
Thank you for helping me on Friday, by the way, when Sadnov took another vacation day.
Yeah.
I had off Thursday. I had to take a personal day yesterday. Tom is entitled to his day off now and again. If I'm allowed 2, I think he's allowed 1.
We'll give him
but
one.
If we're looking at everyone's allowed 1, as Spider-Man says.
Okay.
If we think about this market here, we're turning through the middle of July now, and the calendar starts to get a little bit more unfriendly from a seasonal perspective, particularly given the fact that volatility has had a penchant to rise in the months of August, September, and into October. And stocks typically don't like that. But earnings are very much in focus right now. This is a week, of course, where the Fed's in the communication blackout window, so we don't have various policymakers introducing random bouts of binary event risk. And so we turn our attention to those earnings reports. 74 companies in the S&P 500 have reported thus far. 81% have beat expectations. Overall for the market, we've seen 261% of companies report earnings. 53% of those have produced positive results. The average return for a stock this earnings season is 0.4% higher, and 51.3% of reactions to the earnings releases so far have produced a return between -3 and +3%. So as things have unfolded here thus far, this seems to be an environment where, having come into the last week with a rise in volatility already, the market seems like it's a little rich in that regard. So unless there's something significantly outlier in one of these reports, selling the vol and expecting the market to more or less stay pinned has been the best trading strategy, the best approach thus far on average, right? Over 50% of the time, that'd be the best thing to do. So I'm curious as to how you guys want to approach this moving forward, because we do have some big ones on deck here that are arguably more important than anything on the macro side this week, including that PCE report on Friday, because we know the inputs already. But with Apple, with Tesla, or rather should I say with Alphabet and with Tesla here coming up, these are 2 of the stalwarts that help power the NASDAQ rebound in recent weeks. We had the fabulous 5 and the terrible 2 reunited into the magnificent 7 with Apple and Tesla here in June and early July. So how are you guys playing these 2 big names today? Are you going to bet on this being a market that is like the average, where we don't see a big move, or because of the names involved here, should we be expecting something beyond the ±3%?
Okay, so there's a lot to unpack here, because the reality is that we actually did a couple pieces on earnings yesterday, and some really good pieces with some historical perspective and some real-time kind of, we got into the nuts and bolts of a lot of these earnings plays. So far, I can tell you that on a trading basis, they have been very average. Today, obviously, the difficult thing about looking at the numbers that you looked at, Chris, is that you're not separating those by liquidity. And so when we look at earnings plays, you really have to be what we call the absolute minimum is 3 stars. And then 3.5 is like, we want 3.5 and 4-star liquidity to trade earnings. And so far, a lot of those numbers that you talked about, a lot of those numbers come from stocks that are smaller, that aren't really necessarily that tradable.
For sure.
Just last night, as an example, the 2 biggest plays, the 2 biggest tradable stocks were Spotify and UPS. Both were significantly outside the expected move. and all the short volatility plays got crushed. So it's not that at all that easy. And the one that we played that was inside the volatility expectation was FCX, and it came in tiny. It didn't offset any of the losses in the other two. I think that it's important for people to realize that when you look at the kind of the total of all the earnings plays, the numbers can be a little misleading because you have to really focus on the ones that have liquidity and relatively large expected move. Otherwise, there's no premium to sell. So tonight will be a very good indication of two of the biggest stocks. The biggest stock so far to report was Netflix, and that was clearly inside the expected move, and that was obviously our biggest winner so far. Tonight come the second two biggest. I mean, of the top 10 stocks, you've had one. Tonight you have two more. And we looked at these yesterday, and we kind of really got into a lot of the small details. And to us, it looks like Tesla is a more interesting play than Google. One, because it's a little more liquid. Two, because it has a greater expected move. And three, because for the last 4 years, it has had a better ratio of expected move of realized to actual than Google has. Google's been just tougher to make money on earnings. It doesn't mean anything looking into the future, but that's just where we stand right now. I think Tesla's just a more liquid underlying than Google. So far, I mean, I would say for us, the results are very mixed on earnings. We've made money on like 2 or 3. We've lost money on 2 or 3, and they're pretty much a wash. So, I mean, that's where I am on earnings so far. But I'm being very conservative because I don't like it when the starting point for volatility is so low.
What say you?
Well, I think that's a very fair point. And, quite frankly, I'm looking at this on the index level, but it seems that if there's going to be moves outside of the smaller band, perhaps, then it's going to be in some of those more meme stocky, top trending on stock twits or Wall Street bets kind of names that perhaps could produce that. Yeah, Either way, though, this also exemplifies the fact that it's a coin flip, right? A 51.3% accumulation of stocks trading between minus 3% and plus 3%. That to me is, I don't know if there's much of an edge there for traders. I personally really don't like trading earnings reports themselves because of the idiosyncratic nature and how quickly things can spiral out of control. It just doesn't fit with my macro upbringing, as it were. But when I look at something where there's only a 51% chance of something happening, like if I go to the blackjack table, that may be okay. But in the market, I want more of an edge than that. So I don't know if there's anything I see on the board that suggests there is something to be gained, because an average move of 0.4%, that's not really anything to write home about in a low volatility environment. You really want to be selling a strangle there when you're at such a low starting point. So Tom, we didn't talk about this beforehand, but we kind of both looped around to the same point, which is this has actually been a very tough earnings season. And there's not really much advantage here right now because it's not producing anything reliable. It's a coin flip.
Yeah, no question about it. And I mean, I don't think that last earnings was a good earnings cycle either. I mean, anytime you have a really low starting point, implied volatility, earnings cycles are super hard because you are just by definition selling, like we talked about it is very difficult to make money. We looked at the ratio of expected move to actual price. And right now, you're a lot of stocks are in that. Well, I mean, tonight's going to be a little bit different because I think Google was 6x and Tesla was 8 times. But I think you're looking at a situation where just generally across the board, when vol's low, it just makes things a lot harder because the expected move is, a
lot tighter.
It's a lot tighter, and the news doesn't really change. You know what I mean? Like it's like you can still have bad earnings. You can still have good earnings. Like Spotify being a perfect example. What was the stock? What am I thinking? Oh, FedEx. When FedEx came out with earnings, stock was up $40 when it was up $40 when UPS came out, which was 2 times the expected move. When UPS came out, it was almost 2 times the expected move the other way to the downside. So there's not even a lot of sector comps or anything like that. It's really just a toss up. But the hardest thing about earnings, Chris, is that they are binary. So there is no, there's no real adjustment you can make until post trade, and then there's no vol left. So then you're just kind of playing there's so little edge. The great thing about earnings are they are a very good engagement tool. The bad thing is there's really no edge. It's not even a macro edge or no edge in any sense. There's no vol edge, but people like it because it's instant gratification if you're right. And if you're directional, it's really instant gratification.
Oh, yeah. No, I've punched a few tickets over the years. 2014, Gilead, when they put out their hepatitis C drug, I was long a bunch of out of the money calls and, pay for the engagement ring, the wedding, what have you. But that's like the only success. No, Tom, I mean, literally at the engagement party, we cheers to hepatitis C being cured because this is how this is all paid for. So, that's the only good thing I can say about my earnings trading. I really have never had a consistent edge there. Good track record.
You cannot have a
and
consistent.
It's difficult to do so.
You can't be consistent because even if you look at wins and losses, they come out random at around 50-50. So there's not you can't say, oh, you've always got to be long. Even though 80%, whatever you said, 81% of the companies beat earnings, it doesn't mean 81% of the stocks are up. In the end, they're going to be about 50-50.
Exactly.
So listen, we still do it. We do it smaller than we used to, and we do it a little less aggressive. Like I said, I think Tesla is the more interesting play tonight, but with an expected move, what do we say, $22, $23, up a little bit today, $23, even $23 in Tesla. I mean, I feel like, why can't that stock move $40? I don't know.
Well, because the expected move is 23.
I know. Well, I'm looking at the August move in there, and I think that August move
$32.
was, what, 32? Mm-hmm. Yeah, I looked yesterday. I thought it was 33. So I went 2 times the expected move in August, $66 away. And you can do it, you can do it 25 or 50 cents better today so far. All right, what else we got?
We could talk about how there's not much on the calendar for the macro week this week, although I would point traders' attention to what's coming out on Friday, the PCE report, whose inputs we know from CPI and PPI. It's likely to be another good one that further paves the path towards getting that September cut. There is some outside chatter that a July cut could be live so as to not interfere with the political calendar, but the Fed's made almost certain that they're not going to even consider that moving forward. Trump's been out saying that Powell's job is safe through the rest of his term, so maybe politics don't need to be a concern at all. The bigger macro story here, though, is what's going on with the way the bond markets responded and traded since June 27th. Since that debate, I've held the opinion that the way that betting markets have moved suggested that there was going to be significant down ballot drag for Democrats, effectively bringing forth a Republican trifecta in the House, Senate, and White House that would allow them to open up all sorts of pathways to new deficit and debt spending. While the change in candidate perhaps puts a cap on that trade for now, we haven't seen a reversal significantly thus far. Bonds have not traded meaningfully higher. We haven't seen those small caps that were poised to benefit should all those tariffs be levied come back in. The NASDAQ hasn't fully rebounded. But I would point to people that we've seen Trump's betting market odds already start to come back in. He was trading near 70%. I think he's now at 58% today. As Kamala Harris and whoever the Democratic vice president gets into earned media, and I say this as someone who has run campaigns, she is going to move the polls meaningfully. And as those polls rise, Trump's odds are probably going to come down. It doesn't mean that he's not the favorite, but it means that the Trump trade probably gets a little bit cooler here. So whatever did well from June 27th up until Friday, until July 19th, I might want to take those off and start to think about fading some of those moves. On overtime today, finally, we're going to have this list together, but on overtime today, we're going to have that full list of the top 10 stocks that have been impacted by Donald Trump's odds rising and how we can take advantage of them perhaps coming back in if his betting market odds have peaked moving forward. I'd also be remiss not to remind everyone, on Wednesdays now, we have the prediction trade. Jeff Joseph and I go over betting market odds and how they're impacting financial markets. We're going to have a bunch of great guests from around the political economy world, so be sure to join us right after overtime.
Yeah, I was actually on the predictive site this morning, showing Tony, talking to Tony about it, and I was also talking to the founder last night, and we were going back and forth, exchanging emails on just how much action, how busy it is, and how much action they're experiencing right now. Yeah, Trump's come down to, in a binary marketplace, he was as high as just under 70. Now he's down to 58, and Kamala is she's moved up from she was at 16 the other day, but she moved up after the Biden announcement from 32 to 44 right now. And she's kind of holding steady around 44.
That's about what Biden went before he dropped out.
He was in the mid 30s because they thought he was going to drop out.
Yeah. It fluctuated all over.
Pre-debate.
Yeah.
Pre-debate. It was closer to like a 3%.
No, pre-debate he was winning, and then they flip-flopped. But it's interesting, a lot of the I'm not just looking at them, looking at some of the vice presidential things, and then also some of the, some of the other long shot odds and stuff like that. Like yesterday, Biden still was trading for 2 cents, and I'm like, why would somebody pay 2 cents? Like, he's not coming back. Like, he's not reversing. Like, why would somebody pay 2 cents? I didn't understand it. Today, it's at a penny. So, anyway, I guess my point is, although I find those betting markets fascinating, I still remember 2016 like it was yesterday, and 2020 as well. And
because Hillary was such a two-to-one.
Hillary was a bigger favorite in 2016 than Trump is today.
Yep.
So I mean, who knows?
Anything can happen, is what you're saying.
Yeah, I think it's going to be a toss-up after the Democratic convention. I think it's going to be a toss-up, and I think you're going to be basically looking at 50-50 odds. I think the challenge is going to be, the challenge for Trump is going to be that he's just not a good front runner. He's much better playing from behind. I mean, that's his strength, is to play the underdog role is his best suited role. And his personality.
He's a counterpuncher instead of puncher.
He's a counterpuncher. Yeah. He's totally a counterpuncher. Yeah. I mean, he's absolutely a counterpuncher, and playing from in front is very difficult for him. I don't think he handles it well, but we'll see how that holds up. I don't think the markets honestly care.
Obviously, they don't.
Obviously.
Volatility really hasn't gone anywhere.
No.
Markets hanging in there just off of all-time highs. Yeah, obviously.
Yeah, I don't think the markets care at all. And
Daddy was just having a discussion. They're not fighting with the election.
I actually don't think the markets are going to care at all. Surprisingly, I think you're going to see heightened volatility, but not because the markets care about the presidential election, just because vol's been too cheap for too long. And I think it's teetering.
Everything has to normalize a little bit more.
I think it has to normalize a little bit more.
I agree with you.
Yeah. So I think that's the most interesting piece to it. Let's see. Oh, you know what I wanted to mention, Bat, is that CrowdStrike is up $5.
It's up $5.40. I'm looking at it. Yep.
Yeah. After being just down $4. That's a crazy move. Sorry, Chris. I didn't want to sidestep. Anyway, what else you got for us?
Well, just in terms of how those, I'm looking to the betting market because I think that not only just for the prediction trade, but it has been following what's been going on with bonds. There has been, since June 27th, somewhat of a relationship there. And the way that these news cycles work out is that typically candidates get a bump after their convention. Trump just had his convention. So now we're going into a news cycle that's probably going to be more favorable for Democrats. I only say that because, again, history shows us that when you go into and out of a convention, that candidate, that ticket tends to get a little bump in the polls. So if you get that bump in the polls here and those Trump betting odds come back down, the base case scenario of Republican trifecta starts to dissipate again. And as we get those earned media, with a Fed cut cycle coming up, I'm feeling, again, very much more convicted about being long bonds than long stocks here moving forward.
So they stay coupled is what you're saying again, right?
Yes.
Got it.
We go back to a base case of a gridlock in D.C. outcome where it doesn't really matter who's president. Democrats control the Senate, Republicans control the House.
Very good. You ready to take
a little gridlock? We love a little gridlock. We like to slop.
Just a bit.
We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. We'll be back in 90 seconds.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure. But before we do, let's take a look at this market. Sadnov, even the S&Ps, surprising, at least surprising to me, up 13. NASDAQ up 16. But look at this. The mighty Russell up 15. Was the weakest of the group, now the strongest of the group. Russell up $15, almost about a little over a half a percentage point move with basically nothing for the rest of the market. Dow up 51. Volatility in by 25 cents. Surprising to me. Again, I thought volatility would stay a little bit. I said it earlier this morning. I'm obviously wrong.
Yeah.
Volatility in by almost 2%, 1.5.
Yeah. There's a lot of stuff going on today that's
Crowd is up almost $7 now. CRWD, after they said it might be hacking, might not be hacking. Anyway, Crowd.
Yeah, I went from down a bunch of money in Crowd to up some money now.
See that? Come to the promised land, Sad enough. I told you.
I don't know what the hell I got going on in there now. I'm going to try to widen out the strikes and see what happens.
Beautiful.
I don't know. I'm almost back to even on a stupid trade. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. It's 9:10 Central Time. We're in Chicago. And we've got Market Measure coming up, talking about overnight VIX and zero DT success. It's pretty interesting. Jacob did a great job on this one. And both our market measures, the sharp ratio one was really strong this morning too. And our research team continues to kill it in with all the different pieces we're doing. Also, don't forget, I just want to remind everybody, this Saturday, we're looking for Bat. He's usually on Saturday mornings cowering in the corner of his garage, working on his honey-do list. But what are you doing this Saturday?
I'll be working in my garage on my honey-do list.
Okay, well, we have to find you because the whole thing is where's Bat. So like hypothetically, if you were to be somewhere.
Don't tell people to do things that they don't feel comfortable doing in an audience when like you did last time, you had an audience in front of you here in Chicago.
Well,
you asked the audience to lie so that you could save $20, and that was a shame. And you never paid me.
I didn't ask the audience to lie. I have video proof.
Yeah, I know. I saw the video. Yeah,
I have video proof. You want me to play it on air?
No, I don't need to play it on air. But it was not true.
You actually tried to grift me because you already knew that she was on vacation. It was a cheap shot. A nice try. That's why you wanted to bet more. Tony's like, it's like when me betting with my wife. Like unless she has evidence, like unless she knows the answer, she won't bet with me. He's the same way. He won't make a bet with me unless he actually knows. Oh, she's on a plane. I know she can't be there. But we have to figure out where the Bat is. So you want me to tell you the cities you could possibly be in?
Sure. Houston, Toronto, Phoenix.
No.
Oh,
this is a where's Bat thing.
I know. I get it. Yes.
So you're at different places all over the world. And the question is, where, not you necessarily, but your pot of gold, where did you hide it?
I understand.
Yeah, there's 6 different cities.
I know.
Yeah. You don't know where this, we don't.
No, I remember when we first
you don't even
doing
know
it.
what city
you went with.
You don't know what city we've hidden your magic treasure in.
That's correct. That's correct.
That's for somebody to figure out in Toronto and win.
I don't want to know because if one of my peeps wrote me, then I would have to tell them. I don't lie.
You don't know.
That's why I said I don't want to know.
Okay, you don't know though. Be clear. We didn't tell you.
I don't know.
The only person that knows is Anderson Consulting. Ernst & Young. Now, we're going to play some games up in Toronto this weekend.
My wife did ask me, aren't you embarrassed that that's all over the internet? Like that picture of me and looking like Waldo and everything else. A little bit.
Tell her. You would have been more embarrassed if they didn't Photoshop it. Tell her that's the good picture. What were we doing this weekend? We were talking about. We were in some restaurant and.
Did you give away the cutout of me last time?
Yeah.
I know one person on the internet has it, brings it to family functions and everything with it.
Oh, yeah.
I've been at barbecues. It's been great.
This time we're going to try to buy it back from the person. It's possible.
Let me know you do.
Anyway, we were at some place this past weekend. We were out to dinner and my son and his fiance. It's hard to say.
I know it's hard for you to swallow. Fiance, yes.
Fiance.
Yeah, you're not good with French.
And there was somebody there that they recognized from some, I don't know, show, some.
Great story. Go right ahead. Yes, we'd love the
TV show. I don't know.
Yeah. Mm-hmm.
Yellowstone, whatever. I don't remember.
Your son recognized somebody or the fiancé recognized.
Yeah.
Yeah, got it. Not you being recognized, a D-list internet sensation in Chicago. But yes, go right ahead. Yes. Huh?
So they recognized somebody, okay?
Uh-huh.
So I think, but she looks so much different on TV. Look at all the work they do. They Photoshop, they clean her up, blah, blah, all this stuff. And so I'm like, I'm like, yeah, that's what we do with me and Tony. And the response right away was, well, you guys need it.
That's fair. That's fair.
Yeah, it was funny at the time. It was all in real time.
I'm sure it was. I'm sure it was. A little South.
Anyway, if you haven't had a chance yet and you live anywhere in the Toronto metropolitan area, we will be there Saturday morning. Show starts at 10. Doors open at 9. This is a fun show. It's a short one, only 2 hours, and we cover 6 different strategies and have some fun with it. It's Dr. Jim, myself, and Anton, and then
nothing says fun like Dr. Jim. Who else?
Antone
and you.
Anton's cracking jokes.
Oh, is he?
Oh yeah.
Is it?
And then it's Julia.
You got permission to do that? He got the
Julia, Liz, and Jenny. Yes. And so we're very excited to be in Toronto. We're heading up there Friday night. We'll be up there Friday night, and quick 1 day in and out, and the whole team fired up. I guess that's it. So hopefully, if you haven't signed up yet, tastylive.com/events. tastylive.com/events. Hopefully, we'll see you this Saturday in and around Toronto area. We have not been there in many years now, about 4 or 5 years. Also, Alan Wood, who's going to be running our, who's going to be the CEO of Tasty Canada, will be there. And so if you have any questions about where we are in the process and everything that we're going to be offering and everything else, you are more than welcome to. We'll introduce Alan. You can talk to him.
So it's real. Tasty Trade is eventually going to Canada, huh?
Yes.
I know you've been threatening.
Anyway, Alan will be there, so you can ask him any questions. I'll point him out. He's been with us for a long time, since we started Tasty. Actually, he's one of the original ones. So he's been with us from the get-go and very clear of the concept. He was also with us back at Thinkorswim, so he's got his fill of us. All right. So sign up at tastylive.com/events.
Beautiful.
You ready?
I am, sir.
All right. This is where we get into a fairly heavy market measure today. So
look at the mighty Russell leading us out of this up 1% or $23.
I know. I was so bullish on the Russell. I'm long the Russell, short everything else, as you know.
Mm-hmm.
And
Nasdaq's unchanged.
I know. I'm hanging in there. The Russell's saving my arse today, but I am getting a little chopped up in the IWM trade.
In the IWM?
Yeah, because it's hard to keep up with the Russell. The Russell's just a freaking monster. I keep rolling up calls. I keep rolling up puts.
Yep.
It's up 22 right now. What do you do? What does a new subscriber do?
Yeah.
Ivy Rank's still 81. Roll up some more puts.
Warrants a trade.
Roll up some more puts.
Mm-hmm.
Anyway, let's do it. So 0DT options markets are some of the most liquid and active available, but deciding how and when to trade them can be daunting. The VIX, a measure of the total premium available in the 30-day SPX options, is one of the most useful market indicators for option sellers. I also like the VIX 1 day if it pops up. Where's the VIX 1 day right now?
We looked at it earlier. It was like 10 and change.
Is it still up there?
Yeah. 'Cause 1 day. 893 now. Under 9.
Yeah, I was going to say, I would be surprised if it's
1004 last time I looked at it.
Yeah, I would be surprised if it hung up there at all. Given the importance of starting 0DT trades early in the day, the most useful sort of indicator will rely on looking at the overnight or the pre-market action. Some people have been writing to us saying, hey, if the VIX is up overnight, is it better or worse to do a 0DT trade? Or if the VIX is down, is it better to do a 0DT trade? What would you think?
Overnight action. I don't think it's going to have too much of a bearing one way or the other on overnight action on
overnight in the VIX.
Oh, in VIX.
Overnight.
I would hope that it helps with the high implied volatility overnight. I don't know if it's going to be that big.
You're saying you want higher or lower?
I'm saying I would want higher.
Okay, so let's explore pre-market moves in the VIX. Might be a useful guide for what to do when trading 0DT options. Are you better off putting an order in when the VIX is higher or the VIX is lower? That is the question. Let's go next slide. In the overnight session. So we used 1 year of data. We examined selling 30, 20, and 15 Delta Strangles, managed at 15, 20, and 50% of max profit. Losers were held all the way to the end. Contrasted the overall results when the VIX expanded or contracted prior to the market's opening. All the trades were assumed to go at mid-price. So if you're trying to figure it out, realistically, your results will be slightly worse.
Okay.
Because you can't fill everything at mid-price, but that's the only way we can figure everything out.
Sure.
Okay. So let's go to the next slide. All right. So we look at 30 Delta Strangles closed at 15%. That's 15% winner. Obviously, your win rate's going to be super high because this happens really fast. With the VIX up in the morning, pre-market, your win rate's 95% and your average P&L is pretty strong, 51%. With the VIX down pre-market, your win rate's 92, so the win rate's high, but you actually lost money.
Yeah. I didn't think it was going to be that big of a disparity between the two.
It's pretty damn big.
It's real big.
When the VIX is up pre-market, you did much better P&L-wise than when the VIX was down pre-market on the 30 Delta Strangles, closing at 15%. Let's go to the next slide. A lot of slides here, so you can see some bunch of stuff. When you're closing at 25%, surprisingly, the average P&L was about equal, which made it, everything was kind of equal. C-bars, wins, win percentage, average P&L. And when you closed at 50%, next slide, John. This one was crazy because this one, when the VIX was down, you got killed. When the VIX was down overnight. And when the VIX was up overnight, you made a lot of money. So the answer here is that the overall with the 30 Delta Strangles, whether it's 15%, 25%, or 50%, you did way better when the VIX was up overnight than down. Last night, the VIX was slightly down overnight. Just remember that. Okay. Let's go to the next slide. So now we're going to look at 20 Delta Strangles because this is what we tend to trade. VIX up overnight, you basically scratched. VIX down overnight, you got killed. The C-bars are all about the same and the win percentages are close to the same. Overall, it was a negative P&L at 15%. VIX up or down. Next slide. But that's the only one that was negative because you go to the 25% and all of a sudden you were positive again on your P&L and everything else was kind of relatively flat. So this takes you to a positive P&L, weighted to 25%. And if you go to 50%, next slide. You go to 50%, only the up pre-market. So again, this is a situation where in the end, the value came from VIX being up pre-market. This surprised us, but because of how consistent this was, but the VIX up pre-market did much better than the VIX down pre-market. Let's go to the next slide. We're going to do 15 Delta Strangles here. And the 15 Delta Strangles, when you manage those too early, none of those were, over time, were successful. But if you go to the next slide, they got a little bit better. 15 Delta Strangles managed at 25% or at 15%, just didn't pay over time. Let's see 50%. Next slide. Perfect. These made a little bit of money. So in the end, again, VIX up pre-market outperformed in
you could say significantly outperforms. I mean, I think that's a pretty big.
It's hard to define VIX up pre-market because we did this. If the VIX was up a penny pre-market, it was up.
Right.
So you're not going to get times when the VIX is up much more than like.
But it's a good thing to see. Like if you see volatility has expanded overnight, you might say, oh, you know what? I don't usually trade 0-day options, but maybe today I'm going to do something and sell a little premium in there just because it looks like the odds are in my favor on entry.
So
you load the Flotola, you just make it a little bit.
The one thing I'll say about this is that the reason that this works is because when the VIX is up pre-market, over the course of the day, it generally contracts a little bit when the overnight risk comes out. And that's what's been so good about. Let's go to takeaways. So short
Zero DT positions performed noticeably better when the VIX was up pre-market than when the VIX was down pre-market. Fortunately for retail option traders, the VIX rose overnight nearly 2/3 of the time, which is really surprising to me that it rose 2/3 of the time. That's over the last year, and maybe because that's just a low starting point. There are hard and fast rules, however, and the 30 Delta Strangles managed to 25% of max profit bucked the trend, seemingly indifferent to the VIX. It's unclear if this pattern will continue, but for now it looks like examining overnight changes in the VIX can serve to be a useful red light or green light for deciding on zero DTE SPX trades. Like when you came in yesterday and saw the VIX was down pre-market, based on this piece of research alone, that would have been a bad trade.
Yeah.
And you know what?
It ended up being one.
It ended up being one.
Right, because we moved so much in the day.
That's right.
Yep.
So it's actually pretty damn interesting. And this is from customer emails, people that noticed this trend.
Very cool. Good job. Good job by the team. A lot of research went into those slides. Good job of them. Was it a quick 90-second break and come back? We got more Tasty Live after this. Oh, joy! My friend and yours, Mr. Scott Sheridan. Next, we'll be back in 90 seconds.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Truth.
Tomas, we are back, my friend, but enough out of you. Tasty Trade World Headquarters. He's less of a friend of mine than he used to be yesterday.
Oof.
Your friend from the Scott Sheridan Studios, Mr. Scott Sheridan. How are you, kind sir?
One little slip up. One little slip up, and it throws years in the garbage.
1,000 bridges.
1,000.
Guys are playing golf on Thursday. Somebody backed out. And then you talk about it in front of me. And then you turn to me and you go, "That, you want to play?"
No, he's got to do the last call. Plus, there's too much going on.
Oh, you're playing in the middle of the day?
No. In the afternoon.
It's like for Tom, because he's confused on what the time zones are. He actually thinks it's early evening, but it's 1:30.
Right, because he's still on California time.
He's on some time.
36 hours there.
Right, he's on some time. He can't get back on track, so it's 1:30. But over under right now, if there's ability to bet on weather, take a torrential downpour at some point in the first 9.
Buy rain futures?
Buy rain futures.
I played after the last round. I played in the whole.
Played in like 50 degrees and pouring rain.
And thunderstorms.
I did not play in lightning.
Very, very frightening.
We didn't play in lightning.
I swear to God, we played in
They
thunderstorms.
shut the course down.
Because we're men. Okay, we're not little.
If I just drop this on my toe right now, do you think that would get me out of here?
Can you bang it over my head, please?
No, but if you eat that whole thing of cherries, that'll get you out of here.
You're men. Well, you know what? Men are pretty stupid then. How's that?
Yep.
Right?
Yep.
No.
Problem.
They're not SMRT.
People don't really get killed on golf courses.
Don't? Really? Because of a metal object with lightning?
When was the last time? More people get killed off of golf
here we go.
courses.
Okay, let's go. I love when you make this stuff up. Let's hear it. Go ahead. More people get... Here it comes. I'm waving this. More people get killed.
More people
when
get
they're driving their
by alligators.
When they're driving their cart to their car to put their clubs away.
No, but more people get killed by driving their golf carts
into the water.
Into the water.
Which we did see at Seven Bridges, remember? I'm not going to say those two women.
Wait a minute.
The two women.
I sent you the picture.
Vinny.
And he had his first
No, but he drove
run-in with a golf cart.
No, wait a minute. I thought Vinny's friend hacked up the green.
That's a different story.
Oh, you've got another altercation on the golf course?
Not on a golf course, but they were in Wisconsin with golf carts. And
they went rogue.
They had 2 golf carts, 7 14-year-old boys.
7 boys on 2 carts?
7 boys.
They weren't racing.
3 lap.
They were racing. They were going up and down hills. They stole.
Borrowed.
They borrowed some corn stalks.
Come on, it's still an open investigation. They borrowed.
From some, and they were jousting each other with the carts, hitting each other, and then one.
Wait a minute, where was this?
In Wisconsin.
Anything goes.
Wait a minute, in the Winnebago?
No. This is not with me. There's another family took him up there that has a house.
Oh, so he's happy to go there, not with you.
I wasn't there. This never happens under my watch.
His watch never happened.
Because he can't leave the Winnebago.
Because they don't get to.
Grandpa's smart enough. He takes the keys.
The guy went to bed at 9 o'clock after,
The guy's not smart enough to take the keys.
How's he, 13 or 14?
14. 7 14-year-old boys.
That's bad.
They're not going to bed at 9 o'clock.
So he rolled.
That's a lot.
They rolled the golf cart.
I think I would say they rolled something else.
No.
Oh, that for sure.
They rolled the golf cart.
Oh, come on. 14?
14, they're smoking pot.
They're smoking for sure. I'd rather have them smoke than drink.
100%.
Yeah, for sure they're smoking.
Not my little angel.
Oh yeah, of course, because you're little.
I'd like to bet. I don't even.
Wait a minute, is this, I got to check,
You don't understand the iron fist that I have.
Can I buy?
Yeah, because you don't have one.
Just ask Nick.
I
never
buy
did
this?
that stuff.
Can I buy this?
Me too.
Can I?
Me too.
Buy
Chrissy's
$20?
number. She's for sure.
Drinking too? Can I buy drinking too?
I won't buy drinking.
He
may or may
he
not.
tells me he did. He did have
a beer,
a little twisted tea one night.
Tell him to stay away from it.
It's not a big deal, but I'd
Tell him
say
to stay away from the alcohol. Way worse. Just stick with the can.
by 14, they've all smoked pot.
Oh, for sure.
No.
100%.
I was in my heyday.
No. I never did.
Please.
14?
Never.
Please.
I'm telling you, no.
How about this? And somebody did ask this just for Fred. Here we go. They didn't understand what that was.
14?
Yeah, I was an athlete.
Oh, Oregon and Alistair. Wait, Alistair and Argon?
And boy leader of Arister and Archon. That's correct.
See, Alistair and Argon.
No, man.
See, you were dedicated.
100. Can I go?
Me too.
Can I get
No way to prove it.
Tony,
I can't bet.
I gotta say, I'm jumping ship on this one. You and I are not aligned today. We're not having a good day. I'm on Tom's side. I'll take 50.
That's it. Take your wine back. Take your wine back. I don't care now.
Probably ruined. It's been in this. It's like 120 degrees in here. It's probably cooked. Probably not even worth drinking. That's okay. I hurt my feelings.
I mean, you guys crack.
By the way, speaking of food, I had to pull one last night. I had to pull a fast one.
What?
Because it was late. So we had to pick up our
It was
dog.
late and you got back too late to make dinner for everybody?
You didn't eat at the club?
Lunch. We had lunch. I wasn't staying for dinner. I had to get out of there.
You don't like the food at the club anymore?
Not at my club, another club. And it's for those, it's in the northern, I don't even know if it's still Illinois. It is so far, it's crazy. Not the point. So I had to pick my dogs up, which are right over here. So what would you do if you had to get food over here? Let's see what you come up with.
Where are the dogs?
Lake and Paulina.
Lake and Paulina.
Right here. Right here. I'll tell you, I was in this like half a mile area. You know the restaurant.
I know every restaurant. Where would I go last night? That at that time? What?
7:15.
Oh, 7:15. I mean, you're going to go to D'Amato's.
Not a bad call, but didn't. Go ahead.
What else? Well, if you didn't go to D'Amato's, then you didn't go to.
You didn't go to D'Amato's. You didn't go anywhere.
You didn't go to Bari. Then
I got to give you a hint. This is sad. Closer to you.
You got Middle Eastern?
Closer.
You got coffee.
To my house?
No, closer to you just in general. Down here.
Oh, closer to me down here.
Yeah, you're engaged. Oh my God.
I'm engaged.
Oh my God, I can't help you. You're engaged, meaning you're participating in this.
You got Bunchy.
Thank you.
Oh, wow. It took you forever.
Wow. Too close to home. He couldn't figure that one out.
I mean, I didn't know. How was it?
Good. I haven't
Still
had
one of the
Bunchy.
best. I think it's some of the best pizza.
No, let's not go that far. No. We're not aligned today, okay? We started off poorly. We're ending poorly. We'll start fresh tomorrow. We have a new day tomorrow. Here's my
That's
issue.
what people are used to, but you don't think the ingredients are fresh.
It's very good pizza, but to me, it's more. Oh my God, I'm gonna take a lot of heat for this. It's more like a higher end version of Pompeii.
Do you know what?
It's a higher end version of Pompeii because it's this. The what do you call it?
So I used to buy it at Dom's almost every time I went shopping at Dom's, but since Dom's went under,
coming back. They filed for Dom's filed. They're two different owners. I just read they both Dom's and Foxtrot both filed for liquor licenses. So they're both coming back.
Really?
Yeah. I don't know to the scale, but they're both coming back. But continue. I'm sorry.
Oh, that's good news.
No, but go back to Banchi. See, the Banchi, it's more like focaccia.
I get you.
Right?
I get you.
It's not like if you're looking for a slice, it's not a slice.
Not a slice. No, it's not gonna fill that urge.
Hold on, we're back.
But I got to tell you.
Okay.
I love you, man.
It only took.
I missed you so much.
It only took 15 minutes.
I missed you.
You know what? Now we're getting it
That's
up.
right, Sadnov. Say something.
Yeah, what do you got?
Jump all over you and pounce on you like a
right now.
Their sausage is great.
Was good. I had sausage, mushroom, and I had pepperoni. My complaint about the pepperoni.
I know it's too big.
It's not that it's too big.
That's what she said.
I'm fine with the size, but they put some under the cheese and some over the cheese. It's got to all be over the cheese. Who doesn't? Who wants soggy pepperoni?
I don't even like pepperoni.
Problem. I had soggy pepperoni over the weekend.
Ugh.
I spoke with Corinne. I know. I'm very sad.
Post hot tub.
Very sad. Oh no.
Okay, wait a minute. I do a PSA. I don't know if you talked about this today. Now, Tom's going to tell me who cares because nobody has positions, but we do have positions. VXX is doing a 1-for-4 reverse tomorrow.
I don't have any positions in it.
VXX, not even what we're talking about.
Of course,
VXX.
I said you don't, so nobody cares.
No, we only care about things I have positions in.
I put one in your account before I came on here just so that it would be in there.
Put a position in my account?
Yes, just so we could talk about this. Anyway, it's a 1 for 4. They're going to be non-standard. They'll go to 25 shares. So they're not adjusting strikes. They will be closing only tomorrow. So if you have a position, you'd like to make an adjustment, my suggestion is you look at it today. I don't know when the new standards will either come out tomorrow or they'll be out on Thursday. Okay, I'm done. Now you can put. Now here comes Tom. He's gonna put a position on just to message me tomorrow and go, why can't I do anything with this? Okay, go ahead.
100%.
I'm not.
100%.
Right? Why? What's wrong with the system? I can't do anything with this.
I don't have a.
No, actually, he's not going to realize it. He has it in his account. Customer's going to write him and say, I can't do this. And Tom's going to say, the customer's right, we can't do this. Then you're going to say, we talked about it yesterday on the show. Don't you remember? He's like, no, I never listen to you when you talk.
Yeah.
Yeah, what?
Oh, nothing. I'm just checking things out.
You need these?
Huh?
Huh? You need these too?
Huh? Okay, people are paying attention. You're too slow. All right, Tony.
Yes, sir.
Nice to see you.
What's that?
Nice to see you. I got a problem though today. I gotta be careful how I say this because somebody might be listening. Lunch.
Hey, you don't like velvet taco?
Oh, it's horrible.
It's beyond horrible.
And that's what made me sick. I'm telling you, it was the Mexican food.
That's not.
It was the Mexican food made me sick. That's what made me sick. I'm telling you. I had food poisoning. It was the only thing I ate.
Okay,
there's a bug. There's 100%.
I ate the same food.
It's from the Mexican food.
I ate the same food.
There is 100% a bug that's going around because I'm not naming names. Somebody else had it. The guy, so 24 hours.
24 hours. I was better.
Yeah.
Next day, I felt
The
great.
problem with Velvet Taco, they're not tacos. Like, what's a cheeseburger?
Yeah.
A taco.
Yeah.
I think they're pretty good though.
No, you just like it because it's substance.
Right. And it's quantity.
Right.
You can feed.
It's like
an army.
Yeah.
On like one little tray of food.
Yeah.
They're good. They're solid.
Yeah, and it lays there solid for like I actually might have to go salad today, which is a little embarrassing.
Yeah, I know. Me too.
We don't have salads here.
Oh, sorry. Right, there's no salads here. Never mind. You want one, Tony? I'll grab you one. What do you want? You walk right by the salads. I did see him yesterday. It's great. Shout out to Nicky. He actually got up right behind Tom. Tom led him. He was second or third in line. But Tom, I haven't had that experience in a while. Watching him go peruse as he goes through and he looks. Yeah.
I don't know what.
How was Ben Yehuda? I didn't eat it. How was it?
Why didn't you eat it?
Because I had the golf outing. I went and I had lunch at the golf outing.
You golfing twice this week?
This was a fundraiser. The other one's business.
Ben Yehuda, son of Ben.
Son of Ben. And Yehuda. Son of
Yehuda. Ben, son of Yehuda. Great.
Nice.
I really like it. Yeah, it's great.
Blows away kava?
Oh, blows away kava.
Okay.
Yeah.
All right.
But Rody blows away kava too. But Ben Yehuda, really good.
Rody, are there multiple Rodys, right?
Yeah, there's like 6 or 7 of them in Chicago.
Rody? Yes, there's a few of them.
I like Rody.
He doesn't like it, but I like it.
You're actually kind of picky.
No, I'm not at all. But a falafel can't be soft.
That I agree with. And Rody is soft.
It's horrible.
I agree.
You can call it a
I
fritter.
agree at the texture. Right.
It's like a
They didn't cook them.
I like falafels that are soft.
They didn't cook it long enough. I agree with you.
No, I like a soft falafel.
Okay, he likes a falafel that's soft.
Do you like pasta? I know pasta doesn't have any flavor, but do you like your pasta soft?
No, I like it al dente.
Okay, just checking. just checking. All right, should we get to some business?
Sure.
Like my pasta soft.
Getting a little worried over there. Like puree everything for him. Put it on.
He does. He likes his bread soft.
Spread it on a nice pita.
Yeah.
Made a mistake flying home. I didn't order the pasta.
Steak.
Oh my God! You didn't
What'd
order
you do?
pasta. Oh my God!
Rule
What did you order?
No matter what,
what do you got?
You get pasta. No matter what, you get pasta.
Because they can't be that bad.
It's right because it can't be that bad.
Right. Would you go with the vindaloo?
I always get seduced by the vindaloo.
I can't. Okay. I can't. Top 15 symbols going through the system. First,
What are these top 15 symbols? I got a couple of emails yesterday. I got new viewers.
Yep.
They would like to know, what are these symbols? Like, what
they're the most actively traded symbols.
options or stock?
Trades.
Trades.
But we are option heavy. So
Yes.
majority is options, but we just do it as trades.
Thank you, kind sir. Appreciate it.
And it is not, it's number of trades, so it's not just somebody comes in and does a big order.
Yep.
Right?
Yep. Understood. Thank you. Thank you. Appreciate it.
And in fairness, we don't have, actually, I think volume does have some component to it because we did remove, there was some lower price stocks that we did remove.
Yes.
And there's also no broad-based indices or futures because every day we were getting ES, SPX,
First
right?
few all the time.
Correct. So
For the most part.
we removed those. That's why I
Understood.
say top 15.
Very good.
Nope.
A scrubbed list.
Scrubbed. It's clean.
Clean.
Yeah.
Please continue, kind sir.
Thank you. Number 15 for Tom, coin at a 58. For everybody else, Tesla to 70s. Do they have earnings today, Tesla?
They do.
Tesla, NVIDIA at a 49, Crowd at an 80, Amazon at a 69, UPS at a 52, AMD at a 71, Spot at a 28, Disney at a 91, Meta at a 68, GE at a 54, Apple at a 72, GM at a 40, Microsoft at a 68, Google with an L at a 78, and number 15 for Tom, Coin at a 58, rounding out the next 10. And just so we're clear, I don't list any of the next 10 that are under a 30 IV. XLE at a 44, SMC at a 41, Ford at a 60, FCX at a 53, AVGO at a 38, PLTR at a 60, MU at a 31, and Intel at a 68. I'm kind of surprised the CrowdStrike. Oh, it is. I was looking at CrowdStrike. So are you doing anything? What's IVR? 80. That's good. I'm looking at CrowdStrike. That stock's been pummeled, right?
Oh, yeah. Today
It was down like $30 yesterday.
40? Yeah, it's come down from just under 400 to $260 in the last week or so. So yes, you're 100% correct.
Tom?
It was actually down.
Tom,
earlier today.
contrarian trade there?
I have a position on, and today we are back officially, CrowdStrike, officially back to even.
Oh.
You know him as long as I do. That's a win for him.
No, that's a green slam. Because normally when they go from 400 to 260, they become long-term positions that need some massaging.
Well,
the IV
put
rank
the
was
position on in there after the first day when it dropped 40.
Which was from where? 350 to 310-ish?
No, it was from like 320 to 380 to 280 or something.
320 to 280.
And I put a
He
position
says the first day, he means the second day, the first day he looked at it. Okay, just to be clear.
Tony,
go ahead.
Clock begins.
No, on the first day.
Whatever you say, Tom.
Maybe it was around two. No, I take it back. You're right. It was around.
Don't ever admit that he's right. That's a sign of weakness by you. Okay, don't ever do that.
You're right, because the second day it was down 40, and then it went to 260.
I don't want to be validated here.
So
that doesn't need to be validated.
It went from 340.
You get enough accolades from all the employees.
It went from 345 to like 305.
And then you got it.
And then I sold a wide strangle, like 380, 240 or something like that, like crazy wide. Next day it dropped $40 more.
Calls went down 50 cents, and the puts were up like $8.
No, surprisingly, I only lost $1 on it. Rolled the calls down, chased it down. Now we're back to even. By the end of the day, I'm going to be up money in the trade.
Whew.
Because
oh my God,
I'm following all the tasty mechanics.
Because he's gifted. What he would say.
I'm following tasty mechanics.
Wouldn't expect anything else than this conversation coming back to that. Tony, how you doing?
I'm doing great.
We follow tasty mechanics here.
Where's Boo's doing?
Tasty mechanics. What's
They're
that?
down 50 cents, and they were just up like.
And you sold them and you scalped them.
That's because you two guys just chick chat all day.
Really?
Actually, trader.
They're basically unchanged. They're down $1.75 right now. Nasdaq's down 50. Russell's up 14, and volatility in by 30 cents. Dow's down 39. So only the Russell's higher right now. You don't believe me? You're checking?
Yeah, just looking.
Are we done with you?
I don't know where to go with this. I have to actually tell you, this is the first time that you actually got to me in a long time. Like Anton, not
What,
you.
just now?
No, yesterday.
Oh, I was going to say, 'cause what do you do today?
I was thinking about the whole flexible thing. Like, I actually was having a hard time processing that. It's like Anton, he stayed with me just because how does Anton not stay with you? He's just so sweet and innocent and naive.
He is a kind gentleman.
Right? Like, I was thinking about him all the time. Going,
he does not remind me of myself in any way, shape, or form.
None of us ever in our lives. Right. And I'm thinking, like, he's so innocent. I'm a little worried about him. Like, I was worried Tom was taking advantage of him, but once I actually got to know him a little more, I'm petrified. Like, he shouldn't be able to talk to anybody. Ever.
Well, the challenge,
if money's involved and somebody has the chance to get into his pocket, somebody's got to take his wallet away and go, he's not buying right now.
No,
the wife already did that.
She should.
She cut him off.
She should.
Put him on a lounge.
He showed me yesterday. He's got a lot of 20s on him.
Does he?
Is he
We
here?
gotta get those.
Wait, is he here today? Is he here today too? Look at Tom. Look how happy he is.
We got to get those.
Oh, okay.
Those got my name on it.
Yeah, 20s. Those are rounding.
Yeah, she has him on lockdown though, so she knows how much money he has.
Oh,
so he's like,
We'll have to teach him how to fold 120 in half, and he can count it twice.
Exactly.
So he holds it in his hand. We're gonna get some 20s off of him today. Today's gonna be good.
Really good shuffler.
We've been through this. You still have the card shufflers?
Do I have a card shuffler?
I don't think
you still have them. Yeah.
Well, you might have them at home.
I never had a card shuffler.
You did.
It was
At your house.
Two of them.
No, they weren't.
She brought them to you.
I don't know.
He didn't leave them?
I don't think.
Come on, Butchie's not the type of guy that brings a gift and takes it back.
I'm with you.
It wasn't a gift.
I'm Butch on this one. They're at your house somewhere. Great.
They're at your house.
You don't even know where they are.
I don't have a card shuffler.
You know what? This is why we.
Do you remember? I'm being totally serious. Do you remember you had
good Sosnoff?
You had two. There were two at your house when we played. Do you remember that?
Card shufflers?
Yeah.
Oh my God.
I don't have a card shuffler.
I'm not asking if you have one now. Do you remember that?
Biden, do you remember the two card shufflers on the table?
Brought two
Yes or no?
to the game. Do you remember that?
Yeah, sure.
Okay, fine. So we're good there. You just don't know if they're still in your house.
I don't have them.
Okay. I'll right now. Do you want to bet $20 that says that they were left at your house?
No.
Okay.
That was an
I don't have them. No. Right? Because now that I'm thinking about it, I think they are. No, because then you'd go home and you'd throw them away.
I don't know.
Is your TV working? Did they fix the cable?
He fixed it.
I fixed it.
With a remote call.
Yeah.
And all he had to do was turn on the surge protector.
It was a lot harder than you think.
He had to turn on the surge protector. So
there was no wire?
Wait,
there was no wire?
The light didn't go on the TV.
Wait.
And none of the lights were on anything. There was no electricity getting to the box.
There was no wire cut.
No wire cut. That was all BS. Like the naming of the studios.
Wire was cut.
Talking.
Or the power was off.
Power was off.
Those are the two choices.
He's so cute because
do you
that's
ever
the
use
first thing
YouTube? Oh God, why do I ask you this? Do you ever use YouTube to figure out how to do something? Like, or you just go, I'm going to figure it out. I'm going to need to look at YouTube. I'll just figure it out.
What, if there's somebody working on your furnace in your house, let's just say.
Yeah.
Okay. And then.
Well, your furnace, I would look at YouTube.
And then when they leave, when they leave, the furnace doesn't work. Do you go down there and go, oh, you know what? I just think I'll just go look in YouTube and see if I can figure it out.
Furnace? What are we putting coal?
Yeah.
It's an HVAC unit.
And they're all
furnace?
They're all electrical. You just open them up and you look and it says if it's reading this, that's the air. Oh, here it comes.
You do a lot of that. Okay. I do more.
No. The doorman now does that, not him.
That's right. No, engineer.
I do more of that than probably both of you do.
I'll take Tony and sell both of us times 4 or 5.
I appreciate the honesty.
Right?
I don't know if he does more than me.
Oh my God.
Can you let him have something? Just let him say he's a better Try it. It's very free.
Try it.
It's be very cathartic.
Say what?
Say what?
Tony happens to be a better handyman than I am.
I can't agree.
Tony, I admit it. You're a way better handyman than I am.
Thank you, Scott. Appreciate that.
There you go. Tom, try it.
That's going to get me.
It's going to be hard. It's hard. Just say it one word at a time.
No, he's got more tools, because he wastes more time with it. But I don't think
it has to be an attack.
Because he
once again,
wait.
It has
because he wastes more time.
Right. It has to be an attack.
Tom's more efficient.
So you spend too much money on tools that you don't need because you don't need. All you need is a hammer. Basically, you need a hammer. You just whack things and you just hit them, and then
You need a hammer, a screwdriver, and a set of pliers. You're fine.
and maybe a vice
And a
grip.
set of pliers. A set of pliers.
And
You know what? You're so cute. You really are. It's a good thing you're
That's all I need.
set of pliers. All right, ladies and gentlemen, thank you very much for your time. Scott, I appreciate the kind words. Sadnov GFY. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this with Liz and Jenny next. Stay tuned. Set of pliers.
A set of pliers. Plier
A
set.
long nose, a needle nose, a thick one.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
If you missed the live show, here's our cherry on top weekly recap.
How come I'm the only person in the office?
Tell you why.
Yeah, what happened, girl?
I had been waiting for a year and a half for for Tony's guy, this is the truth, to come fix my HVAC system.
Nobody else can fix his heat and air conditioning. He's had other people there.
It's too complex a system.
What time is he supposed to be there?
Hold on, it's him texting. Oh, yeah. We need to stop meeting on Mondays because last Monday it was the debacle with the RV. This Monday the debacle with the missus. Next Monday we're
Hey! Update on the RV. I got a bid for it.
Oh, reasonable?
No, 30% below asking price, but I got one.
It's literally 78 degrees and muggy outside, and you guys look like you're going to Vail.
Well, I wore a t-shirt underneath mine, which I never usually do because Beth says I never wear a t-shirt under mine. So I did it for...
We appreciate it.
I had a white t-shirt on, but I didn't want to... I thought it was like too revealing, showing all the muscles and, you know...
All those muscles? Oh, sweetie.
Have you seen? I did bring the video in. Have you seen?
No, can you play the video?
Really?
Beth, do you have the video?
You
have the video?
For the past few months, she's been trying to get Scott Sheridan together with a woman you will meet in just a few moments. Scott, your age?
25.
Occupation?
Trade at the options exchange.
How important is physical appearance to you on a scale of 1 to 10 when you meet a woman?
10.
Hey, that's some good hair.
It was at the weekend that you two met?
Yes. So Al, who was in that video, invited me. And he's like, there's a bachelor's party, and said, come with. And I said, but I don't know anybody. He's like, doesn't matter. You'll stay in my room. So we went. I'm in Al's room. It's just a regular room, 2 beds. I'm like, okay, great. And I said, what's that door for in the corner? And he's like, that's the Tom's room. And I opened it up, and it was a Rain Man suite, the 2 split level. I couldn't see Tom. It was huge. I just turned around, I looked at Al, I said, who's Tom? And 36 years later, we're sitting here.
Get the full scoop by checking out the archives at tastylive.com.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Everybody, and welcome to the Liz and Jenny Show. It is a beautiful Tuesday in Chicago, and the market's not doing too much.
No, market is here. You know what? If we can jump right in, the SPOOs are up 3. It's been all over the place. They've been up, they've been down, they've been up, they've been down, they've been up, they've been down. But take a look at this, Jenny. We were talking about Vol really went down yesterday. Take a look at this little. Oh, wait, hold please. Look at how much it came down yesterday.
Yes, and honestly, they did a great SPX study today talking about the VIX and on the open. If it's up on the day, it's a good day for those SPX trades. If it's down on the day, it's not a good day for necessarily a good day for those 0 DTE trades. So, too bad that study came today and not yesterday. It might have warned people maybe not a good day for those SPX trades yesterday. But it was a good study. We'll have to take a look at it again. And it was shocking. They looked at all like 15 delta, 20 delta, 30 delta strangles, and none of them seemed to perform too well if the VIX was down in the morning.
I'm telling you though, Jenny, looking at that yesterday, it looked like a buy. It did. Just because and I guess that is true. If you're not going to sell it, you might as well buy it, right? Like if you're not going to do one, that's why this is a fair market, because you can do either side. This is not a zero-sum game. Like we can both be looking at something, choose 2 different things, and both win at some point during the day.
Yeah, I want to get that study back because to your point, you're right. I know Tom just focuses on selling options, but if the numbers work out negatively, if you're selling them when the VIX is down, then why not buy them? They would work out the opposite positively. So,
I do think the studies only work with flipping the cards over when it's not the 45 DTE. You know what I mean? In the 0 DTE, it's kind of like you can flip it.
Right, you can flip the cards. So I do want to get another look at that. I had them on in the background while I was doing a couple loads of laundry today, so I didn't see all of it, but it was a good study, and I'm not sure who made it. If Anton made it or Jacob made it. It almost reminded me more of an Anton study than a Jacob study.
Yeah, probably. I can't wait to see what Anton brings for us tomorrow, because he's going to come up with something new tomorrow. He said, we were just texting back and forth with him, and he is going to be at the SIBO with us, not on the show. We've got lots of guests coming tomorrow, but he's going to be there, so I can't wait to see what he does.
I'm excited. I'm excited to have so many people coming to the SIBO. We got people in town from London, so it's going to be. Tomorrow is going to be a really fun day. Tune in. We're live from the SIBO, and it's going to be a great show. Brand new content. Love when we get brand new content from the research team.
Come one, come all, and I promise I will go to bed earlier. I survived. Like, I can't believe I'm on this show, or I don't have bags under my eyes. I go to bed early. I went to bed at like 12:30 last night because there was 50 people at my house until midnight.
You look
5-0. Like, and I looked around. At 11, and keep in mind they're all teenagers. So I looked around at 11 o'clock, and I was like, oh my gosh, is this going to take me forever to clean? Like, because there's just everybody brought food, so there's just food all over my house. But yes, so I survived my party of 50.
Well, you survived the party and enjoy it now. Someday they'll be gone.
I know. I'm not saying. I hope that didn't sound negative. I loved it, and I like having them. I love having them in, and they're so cute. Everybody, get hugs on the way out, so it's great. Like, I love it. I wouldn't want it any other way. but I like to go to bed early. And this morning I told my husband, I'm going to bed at 7 p.m. tonight, and he's like, no way. I was like, I am.
I'll be thinking about you as I'm dancing at 10, because my dance class. I've got my adult dance class tonight, my adult beginner jazz ballet class, and that doesn't even start until 9.
You cancel that thing. That is ridiculous. Who starts dancing at 9 p.m. when you're pushing 50?
Maybe it's 8 to 9. I had to miss a couple times, but it is tough. It is tough getting home so late and then getting in bed and having tomorrow. We've got an early train to the SIBO.
Okay, so let's take a look at some things, Jenny, because I'm going to go to our positions.
Can I just clarify something? We were talking about the SIBO, and you said come one, come all. I just want to clarify that it's not an open door policy. No, when Liz says come one, come all, she's kind of making a joke. Nobody else can come.
That is true. Thank you for clarifying that, because I was making a joke, because I could not believe how many people in a lot of this sprang from, and I will tell you this is really cool. And John, can we pull up the art card for Toronto? That would be great, because we're going to Toronto on Friday. But a lot of this fanfare for the SIBO sprang from the live event last Saturday. So we have a lot of tasty personalities. So I'm glad Jenny said that. It was a joke, my come one, come all, because I was like, how many more people can we add to this? I just got a text from Anton asking if we can add his wife. I was like, oh, good God. Okay, but it sprang from the live show, the Building a Complex portfolio. So we've got Quentin from the trade desk. We've got Anton. We've got Angeline from London coming in. And then we've got Alex, the kid trader, and because he was at the live show as well, with a handful of people, on top of a marketing team and some other high-level tasty executives are going to be there. So it's going to be a big. I'm glad you caught my joke, Jenny. It was just an inside joke for the two of us.
I knew it was a joke, but I just didn't want any viewers showing up.
True. They won't let you in. The security there is top-notch, by the way. So I'm getting it.
It's tight security over there. Liz and I had to get fingerprinted for the second time.
For the second time, yes. And they upgraded their fingerprinting machines because we didn't have any stuff on our hands. But John, could we pull up the art card for Toronto, because we are leaving on a jet plane, and I'm really hoping that the airlines and the airports and everything is back to normal after the crowd strike.
Well, hey, we're on Porter. We leave out of Midway, and then we land at Billy Bob Airport. It's easy breezy.
Oh, Jenny, it affected all airports, all airlines, just because.
No, I know, but but I think by Friday things will be settled down, and those are both smaller airports. They're not like massive airports. So,
True.
Crowd spike.
Take a look at this. Do you know what was crazy? And I didn't realize this. So once again, I had 50 people in my pool. It looked like a scene from a movie because they're all in the pool, and the pool's not that big. But the crowd strike, the pool system is now on my phone. It's called OmniLogic or something. It's different than what you had when you had a pool, and because Clark upgraded it for us, it got hit by this. It got hit by like my pool app got hit by this, and it didn't work for like 3 days.
Oh, I know. There were multiple places. Lily and I were going to the spa. I took her to the spa. This nice spa in a hotel, and I took her there. And they're like, "Sorry, everything is down here. Everything is down." So they lost they didn't know what appointments they had, who was coming in when. The whole spa system was down.
Couldn't heat my pool.
all over the place. All over the place.
It is pretty crazy. I didn't realize how widespread it would have this effect really was. But take a look at this. It's kind of popping a little bit today.
Okay, and Tony talked about it. Is this a buying opportunity? Is this an opportunity to get in and maybe look at selling a put spread? The rank is high.
Well, I don't mind because here's where I wouldn't have got it. So you got to figure it's probably like right about here, right? So it's day 3. I think it's a buying opportunity.
Well, day 3. Let's look at put spreads. Now, you're going beyond earning.
I think earnings are in the 38-day.
It doesn't matter if you're directional. So I wouldn't mind a put spread either in August or September.
Let's take a look. I know this is pretty close. I'm just going to go 250, 245 for 130. Not bad.
Not bad. No, it's 30 cents shy of a third of the width. I don't mind.
I don't want to sell a naked option. I just want to see how expensive it is. That's not bad. Because I was going to see. I was thinking maybe, what if you did something like this?
I can't believe it's only 2,300 for a naked.
Yeah, that's what I was shocked by. Hold on, going down. It's holding up. You can get quite a bit.
Yeah, that's not bad at all. Now, again, there's risk in this trade of a naked option, and sometimes I hesitate with smaller accounts selling naked options in higher priced products. I've seen it. Like so let's talk about, let's say you have a naked option and the product's $270 and this drops to $170. A 1 lot 100-point move is 10 grand. So I watched someone with a 5 lot of puts in a high priced product that dropped $100 and it was 50 grand. So $100 move with one naked option is 10 grand. If it's, and I've seen it happen. So
look, it just happened here. So if you had a naked put in CrowdStrike here, it went from 360 to 260. This is a $100 move.
So that would be 10 grand on a one short put would be a 10 grand loss minus whatever credit you took in. And so in a small account, I never want to position that wheels fall off scenario. It could wipe out a big chunk of the account. That's what I'm always cautious of. So I would err on the side, even though it looks really enticing, I would err on the side of defining our risk.
Well, okay. I agree too. I wanted to see, I was shocked at the buying power because I expected it to be a little bit more. But here's my question. And I don't actually know how much this is going to be. I don't mind the put spread, but making $130. But if I'm playing for a bounce and still using the 71 rank, I'm going to try something, Jenny. I'm going to do a bullish diagonal if we're going to be bullish because we're going through earnings, which might actually give us, $1,600. So you can make only $400.
But here's the thing, like what's going to happen to CrowdStrike? I'm not sure. What are the repercussions? I'm not sure I'm just bullish here. I just saw a 70 rank. Maybe we could sell a put spread. I don't know how bullish I am because what is going to happen to them? All these places that were down, are they all going to come after them?
No, that's what they were talking about today, which I found fascinating. I have to go back and listen to the morning show, but no, they can't come after them.
They can't.
Technology fails. Sometimes it fails. And Tom was like, if your software has a single point of failure, shame on you, not on them. Like, it is what it is. There was no malicious intent. It wasn't like somebody's like, I'm going to get that Deer King pool heater and make it stop.
Right. So, but all these companies that lost business or airlines or whatever, who's covering that loss?
They are. They accepted that. To the best of my knowledge, they took this software.
Okay.
So that I don't know, and I don't want to misspeak on this, so don't quote me on any of this, but that was the discussion point this morning with Vanetta and Tom and Tony, which I found fascinating.
I feel like if I'm CrowdStrike and this happened to all these people, there's got to be some type of, can't be like, yeah, whatever, it happens. We're going to keep charging you what we're charging you, and you're going to keep paying what you're paying. Like, people might start looking elsewhere.
I think it shows that you kind of need them. Like, I don't know. I have no idea. I don't know. But to your point, I'm not going to be crazy bullish either, but I did want to look at how much a diagonal was because it wasn't that bad. If I'm bullish, I'm going to start looking. And, this is the conversation that I had with myself. Like, if I'm looking at certain things that I was bullish in before or things that I have stock in, going into this, I'm going to be changing a lot of them to diagonals. Just because, like, I was looking at Disney this morning. Disney was down about $3. I came long the stock and I was waiting for earnings. So I was thinking in my mind, I'm just going to start, just because things are a little bit, different. I mean, going into an election, we've been here before, but I'm going to start changing because even with a diagonal, I'm still using the extrinsic value, but it's defined risk.
But it's defined risk. It is defined risk.
Yeah, that's going to be my new go-to.
What's the margin in Disney? I'm just curious. Look at the August puts. What is the margin now? Now that it's down to 90. I can't believe it's down to 90.
We should roll this.
We have, let's roll it.
Yeah, we should roll this. I think we rolled it past earnings thinking we would just sit on it. Now we might as well roll it out in time because we're...
Roll it to September.
Yeah.
I mean, okay, rolling it to August because the expected move August to September wasn't that much different because there's inflated vol in the August. So let's see.
You could roll to I mean, it's a $60 debit. I get that, but I'm assuming we took in some credit. You're all the way down to 90.
Oh, that's not bad. That's not bad. And what is it if you roll to August?
Okay, here's the 95. We are in that's 1 week.
Oh.
If you rolled to August, it's 1 week. You could roll the same strike and take in an extra 20 cents.
No.
That doesn't make any sense.
Yes, we just roll to the August to September and roll to the 90.
Well, I don't mind being long Disney. No, to what I was saying is I want to see how much capital this is going to use. So I'm just actually going to sell a put here. Let's just sell this put. This is holding up $1,600, which isn't bad. But if you wanted to, Jenny, we have now a covered call. We could do the diagonal.
So $1,600 for a $90 stock. CrowdStrike was almost $300, and you was using like 20 something hundred. I am shocked at how low the margin is in CrowdStrike.
I was shocked too. Shocked.
That could change. Like that could change. The brokerage firm could change it.
It could change, yeah. But take a look at this diagonal. So this is it's the August 24 day. So you are going through earnings, and it is bullish. But it's only $3 wide. Never mind. I thought.
No, the diagonal's not bad. I mean, you could take off what are we down on the put? You could take off our put. How much have we lost?
$200.
You could take off that put for that loss and throw in a diagonal or throw in something defined risk or throw in something different.
Yeah, I think we can do one of two things. And I actually have just long stock. I bought back my call when it dropped and I was waiting for earnings. Smart, right? Smart. But so this is what I was thinking about, changing it to a diagonal. Let's do it, right? Let's define our risk.
Yeah. And it's 17 days to go. Naked option should be rolled out. 21 day mark, roll out in time, close it at 21 day, put on a new trade. I'm
just going to do these separately though.
So we're out of that, put on a new trade.
So
with 92 rank,
you're getting decent premium by coming. The 92 rank is great because the diagonal, I do like the diagonal because you're actually getting that extrinsic value, right? So we're getting the extrinsic value, but we're also buying the extrinsic value farther out in time. So you've got a 40 IVR right here. So I'm going to sell the 98 and then I'm going to go to the regular September. And keep in mind, you're selling a 40 vol, you're buying a 32. So that's good.
And just buy the 90, right?
And if you buy the 90, that's good. Then we can make, $350.
Yeah, I would do that. $422, and we'll have some rolls built in there.
Yeah, I like that. Okay.
And that's defined risk. Wheels fall off in Disney. It's defined risk. I
wonder who gets the
What, you're going the wrong way.
You're going. Okay, he's drunk. How does he know where we're going? But who came up with the wheels fall off scenario? Because that's my favorite analogy. The wheels fall off. Who was riding in a car? It's like, if the wheels fall off.
I don't know, but have I told you about my car?
No, did your wheels fall off?
They might. No. So honestly, like my car, okay. Of the batch of cars that were made last year, I have a Palisade. Of the thousands and thousands and thousands of Palisades that were made last year, 3,000 of them have this issue where the engine was put together with damaged parts, and the engine could just these screws could fall off, and the engine can be rattling, and then the engine could start on fire, and so I have a recall of replacing my entire engine. And according to the safety, road safety, whatever it's called, I forgot the acronym for it. They say, you shouldn't be driving it until everything's replaced. And they literally are replacing my engine. So I keep calling my service department and like, yeah, we don't have the parts yet. We don't have the parts yet. We don't have the parts yet. So I'm still driving around in this car that the whole engine was recalled.
That seems crazy. But if there were, I feel like if there were real risk, they would have the parts for you.
Well, I called the guys. Then I said, some people have stopped driving them. Some people have stopped driving them. Some people have just gotten loaner vehicles. Some people have already had their everything replaced. And my dealer just says, oh yeah, it's safe. But if you start hearing a rattling, stop driving it.
Well, if it makes you feel any better, I was driving to my dentist appointment yesterday and a car was overturned and on fire. I don't know if it was a Palisade, but it was on 355.
It's not, my car's not going to roll over, but I think, I don't know. There are people who are filing the lemon laws because these are new cars. They're 2024. So there are people who parked it at the dealer, and if it sits for more than 30 days and they don't have their car repaired, then they could file the lemon laws.
Are you going to go drop your car off at the dealer? You're not going to take it. Drive there right now.
I don't know if I should still be driving this car.
I'll come pick you up.
Nobody's helping. Nobody's fixing it. So anyway.
I know. Well,
if my car incinerates on the side of the road.
Yeah, that's not good. Well, just the engine will fall out. I think
it was like, I can't remember the exact details, but of what would happen. But of all the Palisades made last year, mine's one of the very few recalled.
But you love your Palisade, don't you?
I do. I mean, this is my second Palisade, but I'm a little nervous driving it.
I can see that. The engine's gonna fall out.
And so of the dealers, so GM had earnings yesterday.
They did.
Of the car dealers, I don't even think we could trade that, right?
No, so, I don't know what Palisade is. What is it?
It's
Toyota?
It's Honda? Hyundai. I don't think it's tradable.
I don't know. I have no idea.
Okay, so I saw GM. I looked pre-market, and I thought it was up pre-market.
Were you looking at GE?
Maybe.
Let me help you out. So you're looking at GE. So GE, GM, and then UPS. UPS was down huge.
I know. I see that. I saw that.
So yeah, the everything has kind of been a little bit crazy for the earnings cycle. That's why I wanted to go to this over here today. So the big ones today are going to be your Tesla, your Google, right? Anything else that's jumping out at us? Verizon, not Verizon, Visa, Texas Instruments,
Capital One.
So the big one is going to be Tesla and Google.
Is STX, is that Constellation Brands?
Yeah, I believe so.
And then
I'll look real quick and then I'll go back.
Seagate.
Oh, I feel like we do this every single time.
STZ, I think it's STZ is Constellation. Okay, so of these, not gonna lie, I'm kind of bullish Google unless it's at the top of its range.
So I think these are the two to look at, is Google and Tesla, and I'm only looking at these in depth because I'm talking to Business Insider after this. So let's take a look at Google and Tesla.
Funny.
Google with an L. Okay, so Google, that seems like a very low move. So if you've got UPS, let's
now. It's only will you go to the chart?
Let's review the tape. So this is Google. Okay, Google is a $182 product. Now, I'm not saying Google and UPS have anything to do with each other. There is zero correlation. But let's take a look at UPS, okay? This is now, it was a $140 stock. It is down $20. So this is a big, yes, this is a big move. Google's move seems way, way, way too small. Well, it's not GGG.
I mean, I don't know.
$10, $9.
I don't think. Yeah,
I think if you're playing it directional, that makes sense. But I do think that is I think that's way too small. But if you want to be directional with it, I don't mind being bullish in Google.
How much is the crab? Let's see.
The crab. Okay, so the crab will go. Can you use your fingers again? Because I love when you do that.
So it's trading almost 182. So if we buy the 182 and we're selling the 192, that's $10 in room there.
Look at you. Didn't use your fingers. So I'm selling 2 of these and I'm selling 2 $192.50 because we have to be very vocal, especially when we're at the SIBO because we're flying blind over there. So I'm selling 2 $192.5 and buying 1 $197.5 in the 3-day. Then I'm going to go, I think we should go to the 24-day. You can make it cheaper by the August 2nd. What do you think?
When I did the crab and Netflix, I did the 10-day. I just did but it went up. So like it worked the next day because it was up. If it's not up, then you're kind of out. Then you're out.
This isn't that bad though. Take a look, Jenny, take a look at this. So I bought the 180. So you're outlaying capital of, 570-ish. I'm just rounding. We're paying $5.70 and we have from 180 to 192.5.
Yeah,
which is
not bad. It's not bad.
That's not bad, right?
And then we're left with the 180 for 24 days. No, that's not bad. I don't mind it.
No. Now, to make it cheaper, this is what Jenny and I were just kind of talking about. I'm going to delete this leg. Whoops, I can only do it up here. Delete this leg, and I could buy it. So we paid, $5 for there. You can make it cheaper if you go to the 17-day. Well, it's still not that cheap.
But you know what's going to get cheap? If you go to the 10-day, you should have maybe more strike selection.
You can go 182.5.
182.5.
So you have the same amount of profit potential, actually. That's if it goes up on earnings. I kind of like having the long for a longer period of time in Google, but I don't mind this. It's 338.
The difference between 338 and 500 is not that much. So for the extra $200, go out to 24 days.
Kind of agree with you. Let's delete this leg. And I'm going to go to the 24-day, buy the 180. So we're paying $570. We've got we've got a decent amount of profit potential in here.
Sure. Yeah. Okay.
All right. The Nicky Bat special. He invented the crab.
He invented the crab, the Nicky Bat special. I love when new trades are invented.
I do too. And I love that they have names. So this is something ratio, right? What is this? What does crab stand for? It stands for something.
Is it call butterfly?
Something.
Or call ratio butterfly?
That sounds about right.
Something like that.
Oh, Frank Walsh. Hold, please. First of all, I'm going to cancel replay this.
Breaking through into Liz's phone.
He broke through. I'm paying $80 just because I feel like that's a fair price. Okay, here we go. I'm paying $580. And he broke in. So he wants you to be able to trade your Palisade. Not your car, but here's how you would trade it. It's hold on. These stocks wait, okay. HYMTF. There's no options. HYMTF.
And what is it?
Did I?
There it is. Yeah, Hyundai.
Yeah, there you go.
Okay, let's look at the chart. Look at how wide that bid-ask spread is. Volume 250 shares.
It's not tradable.
No, I mean you could. If someone wants to buy it, they could buy it, or sell it. They could sell it.
Cash secured.
Thanks, Frank. Thanks for the info.
I know he's the best. Okay. So we have Google in. Can we take a look at Tesla?
I do want to look at as far as our positions go. So look at our ZC. Oh, that's still the residual.
Yep, residual.
But that residual was maybe $90. Maybe we're up 134 on our other trade. Can you just see if it's close to 50%?
Nope.
No.
I
feel like that's wrong. That 0.125 when it's trading 2.43. I think that's wrong. I almost think that 50% didn't work right here.
So
what did we collect?
I just want to see what we collected. So I'm going to go 60 days.
It was like 14 days ago. Yeah, we collected 5.625. So 50% would be 2.8.
We did them separately.
That one we were closing the other one, and the new trade was the new 31-day. 385, 365, 385, 365. We collected 5.625. 50% of that is like 2.8, and it's trading 2.4. We made more than 50% on it.
That calculator was wrong then, because we just hit 50% send.
Yeah. Maybe we hit 500%. I don't know, because the 0.125 isn't right. Like we made more than 50% on that. You can see one's down $90, one's up $250.
I have no problem closing this, though. I kind of want this gone. I want the whole thing gone.
Well, no, the other one's going to roll up in 3 days. It's so far out of the money, it's not blowing through that 505, 515.
I'm closing this.
Just close that put spread. We've made more than 50%. We need to follow like mechanics on it.
We were trying to. I put a GTC in for 50%.
It never looked right. It never looked right.
I'm going to pay 1 tick up.
Yeah.
Keep going. Okay.
Okay, there. And then that other one will be gone, and then we'll have no corn position.
Corn's gone. Okay.
And natural gas is down today. Is it getting close to our center strike? No whammies, big money.
This is when the magic happens, Jenny.
And for our viewer yesterday that wanted to fade the move,
and UNG. 30 cents.
31 cents. But you know what? Like looking at UNG, and I don't know what it is right now. I honestly don't know what it is right now, but it used to be like 54 options in UNG would be equivalent to like a natural gas. If those puts we looked at buying were only $1 something, let's say someone wanted to put $1,000 into it and buy 10 puts, well, you're up $300 today.
True. Very true. Okay. So natural gas is going in the right direction. I do want to look at Tesla. Wait, hold on. First, let's go back to Google real quick, because like I said, I have to keep paying attention to this. I just want to see what their moves were in the past. Okay, they just have a straight up ride.
Did we get filled on that?
Google? Oh, yeah. Mm-hmm. Right there.
I mean, it might go down, but it's defined risk. If it's down 30 points, then we say like, oh, well, it's defined risk.
Well, just keep in mind that Google had under $10 expected move. That's all I'm saying. Because if it's down 30, I'm going to be like, I know it was too low of an expected move.
If you don't want to try it.
So let's take a look at Tesla's move too. Hold on. I just want to see this. Okay. TSLA. Okay. Tesla, earnings after the close.
What's their expected move? $22.
$22. 200. No, this has had a run for the roses.
I know, it's crazy.
Yeah, it's had a little bit of a run for the roses. 70 rank. Is there anything you want to do in Tesla?
I'm kind of afraid of trading Tesla, honestly.
Tesla's taking me out. I did. I'm not going to sell premium in it. How about that?
When I said I had a friend who had 5 short puts in a product and it went down $100 and he lost 50 grand on 5 short puts, it was in Tesla.
And I know who it was. It's okay.
I
just want to see if we think so. A lot of times, Jenny and I, if there's a product that I'm afraid of, but I kind of want to be in, this is 46 million shares have traded. And if you're going to premium sell, I want to see how expensive this is.
It's not expensive. It's a cheap way to have a play in Tesla.
It's a cheap way to say it's going to say understated is moved. So it was Netflix that didn't move at all, right? Netflix went up, but like nowhere near its expected move. If Tesla pulls a Netflix, this would make money, but you're not going to make a lot of money.
No, I mean, it would need to not move at all. Like it needs to not move at all. And then your 10 days is going to be worth,
Yeah.
It'll be worth a decent amount if it doesn't move at all. But you need it to not really move at all.
Or you can spend $5 and get a 250 call in, or you can do the puts. You can do either side. But I just wanted to see how expensive it was. I kind of agree. I know, I believe, and I don't want to put words into anybody's mouth, that Tom saw the expected move, tripled it in like August or September. I want to say he went real far out in this.
Oh, really?
Yeah. So, but it's not that far. So if it's got a $20 expected move in the 3-day, you're only going $60 here, right? So this would be 190 and 310. It's a pretty decent chunk of change.
It is $10. But is that really going to come in? Is that vol really going to come in?
Maybe he did it in August. That's why I said I don't want to put
pause val come in, but I don't know that set val is coming in.
Yeah, I don't know either, but I think he tripled the move, so it would be $60 up and $60. That's why that seems kind of excessive. So $60 down would be 190, and then $60 up would be 310, right? Yeah, this seems better.
You probably did it in the 24-day, but I am a little bit of a chicken in Tesla.
Oh, me too. I don't want this in here. I don't want naked options in Tesla right now.
Yeah.
But I will look at this as an after earnings trade.
Sure. It's tough. I mean, if you go back to that chart, the it's just been crazy. You know, it went from 260 down to 140, back up to 270 in the this year. It's all
this is since April. It's since the end of April. That's not even
I know
in the year. So look at but take a look at the year.
I know. Yeah, that's what I was saying. 260 to 140 to 270, all since the beginning of the year.
See, what would Tim Knight say about
That's what I was just thinking. What would Tim
What would Tim Knight say about Tesla?
I'm kind of staying away from Tesla on earnings.
No, I kind of agree with you.
Let's okay, so we are taking live tweets. If anyone wants to send a tweet, include hashtag LAZJNY. If you're on YouTube and you post something on YouTube, Frank will share it with us here. I don't know, Herb, can you show the TLT can't lose trade and why you may lose at times? Okay, I love this one. I like Herb between the buffer and the TLT can't lose trade. You bring back all the oldies but goodies.
He is. He's fantastic. I'm so glad Herb's back. But look at this. Crab is calendarized ratio spread.
Oh, got it.
Thank you. Oh, yay! John Denver leaving on a jet plane. I love it. We're gonna jump in there. Hold on. Let's go backwards. I'm gonna get into the platform and then I'll get to the tweets that were underneath it because I don't want to do this. So did you see that, Jenny? We're gonna go through the TLT. It's called the caution tape trade. For those of you just joining us, we're gonna go through it, but we do have a lot of tweets coming in too. So let's do that caution tape trade first. Okay.
So an ad trade is if you think like TLT is not moving, and it has been moving. So I don't know. It's when you think it's not going to move.
Wait a minute. Walk me through the caution. I mean, I'm going to need a refresher. Talk to me. Talk to me, Goose.
Go to September and sell the straddle.
Oh, okay. And then we go backwards with it. That's
so sell the 93. We're trading like 6 cents away from 93. So sell the 93 straddle.
Okay. We're collecting $4 and then we go to the August, right?
August. We're getting $4. So basically you go $4 down, $4 up and buy the strangle. So
93, it'd be 89.
Yeah. So they're cheap. Here's the thing in TLT. These are cheap. And then 97. So if there's a massive move, you're protected for the 24 days because you're getting 375 on that straddle. And if there's a massive move, you're never going to lose that much because your distance in strikes is $4 and you're collecting 375. So maybe you have, a little bit of risk there.
$25. You can see it right here. You got $25.
If you have a massive move. The worst case scenario is you get to August expiration and it moves to your even at August expiration, it's not terrible. It's not a terrible trade. What you'd get is if we stay right here or move and bounce back to this 93 strangle level, that 93 strangle decays. So what you're looking for is the decay in the 93 strangle, and those wings protect you if there's ever a crazy move.
Well, and I don't want to say you can't lose because there's a small loss built in. There is also zero capital efficiency in this trade because your longs are nearer term than your shorts. So that's why it's holding up so much capital.
Now, Herb, just to be clear, the loss can be more than $25 because let's say we fast forward to August expiration and we've moved, the strangle is moved, TLT is trading 96 or whatever. So then the strangle is worth $3 plus whatever extrinsic value is still left in those September options. And then the August is going to evaporate. So our longs will evaporate at August expiration, have no extrinsic value, and then September will still have some extrinsic value. Now TLT doesn't hold that much extrinsic value, so the loss is never going to be too huge. I have put this trade on many times.
Yeah, you used to do this a lot, and you did it in TLT a lot.
Yeah, TLT was the only product I ever found that it worked in.
Yeah, and I remember you doing this, but at some point you threw in the towel because this is what you do with the capital on the sideline. This is kind of like what you do with the capital on the sidelines. But you're right. You wound up losing more than it said you were going to lose in theory on paper with the resume.
Well, you can't, like any kind of calendar or whatever, here where we're selling this SPAC month, they can't tell you what we're going to lose. There's no cut and dry max loss here, because whatever your short, the extrinsic value is in your shorts when the August is gone is going to be added loss onto that $25 that you see right there. But okay, but you could, I never made more. Every time it would be like $30 to $50. So say you're taking out $50 out of these caution tape trades. Now, I think there's just maybe better opportunity to do with the money that's on the sideline. So this was kind of like money on the sideline. What do you do with money that's not at use? When there was no
interest rate. I agree with you.
Yes, yes. Now there's like higher interest rates. There's some other things to do with money on the sideline.
Yes.
BOXX.
Right. This is just your risk-free. It's a box in the SPX. So there's things that you can do with your money on the sidelines. And if you have any questions about this, that's Tom at tastylive, because I don't really know how to answer it, but I know that. But yes, so you're right, Jenny. You were doing that TLT trade when there was no interest rates. So you were just like, okay, what am I going to do with this money that's just sitting here, because it isn't capital effective.
Right.
But you didn't want to risk too much. You just wanted to make a little bit of money if things weren't going to move.
Yeah, make a little bit of money on the money that was just sitting there. But it's not like a huge money maker.
Right.
No, again, every one of those TLT caution tape trades would make somewhere between $30 and $50.
Right.
Yeah, and you're putting $1,000. So, but it was, it would take maybe a couple weeks to make that. But then, and
you have a 60-day option. Like this was like the long game. It was literally like, what are we going to do with this cash that's just sitting here? Because when the implied volatility was so low, we have a lot of cash on the sidelines. And even though you're using that cash, that can be closed at any time. TLT is liquid. You know what I mean? If you needed it, you could close it.
Yeah.
Okay, so let's get to all these. Scott Somer, our international man of mystery, is back.
Wait. What's going on? Just a heads up. In the coming days, they will set a day for the markets to be closed. Who passed away?
I don't know.
Did Jimmy Carter die?
I don't know. Can I press this? No, we'll do that later. But wow, okay.
Wait, who? I haven't heard anything.
I haven't either.
I mean, it says Jimmy Carter's 99.
Yeah.
I don't think he passed away.
I don't think he did either.
I don't know. Well, maybe he did. Did he?
I have no idea, but we do have a lot of tweets.
He died.
Jimmy Carter did?
Yeah, I didn't.
Today?
It says 18 minutes ago, Jimmy Carter.
Oh, yes. Wow. Okay. Well, he lived great. I mean, he was a great president. Like, you know what I mean? Lived a great life. 99 years old.
99 years old. So yes, there will be a day, like markets will be closed in remembrance of him. The day of his services, the banks will be closed, markets will be closed. I don't know when that's going to be.
I think it'll be pretty quick.
My guess is going to be Friday when we're leaving for Toronto.
You're probably right. Well, today's Tuesday. It might be next week. I don't know how long it takes.
I don't know.
I don't know how long it takes either. Okay, so Liz and Jenny Forever comes in. Good morning, ladies. How about a Trump trade? Drill, baby, drill. Halliburton or slob. Lower rates, less regulation, and more mergers. So Goldman Sachs or JP Morgan. Gold, lower rates, lower dollar. Bitcoin or CrowdStrike. What would you do here?
Okay, a Trump trade, drill baby, Halliburton or slob, lower rates, less regulation, more mergers. So honestly, if I were doing a Trump trade, I'd probably get long defense, because he'll put a lot more money into defense. That's what I would do.
I kind of like gold. I kind of like Bitcoin. I'm talking my book here. Not that I put this on because I didn't think he's going to win, but I'm long gold. I'm long Bitcoin. I'm about to get long CrowdStrike because I really like that trade that we put in. I don't have anything in Halliburton or slob. However, I am long natural gas. So, and then lower rates, less regulation, more mergers. I also have a concentrated interest in some type of brokerage firm where it will help if interest rates.
Let's take a look. So you said you just got long gold. Let's take a look at what you did.
Just got long gold.
I thought
I'm telling you, I'm talking my book. I've always been long gold, but I do it in different ways. I don't just go out there and buy gold. I'll do downside ratio spreads in GC, in GDX. There's this what is it? What do I have? Hold on. This is the one thing that it's in my IRA. I think it's IAG, maybe. It's this, I got it from Tony from Mexico.
IAG. I am gold. I am gold.
I am gold. So this, so this I just have in there. I add to this occasionally. So because it's cheap. Do you know what I mean?
Yeah. Does this chart look like the gold chart? Go to GLD.
No, I mean a little bit. So gold is up too.
Yeah, they look the same. They look the same.
Yeah, but it's $4.
Yeah, but right.
The
charts look.
Yeah.
I am gold.
Similar. I am gold.
Okay. So, what do you have on right now in gold?
I can't see my position right now because my computer just died, but I know I am gold. I always have it, and I add little bits to it. I have downside ratio spreads in GDX. I have downside ratio spreads in GC. I almost always exclusively have those. And then if I get long it, and I start selling calls against it. But the ratio spreads are actually really easy for me because I'm going to take in some premium. But I don't trade gold. I think there's no premium in not gold. I don't trade GLD. There's it never really works out for me.
Now, is GDX, is it similar? Has the minor, I don't really watch gold that
often. The miners have not been had as run for the roses as the actual gold product has, but it's not bad.
Yeah, it's not bad. I mean, it's gone, it's still up. It's still high.
It's still very high.
So I don't know if you want to put anything on in GDX. There's a 49 rank.
Sure. Like I said, I don't mind. I like having positions on in these, but you're going to have to talk me through this because I would put my book on there. Like I would show you what I'm doing. I would go here GDX and I'll
ratio spread in GDX. It's cheap.
I know, but I get pretty close and I don't know if people like that or not. I would take 62 cents. I'm putting up $600 to do it. I have no problem. I get back in at 34 if it gaps down.
Yeah. I don't mind it.
It's just a close ratio spread. So sometimes I think that
I know. Honestly, Liz, I would have said Big Lizard, which would be literally shifting that ratio spread up a strike.
Yeah.
We'd be shifting it up to the 38, 37. So just all you have to do is shift it.
There's a Big Lizard.
Well, you got to sell the.
Oh, sorry. Yeah.
So, and you can make it $2 wide and still collect 260. That's what I would have looked at, which again is the ratio spread, is the 40-38 ratio spread.
Do you know another reason why I think in bigger products why I always go to the ratio spread? Because, Jenny, the brokerage firm, which is amazing, this is not us, this is the powers above the brokerage firm, hold up the distance between the strikes as well for no real reason. Watch if I shift it. I'm going to use the exact same strikes. Watch the buying power. Actually, I don't know if this is going to work, to be honest with you, but I think it will.
No, I think buying power is the same. Buy one, sell two.
Oh, sorry. Buy one, sell two.
Wait, no, leave that. Buy the 40. Buy the 40.
I'm flipping it. Hold on. Yeah, buy one. This is
sell two 38s. You got to highlight the 38.
I know. My mouse broke, so I'm using that little keypad. Yeah, it is the same. But maybe it was lower down here. That's why, because I was using the out of the monies. Because it moves your break even a little bit.
Yeah.
But nonetheless, I don't mind the Big Lizard. I don't mind the ratio spread. They are versions of the same trade. There, we'll ship it. $265.
You can define your risk. We're getting 260. Why don't you just define our risk? Use like the 30 cents. We're still getting over
355.
Yeah, why don't you, I would, yeah.
I'm just shipping.
If you look at Lockheed Martin, because I think they had earnings, and I'm curious, if they're down on earnings, defense is another way to play it.
They don't.
Ooh, darn, it's up. And what I think, will you go to the chart and see what they've been doing? Oh yeah, look at that. And what does Boeing look like?
Boeing, I gotta keep an eye on the time. It's 48. Okay, Boeing. Hold please, down. Yeah. I mean, it's up today, but it's down.
up to date maybe on Lockheed Martin's earnings. I don't know, but getting long defense is not a bad play. And I don't mind getting long Boeing down here at 185.
So can I mean, I'm legitimately asking this question because I really don't know the answer. So I'm not trying to, I apologize if this is an ignorant question, but how is Boeing a defense stock?
They make a lot of defense products.
I thought they made airplanes.
A lot of like military products.
I really just thought they were airplanes. I really didn't know. I wouldn't have said like defense stocks go to Boeing. I don't know why. I just wouldn't have.
Yeah.
So give me another defense stock. I want to see if it's up or down.
Raytheon.
What's RTH?
RTX.
Okay, hold on. Up.
Yeah.
So this doesn't look like Boeing.
I know, because Boeing, there's more to Boeing, right? And it's taken more of a hit with all, like, there's more to it than just defense.
Okay. But so you'd rather stay in the Boeing sector than the other sector?
Like that is, it's really fallen compared to the others. It's hard to get in when they're at the height, but yeah, maybe Lockheed Martin's up $14 today, and Raytheon's at the top of its range.
Yeah, they're at the top of their range. Which would you prefer to do? You're my defense.
Well, I just think with this down so much, I know it's up $6 today, but we can get pretty far. Going to August, look at August puts. You can go down to 170, $15 down, and still get $1.75.
It's $2,100. It's not that bad.
No, it's not bad.
Sure, I don't mind this. Now, yeah, we're in August.
Yeah, this would be our earnings trade. It's because it's up $6 today, unless you want to wait till earnings to get in. The hard thing is that it's up $6 today.
Let's wait till, I mean, I know these are famous last words, but if we don't have to wait that long, let's just put a pin in it until earnings, because it's only, that'll be next week.
Yeah, next week. Okay.
It's crazy. July 31st is next week. Okay, we want to jump back in and make sure we got to everybody. So this is from Frank the Great. Somebody must be on the YouTube chat. Jenny, do you consider trading maybe an Iron Condor and TXN?
Let's look. Was Texas Instruments on the earnings list today?
I don't know. Let's go look. I
asked about simply selling the 180 put in Tesla. I'm just a little afraid of Tesla on earnings. And then in Google, how about simply selling the 165 put? And I don't mind that in Google. Sure.
I don't know. And it's not too big for the show account, Scott. Like, it's a $165 product. That's fine. We usually try not to spend that much. I was about to press that in Boeing because it was the 24-day. I don't know that I would put that in the show account if it was going to be September because it's so long.
Well, and so I think this year we kind of said we're not going to let any earnings trade take us down, because you've been a long time. Earnings, you can get taken down with earnings, right? More so than a durational trade, not on earnings. So we have been very cautious with our earnings trades, defining our risk, not letting ourselves get into a situation where one earnings trade takes too much of our account.
Yeah, we've tried not to. So that's true. That's true, especially with the earnings trades. But I think it's also different. I'm a little bit gun shy about Tesla, but I wouldn't mind having Google in the account. And I think that is also a mentality where if it's something you don't mind having in your account, sure, I don't mind spending that on earnings. Hopefully it's gone the next day, but you don't mind doing it. You know what I mean?
Right.
So wait, what do we want to see? Texas Instruments. Yes, it is.
Oh, well, is it on there?
Yeah, right here, TXN.
Oh, yeah. Okay. And were they asking for?
It was
Iron Condor in Texas. Let's take a look.
So let's go TXN.
Texas Instruments, $199. I always like to look at the chart. I know a lot of people don't, but I do. Okay. Let's trade page. Let's see what the expected move is. 73 rank, $8 expected move.
I'm shocked that only 1.8 million shares have traded. Let me move this.
Earnings are after the bell today.
It's got is this a 4-star on liquidity or a 3? Oh, it's a 3, which is fine. That's liquid.
Okay, going to the 3-day.
Iron Condor. I'm just starting here. We can pull it in. I just went outside the expected move.
So the crazy thing to me, $8 expected move, it's down almost $7 today. I feel like that's a big move today. It's saying when earnings come out, unless earnings were leaked, like, I can't believe it's down $7 today and the earnings move would be $8.
I'm really I don't know what my eye is thinking right now. We've got such high IV ranks. I think these moves are too small.
I think $8 is small for a $200 product that's moving $7 today.
Yeah, that's what I'm saying. I would look at this and say, I did something. I'm not a fan of the $8 move. It seems too small. And so kind of like yesterday when we were looking at the SPX, I was like, this looks like a buy. You know what I mean? And so you could do the opposite if you think, I think it's too small.
Yeah, I don't know if it's worth the risk. I know here this is baby. Like we can make $92 and risk 158. That's like baby risk.
It is baby risk.
This is not something that we usually play, because if you get stuck in it, my opinion is if you get stuck in Texas Instruments, there's usually, I mean, maybe at $200 it's different, but I guess when I used to trade it was lower price, there's not a ton of premium in there to dig your way out of a hole.
There isn't, and I would say because there isn't a ton of premium, if you wanted to make, and I love this, and I love it. Thank you very much, Frank the Great, for putting it on YouTube. We really like it. I love the discussion point around it. I think I see a little bit wide markets, 88 at 96, and you got 4 legs in, 50, you know, if you look at the bottom, 53 at 84. I would define my risk, and what you're in, you're in. I think to Jenny's point was really good, is that I don't want to be defending this or keeping, we got filled in GDX. I don't want to be defending this or being like, I'm going to make this a naked option. I would say if it doesn't move, great. I'm going to take my $68, $70. If it moves, then I'm done with it this week.
Right. It's if we get into something, an iron condor is defined risk. It's like you win or you lose. It's over. Yeah. But if it's undefined risk, is it a product you want to be in case you have to defend it? And then it can get challenging to defend it if it's not that liquid.
Right.
But it does have 3 stars. And I haven't looked at Texas Instruments in a while. And aren't their headquarters here in Schaumburg, outside of Chicago?
No idea. Sounds right.
And maybe I feel like someone was just talking about Texas Instruments. Maybe they are. I think I saw them in the news. Maybe we do want to get bullish. How much is a crab? How much?
Okay, let me put this out. Cleared crab. Okay, 3-day. I'm going to sell.
10-day.
3-day. I'm going to go $5 wide, right? Because this is pretty wide. Okay, so selling 2, buying 1. We're getting 256. That's pretty good.
Yeah, and then you buy the 10-day 200.
That's not bad.
From 200 to 207. That's not bad. 219. If it was you would have pushed the button.
I would have. But take a look at the markets. Like I said, it's a decently wide market, so I can push it to 217 and send it. So that it's not bad, but that means this has to go up, or we're donating $200.
Yeah, not my money.
So
I don't mind.
So,
put it in.
No, I know. No, and I totally appreciate where you're coming from, but in this perspective, so everybody can do what they want, right? If you're bullish, you want this will make more money if it goes up. In the other example, if it doesn't move at all, we get to keep $70 because we were only risking $150 in the other one.
Listen, this crab is $200. We just put on a crab for $580 on in Google, and Google is lower priced than this. So we had a lower priced product in Google, and we put the crab on for $580. Now, granted that our long was out in time, further out in time. So that you could say the same thing. Like if it goes down, we just donated $580.
100%. I'm not saying one versus the other, but I don't mind being in Google. I don't want to be in Texas Instruments. If we're gonna do it, Jenny, I'm making an executive decision only because Frank the Great put it up.
You're running the platform today.
Yeah, because Frank the Great put it up, and because they wanted an iron condor, whoever it was asking Jenny for an iron condor. I'm Liz, by the way, but that's okay. I'm gonna
go ahead.
93. I'm gonna donate $157 to this trade just because. Okay. Tomorrow
you could go out a little further. I don't know what the 10-day move was.
No, I mean that's okay. Let's do the 3-day iron condor. I'm gonna make our drawdown more.
And give ourselves a little more room.
And give ourselves $180. And I'm going to ship it. And then from the SIBO tomorrow, you can curse me out. I'm going to make sure we got to everybody. I'll go down real quick. Latest, there we go. Oh!
Internet rumor. Thank you, Jeff.
We were just giving fake news. Jenny got on her phone. Fake news.
Okay, so I didn't search did Jimmy Carter die. I just searched Jimmy Carter, and it comes up. It came up on the news. So fake news on the internet.
Oh yeah, now I'm looking at the chat. Fake Jimmy Carter death announcement spreads like wildfire on Twitter. We just spread it.
We're not true. Thank you, Jeff. fake news. Jimmy Carter is alive. Hopefully he'll live to be 100.
That this is the greatest thing I've ever seen. Jimmy Carter is now the Democratic nominee. That's funny. It's funny, Steve. Okay, so yeah. Okay. Well, sorry about that. We retract our statement from earlier today.
It looks like the markets are open all week.
But we will not be here Friday. It is not in honor of.
We'll be on. I mean, Tasty Live will have programming, but we'll be on a plane. Hopefully, CrowdStrike doesn't strike again, and we'll be on our plane heading to Billy Bob Airport.
Yes, this is true. All true. All true. All right, Jenny, let's say good luck with our earnings trades because we are filled in. I'm going to go to this real quick. We'll talk about what we did because then we can say good luck with your earnings trades. Filled all symbols today. Disney, we switched it to a defined risk. I was happy about that. Google, we've got a crab. Go Google. Corn, we took our put spread off finally. GDX, we got filled. We are not filled in Texas Instruments, but I will keep an eye on it. And we'll see how it goes tomorrow.
All right, Liz, great seeing you today. I will see you in person on the train tomorrow, bright and early. Don't forget your market maker jacket. Not market maker jacket. Don't forget your trading jacket.
They won't let me be a market maker, but I do have a trading jacket.
I almost forget my jacket. That's like, I'm going to start keeping it in my car.
Mine is in my car, so I can't forget it because I've had heart palpitations that I was going to forget it. All right, everybody have a wonderful afternoon. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, live from the SIBO.
See you tomorrow, everybody.
%90 goes to S&P index funds.
You got to double your
10% straight to
Is 20th Century Advice driving your 21st century portfolio? Tasty Live has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other Tasty Live personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, management, whatever, just come hang with us for the next hour of the day, my favorite hour of the day, because I spend it with my buddy, Mikey Butler. How's it going, sir?
It's going very well, very well. It is I would say this is the first real earnings day.
Yes.
With some big name stocks. We've got Google announcing after the close. We got Tesla announcing after the close. We will be fielding any and all trade ideas, questions in the YouTube chat today. So if you want to join us there, just pop over to the Tasty Live YouTube channel. We're streaming live. But yeah, I haven't done anything, but I do plan on placing a Tesla earnings trade and a Google earnings trade. That's my main focus today. How about you?
I put a Google earnings trade on. I actually have 2 positions there. But I put that in the cherry picks, or will be in the cherry picks that should go out soon. We're working on that as we speak. Got another edition of the earnings spreadsheet. So you'll have the next week's worth of earnings going till Tuesday before the market opens. And then we'll have another one for you. The reason we do that is because we give you all sorts of data and implied volatility and past moves and all that stuff. So want to make sure it's current to whatever the prices are at that point in time. So lots of good stuff coming in there, too. And we looked at also CrowdStrike, PanW, some of the cybersecurity stocks, looking at some of that skew. So that is some interesting stuff. As always, we always give you relevant, good stuff.
Here you go. CrowdStrike up 10 points right now. And
yes, I need a little bit more.
PanW in the middle of that range. But, yeah, kind of crazy. I saw a video of the Atlanta airport, just chaos everywhere.
Yes.
Nuts. Everything's nuts.
Pretty crazy.
But yeah, I put a link in the YouTube chat, pinned to the top of the YouTube chat to get your cherry picks today. Free newsletter, best newsletter. Go get it now.
Beautiful.
But yeah.
Quick little market update.
Please.
I've done some trades too. We'll go over those in a second. E-mini S&P 500 futures up 13 here. They've had a little bit of choppiness. We've had about almost a 40-point intraday, 42-point intraday range here. It was lower in the overnight session, rallied in the early part of the morning. We got as high as 56.29, which is about 7-8 points higher from here. So definitely seeing a little bit of two-sided action. NASDAQ, it's up 10, basically unchanged here, pinned around 20,000. The Dow up 81 and the Russell up 23. So the Russell actually bucking the trend back to near the higher end of where it's been trading. Oil futures taking a spill lower. You like that pun? /CL 79.64 down $1.75 here, about 2.25%, near the lower end of where it's been trading. Volatility futures have continued to get smashed. /VX 1470. Down 40 cents, about 2 2/3%. Bonds up 15 ticks. You got gold up 10 cents, silver down 5 cents, and Bitcoin taking a little bit of a breather, down 1,600 on the futures, spot down 200 here at 66,000 and change.
Do I buy the crude oil dip?
I sort of did that today with my trade adjustment. If that makes you feel better or worse, I'm not sure. So that's on you. I think you do. I think you sell put spread.
I kind of just want to buy the contract.
Yeah, I know. That's
my favorite thing to do. I'm going to do it.
MCL, buy an MCL contract?
MCL.
Beautiful.
Filled at 76.70. Five red days in a row. Lower end
Can't
of the
be
range.
6.
It did drop below this point, of course. It dropped to 72, 71.5 in the beginning of June.
In the oil futures,
but we'll see. It's a small enough contract I can hold it. So we'll see if we get just a quick little reversal here.
Yes. I wanted to give a little, because I did some trades this morning, so I want to go over them. Google and Tesla, new trade ideas that will be in the cherry picks. As I was alluding to with Mikey, I closed out of a call spread that I had on the oil future, so I'm just short a put spread. I am short the 76.75 short put spread. The futures are trading at 76.73 right now, so I'm right at the money here. And then I closed out of an AVGO short put spread that I did in my Johnny Trader account last week.
There you go. there are some trades that I've got on that are doing well. I've got the Microsoft call diagonal spread. That was the pre-earnings
Pump trade, as you call
pre-earnings
it.
pump trade. The pre-earnings pump trade in Microsoft, it's working well. I think I'm just going to leave this on though because it leads into earnings. If we get above 450, then I'll close it.
Okay.
But
You have what's the spread?
the 440, 450, long September, short the August 2nd in the earnings cycle.
450, yeah.
So
Okay.
if we get above 450, I'll just take it off and restructure it.
What's your debit on this?
1090? It's 1262.
Pretty good trade.
Yeah. So if it gets above 450, it'll be too big of a trade to keep on. I think for this account size.
It'll trade at like 14, 15 bucks probably.
Yeah. So we'll see. But yeah, I'm planning on keeping this for now. Nvidia Iron Condor, 24 days to go.
Oh yeah.
That one's doing nice. But yeah, I'm gonna place a Google trade and a Tesla trade today for sure.
Very nice.
Amazon rallying off the sell-off we've seen recently. That's nice.
I saw something like it was like 11 straight down days or something.
Yeah, something really, really abysmal.
Yeah.
The anti-pump move. But biggest mover of the day for sure out of those tech stocks.
Yeah, almost 3%.
Yeah. So
Nice to see.
You love to see it. You really do.
Yes.
But yeah, actually I've got the 195 September long option there and the 205 short call that is now worthless.
Is it what expiration?
The 3-day.
Oh.
So what I'm going to do is I'm going to roll into the earnings cycle right now. That was the whole intention. Got into it with the short option pre-earnings. Now we get this big rally, and that short option is not moving at all.
Yeah.
So what it is doing is it's moving those 10-day options pretty aggressively. It's almost doubling the value of those 10-day options. So let's see.
What's your debit on the trade? Your
debit is
initial?
980.
Okay, so the roll will net you, if you roll to the 205,
Yeah.
would net you, let's call it an $8 debit.
Yep.
So you'd still be out 100 and some odd dollars, but
Yeah.
you'd be adding another $1.70 and change in value.
So
you could roll to the 200 if you really wanted to.
Yeah. I moved to the
Take
205.
Yeah.
But yeah, I've reduced basis there. I just got filled for $1.73 credit. So that's a pretty sizable cost basis reduction. I now have an $8 debit on a 10-point wide diagonal spread with the short option expiring next week, just ahead of that, or just after the earnings announcement. So that is now my earnings trade that I've got on. What else? That's pretty much it. Glorious.
Mm-hmm.
Sweet. All right, let's pop over to the slides real quick.
Beautiful.
So we've got earnings, as we've said, on deck, and we usually do this before every earnings season. We'll just recap the whole idea behind earning strategies and why we kind of gravitate towards these defined risk diagonal trades like calendar spreads, diagonal spreads, crab trades. It is for good reason, at least for a cost basis reduction standpoint. So let's dive into it, and we'll answer your questions, trade ideas right after this. So earnings implied volatility explained. Implied volatility tends to increase into earnings, and this is due to speculation and hedging into a binary event, propping up extrinsic value. Now, there's one thing to be mindful of. I think there's a lot of people that see this implied volatility increase as extrinsic value increasing as time passes.
Free money.
That is not the case. If that was the case, Nick and I would be living in Turks and Caicos.
My line.
Sipping on whatever. I always say that same thing, and I can never think of a drink to list.
Pina colada.
There you go, pina colada.
Yeah. Mai Tai.
Yes.
You know. Sex on the beach.
There you go.
Here you
Anything.
go. Give you that one.
Whatever your poison is. So keep this in mind. Implied volatility, the implied volatility number increases because extrinsic value is not decaying as fast as it should be. Options are staying bid.
Yeah.
It's still decaying, but when you think of time being linear, where time is passing every single day, if you're expecting implied volatility, or if you're expecting an options price to decline similar to time, but it's not, it's still declining a little bit, but not as much, you're going to get a very inflated implied volatility number, because when you think of the equation, there's X amount of days till expiration and there's X premium, Y premium, whatever. If the premium is higher than what it should be because of this binary event, that's what creates that high implied volatility number. All else equal, if you compare an option from last week to an option today, in Tesla, for example, the option today is less valuable compared to last week. But it's just a little bit more valuable than it would be if there was not earnings today.
Yes.
And that is what's creating this implied volatility increase in the weekly cycle. With that said, we can look at this implied volatility and look at the expected move, and specifically the expected move difference in the weekly cycle relative to a 30-day, relative to a 60-day. So we can really get a good feel for what the market is pricing in for earnings this week relative to different cycles, but also relative to the stock price. So this image that we're looking at here is Tesla's expected move, plus minus 22.98. That's the expected stock price move based on current implied volatility for the weekly cycle. They announced after the close today. $23 is a big number considering Tesla is trading for $248. So almost 10% of the stock price expected to move this week for this announcement. Could be outside of that expected move, could be inside that expected move, but either way, the way that we think about this is we are getting the premium in the 3-day cycle that reflects a 23-point expected move. And if you look at something like August or September, that 69.8 or 60% number there on the screen, that is a huge chunk of the expected move that has, when you compare it to cycles that have much more time associated with it. So basically what we're trying to do is sell something in this weekly cycle that's highlighted on with that orange rectangle, and we're buying something in that back month, whether it's September or August, depends on the situation, but that's how we are setting up a lot of these trades. We're keeping our risk defined. We're inventorying delta, as I like to say, in a back month, and then we're selling that high cost basis reduction option in the weekly.
Yeah, this is, and I like that you put that we can trade this disparity, because it's a piece of the puzzle other than the stock price that you can tangibly trade. Right, so you're selling that premium that's high, that's more inflated relative to the amount of time, versus buying premium that is less pricey because based on that amount of time. So it's almost like a tangible spread that has some sort of value. There's 50 or 60 points, 70 points of IV difference between those options. Those options have significantly different prices because they're different durations, but it's something that you can tangibly say, if volatility goes down, there's value to be had between these two options. And so it's something that you can wrap your head around, that you can tangibly trade other than just the binary nature of up or down the stock price.
Exactly. So with that said, this first slide really speaks to setup, right? We're looking at this implied volatility. We're thinking to ourselves, how can I intelligently play into this big implied volatility in the weekly and significantly lower implied volatility in the back months? And most importantly, you can see that those back months are pretty much flatlined. They have a similar implied volatility number. So on the same slide, when you look at that highlighted section on the lower right quadrant, you see 60%, 59.6, 61.2, 58.7. All those implied volatility numbers are very similar. So we can deduce that the numbers that are not similar, the numbers that are significantly higher than those, are going to be crushed down to that level. If you look at any stock that has already reported earnings, you're going to see just that.
What was Spotify? Even though it had a over the expected move
this morning.
I can put up, I don't know what you could see the 5-day IV change is minus 19%. We can look at that after we go through the slides, but we'll give you an example of that. We didn't obviously look at the actual monthly implied volatility, but I can tell you that it's down about 20% around that 30-day mark.
Yep.
And IV rank has gone from, 90 or 85-ish down to 17.
Yep.
20-ish.
Yep. And after earnings, you're going to see implied volatility normalize, which just means that there's not going to be as big of a disparity between expirations. You're going to see very similar numbers across expirations until, of course, you have the next earnings announcement that is placed in a cycle about 3 months from now.
Yeah.
So let's pop over to the next slide here, and we can talk about that contraction and really dive into it. So just looking at the weekly implied volatility, I don't necessarily do a mathematical contraction with the weekly at 130% because we know that come Friday, all that extrinsic value is going to zero. So when you're looking at the analysis tab on Tasty Trade's platform, you can just click on that short options expiration. It will bring you to that date and it will automatically bring that extrinsic value to zero. So every time we look at these and we're assessing what a value of a strategy could be, it's based on the expiration of the short option. So we're getting all that extrinsic value out of the equation.
Yeah.
The other expirations, though,
and you'll be that risk profile will give you the best case scenario.
Yes.
So, obviously with Tesla earnings, there's still 3 days to go till expiration. So there's going to be some sort of value there, but we move it to the end of the week to give you an idea of like your home run best case scenario. And then you could sort of, massage that profit potential towards whatever you're trying to target.
Yep. So looking at the figures here, the first highlighted number where we have minus 15%, that's just our estimation of the fact that this implied volatility in the August cycle of 69.8%, it is significantly higher than the next one at 60%, the next highlighted one where we showed minus 5%. And that 60% is a little bit higher than the furthest out on the bottom right side here, where we're looking at 58.7%. So this is just an estimation that, let's say that all of these implied volatility numbers go to 55%.
Yeah, they're all inflated, right?
Correct.
Pretty much.
Yes,
is what we're saying. Because there's earnings, you have a binary event. Nobody knows if it's going to be up or down or a big move in either direction. So all of these have some sort of juice baked into them.
Yeah. And you're always going to see the biggest juice being pumped into the near-term cycles because the near-term cycles are holding the most. They're holding the most extrinsic value relative to time than they should be or would be if there was not an earnings announcement.
And that's because there's a lot of uncertainty around the expectation of price, and especially when you weight that towards how much time you have left. There's a lot of uncertainty where the price is going to be in 3 days versus 100 days. You can price in a lot more things, good or bad, to happen to the stock and make a projection of where that could be. On a 3-day time frame, it's a coin flip. It also happens to be the relative cheapest time, right? So from a notional value standpoint, options in Tesla that are 60 days out trade at $3,000 or $2,000, whatever the number is. In the weekly, they're very cheap. So, maybe a couple $100 relative in terms of actual dollars, cost-wise. So you tend to see a lot more activity in those options, which helps to increase price of those options. If a lot of people want to buy, and most of it is buy those options, prices go up.
Yep. And that's really the way that we can look at this and get a rough estimate of what we expect to see from these options.
Yeah.
Now, of course, we can come back tomorrow. We don't know what's happening with Tesla, the stock price, but we will know in about 5 hours. We're going to have a really good idea of what's happening with Tesla stock price.
Yeah.
And I can tell you right now, if right now Tesla's expected moves 22 points, this is what happened in Netflix. Netflix had a 50-point expected move.
It was like $3.
It opened like up or down $3. I don't even remember. But when you have a really inside expected move, that is when you can expect to see the biggest implied volatility crush, because implied volatility is uncertainty of where the stock price is. When you have an expected move like Tesla, where the market is projecting almost a 10% move in the stock price, if it's only a 1% move, you might see this 58% drop down to 45, 50. Like you could see an even bigger implied volatility contraction. What we're trying to illustrate here is just the fact that If we take a little bit of IV out of the back month and we bring it down to 55 and we assume that that is going to be our new baseline, we can then adjust these other ones that are much more inflated. We can bring 69% down 15% to 55. We can bring 60 down 5% to 55. And we'll show you on the analysis tab how you can click that implied volatility down 5% or 15%, and you can see how your theoretical P&L changes when you do that. And last but not least, this vertical illustration we have here where the red line is kind of going more left than the green. The red line just shows you that as you get closer to expiration or have a near-term cycle with an earnings announcement, the implied volatility number is going to be significantly more elevated. But after earnings, it's going to move down to that green line. Mm-hmm. So your near-term cycles are going to have the biggest implied volatility crush because now the binary event is done and there's no time left on those options. So keep that in mind. You're going to have a much lesser implied volatility impact on leap options, 200-day out options, anything that's already showing you a baseline implied volatility.
Yeah, the point of the lines is to show that spread of like a value that you're capturing from being short premium in a shorter duration, long premium in a longer duration. That volatility value is something, the width between those two is something that you can trade around.
Indeed. Let's pop over to the next slide, and we'll continue on with this. So if you don't have a taste trade platform, taste trade platform makes it very easy. We can see exactly what the expected move is right now for any stock.
Yep.
But what you can do is just look at that number, and like today's interesting because it's Tuesday, right? Even after earnings for Tesla and Google, there's going to be 3 more days of implied volatility that are baked into the week. So if you have an earnings announcement that's closer to the front of the week, so on like a Monday after the close, Tuesday morning, Tuesday after the close, we need to realize that there's still going to be some implied volatility in that expected move. So 22 points plus or minus for Tesla is for the whole week. So it's for the earnings announcement plus Wednesday, plus Thursday, plus Friday. So the earnings expected move is not going to be 22 points. You might see it move 22 points, but you need to also just realize after earnings, there's still going to be a $5 or $6 expected move in Tesla for the week, I would guess. Mm-hmm. So you can bring that number down by just taking 5% per day from that expected move as a rough estimate for the remaining time value of the week. Simple enough. Okay. But yeah, recapping the front weekly expirations, they're really going to be instant pain, instant gain. So when it comes to strategy decisions, if I'm doing an iron condor, I don't necessarily always want to do a 2-day iron condor because if my goal is to have some time left or have some kind of defense, it's not going to be the case if Tesla blows out or Google blows out and all of a sudden I have a deep in the money spread with a 2-day expiration cycle. There's nothing I can do with that strategy. But if I go to like 30 days where I'm still going to show implied volatility crush, and even if I'm wrong, I still have 30 days to go for the stock to potentially reverse, I might be more comfortable doing that than the 2-day cycle. But with the strategies that we do, which is typically diagonal spreads, calendar spreads, I want to go to the highest implied volatility, most near-term cycle because I'm trying to get as much of a contraction as possible in extrinsic value on those strategies, where I'm still bringing my long option in a further dated cycle that has a significantly lower implied volatility exposure there. So when we look at the platform in a second, we can use Vega and changes in implied volatility to estimate that monetary crush per vol percentage point when we set up these strategies. And it's going to be different from stock to stock. Like Tesla has really high implied volatility in the weekly relative to September. Google, on the other hand, doesn't really. I mean, it still does, but 84% IV, $10 expected move on $180 stock. That is not even close to 10%. So you have a much less implied volatility and premium for that reason in Google compared to Tesla. Final slide here, bring it all together. Last things is liquidity. So you're not going to have an issue with Google. You're not going to have an issue with Amazon, Tesla, Apple, any of the stocks that are household name stocks that are trading like water. You're not going to have an issue with. But you're going to have issues when you have stocks that maybe only have 4 monthly expirations and you're trying to trade an earnings announcement with that stock. Earnings is usually peak liquidity because there's more people coming in.
Speculating, hedging, trading, it's peak for sure.
Yeah. So really, this slide is really to keep that in mind. And for stocks that are kind of fringe stocks, you don't really see us trading earnings for fringe stocks because we don't want to get involved in a situation where we're trading peak liquidity and then after the announcement, everybody gets out of positions, markets go to $2-3 wide bid-ask spreads, and now I'm stuck in a trade that I can't get out of. So I would rather keep the capital on the side for different trades, different high liquid stocks, and earnings are still high risk. Like that's another thing. There was one year where I traded like Bed Bath & Beyond and I sold a Strangle in there or something, and the markets widened out so much and it was like a 3 times expected move, and I was just like, why am I even in this stock?
Yes.
So
high risk, high reward can go both directions.
Correct.
So you got to keep that in mind. And if you are trading something that's not as liquid as, your Teslas and Googles and whatnot, maybe a size down. That's an easy way to kind of limit your exposure if you can. For us, obviously, we're trading mostly one lot, so that's why we avoid them altogether. If you have some stock that you want to trade that you have a directional assumption or a non-directional assumption on, and it's just not as liquid, instead of doing 10 contracts, do 5. Or instead of 5, do 2 or 1 or whatever, and cut down your exposure, because in that exact situation where you have a, Bed Bath & Beyond that's down 50%, markets widen out, and you say to yourself, why do I have a full position here? It should be an engagement trade.
Indeed. And that's that on that.
Beautiful.
So yeah, popping over to let's go to Tesla real quick.
I was going to do spot first, so we could talk about IV crush and just exactly what happened. So Spotify, the expected move when I looked at the straddle this morning was somewhere around $30. So we were a little bit higher than that earlier this morning. It got as high as $343, so another $15 higher. It was certainly opened outside the expected move. You can see from in this column here on the left side is the IV 5-day change. So this measures 30-day implied volatility, or VIX style, so around 30 days. It's down about 20% over the last 5 days, which means that these volatilities around this mark were probably somewhere in the mid 40s to high 50s implied volatility. That's the vol crush that came in there. You can also see it in the IV rank. Obviously, you had volatility expand into earnings over the last couple of weeks, and you get to this high point in IVR. You're in the 80-90 handle. Obviously, the announcement comes out. Stock is up, even though it's a bigger than expected move. Volatility still contracted significantly to the tune of 20%, which is a lot. All right, so Tesla, what are you thinking?
Yeah, these markets are a little wide, but I'm just looking at the Spotify expected move. It was probably around. It's probably around like 20 points.
Yeah, it closed at 295.
Yeah.
So if we just look at that straddle, what that was trading for yesterday. So this one moved $18, which means it was trading at about 16, 17-ish. This one was trading at 14-ish, so it puts you at 31-ish dollars.
So just outside as of right now. But it opened up 40, so it was a much bigger move.
Yeah, which means that if you still had this on and held it and didn't close this morning, you're now a scratch. If you bought this straddle.
Yeah. Tesla, just looking at a simple strategy. I mean, whatever you're doing, we want to make sure we're accounting for our estimation and implied volatility crush. And for me, Tesla is likely going to have over 50% IV. I would guess it's rare that it drops below 50% IV. So we in the slides, we looked at bringing that down to like 55%. So if you're in August, you need to bring 68% down to 55. So you need to have a 13 percentage point contraction on your analysis tab. If you're in September, it's a 5% contraction. So it differs depending on what expiration you're in. But again, if you're selling something in the 3-day or buying something in the 3-day, you can just click on that expiration. It'll bring you to the end of Friday.
Yes. So do you have an trade idea? Bullish, bearish? I'll tell you what I did for the cherry picks. Okay. I did a broke wing butterfly, a pretty simple one. in the weekly. So an all or nothing type thing. I did it at 45 cents. I'm long the 270, short 2 of the 277 and a halves, and long 1 of the 295s. Another, just for Ron in the chat, that is Tom's computer with all the dings. He leaves it up as he leaves here, so his computer just dings and dings and dings, which one day we'll remember to like sign him out, but then he gets mad and, you know, he wants his platform up so he doesn't have to do anything.
Classic.
So anyway, so I did a broken wing butterfly. Break even would put you at a new 52-week high up at like 285-ish. You know, you got a shot at a couple more bucks if you get an inside up move. You got no risk to the downside. It'd be a 45-cent credit that I did this at. It's trading at 38 cents now. So, you know, high probability because of how far out of the money, and you have no risk to the downside. So a lot of call skew there, though. So you could look at call diagonals, crab trades if you don't want to be as bullish, or play something to the downside if you don't want to be bullish at all.
Yeah.
What are you thinking?
I don't know. I might need to defer to the YouTube chat here.
Well, I'll give you the one that I did in Google. I think you might like it a little bit more than that one. So I do have a strangle on already. I have I'm inverted, the 175, 180, basically the at the money straddle in the August expiration. I put on a new, slightly long delta trade here into earnings. So I bought the 185 call in September. I went into the weekly. I sold the 195 against it. I did this at $7.05. So you have like a 30 or 40 cent loss right now, 31 cent loss. But we can show this analysis mode. You can see my net position. I want the stock to kind of go slightly up from here. If we look at like the Theo as we pass some time here, it'll move. You can see like 190-ish is kind of my sweet spot here. But for this position itself, Theo, from here, we can go. So this is what our risk profile looks like today. If you push this out to the end of this week, this is what your risk profile will look like. It goes down because of the way the curve is, but it's actually a higher value. $600 and change would be like your total max value. Assuming there's no vol crush, we're going to have to crush some vol in the back. Maybe let's say 2 or 3 or 4 points. What do you think when you look at it?
Yeah.
4 or 5 points would be like a lot.
Yeah, you could be conservative and go 5 percentage points
Yes.
and just see the difference. Like if there's only 2%, this is what the Theo is. If it's 5%, this is what the Theo is. So yeah, that can help you really put a better estimate on your P&L if you are right. But yeah, I would say no more than 5% here because that would bring it down to 25%, which is possible for sure. But I don't see it going to like the teens or the low 20s. So yeah, there you go. Yes, I do love that trade. I'm gonna smash it because why not? Up only. I mean, I'm just not. I'm not fading the AI stocks. And with that said, they're all gonna be 20-point sell-off moves. Just kidding. Probably not, but we'll see. I mean, some of these stocks are gonna have just insane earnings, regardless of whether the market
if
digests
Netflix
that.
was any indication, it could be a buy the rumor, sell the news
Maybe.
type thing of just kind of a non-event.
You never know.
And I think the good thing about all of this, or the last like couple weeks, I should say 2 weeks, is that you have gotten a little bit of a pullback.
Oh yeah.
So there is some room for the stocks to move higher and not be at like weird
all-time highs already.
all-time highs, like huge gaps. You know, if Google is up, what's the expected move? $10, it's back to, you know, highs.
Yeah.
Like it's not
setting new highs.
Yeah. Like you got this big gap in the chart, like it looks parabolic, blah, blah, blah. It's back to where it was. I think that's kind of a good thing into earnings. Like you almost get the bad out on the way down and it says, okay, it wasn't that bad. We'll reset back to highs.
Yeah.
Or, you know, slightly up. That's kind of my feeling here.
I'm in.
And volatility is contracting here. and it has been contracting for the last couple days, pretty significantly here. I mean, I am just going to take this IVR off here. Going from 16-ish to 14 and change in 2 sessions is a pretty decent, 10, 15% vol crush into earnings, with the NASDAQ being weak all week last week. 3 weeks there.
Yeah. We are gearing up for a nice earnings season. That is for sure.
Yeah.
So yeah, Tesla, I'm going to defer to the YouTube chat. Let's see if we got anything in there, but I did get filled on the Google trade. Long September, short the weekly, the 185, 195 call diagonal spread.
The one that I did?
Yep.
Okay, perfect.
Yep. Classic cookie cutter setup.
Yeah.
And real quick, going to September instead of August, like you can buy the August 24-day for $6, but when you look at the relative value, and this is the opposite side of the coin, right? When we're selling an option against a long option like this, we want to go to the weekly because we want to get all that IV value. We want to give ourselves the ability to make money on both legs. If there's an inside out move, you're going to still get all your value out of your short option, and you're going to make money on the long most likely. So you can win on both sides. Going to September and giving yourself 60 days instead of 24, you're only paying like $1.50 more to do that. So that is $2 more to do that.
Yeah.
So sometimes there's an egregious difference in the price where like August IV is really elevated and September is not, and you're only paying like $1 more to get 3 times the amount of days. In all those cases, I'm going to September because you never know what happens with Google. It could sell off aggressively, but it could recover over the next 24 days. And now you're back to a scratch on your long where you would have had a full loss on your near-term cycle. So we're always, within our trade size, we're always trying to go as far out as possible with the long option for diagonal calendar spreads, crabs, because we want to give ourselves that ability to have time to work out in our favor if it does go against us.
Yeah. And the reason we go to that weekly in this situation, because a lot of times we do diagonal spreads with, like August, September here, where you're long September, short the August monthly. If you look at Amazon, which is very similar price to Google, and it has pretty similar implied volatility, the disparity in volatility is not as high as what you're seeing here. You're seeing 84% versus 32%. In Amazon, when you look at this weekly, it's got the roughly same implied volatility as the back. And that's because there isn't a binary event baked into it. The volatility comes into play when you look at this 10-day. And that's why if we're doing earnings trades, that we look at selling that front weekly is because all else being equal, the only difference between this week and next week is that there's an earnings event. And that's a big difference. If you look at this on any other time frame, even looking at these 2 random weeklies here, they're the same. And so every event or every earnings, announcement that comes up leads to something like this, where volatility naturally gets a little bit higher.
Mm-hmm. All right, popping over to the YouTube chat. Daniel, any thoughts on NVIDIA vertical spread? 107, 108, 17 days to go.
117, what was it?
107, 108.
Nice trade.
Yeah, I don't know if you're selling this or if you bought it and it's already mooned for you, but it's a 10-cent spread. I mean, this is not selling this spread is not something we're going to do. You're going to pay, even just in commissions alone, which are low at Tasty Trade.
Yeah.
You're giving up 30% of your expected profit on commissions and fees.
Yeah.
So it's like 10-cent spreads like this. Sure, if you're brand new and you just want to see how it moves, fine with it. But I would still rather move it up to like 114, 113, get to the expected move.
Yes.
Something like that.
You gotta do 1/3 the width or closer to it.
Yeah.
I agree.
But yeah, we're typically trying to collect 1/3 the width, so 30 cents, 33 cents on a dollar wide spread.
Yeah. This is 17 days, so if you looked at the 24-day or the September, you'll have no problem hitting that mark.
Yep. Bullish on Tesla. Bob's got a covered call, a 275 call at 648 in August.
270. Okay. Just covered call. I mean, I like it.
Yeah. Cost basis at 255.
Yeah.
Would you roll the call to September?
I might even roll it to the weekly.
Yeah.
I mean, you can sell the 270 at, $4. If the stock goes to 275, you're no worse off.
Yeah.
Obviously, if you're very, very bullish, sure, I would consider rolling it out to September, rolling it out and up, and you want to keep, you want to give yourself more room to the upside. If you're going to keep the same strike, I would say either keep the August one or roll into the weekly. But if you're more bullish, now is as good a time as any over the last couple months when this option was probably trading at 50 cents when the stock was at 170 and it's now at $9.
Yeah.
Definitely take advantage of it.
Yeah. I mean, I wouldn't go to September. I wouldn't roll further out because you're just getting more time value. You're getting out of the implied volatility crush.
Unless you want to be more directional. That's because then you can roll it out and up. I mean, it kind of sits you in that position for a little bit longer. But
yeah, rolling to September gives you more monetary hedge on a downside move. But if you're bullish, you want to stay in August, or you want to do what Nick says and go closer.
Yeah.
Yeah, nice. Still a good setup for being bullish on Tesla. Not sure if you talked about it already. How's Netflix? I did a similar and had to roll expiration of the short legs for credit. Nice. I did not do that. And then closed it as it seems to be losing, going out with a $500 loss. Yeah, this was the worst case scenario.
Yes.
Yep. And the problem was it was a 50-point expected move. It moved $3. And I was in August instead of September to reduce cost basis, and August got pummeled.
Yeah,
August
and because it was so expensive.
Yeah.
You go out to September, it costs you $2,000 or $3,000.
Right. So unfortunately, this was just like literally the worst case scenario where it just did not move. Like you can't even tell that there was an earnings announcement if you just look at the chart.
And this is a problem with these sort of strategies, these double strategies. They look sexy in practice, and the risk profiles are very, very interesting. You have lots of like big peaks, and it seems like there's a lot of good things that can happen with these sort of trades. The problem is if you do get a sizable volatility contraction, which we know usually happens after earnings, and the stock doesn't move at all, it's kind of like you're playing for multiple things to happen. You want the vol to come in, so the short premium decays, and you also want the long premium to stay bid. So you kind of need some sort of move. You really need to avoid this like nothing move, and the nothing move is going to be a big value drain on the total position.
Yeah, we needed a move to one of the strikes.
Yes,
then it would have been totally fine. It would have been profitable.
Yes,
but because it was the exact non-move, both of those options basically went from hundreds of dollars to being worthless.
Yeah.
So now I just have the long options on, and I need a big move in either direction. If that happens in the next couple of weeks, then maybe I get out for much less of a loss. But right now, it's looking like a definite loser. Bearish Tesla put debit spread 245, 250.
On the weekly, I imagine. It's your standard 50-50 shot. I like it if you're bearish.
Yeah.
I mean,
it'll come in quickly. If there's a sell-off, you'll get paid pretty much immediately. If you want to give yourself more time, you'll have less of a profit potential, but you'll have more time for it to reverse if there's a rally.
Yeah, I like it.
With an IV crush after earnings, does it make sense to buy calls or puts all the way to the next earnings cycle and sell before the earnings announcement?
when you're that far out in time, the volatility is not changed. You're not getting cheaper vol even with after earnings, 100 days out in time or more. The next earnings will probably be somewhere in November, December, for fourth quarter. So you're not going to be getting much.
Yeah.
Like this implied volatility stays pretty much where it is.
Yeah. And that's just like the options will still decay.
Yes.
It's just a matter of like when you get closer to expiration, it's like they decay. And then when you're near earnings, they like slow down a little bit because of earnings. And that little bit of a slowdown really increases the implied volatility reading, we'll say. But yeah, with that said, yes, you'll lose less on a little bit less if you're doing that, but you still need to be right. Like whatever strategy you're doing.
But if you're 100 days out, the 80 days, if the stock doesn't move,
you're still losing.
You're losing
for sure
a much more significant part of that value.
Yeah. Again, if it worked that way and premium went up, we would not be on the show.
Yes. Simple. Yeah. If it's that simple, like, earnings are coming, I just buy the options.
Yeah.
This would be a lot easier.
But to the same point, like that's why I don't really like selling strangles, selling iron condors into earnings when earnings are very apparent and they're in like the next couple weeks, because there's not much premium to get out of that until the earnings happen, and I'm holding risk. So sure, if you're trying to play for like a pre-earnings move, you can see your premium stay bid a little bit. But still, if you're directionally wrong, it's not going to be good. Tesla 265 call calendar. Short the July 3rd, long August 16th.
July 3rd, August 16th.
I mean, it's got to be.
I don't see a July.
August 2nd? Or July 26th? I don't know.
Either way, we've gone through these. These aren't my best, or my favorite way to participate. I just think calendar spreads you have to have some sort of delta to them. You have to be able to realize some intrinsic value. And so I think even moving these one strike to 260 or move the 265 to 270 will give you you'll make money on the up move.
Yeah.
This trade, you need the stock to be at the short at expiration. Like that's really what you need here, because you're not capturing any of that volatility curve that we looked at on the page if the stock goes right to your strike.
Yeah. If there's a big rally in Tesla, you can see a loss on this trade very easily.
Yeah.
So just moving, as simple as moving the 265 short option to the 270, you put up an extra $1, but now you remove a lot of that upside risk if there's a big move.
Yeah.
And you're going to make more on that trade for sure.
And you're inside the expected move. So like you should expect this to be a 50-50 shot to be 20 points in the money.
Yeah.
So you have to have some sort of intrinsic value there.
What's the correct way to sell premium with longer term expirations if most of the premium decay or acceleration happens near expiration?
Yeah, there's really no reason.
Yeah. Unless you're like just selling a put.
Or you're doing selling a put to buy a call.
Yeah.
Or selling a put to buy a call spread. Like where you're on both sides.
Yeah.
It's a double trade. You can't sell puts, at a 5 delta and expect anything to really move if they're a year out in time.
Yeah. And the reason why we say like just selling put or selling a put to buy a call and getting that delta or gamma is because the further out in time you go, the less theta decay there is, the less implied volatility crush there is, as we're showing here. So the further out in time you go, the less we're taking risk on both sides, and the more we're just on one side, just the delta. Because if you sell a leap option in Tesla, like you could sell a leap put on Tesla, January 2025 has very little implied volatility implication. But if I sell the 220 put for $2,200 and Tesla rallies 20 points, I'm going to make $500, $600, $700 on that option because of delta, not because of IV crush, not because of theta decay.
Yes.
So the further out in time you go, you can still sell options if you want, but it's got to be more delta focused.
Yeah.
End phase, Iron Condor, August, expiration 80, 90, 125, 135.
80, 90.
125, 135.
Yeah, right around $3. Earnings are coming up. Oh, they're after the close today.
Yeah.
Interesting.
I like it. You're well outside of the weekly expected move. Because you're at the expected move in August. So, yeah, I think it's totally fine. From an IV crush standpoint, I would say you're looking at maybe 15% from August. 82% is going to come down to mid 60s, maybe lower than mid 60s. But, yeah, I like it.
Am I crazy for considering a strangle?
A little bit.
This is one that moves.
Yeah.
It certainly moves. But you could do even like the 170 or one of the 75s, 150, $3 in September. Ooh.
Sure.
God.
You do you.
See, this is a problem with earnings season. Because I already put on a Google earnings trade and I have a position on in there. I put on a Tesla trade with risk, with a decent amount of risk. Now I'm sitting here thinking I'm going to put on a strangle and M phase.
I've sworn off undefined risk for earnings, personally.
I know. You have, in that regard, you have more self-control than I do.
Specifically in that regard. Everywhere else,
you have no self-control.
Correct.
Oh, God.
TSM 195, 205, 145, 155 Iron Condor.
Okay. What about doing like a crab trade? Okay, well, I'll look at this in a little bit. What are you thinking? What's the next thing?
195, 205.
In what?
So TSM, if you're in August, that call spread's too cheap for me. 195, 205 in August is a 10-point wide credit spread. You're trading for 50 cents.
Can't do it.
Can't do it. If you're in September, though, a little different. You could do the 200, 210 for twice as much. And you could go further out. That's 5 points out, further out of the money. And then 145, 155, you could even do the 150, 140. Like, I would rather do something like that in September. But we're trying to collect equal value on both sides. So a 10-point wide spread for 50 cents is just a lot of risk for little reward.
Yes.
Brian, been trading defined risk iron condors and a few jade lizards, otherwise naked puts, thinking about smaller products to start with strangles. Thoughts on something like ARKK?
Sure. I mean, it's certainly liquid. I would lean towards a equity, Square, PayPal, our favorite DraftKings. I mean, I don't know if ARK is like the thing I want to be in, but it's fine.
Yeah.
It's got some volatility.
Yeah. ETF.
It's an ETF.
In theory, has lower implied volatility. Don't look at a chart of IWM though. But yeah, a $50, $40 ETF or something that you're comfortable trading, I think is a good starting point.
Yeah.
Cool. Let's see. Earnings trade IV crush. How much of an IV crush happens in the next expiry week compared to this weekly? Example, the August 19th Tesla compared to August 9th. I think you mean the August 9th compared to the July weekly? 26th. You can do it. It's just, you just have to do the estimation like we showed.
Yeah, it's the same.
Mm-hmm.
You should just expect that the front of this curve is going to be much more affected by the earnings relative to 30 plus days out. Like these aren't going to move all that much. These are all going to move a lot.
Yeah. So if you're looking at August 16th at 69%, that's going to come down to 55%, somewhere around there.
Yeah.
Tomorrow. The 17-day, August 9th, is at 74%. That's also going to come down to 55% or around there. But it's going to be a little bit higher than the 24-day. So it's hard to gauge exactly how it's going to behave, but there will certainly be an IV crush.
Mm-hmm.
And I would just be more conservative. So bring that 74% if you're in the 17-day. Bring that 74% down to 55.
Yeah.
Knock off 20% and see what your strategy looks like.
Yeah. Great. That it?
I think so.
Beautiful.
I think so.
I'm going to think up something to do an end phase.
Last one here, actually. What's the best way to hedge if I already have a working leap on in Tesla? So I assume working means profitable. You could sell something against it in the weekly.
Yeah.
Just depends on where your leap is. I wouldn't sell something below your leap strike.
Yes.
That just creates credit spread risk.
Yes.
So, but if you have like the 250 leap, you could sell like the 270, 275, 280. Like all these options are worth dollars.
Yep.
And that's it.
Cool.
Sweet. Thanks for tuning in. If you have any questions, you can reach us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Get your cherry picks today, tastylive.com/newsletters. There's a link in the top of the YouTube chat. But yeah, we'll be back tomorrow with Thomas. He can tell us all about the ags, what's going on there. So stay tuned for that. But yeah, we're going to go eat some tacos as it is Taco Tuesday.
Yes.
We'll see you tomorrow. Peace.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
We are back. It is Tuesday, July 23rd, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, good to see you again.
Good to see you, man. How you doing?
Not too shabby myself. It's a pretty boring day here in markets where stocks are churning, oil prices coming in, precious metals doing a little bit of a jig. Lots of churn here as we make our way to the midpoint of this week.
Yeah, definitely. It kind of has a little bit of a lull feel, right? I mean, there's some stuff going on beneath the surface, but I think things are just trying to figure out their way after a couple of weird days of trading. So we'll see what we end up getting here.
And with what we've seen over the past few days, it leads us to a place where we may be in a bit of a technical purgatory for these markets, Jamal. I say technical purgatory because we look at the S&P 500, it bounces off of that 2134 EMA envelope, and then it flatlines right at the 1 week moving average. NASDAQ, similar type of price action. Bonds, inching up but not really breaking out. If you're a bull or a bear, this is pretty frustrating on both ends. So we need to figure out what is the next move, Mr. Chandler. Before we get there, let's talk about what's going on with the Fed odds, because we checked on these a few days ago. We haven't looked at them, obviously, in the past few days because I haven't been here. But we've seen that the odds for September have started to back off. When I mean back off, it's no longer a 100% chance of a September cut and 6% chance of a 50 basis point cut. This is now 98.6% chance of a 25 basis point cut and a 1.42% chance of no cut at all. Jamal, the data really haven't been moving in a manner that are consistent with the market being more fearful about a Fed that might need to keep things on hold. Is this a gyration that we should be paying attention to, or the market basically saying this is a done deal? If it's a 98% chance or 100 and a 3 or 5 or 6% chance of 50, it doesn't matter. We see eye on the prize. It's coming in September.
I don't know. I don't know. This is one where I'm just not going to believe it until it happens, to be honest with you. I think there's just been so much fluctuation in these rate cut odds more recently. I mean, even, I know we got a lot more data to go before we actually get to that point, but let's be honest. Like, what is this 98% predicated upon? You know what I mean? Like, what is it really predicated upon? The fact that we're expecting a rate cut to happen? Or is it really that data have swung so hard in the manner of potential rate cuts that now we need to put it up at 98%? I mean, really, what's it, and I know this is a future, keep in mind, right? But what is it really predicated upon?
The math, I suppose.
I mean, seriously, dude, like, we could get some data. We could get whenever a core PC data that shakes up this number, and all of a sudden it's down to 89%. What is that going to do? Does that mean that bonds are perfectly priced where they are right now? And does that mean that we're still going to get a rate cut? It's a done deal. Don't worry about it. Or was that a big shift to go from 100 to 89, and now there's real uncertainty? You know what I mean? And so I guess that's where my mind lies when it comes to all this discussion of rate cut odds. This has been obviously one of the bigger stories throughout the year. We all know what the sentiment was early in the year. We all know what the sentiment was in April, and now we know what the sentiment is now. And so I think this is just another example of it. Sure, it's a data point to pay attention to, but I can't say in my mind that I'm looking at it as a lock, and I literally won't until we actually see it happen.
I want to go back to the historical data here, right? In terms of this being a significant driver for markets, this week being a week where we're in a Fed's communication blackout window, the Fed policy meeting is next Wednesday. If you look back at history, going back to 1996, anytime the market's priced in more than a 55% chance of either a cut or a hike, the Fed's done so 100% of the time, right? So as traders who are looking to the Fed as a potential influence, even if it's data releases that are moving around these odds, if you're at 85% or 100%, historically, that's not really a big difference, right? The Fed is not going to shock us, particularly when they're making a turn out of policy. They would lay the groundwork to push back slowly. And we know this because they've done this recently. Whenever the market feels like we're within 3 months of the first cut and the Fed says that may be too soon, you start to get those little trial balloons out there. Oh, you know what? We're not confident enough. We need more data. We haven't achieved the goals that we want to achieve yet. More time is necessary. That's not the case this time around. The Fed is very clearly saying we've gotten more confidence and the data is evolving in the manner that they want to see. And so at 98.58% or 100% of 25 and a 6% chance of a 50, I think you're just splitting hairs there. And in terms of a major influence on these markets, they're moving around. And I did hear a news story today listening to the radio. Markets are now pricing in a chance of a hike in September or a chance of a hold in September, no cut. Like, it's not, don't pay attention to stuff like that. That's not why these markets are moving today, this week, maybe next week when the Fed meets, but this week really is all about earnings, Jamal. I mean, 29% of the market cap weighted S&P is reporting.
Well, wait, one last thing before we leave off of that. I wouldn't necessarily, I don't look at that as the Fed is saying we have a 98% chance of a cut. I look at that as traders pricing in a 98% chance of a cut based off of the data, right? So, I mean, I think a lot of people do look at that as like, oh, well, if it's a 98% chance, then the Fed is saying there's a 98% chance we're going to cut, right? And I think that's the one caution about that data.
Yeah, and it's really that dance, right? The market tells the Fed what it thinks is going to happen, and then the Fed more or less massages that or blunts it completely. And the market's wrong, right? The market can price in something and a different outcome can appear and cause a dramatic repricing almost instantaneously. We've certainly misread the tea leaves before, not just as a market, but you have over time. So based on where things stand now, I think we could just arrive at the conclusion that in terms of this being the meaningful driver of markets these days, in a week when the Fed's blacked out, we should be looking other places.
I'll save more for when we talk about bonds.
And one of those places to look would be the earnings, Jamal, right? I mean, this is a big week for earnings. We have two big ones coming up here today in Tesla and Alphabet. Alphabet being part of the Fab 5 Fab 5 and Mag 7. Tesla was part of the Terrible 2, has now been reintroduced to the Magnificent 7. We'll talk about them in the context of the NASDAQ in a little bit, but this is why I say we're in a little bit of a technical purgatory here, Jamal. The price action that we saw in recent days is, we were just getting to the 3% above the 1 month moving average. And that typically has coincided with pullbacks or at least pauses in the rally going back to the October 22 lows. Where did we pull back into? We pull back into that 2134 EMA envelope, the area in which we found support at the end of May, beginning of June, an area where we've marked off on the chart previously when we've run into this area coming back to last year's lows. It's been a pretty decent place to look for at least a little, as Tom might say, a little scoopy scoop on the initial decline. Yesterday, we did get a nice little rally coming off of that area. Today, however, is why I call this purgatory, because instead of seeing that follow through, instead of climbing back above that swing support near 56.30, instead of getting above that 5 EMA, which is 56.10, right, the 1 week moving average, we've traded up above those levels only to be slapped away. And that intraday looks like former support turning into resistance. So do we have enough confidence here to say that time to go all in, sell against the daily highs, look for a break to new lows? No. The uptrend from the April and May swing lows is still in place, and it was a swing low that held up here just 2 days ago. But as a bull, we have not jumped over the bar that you want to see to say, okay, game on. We're ready to go. That's the correction. Time to jump back in with 2 feet and make another move for all-time highs. So this, to me, is the most frustrating spot, and a doji candlestick today perfectly captures that indecision.
It totally does. I think that's exactly what we're seeing in decision. And you can see it if you look at a heat map of stocks right now. I mean, you got oil down, you got some tech stocks up here and there. I think, you talk about earnings. UPS is one that's kind of interesting to me today. That's somewhat of a bellwether of the economy, and that's not doing so well. So, like I said, you nailed it at the outset. I mean, this is probably a little frustrating for bulls and bears today. More so probably bulls and bears, but and it also depends on what you're a bull in, right? Like if you're a bull in small caps, it's totally different. But there's a lot of indecision in markets, and I think we're seeing it kind of rain through here. Just from the example of a doji. Now, doji's not the worst thing because it could eventually lead to higher prices for those who, we get a couple of those in a row. I think eventually that decision gives way. And it would be interesting to kind of do a study and see how many times after 3 or 4 dojis, in what direction do we tend to eventually go. But, I think, you highlighting these certain pockets of areas where the market has had some indecision and eventually breaks one way or another. That's exactly where we are right now. And I think earnings is key for that, especially when you talk about these two that were coming tonight, particularly the one. I mean, I'm probably more Alphabet than Tesla. I mean, Tesla kind of does its own thing, but Alphabet is definitely one. It's a look into what's going on with some of the AI stuff. I mean, it doesn't matter how you look at it. That's how it's going to be painted. So that is going to be the big thing that determines what comes next in this rally, or at least the beginning of it anyway.
It's interesting. There's a fascinating dichotomy, at least in my head. So maybe it's not fascinating at all, and I just consider it that because it's in my head. But you have Tesla, which is the very memeable meme stock of the two, and then you have Alphabet. Alphabet is obviously more important for the AI story, given where it's situated in this current thematic arch in July of 2024. Tesla may ultimately be the more important of the two, but right now, for this particular theme, Tesla has not been that driving engine from the end of last year, right? It's been the Microsoft, the NVIDIA, the Meta, the Alphabets of the world that have been doing the heavy lifting here. So in terms of index importance, right? If I could have one beat and one miss, I'd much rather have Google beat earnings tonight and the stock trade higher if I'm a bull for the S&P and the NASDAQ. I don't really care what happens to Tesla. Tesla's going to cause some noise, but no one's going to draw any significant inferences away from it because they have their own things going on, like the emergence of China EV exports globally and how much of a competition that poses to their bottom line, eating into their margins and their own PE valuation inflation that they have to deal with. If I'm a bear, again, I don't care about Tesla. Tesla going down would be nice, but it's Google, it's Alphabet that needs to suffer here. And so a bad earnings report, a negative reaction from Alphabet today, that could be the determining factor. We talk about this doji here, what's going to push us around or make us find the next, say, 500 points in NASDAQ. Alphabet would probably be the catalyst here in the short term. If we have to, pin something somewhere, we have to look for something to give us a binary event risk that sparks a big move. The calendar today economically is empty. There was just a auction out a few minutes ago from the Treasury side, which I didn't see a particularly big move, which isn't a surprise because this was a 2-year note auction, right? So it's the Google report, it's the Alphabet report tonight that is probably the most consequential thing for the market over the next 24 hours.
I think 100%. I mean, that's I was talking to Errol actually on Engineering the Trade last Friday, and he is of the mind he wants lowered prices in the market for whatever different reason. Talking his book, he wanted a higher VIX. He wanted a 20 VIX, and I said, I think after the storm that the market has weathered over the last week and change, you're in a vulnerable position, and you could see that, but it's going to. I don't think you get that during earnings season for the most part, unless it happens on the earnings of these big type names. And if you string a couple of those in a row, I think that's what really ultimately ends up being the demise of the market. But I think 100%. I mean, I don't see how it does not. I don't see how that's not the case. What goes on with this Google earnings is going to really shape how the market moves forward.
Jamal, there's a few things that are bouncing around my head, right? Because the last few days Thursday I had off as my birthday. Yesterday I had to take off for personal reasons.
Happy birthday, dude. That's what your birthday is. Yeah, happy birthday.
Thank you. And, I felt like everyone in America got older over the past week, given the news that's going on out there.
No, just you.
And so I guess, but it was just me, right?
No, you're right. Yeah.
So one of the things that I've been thinking about here the last few days, having not been trading that actively, is what does this spike in volatility mean? We had VIXpiration last Wednesday. And we've seen that there have been run-ups in vol into the middle of the month around VIX expirations, basically every single month since the low last year. It's been pretty much clockwork. The playbook that has been working so well since the lows last year has been as the VIX goes down, and historically speaking, forget since the lows last year, if the VIX is below 15, what's the best strategy to pull out of the playbook and apply to the market? We're at 14.68 right now. So when we go back to ES and we think about the S&P 500 here, we did just come off of that zone where we typically, at least in the most recent rally off the lows last year, you get into that 2134 EMA envelope. That seems like a place where the market finds to catch itself. I mean, there was that one occasion in April, but that was unique because of Israel and will the Fed hike again? We're not there right now, not at least here today yet. But with vol now down, VIX back under 15, and there being some semblance of potentially a technical base here, I think if we find ourselves back through 56.20, 56.30, for those traders that have been apprehensive or felt like they missed the early rally and then saw it come back in and go, thank God I didn't get long, I don't know. I think this is, we have to look to the stats, and the stats say VIX below 15, S&P above its 1 week moving average. That's an at-the-money call spread environment.
Yeah, I would agree with you, and I think the Bears kind of fumbled a little bit this recent move that we got. I mean, everything was setting up for markets to somewhat tank, right? I mean, you saw the big moves that were happening in the individual tech names, Nvidia, et cetera. I mean, the big sell-off in those, and they had an opportunity, but they weren't able to capitalize, especially with the bounce back yesterday. Some of it you could say was, post expiration, right, and sort of new positioning after expiration, sort of changing the narrative. Today is an interesting day. If we get some follow through heading into earnings, and then those earnings, particularly with Google, end up doing well, it's game over, bro. We're going back up. I don't care what you say. I don't care what you say.
I'm absolutely with you. And I think one of the factors here that is under-discussed and underappreciated is how the shifts in the presidential betting market are impacting the flows here. A basket of stocks that have been friendly to Trump's policies because of the deregulation, the tax cuts, and the imposition of tariffs against China, the EU, et cetera. That basket of stocks outperformed the broader market, both the S&P and the NASDAQ, from June 27th up until this past Friday. There was also the shifts within the Treasury market itself with the steepeners going on, that it looked like the market was pricing in higher structural inflation moving forward, perhaps as a result of those Trump tariffs. And if only to add a cherry on top of that, forget the bond market. Let's look to the actual economic data. Freight rates have gone up, and Bloomberg actually had a really interesting data set out in the past 24 hours showing how companies began to, I don't want to say dump, but they began to increase their volumes of shipments from tariff-sensitive locations starting June 28th, almost as if businesses said, oh, geez, Trump's going to get those tariffs because he's going to be president. Like, we might as well stock our inventories now before we have to pay this extra cost. So if we go to a world where all of a sudden Trump can still be the favorite, but that down ballot bleed isn't there, and it looks like the Democrats may take one of the House or the Senate instead of a Republican trifecta, the base case scenario shifts away from Trump being able to impose those tariffs, which is where I think the market has been priced for the past 3 weeks. And instead it goes back to, okay, gridlock. What's gridlock going to give us? Well, more of what we've seen recently. And has more of what we've seen recently been good for the stock market, been good for mega cap tech names? Yeah, it has been. So a closing of the polls, and something I'd be watching for in August that may make this August unique compared to other Augusts, is that if we see that Republican trifecta odd diminished, given how the markets responded, you could see that happen within the next 2 weeks because polling for candidates typically bumps after their convention. So if there's a Democratic convention bump in the polling and it looks like Donald Trump's odds of being president are reduced, then stocks, particularly the NASDAQ, probably get a little bit of a tailwind to it. I say all this just to point out that there's a lot of things going on right now, which is why this is technical purgatory. There is no good decision here right now. And I think patience is the name of the game. And if that means being patient for a few more days to wait to the Fed, or until we clearly get above 56.20 or clearly drop below 55.50, then it's worth waiting. That additional time gives us the confidence. And I think confidence is worth being patient.
You know, it's interesting, as you were saying this, I was decided to look up the difference between October VIX and November VIX. October VIX captures the election, for those who aren't aware, because VIX is always 30 forward-looking day measure. And November VIX does not, right? So it's basically, you can look at the volatility around the election and then after. People always look at that spread. Right now, it's only about a little less than 30 cents inverted. It was as high as $2 inverted earlier this year. So it's not as inverted as you would expect. And, it was way more inverted in 2020 at the time. It had nothing to do with the pandemic. It just was inverted. And I also feel, what's odd about that is I feel like the election didn't start infiltrating into markets until, I don't know, mid to late August, right? Early September. Obviously, it started earlier because of just how unprecedented this thing has been proceeding so far. So, yeah, there's going to be, you can already, I don't know about you, but I think you look at Twitter as much as I do. I look at TweetDeck. I like to see the whole landscape. And 40 to 50% of tweets are about a lot of the election stuff already. So it's already infiltrating its way into markets. And I think that's going to sort of lend itself to see different things like a doji from here and there. Those a couple of those in a row. Kind of the Christmas tree effect in markets where there's a lot of different sectors that are either red or green and there's a rotation happening, right? I think we're going to see a lot of that going forward, and you just got to buckle up a little bit.
Got to buckle up. Yes, I probably use Twitter too much. But then again, Twitter probably proved its worth over the past week and a half. You could look. I don't even know why anyone's doubting this at this point in time. Something unprecedented did happen. Biden unprecedented himself from the race in recent days. Little play on words there for you, Jamal. Where did he make that announcement? Did he step out into the Rose Garden and stand at the podium?
Right.
Did he send out an email to supporters? No, he tweeted it. And then 15 minutes later, mainstream media picked up on it.
Mm-hmm.
So that's it. Like, Twitter is still, if there's a place to find breaking news, and listen, there's a lot of crap on there. There's a whole lot of noise.
There's a lot of crap about the former president passing away earlier, right? Like, we saw that floating around. That does happen. There's no doubt.
Yeah, and it's amazing how many people didn't read that statement, because by the time you got to paragraph 3, there were some pretty clear indications that this was obviously not a real statement about a president's passing. And yet it was being reported on the news. If you turned on the TV earlier today, who's reading things these days, Jamal? No one, apparently. Right. I'm not going to repeat what was said in the letter, because I think it's quite frankly unprofessional to do. But if people want,
it was ridiculous.
So there is a lot of misinformation out there. But in terms of breaking news and in terms of what has like the actual political influence in the world, it's still Twitter. Right? If something's going to move markets, it's going to move any market, betting markets, financial markets. If it's going to influence the world, it's Twitter.
Yeah.
So you got to be on there, and you have to watch the landscape. And I see bulls and bears right now. Looking at my landscape, the sentiment could be cracked right down the middle. Bears are all, this is the start of it. We're going into election season. Bulls are like, this is just a flesh wound. You haven't made any real damage yet.
Yeah.
I don't feel any strong conviction. And the people that I usually look to fade, they have no idea what's going on either. So, when they're not convicted, nor shall I.
Yeah, and I think that's what you're seeing play out right now. Again, we just came through a very violent rotation with small caps and Russell. With small caps and NASDAQ. And it's happening again, honestly, to 100 basis points, a little more than we're seeing this rotation occur once again. And again, I continue to say, I think it's a good thing. I think the more that we can have people not talking about the concentration of the Mag 7 stocks in the market and how much it's moving the market, the better it will be for markets overall. It just is.
Yeah, breadth continues to improve. The NYSE advanced decline line has been sitting up near very strong levels. This may just be rotation, which problematic short term, but like you said, beneficial long term. Jamal, we did find ourselves bouncing here in the NASDAQ at the swing lows that we had on June 24th near 19,728. The low 2 days ago was carved out 19,654. So a small overshoot. But if we were to find ourselves trading below there in the next few days, I could easily see a pullback, another, let's lob off another 400 points. Swing highs that you have in late May, swing lows that you have on June 7th, 19,200 or so, right around there. It becomes a pretty clean target as you think about where the market then starts to look at 19K. So we'll call it 19K to 19,200. We know markets overshoot. This is still very much potentially in the throes of a bearish rising wedge, which would then ultimately call for a return back closer to 17,500. So bulls, this is your stand. Make a stand here. Get us out of this technical purgatory. Get us back above some of these short-term moving averages. Otherwise, momentum is cracking in a way that we have not seen in some time, Jamal. This was the weakest stochastics reading that we had seen in the NASDAQ going back to the low on April 19th. So to say that this is a point where the market needs to pick itself up, this would be a good one. If we just consolidate and chop around down here the next few days, that is garbage price action. That is bulls get out of the way. That is more like what we saw in April in ES, where we did come into that 2134 envelope, but we never staged a meaningful rally off of it. We just chopped around and eventually it cracked. So the next few days, very important, despite few meaningful catalysts outside of the, we'll say, GDP this Thursday and perhaps PCE Friday, although caveat with that, we know what it's going to be.
Yeah, no, that this is an interesting psychological level, and these things always seem to occur when we have some type of events to potentially move them, right? The earnings potential and obviously inflation reports potential. So we'll see what we get. But I it's funny. I'm just realizing I didn't realize that we closed above 20K yesterday, just ever so slightly. I mean, again, another psychological level, not necessarily super technical, but I mean, you need more of those if you're bulls, and you want less of those if you are a bear.
Jamal, the Russell here continues to show decent price improvement following its breakout. We go back to that weekly chart on we'll go back a few years to get the full breadth of this, but that consolidation from the start of the year, obviously, it's taken off. And what's fascinating about this measured move is it still suggests there could be more to go. So if you are of the mindset that maybe this rotation play, stocks are going up, but the NASDAQ's going to trail. I believe there are some around here that feel that way. 100% extension of the move off the lows last October, swing high here in April, back to the lows that we had in April, gives us a target closer to 2430, Jamal. So this breakout that we've seen here in the Russell, I could say that it perhaps still has some ways to go. Maybe that's bad for the NASDAQ, maybe not, but generally speaking, that's a pretty decent technical structure looking for a continuation on a weekly time frame. And this is a multi-year breakout, so why would we want to look to fade this right now? Maybe this is just the catch-up, the reset, the pause for NASDAQ and S&P before everything goes up and all the tides, all the boats in the harbor are lifted by the rising tide.
Yeah, I mean, this is this is one to be wary of. I'm shorting it in the form of IWM, but mostly because I do have a lot of different short put spreads in the book, and I do feel that if eventually, I'm all for the Russell rotation, honestly, but if eventually we get days like we did a couple of weeks, earlier in the week, I should say, late last week, where eventually the market turns and everything is down, I'm winning on that one. And so that's one of the main reasons why I have it going on. But I mean, I do think it has legs. Russell's kind of been oversold for quite some time. We've talked about it quite a bit on the show. And I do think it has some legs and continue to roll higher. I'm just betting that it's not going to be violently higher like it was in the early stages of this rally.
I worked with a guy once who tried to get the expression to catch on, like how confident he was in a trade. He would call it a centipede or a millipede, because if he was really confident, a millipede has more legs than a centipede. It's like, this is not a. See, it's not even landing here. Wow. I can't sell it convincingly. Yeah, bonds inch up here like a centipede would.
You know what?
Tuesday.
As we're transitioning, I do have. We'll transition to the next thing. I do have a question off topic. Okay, me and my fantasy football group, our commissioner was polling us about Shane. I'm actually going to put this in the chat later too. Yeah, thanks, guys. This is interesting. He's polling us about whether we wanted to switch scoring in this manner. So, say you win a game. 121 to 119, or I should say, let's just say you're the loser in that scenario. He wants us to switch to the idea of median scoring, such that if it's 121 to 119, you lose that week, your record ends up being 1-1. The guy who won is 2-0. And it's only because if the median of your score, the median score for the league that week was 105, and you lost a game 121 119, but you still beat the median, you go 1-1. What do you think about that idea?
That's really interesting.
You like it?
I love when you add layers of complexity to fantasy sports.
I'm totally off for that. I just don't like the idea of that thing because you really have no control over scoring in fantasy football, right? I like to put sort of parameters and add things to the league that you can at least feel like you have some control over, even if you're wrong, right? And it makes it a binary event, right? Like I don't know, you could pick a bunch of different things, but I feel like scoring is one of those where nobody has any control over. So why add median to it? Because then it's even luck on top of luck.
We did a league a few years ago where we dropped what was it? Total catches, right? Yeah, and we added punt yards returned, and we added pass deflections for defense. And that was a total chaos year because pass deflections are so random, right? You could have an offensive lineman who leads the game in them, or a defensive lineman who leads the game in them because he just happens to stick his hand up while the quarterback's throwing it. Yeah. So it was a chaos league where some weeks where one guy would get 0 points for his defense players and another guy would get like 60, and that would be because none of his players had any pass deflections, right? So,
but he probably chose a defense where they teach that, right? Like at least you chose that defense.
You had to you had to pick the specific defensive player. You had to draft 3 defensive players for your team. It was chaotic.
Okay.
It was total chaos.
More. I mean, you choose those players, though. You know what I mean? I don't know. Median just is like, you're going with the median. So like nobody controls score in fantasy football. But I digress. I'm gonna poll the chat later on engineering trade because I'm curious.
I think it's a really interesting concept. I've never played in a league like that before, but I would absolutely like that wrinkle. Go for it. Do it. Make it interesting.
I think half of our league voted it down. And one of my friends was like, I thought as a trader, you would love that idea. I'm like, no. And then one of our other guys was like, well, come on, you guys, live a little. I'm like, I'm pretty sure nobody's ever said live a little when it comes to the median. I'm pretty sure nobody has ever said that.
Yeah, right. Yeah. Be exemplary. Be the median. Jamal, bonds here are inching up. It's not a spectacular day. 119.5 ticks right now. There was a 2-year auction at the top of the hour, which we're remiss to say I did not see the results of, but seeing where markets are moving right now, we look to that 4-hour time frame. We were still up in this 4-hour block. We go down to that 5-minute to look at where we did, where we went after the auction itself, and well, up. So I guess we could say it was a decent auction. Again, the results really don't matter for the 2-year. The 2-year is more tethered to what's happening with respect to the Fed. The bond auctions typically have greater influence on like the 10s, 20s, 30s, ZN, ZB. Nevertheless, when we take a look at the bond market here, it's been a day of recovery following yesterday's late decline. We jumped out of the gates on Sunday night, trading higher on the announcement that President Biden wasn't going to be the nominee, which not unsurprising for a variety of reasons, which perhaps we'll go into another point in time, Jamal. But the primary reason of which is, why isn't this going back out here? I want you to go this way. Thank you. The primary reason of which is that we are still looking at a market that's looking down the barrel at some Fed cuts. And that matters greatly because it doesn't matter who's president when the Fed starts cutting rate historically. If it's a Republican, if it's a Democrat, bonds tend to go up. So here we are. We gapped open higher at the week. We pulled off a little bit. Now we're doing an inside day today that's green. The technical structures really haven't changed all that much. This is a slow burn kind of long position as far as I'm concerned. If you're looking at high vol, condors in the short term are probably going to work. If you're longer term thinking, you probably want to have an upside bias. That's how I'm positioned. Condor and ZN with a short put spread, long call spread in ZB. Anytime I get close to 21 days, I look for an opportunity to extend and extend and extend. Time is your friend right now, basically, if you want to be any sort of bond bull here.
I could not agree more, exactly, because, again, I think I've kind of made my position known that I'm willing to take advantage of any rips or dips and go in the opposite direction in bonds. That's kind of how I've changed into. I'm also willing to take advantage of any jumps in vol in various different ways, usually condors, potentially strangles, depending on how the vol gets. And so I guess what I was trying to get at earlier when we were talking about the Fed rate cut odds is like, look at earlier this year, right? Look at where we were. Just even going back to March, we were at 111, 112, when we just really felt that we were going to get at least a few cuts. Let's call it 2 to 3. And now we're at 110. And I'm a little surprised that we're only at 110 with the idea of odds being 98%. I feel as though we got to kind of listen to bonds more so than the Fed rate cut odds at this point in time. I think they're telling us more of the story than anything, right? ZB, same deal, right? Like I would expect ZB to be at over 120 for sure if September is a lock. And as much as I would like to buy bonds, I thought about buying them yesterday when they were at 118 and change. I probably should have in hindsight, but the only reason why I didn't is because I didn't think that we would get that big of a move off of 118, meaning I would rather play that for like a 118, 121 or 122 call spread, knowing that we're going to get up to 120 and change, maybe 121. And I just don't feel that right now. I just don't know what to make of these potential rate cut odds. Obviously, they're going to always fluctuate. They're future. We always have to remember that. But I want to see more from bonds. I want bonds to really give me the clue as to how to trade them. And right now, they're right back in the middle of that range that they've been in for some time. And therefore, I'm not quite as interested. And so, again, it doesn't always have to be directional. But for me, with vol being low, it's going to be directional, right? Same thing with you. And I would rather get long these bonds if they're, in the case of ZB, if they're 118 and below, I'd rather get long them then because in my mind, they're going to stay in this range of 119. They're going to head to that range, 119, 120-ish, without fail every time and not necessarily break higher until something really meaningful changes.
ZB still outside of the downtrend from the highs that we had in place going back to 2022 and here in early 2024. The uptrend off the lows that we had a few months ago, that blue channel, is still very much in place. As far as I'm concerned, that tells a pretty clean story of, while there's no significant breakout to the upside yet, patience is probably demanded here. And even shorter term, Jamal, I'm going to paint a different type of triangle that's coming together here.
And so, yeah,
it would appear
to agree
me
with you again, I think you're absolutely right. Duration is your friend. I'm not saying you can't get long bonds here. You totally can. This is part of my sort of ethos of something that I've tried to get around to over the last couple of years of being more patient on trades or really looking at areas where it's kind of a crescendo one way or the other. But, you can totally get long bonds right now. You just got to definitely have duration as your friend. If you're, in 31 days, that's good. But at some point in the next couple of days, you might want to go out to 59 because as sure as PCE comes out, changes the narrative some way or shape or form. And then, you're kind of stuck holding the bag with 28 days to go somehow. And it's just kind of this weird cycle. So you definitely have to use duration at your friend in a very efficient manner.
I'm still in the contract that expires in 31 days, but this week I don't even want to wait until 21. I just think time is your friend. So going out to 59, rolling out the spread even to 94, I know that's a little bit outside of the Tasty methodology. Nevertheless, though, the way that this market's shaping up technically and looking at the volatility profile, if you want to have exposure on here, it's probably got to be longer term. And it doesn't need to be through ZB or ZN, ZN being the more approachable of the two products for retail traders, half the overnight buying requirement. And moreover, if you look at the volatility, ZN has actually had more volatility than ZB. So, we're moths to a flame. It just so happens that the more approachable product for retail traders is the brighter light right now. So win-win. You could do this through TLT. Right. And that's obviously a smaller product. It's not a futures product, but it will really allow you to fine tune your exposure through call spreads, put spreads, condors, strangles, what have you, whatever your approach is. But I like ZB. I like ZN. Nevertheless, whatever vehicle you're using to express the bond view, it's just in the short term, it's not really something there. Right. If you want to play the chop, that's totally understandable. And that's why I'm doing it. Mm-hmm. Jamal, we had the Condor show a few weeks ago where we both put on the ZN Condors. But longer term, you think about those forces, right? If we don't get a Republican trifecta and the Fed starts cutting, gridlock plus a cut cycle, I mean, that historically has been a one-way directional move for the bond market. And let's say it's not Goldilocks. Let's say a recession is coming. Well, that's even better for the bond market. Bond market loves recession cuts. It likes maintenance cuts, but it loves recession rate cuts. So patience. Let's talk about these metals that may be basing out here. That doesn't make sense because if they were, silver would be doing better. Alas, it's still holding. Why are these indicators pulling in the ZN ticker feed? That's not making me happy, Jamal. We're going to get goodbye, go away. Thank you. SIU4. Where did we bounce from today? 29. 29 is the right number for silver prices. Jamal, this is obviously not the prettiest chart in the world because the uptrend has been broken, but I'm reminded of what my longtime friend and colleague Ilya always says. F your diagonal trend lines, because that's your opinion. Horizontal trend lines matter more because that's an absolute price level, right? 29 is a number that goes across the screen.
Yep.
This uptrend, depending if you're looking at SLV or the continuous SI or SIU4 or SIZ4, you're going to get a slightly different picture. So everyone's going to have a slightly different interpretation. But the swing highs that you see in mid-April, the swing lows that you see in mid-June, they're holding. It doesn't matter what particular expiration you're looking at. That formation, that cadence is still there. So until the mid-April swing highs, the late June swing lows break in a defining, clear manner, I'm going to continue to hold. And I'm going to stay long silver. And I'm doing it through SLV because it has deeper liquidity than SI. But the technicals have been the guidepost here. Just let them tell the story. The past 2 days, Jamal, look at those long lower wicks. This is a market that doesn't want to give up 29 just yet, so neither will I.
I completely agree, and we've talked about this one a couple of times when it's hit these levels. It's holding in here strongly, and you got to like that for those who are holding long. But I'm curious, and this is not to put you on the spot. Remind me again, what's your real thesis besides price action, which has been strong, honestly? Besides price action, what's your real reason for being long silver?
Nothing.
Nothing related to bonds or anything else, or global activity or anything?
No, because you never know what type of regime you're going to be trading into, right? I mean, I could be bullish on bonds and say that should theoretically be good for gold and silver, but if bonds are going up in an environment akin to, say, February, March of 2020, then gold and silver are going to get taken out to the woodshed. It doesn't matter that you have lower yields. It's a reach for capital. Let's sell everything that's not nailed to the floor and put some cash under the mattress kind of environment.
Yeah.
Precious metals don't do anything for you in that environment, that type of situation. So as things stand right now, I would think over time the Fed cutting rates would be good for precious metals. The continued growth in the deficit and debts, not just here in the United States, but across Western worlds, probably good for precious metals. And so I can make a fundamental argument longer term why there is a rising floor underneath all of them. Mm-hmm. And I think that's a point of view that you and I shared last October, right? Once Hamas attacked Israel, we said the floor has probably been raised in gold now if we think that we're heading into a cut cycle with this geopolitical risk. And the world doesn't look like it's getting any safer of a place, regardless of who wins our elections. So, yeah, I think that you can make an argument that there is a safe haven appeal here, and lower yields honestly, should help.
That's why I thought you were really doing them. I thought that was part of your play.
I could tell the story of why that could be part of my rationale. I'm just a technical junkie here when it comes to silver. I've never found any of the silver bug, silver bear, perma bull, perma bear arguments about this to be particularly convincing. I see a weekly chart that has broken a multi-year downtrend with an inverse head and shoulders pattern that looks like it may want to go to 43. Everything else be damned. We can tell a story afterwards for why it happened or didn't happen, but that's what the chart's shaping up to be, so I have to respect it.
Yeah, I mean, I guess that's why I asked, because like for me, I've always been more interested between the two. I've always been more interested in gold than silver, and I mean, I can't even say that that's the case for most people, because there's a lot of people who will make the case for silver more than anything. I assume, like you said, then your latter explanation was the main reason why. For me, it's always been gold for specific reasons related to any unrest in those time periods, right? And again, I usually trade it. I'm not necessarily always long it, but I find certain times to get long it. This has been, I probably should have done it at 2,300. I totally thought it was going to break down more than anything, just because of the strong price action movement. And I didn't see the idea of rate cuts coming, which again, like you said, would be a good thing for them. But I'm starting to wonder if that has changed. I'm wondering if it's, again, one of the ways that I could offset. I really feel like I don't know. It's, again, I've always tried to make this relationship between ZB and gold, and it's really changed a lot, as we've talked about often on the show. So that's one of the reasons why I've stayed away, because it's been a little confusing. I've just chose to sort of express my opinion in bonds, but. And the real reason I'm asking the question is because I haven't been able to. The price action has been strong in both of these, but I haven't been able to come up with a rationale beyond price action as to why. And I usually like to do that.
I think the central banks diversifying their reserves story is really compelling. This isn't an anti-dollar thing for what it's worth. Central banks' dollar holdings since the Russian invasion of Ukraine has increased. What's happened is that the euro is being displaced. Russia, China, they're not interested in the euro anymore. But the demand for dollars has actually gone up, both among central banks and in global trade, ironically. I think the idea that central banks are trying to diversify their FX reserves is important. And we see with China, they're buying a lot of gold. They bought a lot of gold through May this year. May they stopped. June they stopped. Why does this matter, though? Right? A central bank like the Federal Reserve, a central bank like the Bank of England or Bank of France, Bundesbank, they hold somewhere 55 to 70% of their FX reserves in precious metals, in gold specifically. The BOJ and the Bank of Japan, the Bank of Japan and the PBOC, the People's Bank of China, only hold about 4.6 to 5% of their reserves in gold. So if China is maturing into a true, I want to say systemically important global central bank, like a Fed, like an ECB, and it's going to be at the top of the heap managing an economy that's either one or two for the next 20 or 30 years, then it probably needs to behave like a more traditional developed central bank. And that means doing quantitative easing. That means doing open market operations. That means doing things like diversifying your FX reserves to having things other than fiat currency to a substantial degree. So I can put together in a deglobalizing world where globalization is now going backwards, that demand for metals is going to be higher. Demand for any type of hard asset is going to be higher because countries are going to want to have commodities on hand to backstop their reserves. So that should be good for gold. And technically, once you have that narrative in place with a breakout like we've seen here in recent weeks, going back to where we were in February, the level called out was basically 2567 or so, 2570 in the continuous. When we hit the 1.618 extension back here in April, we've seen a lot of chop and pause and congestion, which technically makes sense. But there's still some upside here. So gold, silver, I mean, have your slice of the cake however you want it. Precious metals still have a bullish hue to them, regardless of the reason, technical or fundamental.
So, and I agree, but that begs the case. Is there something we should be looking at doing on our friend copper? Because copper has been on the downtrend for quite some time now. And it has not had the same resiliency as gold and silver, right? It's been a lot... life has been a lot harder on copper. It's aging quickly. The gray hairs are showing fast. And I've been looking at it recently, but I just haven't been able to pull the trigger because, again, I haven't seen the same resiliency in copper as I have in the other metals. And maybe that's part of the China story, you know, more than anything than the other two. But it's one that you know, it looks like there's a lot of opportunity with the vol being where it is. But I just don't know if I feel comfortable selling a put spread in here because it's been too weak.
I don't know if I would sell a put spread in here. All the growth sensitive stuff in the futures market's faring pretty poorly in recent days. Copper setting, dropping down to a new lowest level that we've seen since early April. Jamal, this is actually a good transition into energy here because crude oil is also part of that growth story. Crude oil prices today not doing that well, down by 1.86 percentile. That's nice because this finally is working out. Patience, waiting, watching, head and shoulders pattern. Finally, it came together. 76.95 here in crude. Folks, I think this is the place to get out if you didn't already do so today. Why? The head and shoulders pattern has a $3.60 measured range from when we first looked at it. That gave us a target of $76.40 in the CLU4 contract or MCLU4 contract. The low for today was $76.40. Exactly. The pattern's complete. The bear trade predicated on that pattern is over. I'm being militant about this, Jamal, because the last time that we had a very clean head and shoulders pattern in crude was at the end of April, beginning of May, and it called for a target just north of 72, which it hit. And then piggy little Christopher came along and said, oink, 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 I want more money. So I didn't take profit. And this still really bothers me because it's just, I'm better than that. And I didn't stick to the plan. So the plan has now been fulfilled. So what will you do, person on the other end of the line? Are you going to be the idiot like me who didn't take profit last time and watched it turn into a loser? Or are you going to respect the conditions by which the trade was put on? So Jamal, this worked out beautifully today. I am not short oil anymore because it's done. It's done. It's done. I did it. The plan executed. We're back on track. No longer will this be the albatross around my neck. I just need to slay the beast that is the yen, and we're golden.
Oh God, don't even bring that one up yet. I have no position I haven't had in a while. I'd probably look to get long here. I mean, you know, obviously for sure it'd be 74.57, right? But you know, I don't necessarily know if that happens. I'd probably start getting an itchy trigger finger around, you know, 75, and I don't know. There's a couple of different spots. I mean, it could be 75.32, it could be 75.50, somewhere around there. I'd probably look to get long, but as of now, I don't have any position. And well done, man. Good job.
I think you're spot on there with the move into the 75s. Look at all this congestion in February and early March. When we got these little dips down there in May, clearly purchased up immediately. There's some sort of gap here in liquidity that was quickly reversed. But if you get down into 75, that puts you to the midpoint of a range that's been in place for basically a year, right? We think about where this contract was trading last July, 70 up to 84, and we're currently trading in the midpoint of that. Jamal, this has been the one thing that actually worked out really, really well last year, this year. When you're right around $76, $75, Iron Condor, about $8 wide, worked out well. It was just so swimmingly. There's a lot of volatility in between, but we really haven't broken that range. Vol's finally coming back here. Is that a double-digit IVR I see? Oh, yeah, that's nice. Right? So, but we have something to work with again. I'm with you. The bears can have their thing. They can trade lower, but I think we got to start looking at the vol again here. I know it's not still fantastic, but condors in crude, ranges in crude, 70 to 85 have been beautiful. And I don't think we should dismiss that opportunity despite what's been very clearly directional one way the past 4 sessions.
Couldn't agree more. I'm waiting for it to make a move. We'll see what happens. Your move next, crude.
Your move next. Dollar rebound builds. This is very consequential. My new favorite hidden ticker on the platform, DXY. DXY. There we go. Continuing its rebound from support. It looked like a false breakout last week when we dropped below the swing lows from early April, early June. We've now since rebounded. Jamal, the euro is a big component of this, continuing to pull back from its range highs here. So perhaps another range is in place with a 69.6 IVR, a drop below that 1 week moving average. Selling call spreads up against the recent swing highs may not be the worst idea in the world. And it's noteworthy that we're seeing the dollar gain over recent sessions when U.S. yields have started to come back in. Jamal, the one thing that I've noticed in the spot FX market today for those tasty FX listeners out there is that euro yen rates recently broke their uptrend. So now the yen is really starting to turn the corner everywhere. Oh my God, I can't believe I missed this move. I've been waiting for this all year. Jamal, 82.4 IVR right now, though. A decline in oil prices, a drop in yields. Those are the tailwinds that the yen needs. I'm personally still staying away from this right now. It's in my little timeout box for the foreseeable future. But for those that have not been scarred, and I've seen some people tweet at me, they're winning long 6J trades recently. I am truly happy for you. I'm not jealous at all. This isn't a rage headache that's coming on. Just be careful here because intervention risk is still very high. And I think that intervention risk is going to continue to run high for the foreseeable future. But it's a one-way intervention risk. They're not going to intervene to weaken the currency, right? They're only trying to strengthen it. So you have some things going on right now. 82.4 IVR in 6J. That may make selling some put spreads against the recent swing low on July 16th, support into that 1 week moving average, actually a decent play. I could see a 64, 63 and a half short put spread here, Jamal, actually making some sense technically, but I'm too much of a coward right now because of what the yen's done to me in my P&L in recent weeks.
Yeah, I haven't touched it. My initial thought was to get shorted after intervention risk because that's what we've seen happen. It's faded afterwards the last at least 2 or 3 times that we've seen that. So that was my initial thought after this recent one on the 11th. But I just I'm staying away, and I'm glad I did. And I think will continue to stay away. But good for those
Stay away. And you know what? Actually, before we hop off that and go into the calendar, quickly 6C, because by the time we speak tomorrow, the Bank of Canada will have met and released their rate decision. It looks like they could bring forth a potential rate cut here. I would point out that 6C heading into this is really losing a lot of momentum, and it's not like we're seeing a ton of vol here. This seems orderly to an extent, right? When the markets are seeing spikes in vol and you get big directional moves, it says fade it. But when the market goes directional and then there's no volatility, you don't fade a boring market, as they say, right?
No.
This is the case here. I don't know if there's any opportunity around the BOC tomorrow. The Canadian economy being a bellwether for the U.S., again, north of 80% of or they export north of 80% of their goods to us. So when their economy slows down, it usually means that ours is too. A more dovish BOC tomorrow could actually be a catalyst for our treasury market, because we've seen that in recent weeks and months when the BOC says something about inflation and our bonds respond because our close economic ties there. 9:45 a.m. Eastern tomorrow.
Remind me,
that BOC rate
have they
decision.
cut it all? Have they cut it all since they? I mean, have they ended their rate hiking cycle? And I mean, I think they have, but have they cut it all or no? I can't remember.
They did last meeting, so this would be the first. I'm just trying to get the dates. This would be the first back-to-back cuts that they've done in a few years prior to the pandemic, I think, since 2015 or 16. But yes, the market has them priced in for another cut. And the problem is that given the way the data is shaping up, is that we could be looking at another cut the next meeting comes around. And so if the economy so closely tied to ours is all of a sudden producing 75 basis points worth of cuts over the span of 3 or 4 meetings, what does that mean for our own economic momentum? If their largest trading partner is no longer buying their goods to such a degree that the economy warrants cuts, it probably means that our demand is going down too. Mm-hmm. Just some inference there. I don't think it's too big of a logical jump. And does that mean that the Fed is cutting for good reasons or bad reasons here in the US? Probably bad reasons. The calendar for tomorrow is really saturated, Jamal. Lots of PMI figures due out. Germany, Eurozone, UK, here in the United States over the course of the morning. The typical smattering of weekly mortgage rates, applications figures. 5-year note auction tomorrow afternoon. Otherwise, again, no Fed speakers on the calendar with respect to monetary policy. There are Fed speakers on the calendar tomorrow, but they can't talk about the economy or anything related to rate decisions. So who cares what they say? Let's talk about the education component of this show, because it's always good to learn something every day, Jamal. Tell that to my kid every day. We have to eat something new. We have to learn something new every day. Today, we're going to talk about what makes up a futures contract. Go to tastylive.com, top banner, learn beginner futures. Head to the link here on the top banner of the screen. It will take you to that great coursework put together by the fine folks on the research team. So you're new to futures trading. What makes up a futures contract? Well, futures contracts are standardized agreements to buy or sell the asset underlying the contract. Futures, as the name implies, expires at a predetermined point in the future. But less than 2% of all futures contracts actually go to expiry, Jamal. So when you and I are trading oil, we don't need to go scramble to tell our wives and kids, guys, clear out the bathtub. We have another delivery of oil coming today. No, contracts get settled ahead of time. The liquidity and the depth and the almost 24 hours access to the futures market gives traders the ability to come in and out of the positions with ease and confidence. That's why I like futures for trading the indexes and some of these big macro themes more than any individual equity name. Who needs the stock market only open for, 6.5 hours a day, Jamal, when you have futures that are 23.5? Go to tastylive.com, top banner, learn beginner futures, learn more about trading, and get me off the air, producers. We are past 1 p.m. Central Time, which means we are done here on Futures Power Hour, Jamal. I'll see you on Thursday, my friend. I know that you and I are doing overtime as well, perhaps the next few days, filling in for Ilya and Dylan. So see you there too. And we will shut up and get off the air because it's time for a brief break. We have Dr. Jim Schultz with From Theory to Practice coming up next. Stay tuned.
Peace.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
90% goes to S&P index funds.
You got to double your
10%
initial
straight to
investment.
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm Jim Schultz, and this is From Theory to Practice. Man, tough couple days here in the Schultz household. Sorry that I ghosted y'all on Friday and just straight up disappeared there for a couple of days. But it's been a difficult couple of days at the Schultz household. We actually had to put Biscuit down last night, and so Biscuit is one of our cats, or was one of our cats, and he was cruising, man. He was cruising. Like, he was crushing life. He was only 13, and he used to hang with me in the garage every single morning when I would train. Like, he would be out there doing his training, like catching birds, catching mice, catching lizards, whatever, and I'd be doing my training. And so, he was just crushing it. And then 4 or 5 days ago, his kidneys just really started to fail, and it was really, really bad. And so, lots of hours and days spent in the emergency vets and the other vets and doing hospitalization and trying to do all these different things. And then last night he just wasn't responding. And so it's been really difficult the last couple of days. And so that's why I was gone Friday and Monday. But I'm back now, and it honestly feels really, really good to be back with you all. So I appreciate you guys so much. I appreciate your patience, and I appreciate you guys reaching out when I tweeted about it last night. And so you guys are the absolute best. So I don't think we missed a ton. If we pop in here, let's take a look at what's going on. I know we've got some earnings tonight. I think we got Google, and we've got some other stock. I don't know, whatever. And so if we look at the E-mini S&Ps, got E-mini S&Ps up 4. Got the risk-free asset down 20, so still not doing what risk-free assets do. Got the Dow up 40. Boomers looking okay today. Got the Russell 2000 Futures Index leading the charge, up 26 points here today. So mixed market as kind of a mixed market. I mean, everything's doing okay other than the risk-free instrument. And so that's a bit odd. But the last couple of days, the market's picked up some volatility. So on Friday, we obviously had our Netflix expecting move butterfly, which did not work. I think maybe it may have worked in the morning, but that's kind of when all the stuff with Biscuit kind of started to happen. And so believe it or not, but I wasn't distracted by a chest and back pump. I was actually distracted by what was happening to Biscuit. And so I think in the morning, maybe we had a chance to take off the expected move butterfly. I really can't even remember now, but let's go ahead. Let's take a look at it. I'm kind of curious. If we go into, let me do, I guess a 30-minute chart. Yeah, hold on a second. Let's do like a 30-minute chart. Go back to like July 19 on the open. Yeah, look at that. Wow. What were the strikes on the expected move butterfly? I don't even know. I'll have to look at the chains here in a second. But yeah, so Netflix rallied up. It was kind of overnight. It was weak. It was like maybe hovering around unched or whatever. And then all of a sudden on the open, apparently it spiked up to 678. And so, wow, did we have a chance? I mean, I have to imagine that would have been profitable on the expected move butterfly to some degree. If I go into, let's do the activity tab here really quick. Where's Netflix? Yeah, there it is. So we still have on the short put spread. That's doing okay. That's doing fine. But if you look at, Yeah, so it wouldn't have been that great, I don't think. Right? I mean, you look at the strikes of the butterfly. I actually thought in my mind it may have been better than it actually was, which that's pretty typical for the show. And so if you look, I mean, Netflix spikes up to 678. You've got your short strike right there at 700. So, we would have had a little something maybe on the open, but there is absolutely no chance. I mean, leave Biscuit aside, forget about what happened to Biscuit. There's no way I would have gotten out of this thing on the opening bell. No way. If you've seen the show for any length of time, I was holding that thing for at least a couple of hours, and most likely to the show. And so yeah, I mean, we can conjecture and jawbone about it back and forth, but it's really just purely an intellectual exercise. And so we didn't miss much on the Netflix expecting a butterfly. That stack of cash was successfully lit on fire, but we still have the short put spread on. That's right here for 207, and that's looking okay. I mean, you've got 625, 620. You've got the stock at 644, so that'll be all right. Sorry, so there's Netflix. Just a real quick, that's not really a victory lap. That's probably the opposite of whatever a victory lap might be in this scenario. And then the rest of my positions, it's like, whatever. MES. Obviously not in the greatest spirits today, but we're doing it. We're powering through. MES, strangle, 56.17, 54.60 put, 58.30 call. And it's right in the center. So what are we going to do? We're going to do nothing. What are we going to do? We're just going to sit tight. We're not going to do anything, right? Because we don't really feel motivated to do very much anyway. And so, given all of that, we just sit tight on MES and let it do its thing. GLD, I think this is, we've got a little bit of a drawdown. I do have a Google trade ready to go for you guys. And I do have a Tesla trade ready to go for you guys. So we're absolutely going to do those here in the next couple of minutes. But before we do, I just want to comb the streets on what's happening. Not a ton happening in the current portfolio, but just to make sure everybody's kind of up to snuff and up to speed here. GLD, it's come down a bit. I think it's maybe come down a lot actually, because gold. If you look at gold down here, you got your gold futures. Obviously, GLD is going to be more of a spot price future. That doesn't make any sense. It's going to be a spot price of gold, whereas GC is going to be a future price of gold. Well, for those of you that maybe look more regularly at the futures, which is kind of what I typically do, just to kind of get some kind of sense of what's going on in the market. If we look at gold, I think it was up to 2,500 at one point? I think it was close. Yeah, I mean, let's do a daily. Let's go back maybe 6 months. Yeah, look at that. So right up there, you had a high of 24.88. Wow, 24.88, right before the algorithm swept out all the stops that were sitting up there, and then boom, just sent it right back down. And so this is basic algorithm stuff. And so 24.06 on gold now. And so that's helping our short call spread in GLD just a wee little bit, because you can see here that if I bring up GLD, actually, similar type of deal. I mean, you had the stock, up to 230 almost, 229 some change. And now we're back to 222. So now we actually can kind of sit tight and do nothing and just continue to stew in the bathtub of filth that we have created for ourselves. But we have a lot of time. There's still a good amount of filth to churn through in the bathtub. And so so we sit tight, we do nothing, and we just we see if GLD can come back. So that's GLD, and then we have our Netflix short put spread that we just talked about a second ago, and then SPY. You've got the market is down a significant amount the last few days. If we just look at ES really quick, it's down a couple hundred points. Did it get to 58? I don't think it got to 58. No, the high was only 57.21. Wow, it really felt like, right here, that little drop right there, that felt pretty significant, right? But when you look at the actual chart, it's like, that's not that significant at all. We're 2% off of all-time highs. I mean, it felt like we were in a correction. Like, it felt like the crash had arrived. Like, it felt like the apocalypse was basically any moment now. But then you look at the actual price action, it's like at 2% off the highs. So that's crazy, man. And so, but SPY is a little bit back. So that's good. From the standpoint of we can sit tight, we can do nothing. And that's going to be that. And then Target, of course, we have a 150, 155 call spread. We rolled this, I think, and picked up, maybe we rolled it for even money. Maybe we paid a little bit for it. I don't know. I can't remember, actually. Yeah, we got a penny for it. So there you go. So we put this spread on back on June 4th for 264. We then rolled it for a penny on July 12th. So just a week and a half ago, almost 2 weeks ago. And so, yeah, so now we just sit tight. It's in a good spot. It's fine. We have 24 days to go. Nothing really to do there. Most defined risk trading is kind of, it's very much do nothing. It's very much just kind of set it and forget it. Maybe not like index investing, maybe not like dollar cost averaging, maybe not for my dividend and reinvestment bros that are out there, but it's, it's maybe in the same conversation as kind of a set it and forget it type of deal. So, all right, so that's Target, that's SPY, that's Netflix, that's GLD, that's MES. I want to go into Google. I want to go into Tesla. But if you guys obviously have questions for me, drop them in the chat box. And, man, I will try to help you as best I can today. I'd say I'm operating at about 50 to 60% capacity. And so let's go ahead and let's see here. Let's go into Google. It's just from an emotional standpoint. So let's see. Google. Yeah, Biscuits, it's tough, man. So one more thing about Biscuit. So Autumn and I got married in 2009. And we got Biscuit in 2011. So we had only been married like 18 months. Like the ink was barely even dry on our marriage certificate. Like she still had her stop order like in the market, in the books on me. She was really like, man, I should probably keep this thing working until it gets hit. But then it just kind of it expired and she never looked back. But we got Biscuit. We got Biscuit in 2011. And so, I mean, it's hard for me. It's hard for Autumn. But it's really hard for the kids because they've never known a world without Biscuit. They've never known like our family without Biscuit. So it's tough stuff. But anyway, I won't keep going back to that because I'm sure you guys don't want to hear about that anymore. And so GOOG, let's see here. You got Google up $1.80. Yeah, it's a Tuesday. You guys know I typically do expect to move butterflies. Not very successful at them, but we keep giving it the old college try, right? Well, even I've learned that Monday, Tuesday, expecting butterfly is probably not a great idea because they're already really difficult trades. You got to nail the move. You got to get the magnitude right. You got to do all these things. Wednesday, Thursday is going to be a better time to do expecting butterflies if you're doing them in that week, because that way, at least you're close to expiration. If you do get the move, there's not a ton of extrinsic value left in the trade. And so it just makes a lot more sense. Now, it's been said before, every gimme, there's a gotcha. So if you do expect to move butterflies on Wednesday, Thursday, they're going to cost more. They're going to cost more than if you do them on Monday, Tuesday. Like right now, I'll even show you guys. Like if I were to go into, I think we're just going to do a Tasty Trade Classic, a Betty Crocker strategy for Google earnings, or we're just going to sell a strangle, I think. But if I were to play Google, I'd probably play Google to the upside. And I would think, like if we did, like you see the expected move goes right here, like 195, right? So if I just went in here and I did like a, and again, I'm just kind of picking numbers at random. It's pretty similar to our normal earning strategy. I go 185, 195, 205. It's going to be what, $1 maybe? Oh, $2. Wow, 216. So this is not as cheap as I thought it might be. It's a pretty wide butterfly, but still, it's so early in the week. My guess is, now I'm curious. Hold on a second. Well, it's going to be so hard to figure out because Google would have to be exactly at 185. The price is going to change. The price of the stock is going to change. So that's going to influence, obviously, the price of the butterfly. But I bet you if Google stayed at 185, this specific butterfly would be $3 on Thursday. Well, actually, that doesn't make any sense because Google has earnings tonight. So anyway, scratch all that. If Google had earnings on Thursday and we were going to do this trade on Thursday and Google was at 185, I bet you this butterfly would be $3, maybe $3.20. It would be a good amount more expensive because it is so much more advantageous to kind of be there at the end of the expiration cycle for whatever trades you want to put on. So I'm going to pass just because it is a bit cheaper. It's still not as cheap as I thought it would be, but I just feel like, it's just, I'm not opposed to lighting some Zach's cash on fire. You all know that. And I will do it again. I will do it many, many times in the future, in the near future. But let's at least try to pretend like we're being a little bit strategic. Let's at least like make an effort to add some strategic layer to what it is that we're doing. And I just don't think that doing that today is the best move. So what we're going to do, let's see here. What does Amelia May have for us today? She's obviously struggling too, although she's only 4. She's not struggling really at all. So Penelope and Eli are struggling quite a bit. But 165. Wait, 165? No, that can't be. Oh, yeah. I'm not doing a 3-day strangle. No. Let's go to September. 59 days to go. Trading leap options today. So I think we're going to do a 165, 210 strangle. And boom, there it is. I mean, look at this trade, man. This is a solid trade. It's a very solid trade. You've basically got about a 15 delta on both sides, right? 15, 16 delta. So this is interesting too, by the way. So I want to work through the metrics, but I want to point something out about the deltas on these two sides. You can see they're pretty even, right? So obviously this is a pretty neutral strategy. But generally speaking, well, let's work through the metrics really quick. So the pop is 74, P50 93. So obviously we're going to round that up to 100 for our mental records. And then you've got a ton of theta. You got a decent little max profit, which of course is going to be the credit. Your max loss is negative infinity, but that's if Google prints positive infinity, which I'm willing to roll the dice. That's not going to happen. Buying power effect, $1,800, and so that's going to be 6% of the account. That's pretty good. But if you go back to the deltas, this is what's really interesting, and this is honestly the power behind selling premium. This is honestly the reason why we do what we do. So when you look at a 16 delta, right? 16 delta is essentially going to be the one standard deviation marker on the normal distribution, and you can see it even lines up with the blue dashed lines here that are also in the platform. Now, the blue dash lines don't line up with the copper strip for reasons we've talked about before. Blue dash lines are kind of your theoretical normal distribution at that point. The copper strip is more based on the straddle prices that are happening right now. And so, but if you look at the deltas typically line up with the blue dash lines because the deltas are showing you kind of the probabilities at those markers on the distribution. So, the put delta is showing you the marker at the 16th percentile. The call delta is showing you the marker at the 84th percentile, essentially. And so if you think about the middle of that 16 to 84, that's 68%, right? That's where we get the, one standard deviation plus or minus one standard deviation from where the stock is now is going to be about a 68% probability of success. But let's grab a different color just because we can. Look at our pop, though. It's not 68, it's 74. And so what's going on here? Like, why is the pop higher than it should be theoretically? Well, the reason why is essentially because implied volatility on average is greater than realized volatility. So implied volatility, where the metric that is used to price options, is historically and empirically greater than realized volatility. So by selling options, we're kind of getting a little extra juice. By selling options, we're kind of getting a little extra kicker, kind of on the back end there for the prices of the options that we're selling. And that is one of the things that we try to take advantage of by selling options. Now, of course, there's other things. There's a lot of management that we do. There's waiting for implied volatility rank to be higher to kind of, expand the opportunity set, inside of that overstated volatility, et cetera. But I just want to point this out because this is really, an interesting illustration of what it is that we do every day. And so anyway, I like it. I think it'll work. I think Biscuit would have loved it. And so let's go ahead and let's do it. We'll do this Google Strangle in Biscuit's honor here today. And so let's see. We'll try, I don't know, maybe 350. I don't think we'll get filled. We'll probably have to go down a little bit. Yeah, that's fine. So no takers at 350. That's fine. Anton's off today anyway. I'll do 346. Boom. All right, so filled at 346. So there you go. Little Google Strangle for earnings. Now Tesla, I do want to play Tesla tonight. This is going to be fun. Tesla, I think, is usually on a Wednesday, so that's a little odd that Tesla's on a Tuesday. I think if you look historically, I'm pretty sure Tesla is normally released on a Wednesday. So they're kind of trying to, I don't know what they're trying to do. But yeah, so the stock's at 248. I can't do anything undefined risk in here. It's going to be too much buying power. Just as you can see, if I go to if I just open up August really quick and I were to sell the 17 Delta put, it's going to be what? $6,600. I mean, I can't do that. That's 20% of the account. That's 22% of the account. I can't do that. So we're going to do something defined risk in Tesla. And, I kind of think, let's just play it to the upside, right? In honor of my talk this Saturday in Toronto, obviously still going to Toronto. It's going to be a great time. I can't wait to see so many of you guys in Toronto on Saturday for the Wares Bat Tour. It's going to be great. It's going to be amazing. I kind of know what's coming on down the chutes in terms of the games, in terms of what we're going to do. Obviously, my talk and the other talks. It's going to be great. It's going to be amazing. Well, I am going to talk about I'm not going to let too much out here on the show, but we are going to talk about my favorite strategy. Now, what do you guys think my favorite strategy is? My favorite option strategy. So it's not the do nothing strategy, although that is my favorite adjustment strategy, and that will find its way into the talk. You can bet your bottom biscuit on that. You can bet your bottom biscuit, pun intended. There you go. But what do you guys think my favorite strategy is? You guys can think about that. You guys can pontificate on that, and you will learn what that is on Saturday. Well, given in honor of my favorite strategy, I think we just play Tesla to the upside. Let's keep it simple. Let's keep it buttoned up. Let's keep it straight laced. Let's just play Tesla to the upside. And I don't know, man. Let's do a short put spread. Now, short put spread is not my favorite strategy. Just for the record, it's close. It's kind of close, but it's not my number one go-to strategy. But I'm thinking here, I don't know, man. Let's do a 240, 235 short put spread. I kind of wanted to buy a call spread, just buy the at the money call spread and keep it clean, keep it simple. But at least this way, we have a little bit of room. We have a little bit of room to the downside. Should the Tesla numbers be great, but then you got the little Elon Musk tweet buffer. Like, you always need a little Elon Musk tweet buffer. And it doesn't matter if you have a position on IBM or Procter & Gamble or Tesla, right? They all get taken down by an Elon Musk tweet. And so you always got to have just a little something built in there to kind of give you a little bit of protection. So I kind of think that that I like this more than just buying the at-the-money call spread. I considered that too. But again, let's try to be a little bit strategic here today. So let's go ahead and do this. And then we're right about the halfway mark of the show. So I think we'll go ahead and get into the questions. And I want to see where you guys are at, man. Let me see what's happening in your world. And let's see what I can help you with here today on this Tuesday afternoon. So 2:13, we were filled. I, of course, will push both of those trades out on the follow page. You have plenty of time to fade those trades in the next hour and a half. And so you guys know what to do. So, all right, so let's see here. Where are you guys at? David Galmore's in the house. What's going on there, David? I appreciate you, my friend. Dr. Jim. I was in Port Charlotte, Florida this past week. Man, I don't even know where that is. I think it's right next to Punta Gorda. But is it really legal down there to be that hot, 95 and humid for the entire week? Man, it is. And I'll tell you what. I mean, we've just been enduring. Talking about the bathtub of filth. We have been enduring the moist, hot, humid bathtub of filth down here in Florida for the last, what is it? The middle of July. I mean, it's been a good solid 7 weeks. I'm going to say about June 1 is when it kind of kicked up a little earlier than normal this year. But, man, it's been tough. But, you got to pay the piper, man. You got to pay the man. Like, every gimmy's got you, right? And so it's like, man, we have to endure probably another 7 weeks. And then we get, however many weeks are left, 48 weeks left of just absolute paradise. Absolute paradise. And by paradise, I mean you still got a ton of mosquitoes. Right? And by paradise, I mean it's still relatively hot a lot of the time, but it's some version of paradise. And so it's going to be absolutely amazing. And for my money, it's still not as hot as Memphis, Tennessee. Memphis, Tennessee is the hottest place on earth because you're in Port Charlotte, you're in St. Petersburg, you're in, Punta Gorda, whatever. You got a little ocean breeze coming your way. You got a little bit of something kind of helping you off the coastline there. You get in Memphis, man, you are just trapped. You are trapped in the Delta, and there's nowhere to go. There's nowhere to run. There's nowhere to hide. The heat is going to find you. So yes, it is legal, unfortunately, but it will all be over soon. So Grumpy Mike, Dr. Jim is alive. Yes, barely, my friend. But we are back, and it does feel good to be back. So I appreciate you there, Grumpy Mike. Appreciate you very much, my friend. Paul Rook, overnight lending rate triggers the yield curve to uninvert, or bond market keeps rates stable and the yield curve stays inverted beyond the 740 days we've witnessed. Oh, I think that was maybe a question for Chris, I'm guessing, from the previous show. That's very possible. Man, I am no expert on yield curve inversions and uninversions in terms of like what the actual triggers and what the actual like things that might actually lead to inversion versus uninversion. I mean, I obviously understand the basics of that, but I'm going to leave that to the experts like your Chris Vecchios and your Ilya Spivaks that can kind of help you with that. But it has been inverted for quite some time. And, a lot of people think that it's actually the uninversion that's more painful than the inversion. And so, again, we're reaching the limits of my knowledge very, very quickly here when it comes to bond market, yield curve inversions, et cetera. And so I don't really have too much to say about that, Paul Rick. I just gave you 40 seconds of commentary. It's not worth a ton, but it's something. It's a little something. So Paul Heyman's in the house. Paul Heyman, what's going on? Risk-free money selling July 26th GameStop. Man, if I can't talk about Biscuit anymore, I'm certainly not going to talk about GameStop anymore. Are they still in business? There's no way. Hold on a second. GME, they got to just be gone. $25. Man, they're crushing it. July 26th GameStop, 80 calls. Options for income. That's what I'm saying. Implied volatility of 460. Man, I am 100% not going to touch this. But Wait a minute. Wait. You want to do a July 26th GME 80 call? What? For a penny? No, there's no way. I mean, this just doesn't. No, we can't. Come on, Paul. Come on, Paul. We're not doing this, right? Even I have a line. We've crossed that line by looking at. I mean, this is not good. So we're not going to do that. I'm going to pass on that. Even if it made sense, like even if you were like, hey, let's sell the. I mean, what makes sense here? Well, look at this. Implied volatility is there's nothing there. Hold on, you said the implied volatility of that. Oh, okay, yeah. So you're right, actually. So you're right, Paul. This is actually a good little teachable moment. So you're right. The 80 call has 460% implied volatility, right? But what are you gonna do? Right? So you didn't say to buy it or sell it. I'm assuming you must mean to buy it, right? You can't mean to sell it, okay? So I think I kind of read it as no, you did say to sell it. So it does. So the implied volatility is 460%. So this is a great example of like, taking one piece of information and kind of, not that you're necessarily doing this, but this is what you put in the comment stream. So it's all I can go on. But you look at implied volatility being super high, 400%, 500%, 1,000%. Who cares? It doesn't matter. It's only a penny or two. So it's like, whether you buy it or sell it doesn't really matter that much. It's not really gonna. I mean, if you sell it, then you're literally just looking for 1 penny in front of the steamroller. Now, GameStop probably is going to go bankrupt this weekend, so this trade will probably work. But man, the one time that it doesn't, I mean, you're just going to get taken out to the woodshed, right? And so certainly don't want to do that. So, but I appreciate you, Paul, very much, my friend. So Anka's in the house. What's going on there, Anka? I appreciate you very much too, my friend. Thank you so much for being a regular part of the show. You are in the inner circle. So Anka says, can you go through a future spread and how to roll it out on your show? Man, I have a ZC. That's corn, right? You guys are hitting me with yield curve inversions. You guys are hitting me with corn spreads. I can't go through. I mean, I'm not going to go through a corn spread because I haven't traded corn. It's been at least 10 years, maybe 15. I have a ZC in the money put spread and struggling to roll it out and make sense of the cost to do that. Thanks and greetings, Anka. Anka, I appreciate you. I don't have any spreads on right now. I mean, I have obviously MES, and so to me, I mean. So here's one thing that can be kind of tricky, and this might be what you're dealing with. And so I'm kind of shooting in the dark a little bit here, but I feel kind of good that I might be kind of close here. So if you look at any future chain, and I'm not going to get you all the way there, but hopefully I'll give you a little something that will help you. If you look at any future chain, you have to remember that one of the key differences between futures and equities are with equities, you have, regular expirations, every third Friday, the third Friday of every month, weeklies, 0DTs, whatever. But it's all pointing back to the same underlying instrument, like the exact same underlying instrument. It's SPY, it's QQQ, etc. Right? When you're trading futures, and I know this is going to be the same for corn because it's the same for all futures. When you're trading futures, the actual underlying product itself changes over time. And so you're not always trading the same SPY, QQQ, DIA, etc. You're trading, the June options. You're trading the September options. And then before long, you're trading the December options for the financial futures. They're quarterly, right? So like right now, you can see for MES, I'm trading September with MES. But there's going to come a point, you can actually see it right here. In September, those futures are going to expire. And you're going to be trading December. And so what happens is you have to understand that the price itself the price of the underlying instrument is going to be different. So when you go to roll your spread, whatever your spread might be, whether it's a vertical, iron contour, triangle, whatever, if you're rolling into a month with a different underlying instrument lying underneath the surface because it's a different expiration of corn, then the price is going to be different. And so here's the easiest way to handle that. And again, I'm not going to be able to apply this specifically to corn, but I think this might help you. So what I like to do if I'm in a situation like this is just go into, obviously you can punch in like if I do ESU4, right? This is the U option. Right? This is the September option. I'm not going to do MES because with micros the micro Z might not even be available right now. But if I go into ESZ4, now I have them both on my screen, and you can see right here, there's a big difference in price, right? So if I'm looking at, the U, it's 56.11. If I'm looking at Z, it's 56.78. So then what you can do is go into a cycle. I got to pick a cycle in like October that's pointing to Z. Right? So you can see October 18, it's telling you that it's using Z. You can see that right there. So if I open up October, what can be really helpful is just look, grab an anchor right at the center of the copper strip. That's your at the money price. So if you roll, like right now, if I roll my strangle, from September to this October option that's using the December futures, I'm going to want to center it similarly if that's what I was doing. But I need to center it around the new at the money price, which is not the at the money price now. So I think that's probably what you're having a hard time with corn. Again, I'm going to have to kind of let you go through the rest of the forest on your own here. But email me, Anka. You can email me, and I can hopefully help you through the specifics of it. But again, I'm no corn magi, and so but we can probably figure it out together. I'm assuming. And so Paul says, sorry for the loss of your cat. It's never easy to lose a pet. Man, I appreciate you, Paul. Wayne says, sorry for your loss, man. I appreciate you guys. Appreciate you guys very much. Sprint Trip recap. Do you have any trade suggestion for Tesla earnings? Yes, Sprint Trip just gave you one, and yeah, you know what to do with that trade. Figure out a way to do the exact opposite, and you'll be in a really, really, really good spot. So DeBoomer says, Dr. Jim, I'm sorry for your loss, brother, man. I appreciate you, DeBoomer. I'll try not to take you down. IWM bullish, broken wing butterfly. Yeah, so if you're bullish on IWM, wow, 83 IV rank. All right, I'm interested. I might actually do this one, DeBoomer. You normally bring me trades I can't do. I might actually do this one. But I'm curious. If you say it's bullish, then you must be, are you doing puts or are you doing calls? Because if you do puts, I'm assuming, yeah, if I do puts here, if I do like a 220, 217, 214, take that up, and then you take that down to like 211. Oh, that's still a 55-cent debit. What? Hold on. So maybe it's the calls. And so if I do a 17, go down to 207, do maybe a $5 wide. Yeah, it's still a 45-cent debit. Can't do that on the put side. Prices are just not great. And that's negative delta. So I'm assuming you're on the call side then. Let's give it a shot. You've got IWM at 223. When I think about the reason why I'm hesitating is when I think about broken wing butterflies, it's kind of similar to how I think about ratio spreads. I don't usually think about them in terms of bullish versus bearish. I actually prefer to be more exact with how I refer to them in terms of puts or calls, because these are omnidirectional strategies where like you can actually make money both ways. And so it's not as simple as like a short put spread or like a long call spread, with short put spread is bullish, long call spread is bullish, short call spread is bearish. Like those are really clean and simple. These are not as clean and not as simple. But if I do, if I do 225, 230, 240, got to be a credit. 71-cent credit. Yeah, that's negative delta too. This is crazy. So I'm not exactly sure which side of the market you're on here, DeBoomer, but I need to do one of your trades, man. So I may be doing the opposite trade actually of what you think we should do. But I kind of feel like, IWM's had an incredible run as of late. It's recovering significantly today, up another 30. And so I kind of like this trade actually. That way, I like this version of the broken wing butterfly, because if the market does rally, we have a little bit of protection up here around 230. Now, this is a super long duration trade at 59 days. But if the market sells off, then, we could potentially pick up our 50, 60 cents. I don't love the fact that it's only 70 cents. Let me try to get a little bit more here. What if I do a 224, 29, 39, 78 cents? Ah, man, they're nickel and diming us, man. What if I do 23, 28, 38? Can I get $1? 86 cents. Yeah, I think this is the one we're going to land on, though. I like this one a lot better. We're right at the money with the original long call, but I think that I want to make something if it works. Like, I want this to be economically significant. I talk about that. I lecture you guys on that all the time, and so I would be remiss if I didn't do it myself. And so 223, 228, 238. Let's do it, to Boomer. Again, this may not be your trade at all, but it's going to be our trade now together as a team. I like it because there's no earnings to worry about. We obviously have lots of earnings coming on down the chutes. Next week is Next week, I mean, y'all think today's crazy. Next week, you got, Apples and Amazons and Snapchats. It's going to be wild. So 85 cents. So beautiful. All right. So appreciate you, Sergio. Hugs for the Schultz family, man. I appreciate you, my friend. Thank you so much. Hey, Doc, what's popping? I started working out again, man. Let's go, Nick B. I love it. Nothing but big, but a kettlebell out again for some high intensity training pre-market. Looking forward to Elon's earnings today, I think. Yeah, we first of all, nice job out of you on the training. You can do a lot with a big kettlebell, a lot. And so that's awesome. But yes, we're all looking forward to Elon's earnings, and we're all looking forward to Elon's tweets around said earnings, which they may be more exciting than the earnings themselves. So John Williams, I'm sorry to hear about your kitty, man. I appreciate you, John, so much. Thank you, my friend. Raul, good afternoon, all. Dr. Jim, I'm very sorry for your loss. I had a cat I love dearly, and as any pet owner knows, they're a family member. No need to apologize for your grieving, man. I appreciate you. Appreciate you so much, Raul. You're a good friend. You're a good man. I just appreciate you very much. Thank you. Paul Rook, 2480 money. Oh, he's talking about the inverted yield curve. Yeah, Paul. I don't know. Hopefully that's the money you made on the trade. Again, I would listen to Chris Vecchio and Ilya Spivak on that. Maybe even don't want to listen to Dr. Jim on that though. Cordova Dave, Dr. Jim, I got out of the. Oh, here you go. So Cordova Dave says, Dr. Jim, I got out of the Netflix trade for $1.16 profit Friday morning. Small window of opportunity though. Yeah, that's what I'm saying. That's awesome, man. Nice job. Very, very nice job. Maybe when I do these expect to move butterflies on Wednesday, Thursday, I should be a bit more available on Thursday and Friday morning. Because obviously this past Friday was difficult for the reasons we've already talked about. But normally it is a chest and back pump that's keeping me from getting out of these trades. So I'll probably have to rearrange that. But Manny TP, hey, Dr. J, I'm sorry about Biscuit. I appreciate you, Manny. Welcome back. A Tesla earnings play. Yep, short put spread. So figure out a way to do the opposite. Thoughts on an expected move call butterfly? 250, 275, 300. Yeah, see, I don't love it. I don't love it just because it's Tuesday. Right, you can give it a shot. You're going 25 points wide. It should be fairly cheap, I would think. I mean, it's in fact here. Let's look at it. I'm not going to do it. We're going to try to stay a wee bit disciplined here today, which that's kind of new for us. But if I do a 250, 275, I mean, I love the strike situation. I really, really like the strikes. That's going to be what, a few bucks? Yeah, 470. Yeah, I was kind of hoping it was like maybe 350 or 330. But yeah, I mean, still, I mean, lots of profit potential. Again. The reason why I don't like Monday, Tuesday, expecting butterflies, it's actually twofold. So we've already talked about the fact that you still have a lot of time left in the week. You're not getting, to the end of the expiration cycle. And so that hurts you from an extrinsic value standpoint. So we've already talked about that. But there's actually a second reason that's obviously closely related to the first reason, but it can stand alone on its own merit here. Getting the magnitude of the move for an expected move butterfly is already very, very difficult to do. And so, like right now, you're looking at the expected move for the end of the week and, all these things based on implied volatility, based on where the stock is, whatever. But it's like, man, a lot can happen in 3 days, right? A whole lot can happen in 3 days. And I mean, this stock could be 325, right? Or it could be 190, right? I mean, this thing can really move a lot in just a few days, especially coming off of a huge binary event like this one. And so that's the reason why I don't love that. But so Moody Blues, why is this considered a leap option when it's less than a year? It's not Moody Blues. It was a very, very, very poor attempt at humor. And so that wasn't even you guys typically can expect a solid B- performance from me, but we are absolutely in the C range, maybe high D range here today. So it's not a leap option there, Moody Blues. That was some internet sarcasm. So RC says, Dr. Jim is a put seller. Maribozo 1-2 says selling puts, man. You guys might be onto something, but you got to come to Toronto to find out the actual answer. So a little bit of drama there. And so RC, Dr. Jim, that one is going to rip to the upside. Let's go. Yes, it's going to be Tesla, I'm assuming is what you're saying there. So Mr. Burt, man, I appreciate you, my friend. Yes, very, very difficult times. RC, always be slinging puts. Yes. Wayne says over 100 for 2 weeks in a row. Boise, Idaho. Oh, you're talking about the heat. Yeah, wow. Boise, Idaho? They're still in business? Wow. So that's amazing. Idaho. Yeah, man, I don't know that I could find Idaho on a map, to be honest with you. Doesn't the state look like a potato? Like a russet potato is basically Idaho. If you can find the russet potato, like you have found Idaho. And so Wayne, 100 though, that's no joke. That's legit, but it's a dry heat though, so you're fine. So Jimmy T, Sacramento's that way too, sticky hot. Yep. Paul Rook is selling some premium on some inverted yield curves. Good stuff. Let's see. Jimmy T gave Secto 3 years and left. I don't know what that means. So I'm going to pass over that one. Finn West, welcome back, Dr. Jim. My mornings have been missing you. And puts for income, yes. And I've missed you too, my friend. I've missed you all very much. And so it felt really good to be back on the show. Even if we are, operating at, some percentage of capacity here. And so, yes, it feels good to be back, and we'll be right back into the swing of things here in the next couple of days. And so I appreciate you there, Finn West. Lucky Xerxes, I appreciate you. Paul Rook's doing put ratio spreads. There you go. Yeah, put ratio spreads across the board, man. Inverted yield curves. Snapchats, Teslas. This is a great strategy. Love that blob. Please accept our condolences on your family's loss of Biscuit. I appreciate you so much. Peter Leger says, thank you so much there. Love that blob. Dr. Jim, will you roll your gold spread on Friday at 21 days if it's still down? No. I'll just sit tight. On defined risk, you don't really have to worry about the gamma risk. And so I personally don't go out of my way to roll them at 21 days to go. I usually just let them kind of sit and let them kind of stew. And some of my own brethren on the network might do it differently. And that's what makes the market. So Theta Trader, Dr. Jim, I'm playing Catfish today. Bottom of the stream. I survived the RNC, and that's difficult to do. Almost caught up on sleep, back to mediocre trading decisions. That's what I'm saying. You are in good company then, my friend. And so thank you for being here. And so let's see. Max Virtual 1. So normally that will naturally fall due to contango, usually, if several months out relative to the spot. Okay, so we're talking about futures versus spot prices. Yeah, it's interesting. The spot future convergence, it's kind of, it's an interesting thing. Like it's been a while since I've thought about that, but I've ruminated on that. I spent a long time thinking about that several years ago. Like since I've been on the Tasty Network, it's complicated to think about. And maybe it's simpler than I'm making it out to be, but it's like, does the spot, if you're in contango, does the spot rise to meet the futures, or do the futures fall to meet the spot? Max Virtual 1 is suggesting that the futures fall to meet the spot because they do converge. They converge at, when the futures expire there. And so it's really interesting. I didn't think it was that simple, but I could be wrong. And so let's see. Claude says, I cannot see your trade on the platform. Yes. Well, I have it right here. In the follow page, we only have a couple seconds left of the show. I'll push it out on the follow page right after the show. You'll see it on the follow page. And then lastly, man, I see Boston Frank. I see Mr. Premium. I see Sergio. I see Omid. I see RC resting happily in Kitty Heaven Biscuit. We love you, man. I appreciate you, RC, so much. And so Omid says, Dr. Jim, I'm sorry about Biscuit. Yes. Thank you so much, man. You guys are the absolute best. But we are out of time today. I appreciate you guys so much, man. Thank you guys for being here. Thank you guys for being a part of what we are doing. I really hope that whether you tail my Google and Tesla or you fade my Google and Tesla, which is probably the better move, I really hope that you guys are able to make a little bit of money on Google and Tesla tonight. But I appreciate you guys. If I can help you guys in any way, please shoot me an email. I'm obviously a little bit behind for obvious reasons. But, man, shoot me an email. I'll help with whatever I can. I would love to hear from you guys. Via email, or we can connect on Twitter. I'd love to hear from you guys on there as well, as always. But stay tuned. We do have Jamal coming up next for Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
What's going on, everybody? UPS earnings did not go so well. So we got to talk about that one because, well, I mean, it's part of the economy. It's a big part of the economy. We'll talk about that. Tesla's coming out with earnings. That's all I'm going to say. I'm just going to drop the mic. We'll talk about some stuff with Tesla. And then finally, you know who else is coming out with earnings? Google. And I really think it's a big moment for the market. So we'll talk about those three things and more. We're starting to kick up on earnings. We'll take a look around at some of the other names and we'll glance at some of the other market things that are happening right now. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I'm your host, Jamal Chandler. Fantasy football people, I need you to listen to me right now, okay? I got to ask this question. I asked it on Futures Power Hour. I have to ask it again because I want to know from my true fans of the Engineering the Trade show. You guys' opinion I value more than any. I'm curious as to, how many of you play fantasy sports? As I said fantasy sports out loud, I heard in my head, it reminds me of my fantasy baseball team that absolutely sucks right now. This is the worst year I've ever had in fantasy baseball. I don't even know how to deal with it, man. I literally took the app off my screen because I don't want to look at it. That's how annoying it is right now. But I digress. This is a fantasy football question. So I got a friend who is running. I'm in 3 leagues, I guess. But this is from the first league that I was ever in. I got a friend who's asking. He's the commissioner, asking for a friend. No, he's the commissioner of the league, and he is trying to. He was suggesting a new idea for the league. Now, listen, I'm all for new ideas about the league. Anything we can make the league more fun, sexier, interesting, more engaging, make you watch more games. All for it. I just don't like this rule, though. Right? It's not a rule. It's not going into effect, I don't think. It could, though. Here's the deal on the rule. It would be, you know how sometimes you have a game and you only win let's exaggerate, it's 63 to 62, and you're like, whew, my team sucked that week, but at least I gutted it out, right? And then you have those games where the score is 172 to 161. And you're like, damn, best week I've had, and I lost by 10 points because I scored 160. This other guy had his greatest week ever, scored 170. So some people would say that, one win does not equate to the other, right? The win by one in the 60-something game is not the same as a big win and the big scores, and your teams are way better than those teams, the other two teams, right? So they proposed the idea of sort of a parallel game each week, basically comparing that all to the median score of the league that week. So let's just say in the scenarios I just described, one team wins 171 to 161, high-scoring game, but the 161 guy loses by 10 points. But the median score for the week in the whole league was 100 points. He beat it by 60 points. So that guy's record, the 161-point guy, his record would be 1-1. The guy who won 170 or whatever, his record would be 2-0. Same scenario I described it. The median score that week was 105. And the score of another game was 63 to 62. The guy who won 63 to 62 would be 1-1 also. The other guy would be 0-2. I'm just curious. What do you guys think about that? It is a weird rule. I did vote no. Exactly what I'm talking about. I totally agree. Here's the thing. Here's the reason why I don't like the rule. I think in fantasy sports, if you're going to do things to make the league more interesting, like side bets, etc., I think it should be something that you can control. Score is something you absolutely do not control, nor do you control the score of another person's team. It's not like you have a defense, but you don't play defense on their team. You know what I mean? You don't amp up your team's, any given week when you're playing against a rival in the league. It just doesn't work that way. So if you can't control score, then why would you buy into something like that? I don't like it. I don't like it. Our whole league is debating upon it. We'll see what ends up happening. I'll let you guys know. In the meantime, let's pull up some slides. Let's talk about markets. UPS is one of the few names that had earnings yesterday. And, of course, they're kind of an economic barometer, right? I mean, they ship freight all over the nation, all over the world, left and right. And so you get an idea of goods and services and what's going on in the transportation sector. And honestly, you could say that, they said, shipping rates are not doing well. And it's just like overall, their business has suffered as a result of a possible global recession. Is this something related to rates? Possibly. Is this something to be worried about? Possibly. Is this one of the first things to look at when you're talking about the idea of the Fed needing to do a rate cut? I think in a weird way, yes. And again, I'm not rooting for a rate cut one way or the other. I'm just rooting for stability in financial markets is really the one thing I'm rooting for at the end of the day. But I think it's really interesting when you see a name like UPS really struggle on earnings and cite a lot of different issues, if you will, as a result of their struggle on earnings. You know what I mean? Like it's just not a good scenario when you see a name like UPS say like they had weak freight demand. I mean, why is that? Because people aren't exactly demanding more goods and services because they can't necessarily afford it? Is that the issue with companies? Is that the issue with consumers? These are the things you have to ask questions about. So I do think this is a really interesting scenario. FedEx already had earnings. I don't remember them saying the exact same thing. I actually don't even remember the price reaction to their earnings, if I'm being honest. Actually, when I look back at it now, it was up big. So a lot of times, again, this is one of those things where you usually try to play names off of the similar movement in earnings, but it didn't exactly quite work here. It's something to keep in mind here. But UPS, this is one thing to keep an eye on when you're talking about what's going on with our economy and markets and rates. UPS is definitely, this move shakes things up, if you will. Now, of course, we have Tesla earnings tonight. The story with Tesla is, obviously it ripped everybody's face off about a month ago. Well, it was about 3 weeks ago at this point, right? After the deliveries number, right? Not long after that. And then the robotaxi thing, of course, when that news came out, kind of slowed things down. And that's kind of where you find yourself right now, right? You could say, one element of it is what's going on with Elon Musk at any given point in time. But they do have tangible different things that they have to pay attention to in their reports. And so one of them, of course, is the deliveries, whether it's domestically or in China. And then the other part is the robotaxi business. I start to think about this, and my wife and I were talking about this weekend. We're really not that far from, I know you guys, when I say certain references, sometimes I wonder who's going to catch it, but you guys catch it. I feel like a lot of you guys are like similar to me on engineering the trade. You remember Total Recall? And you remember when Arnold had the turban on his head and the taxi he had? And how far are we from that, right? Like, really? I know 30 years ago, it seemed like a really long ways away, and it actually really is, from flying cars. But we're not too far away from taxis and Ubers actually having self-driving options and moving people around. So, they're going to comment on that at some point in time. Did a little poll yesterday on the show about whether we thought the stock was going to go up or down on earnings. I don't know if I haven't decided whether I'm going to play this name or not for earnings. Maybe you guys can talk me into it when we get to the platform. We'll see. But I'm not exactly sure which way I want to play it. I could totally make the case for it going higher or lower from this point in time. If I'm really pressed on it, I would say I could see somewhat of a pullback. I don't know how much it's going to move. I don't think it's going to be like 20% or anything unless they miss badly. But this is probably, this is definitely one of the, I always say I try to play some of these Mag 7 names, and I think I'm going to find a way. I'm going to need your guys' help, though. I'm curious to know what some of the positions you are. We'll talk about them when we get to the platform. Finally, one last earnings name. Google's earnings, I think, are a lot more important than Tesla's even. This is another one of the AI names, right? And everybody's been looking forward to AI names getting crushed. I shouldn't say everybody. I'm using that too loosely. But there are a lot of people out there who want to see the tech rally over. And for those who do, I think you have to start here with this Google's earnings, right? Google obviously has its AI capabilities. And of course, they have cloud as well, which has still been one of the parts of their business. But everybody's going to key in on what they say about AI. It's kind of a precursor, right, to some of the AI names, whether it's Microsoft or obviously NVIDIA. And I think if they don't say what the people want to hear, I think it's not going to be so good for the stock. Now, last time around in earnings, think the stock crushed it. It was up big on earnings. It did fade in the days after, but still, it was up big on earnings. I think this is one that's really meaningful. We're going to have to see what they say. The conference call is just as important as whether or not they beat. If not more important, the conference call might be. I already have some calendar spreads on playing to the upside. I played to the upside in a lot of different times, with particular for calendar spreads, which, by the way, I had a nice little winner today in earnings. If you played it, you might have too. But I'm playing it that way. We'll look at this one as well when it comes to earnings and talk about expectations. And I'm curious to know about you guys' trades in here too. So we'll get to those. Leftovers. Who are the top 10 holders of gold medals from the Olympic Games? Let's move to the next slide. Olympic Games. Opening ceremony is Friday. I remember I was in Atlanta. I went to school in Atlanta, undergrad, Clark Atlanta University. I was there in 96 when the Olympic Games came. When I tell you that those Olympic Games really reshaped the city that Atlanta is, it was phenomenal to see. I would have never believed that, but it was wild. Matter of fact, you know what? I'm so dumb sometimes because there were so many different things that were going on around me, different games. And I was a college student. I certainly didn't have any money to pay for any events or venues, but I probably should have found a way, Like I went to 0 events when it was there. None. As a matter of fact, at the time when the Olympics were coming, they were saying, it's going to be so many people and people are going to bombard the city, which there was. And it's going to be gridlock traffic. You're not going to be able to move and get anywhere. That proved not to be true. Well, there's gridlock traffic in Atlanta no matter what. So Olympics didn't exacerbate it, but nevertheless, it was really fascinating. Michael Phelps, of course, is by far in the way the dude when it comes to gold medals. 23 from him. Carl Lewis, man, you remember when Carl Lewis was like a part of the lexicon? Like, you got to be Carl Lewis. Who do you think you are, Carl Lewis? I mean, he was the dude. He was the dude. Mark Spitz should be in that same conversation. I mean, again, Mark Spitz was like the 70s though, right? Like, wasn't he? I think. Yeah, he did his work in the 70s. Mark Spitz was the man though. He had crazy amounts of golds. He was killing it for years. Usain Bolt, man, he is like one of my favorite all-time Olympians because not only did he do it, he did it with style, and he did it with a smile on his face after time, even though he was a killer. Reminds you of somebody else, right? I've never even heard of this next guy. Paavo Nurmi? I don't even know him. You know what? I gotta look this guy up. Paavo Nurmi. Oh, he's a long distance runner. Oh God, he was born in 1897. So what was he, like 1920s or something? Olympic. Oh yeah, he was in the 1920 Olympic Games and the 1924 in Paris. Wow. Is this like the 100th anniversary of the Paris Games? Well, they've had it in Paris since then, though, right? Huh. But this is definitely the 100th anniversary of the Paris Games, maybe the first time. Who else? I have never heard of Larissa Latinina. I probably got that right, didn't I? What's crazy about things like Google is when you start Googling certain people, the rest of them start coming up. Oh, she's a Soviet gymnast. Dude, the Soviet gymnasts had it on lock for a long time, didn't they? They were scary. They were, they were just tough as nails. I mean, oh my God, they were like, you knew them, Nadia Comaneci. It's interesting that Nadia Comaneci's not on here, but she probably didn't win that many. But obviously, Larissa did. She was killing it. Sawato Kato, what do you think they won for? That should really be the kind of limiting factor. You should have to guess what these people won gold medals for. You know what I mean? You should guess. Oh, this guy was... Oh, he was a gymnast as well. Okay, I guess I would have guessed. I didn't know that. He was also kind of in the 60s, in the late 60s, early 70s. Jenny Thompson, I think she was a swimmer, right? Yeah, she was a swimmer. Oh, it says a swimmer. Oh, yeah, I remember her. Wow, I forgot about her. Yeah, I remember her. She was good. She was really good. Matt Biondi, he was the man for a while there. I feel like he was one of those in the 84 Olympics, right? Yeah, his name was like a big name. It's interesting how certain people's names kind of reign true. A couple of more on this list. I mean, this is actually more fun than I realized. Who was this guy? Ray Erie. Ooh, he was also in the 1900 Olympics in 1904. It was 1904. It was in St. Louis. Fascinating. It seems as though they're starting to get these situations where they go 100 years at certain places. They did skip over St. Louis for the 100th year, but they did Sault St. Louis. I mean, they did London in 1908. That's pretty cool. And then finally, Bridget, I'm guessing she was like gymnast, no? Maybe not. Olympics. What was she? I mean, I had to look these people up. I've never heard. Where is she? Oh, is she more recent? Wow, I've never heard of her. But she did, what did she do? What is this? Oh, a kayaker. Wow, she was in kayaking. Never heard of her. Anyway, those are your people who won the most gold medals in the Olympic Games. Let's move to the next slide. Well, what can you say? I mean, the last time we saw bonds high was basically at the beginning of the month when it was right before the jobs report and all these other different things. And now they've calmed down quite a bit. You have to imagine that, and again, this is bond yields. Sorry, not bonds, but bond yields. We've seen bonds climb some since that time period. I just can't figure out how I want to trade bonds, and so therefore I'm leaving them alone. I'm really waiting on different crescendos. And what I mean by that is, for example, ZB. I want to see ZB. If I'm interested in getting ZB along 118, almost 117 and change, I'd be interested in maybe getting short at 121. And I feel like bonds should be trading higher right now if we have this opportunity, as I discussed on Futures Power Hour. If there's really a 90+% chance of a Fed rate cut at September meeting, bonds should be trading higher, in my opinion. The fact that they're not is kind of a weird red flag. So for now, I'm not touching them. Let's go to the next slide. Vol has dropped off a little bit. I've been able to sort of capitalize on that with some of the positions that I had. This is volatility risk premium. This is the difference of the VIX and historical vol, also known as forward-looking vol minus backward-looking vol. And usually if this metric is high, forward-looking vol is high. I'm sorry, if this metric is low, no, I'm wrong. If this metric is high, then usually forward-looking vol is high, and that's when you want to sell vol, right? So we saw a little bit higher more recently, upwards of 7 difference between the two. It was high for a little bit without forward vol being high, and that's because historical vol was super low. It was like 5, right? And now it's after a couple of different moves, after some of the pullback that we saw more recently, historical vol picks up. And so it allowed you to be able to sell some implied vol over historical. And now I think it's kind of coming back in line. So we're still, up there. This metric, if I had to guess, hangs out about 3, which is not very high. But this is telling you to sort of, okay, peel back some of your vol plays if you can have the ability, if you're up some money in some of them, kind of close out some positions and wait for better levels. And that's what I'm trying to do right now. Let's move to the next slide. Earnings-wise, I already told you the big ones. We got Tesla, we got Google. We also got Enphase, which is a name that's been moving around quite a bit. I'm going to preface this by saying I'm not really playing any of these outside of potentially Tesla and already playing Google. Visa has earnings. I wonder if they're going to, the biggest thing about Visa to me is, are they going to, American Express didn't fare so well. I think they had some not so great things to say. I wonder if Visa's going to be the same way. I couldn't necessarily decipher what American Express was saying. I didn't really look too hard into it, to be honest. Texan is another tech name. How's that going to go? Interesting. Texan's now $6 today. Seagate, another, it's still, what do they do now? Do they still do hardware? I mean, I guess they do, probably for servers. Chubb is financial, Cough is financial, AT&T, who really cares? I'm sure they're going to have to address the couple of hacks that they've had more recently. And then finally, General Dynamics. We have GDP coming up on Thursday. I feel like we've only, if we've had, 7 GDPs this year, I think we moved only on one of them when there was this worry of stagflation, but you never know. Core PCE is also on Friday. I expect us to move on that. We definitely will move, at least in the morning, in the early hours of trading, prior to the market open, because it comes out at 7:30 Central, 8:30 Eastern. We'll see how it plays out. Number of S&P 500 stocks above the 50-day moving average. It's actually climbed because, again, when you get this rotation like we're seeing today, over 160 basis points or 1.6% difference between NASDAQ and Russell. You get a little climb in breath, and it's up to 69% of those names above the 50-day moving average. Let's move to the platform. All right, let's get to it. I want to hear what you guys are talking about. I want to get to Tesla. Oh, yeah. We have a poll. I think you guys have seen this in the chat. What do you think it's going to do? Flat, up, big, down, big. Ooh, I think a lot of you are talking your book. Well, actually, I'm sorry. Tesla was yesterday. This is Google. A lot of you are clearly short vol in here. Short vol. Yeah, Tesla, I can't bring myself. I almost would rather wait until after Tesla gives earnings and then put my trade on. And I think that's what I'm leaning towards doing. I just can't see anything else that I'm super interested in doing. I wish it were a lot more oversold or a lot more overbought and I'd be more convicted in a trade. But right now, I mean, this is almost $30 away. This is the one trade that I've thought about doing. The 275 calendar spread. I guess this is pretty cheap. I mean, I might throw it on, just throw it on. We'll see if I get filled. Google, I already have that on. I know, yeah, I don't know. That's how I'm playing it. Google, I actually did this last week. When the stock was down here, I said, oh, this is a good time to put on these calendar spreads with hopes that it'll start drifting a little bit higher. And it has. That's what it's done so far. So I've done the 190, 195. That's how I'm playing it. We'll see what it actually does on earnings. I did have a nice little winner today in Spotify. I'm glad I closed it too. Spotify was my winner. I had the 320, 330 call spread on. Short this expiration, long this expiration. Worked out pretty good. I'm happy with it. I mean, if I'm telling you about winners, I got to tell you about the losers too. I had on NXPI, didn't quite work out. And again, I chose the strikes based off of near-term highs. So 300 was the near-term high in NXPI, 290 I think and change. That's why I did this level. Didn't work. No big deal. No big deal at all. Can I close this thing? Sometimes it's nice to close and not have to look at it. There's nothing going on in this thing, right? Let's close. Let's see if it closes that. It's not going to do it. Let's do a nickel. Actually, I need to do a nickel. It doesn't trade in pennies, I don't think. Whatever. Yeah, robo taxi business. I imagine some archaic company rebranding with this business. Blockbuster taxi service. That would be funny. Oh, that's a good one, Theta Trader. Yeah, Johnny Cab. See? Brian Watson, you know what I'm talking about. The Johnny Cab. Hope you enjoyed your ride. Oh, yeah. I closed out a couple of different things today. Came in early and started closing out positions right off the bat. Closed off my corn trade. I'm actually completely out of grains. Closed off my corn trade, closed out my wheat gains. So for those of you who put those trades on with me, this bumped through the screen. Nice job. UNH, I was short a call spread in there after the big move to the upside. I also needed some short delta in the book. Close that out. Spotify, again, those are my earnings trades. CCL was something that I was short puts in as the stock was down for some time period. And I close that out. I'm up on the year. I'm up small on it, but close it. It is what it is. Nike, yeah, you're right. Nike did pop yesterday. Not having any follow through though. But you know, I when I put that on, I knew it was a long-term hold. As a matter of fact, that's why I rolled it out to SEP, even though it's a short put and it's in the money. But that's a long-term hold. It's going to be there for a while. I don't expect to make money soon on that. Maybe, you know, I mean, this is one where it's not going to be 21 day when I roll, unless I'm making money on it already. It'll probably be 30 to 40 days when I roll, just to give myself more duration. Because again, it's almost like a long play, right? Like I'm almost, you know, that's not so much vol. Again, and Nike is, look at it, it's 69 VR at this point. This is not a vol play, okay? Don't think it is. This is a directional play. This is essentially, you know, similar profile as being similar, not the same. Similar profile as being long calls in a way, right? Because you have long deltas, except this one is, as it goes up, your delta gets smaller and it doesn't increase. So I'm playing it in that way. I'm going to keep it on for a little bit. Other than that, yeah, not a whole lot going on in the portfolio. Again, it's nice to have closed out some positions and get some buying power back. I've had on a lot of positions, as those of you who watch the show know. But again, they're all small little positions here and there. And so you want to just sort of let them, and most of them are vol plays. And so you just want to be able to let the theta sort of decay every single day. One trade that's not working for me right now, and I'm okay with it, but is this, you know what? I'm going to roll this right now, actually. I'm going to roll my, I'm going to roll my August position to my SEP. This is what I want to do, right? Yep, SEP 20. Let's do this. This is, I wanted to be long, short some upside in IWM, even though it's popped. And, again, the vol is high. I didn't want to play downside. I wanted to play upside. So that's why I'm doing that. Diamonds, similar deal. We got 24 days. Let's roll this as well to, this one's going to be easier to get filled, I think. Bling. Yeah. I'm going to roll that. What else we got? That's pretty much it, I think. I got a SPY position as well, but these are a little bit further upside. I can hang tight on those. And I got a couple of November positions. November. August positions I got to take some inventory on, but only 2. Most of my stuff is in the 59-day period, and some of these I might start to roll further out if they're longer-term positions, like Nike, for example. So that's kind of how I'm managing things. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade small, trade often. See you.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Good afternoon. This is Tim Knight, and it is time for the wonderful world of charting. It has been a terrific day, and I guess appropriate enough UPS delivered. It's yesterday I bought puts on it, and I bought a kind of normal-sized position, and I overthought it. It's like, oh no, they come out with earnings, because I don't follow earnings that closely, so I got scaredy pants. And I trimmed some of the position, but it was still pretty good sized. Anyway, I sort of held my breath this morning, punched in the chart, and boom. And of course, the thought was, hey, stupid, you should have held on to the whole thing. But there's no such thing as a happy trader, is there? But they're conservative puts. These are October in the money puts, and they're still up 148%. So that was a great, that's made my day. Plus, entirely short portfolio, everything's profitable, and my one bullish area, which is silver and gold, hanging in there, green on the day. So it's a terrific day overall. And of course, we're getting into the thick of the earnings season. Tesla and Alphabet, aka Google, reporting after the close, and I've got a bunch of charts for you. So let us put on our one-piece bathing suit and jump right in. So we start off with a spider. So far, so good. We we need to hold below that darling little top that we've banged out right there. Today's high is roughly equal to, I guess that would be Tuesday's low, maybe Wednesday's low, whatever this bar is. So yeah, this is holding together nicely because, small caps are up 1.32%. The NQ and the ES are down just a little bitty bit. Doesn't seem that bearish, but I fear I hear that snare drum in the background. So yeah, so far so good. Very exciting. And our old buddy, I wonder if, I'm convinced none of you have followed me into EWZ. Not a single person's written. And to be clear, I take no credit nor any responsibility for any trades you place based on my charts. But I thought at least somebody would be like, hey, this is working out. Regardless, it's working out for me. And EWZ is doing very well. It's a beautiful, beautiful trade. Nice tight options on that. I'm just hanging on. And I took a look under the hood this morning, like what are the components of this? And the two biggies are Vail and PBR. Not the beer, but the petroleum company. And that's good because they both look bad. So yeah, EWZ also doing terrific. But let's go to the star of the show. Let's go to the champ of the day, our superstar, UPS. What can brown do for you? And it can do red. This is a terrific drop. We're down about $20 on the day, about 13.5%. We have broken below this massive topping pattern going back, goodness gracious me, about 4 years. That's a big one. And so I'm going to hang on. I like I say, not really shame on me because I've had enough times when I have opened up the chart in the morning and my stomach dropped out of my torso because it's going not my way. So yeah, the earnings spooked me a little bit, but for those that I did hold on to, they're terrific, and I'm just going to hang on still, and I'm confident that 148% going to grow to 200 or who knows how high. So this chart looks better than ever. Super, super happy with this. Other earnings came out, which I wasn't involved in, but just to catch up on them. NXP here, NXPI, this is NXP Semiconductors, down hard, about 8.5%. Although not a particularly bearish pattern at all. It's just when it's kind of sawtooths working their way up. Cadence Design Systems, again, sort of an inscrutable pattern on that one, but tumbling away like so. SAP, kind of in a perpetual permarizing state here ever since September of 2022, just steadily charging higher, about triple since that where the air was pointing. And General Electric, GE, which now isn't just GE, they're not making labels, it's GE Aerospace. And for those of you like me who have been trading a while, you recall Jack Welch was the Jensen Huang of his day, without the leather jacket, and he was the hero of all, like how do we manage like Jack Welch. It basically became a financial engineering fiasco, but they have righted their ship, and they're at lifetime highs now. It has been absolutely explosive move higher. So I'm glad to have nothing to do with it. Other earnings that have come out, Spotify, SPOT, doing exceptionally well, right near lifetime highs on that one. General Motors, not so great. This one's down over 6%. And I'm not in any of these. Those of you who watched me for a while know that I like a certain kind of chart. And this ain't it, nor any of these others you've been looking at. It's lovely they're moving dynamically like this, but it's just, I want something else to work with. And what do I work with? The kind of stuff I usually show you. And now into Cokes and Smokes. One thing's for sure, Americans cannot get enough of sugar, water, and cigarettes. Never believe these. Anytime you hear like some positive trend, like Americans are getting more healthy and they're being more sensible about that, don't believe in it. Embrace negativity. You'll almost always be right. So sucking down the Cokes, the diabetes and smoking and all the rest of it, those will always do well. So Coca-Cola, thriving, nice green day there, lifetime high. So Coke and a smile there. And PM, Philip Morris, lifetime high on that one. So can you hear the snoring? I think you can't. Some of you have written say I don't hear that, but it's not me. And now it's stopped. Thank you. Make a liar out of me. Okay, what else is going on? And how's our time doing? Oh, we're doing just fine. Okay. What else is cooking? Let us look at some other, I was thumbing through my bullpen, the kind of bullish looking charts. And there's some real standouts here that still look just very solid. I don't necessarily like the companies, but I really like the charts. Here's Blackstone, symbol BX, lifetime high, breaking out above this pattern that's been working on for a good 3 years now. It's very clean. Cup, handle, breakout. So that's looking just terrific there. Although take note, you can have this kind of thing go on and it still kind of fails. This was the same shtick. Cup, handle, breakout, and then bleh. So yeah, blehs can happen. Well, what do we do about those? Well, we watch the breakout. If it fails the breakout, then forget it. It's spoiled. And so scoot, get out, scram. HP, right near lifetime highs on this one. And these are long-term, underlying long-term patterns. Oracle, and perhaps this is in sympathy with SAP, I'm not sure, but this is also a strong long-term one. And this is not a great bullish chart, but finally, CrowdStrike is getting a little relief here. And I want to point out, I consider myself relatively well-spoken, fairly articulate, and in the course of the few minutes I've been talking to you, I've probably made 3 or 4 verbal hiccups. And we're human, they happen. And it's not because somebody attacked me because of my hiccups, but I noticed, especially in the politics these days, anybody who makes a little stumble or what might be construed as there's another one, construed as a Freudian slip, it's headline time. It's an innocent error, it doesn't mean anything. So, let he who is not sinned throw the first stone, especially if the sin is a verbal malaprop. That is our sermon for the day. What else is cooking? Well, NVIDIA. I am as bearish on semiconductors as ever. And we've got a nice doji like that on NVIDIA. And I would consider this, we've closed the gap beautifully. And the perfect scenario would be, it's Tim Knight. Let's see, for it to go down. Yeah, that's right, for it to go down. So that's what I'm looking for, because I've got puts on SMH, NVIDIA, Micron. I think that's it. Yeah. And here's SMH, peak of the double, like so. And this one, it's not nearly as clean. And as I said yesterday, strictly speaking, the honest to goodness stop loss is way up there. But I'm going to be a little more conservative and drag it way down there. A while ago, a month or two, all the Bitcoin ETFs came out, and there was much hullabaloo and rejoicing about that. And it didn't mean a thing. I mean, basically was a classic buy the rumor, sell the news. And buy the rumor, sell the news can also be buy the forthcoming news and sell the news. It's all about anticipating an event. And it just goes to the human psychology of what I've written about over and over, the psychology of tomorrow. Won't it be great when? Won't it be great when this new president starts? Or won't it be great when I get married again? Or won't it be great when, you just fill in the blank, when I retire? And again, embrace negativity. No, it's not going to be great. Want to be great, but that's what New Year's is all about. Happy New Year. By January 3rd, it's like, so yeah, want to be great when Ethereum ETFs come out? No, but that's what's been going on, because you've had all this excitement and now it's starting to sink away. And Ethereum itself, here's a peak, lower high, and this is way below the highs we saw back here. So just kind of sinking away, ETFs notwithstanding. as I said, the one corner of the room where I am a steadfast and enthusiastic bull is precious metals for lots of reasons. And GLD had a dreadful Thursday and Friday, but it's kind of picked itself up and dusted itself off, and it's starting to gain some strength here like so. And as I say, I want these to establish a mind of their own. I want gold and silver to think for themselves. Don't tether yourself to what equities are doing. The perfect scenario would be weak stocks, strong precious metals. So that's kind of how I'm positioning myself. So that's gold, and here's silver, SLV. There's the stop, and it's nothing dramatic. Fractional gain, but I'll take it. This is a long-term trade, assuming we don't break those aforementioned stop losses. So in about 32 minutes, we'll start to have some real excitement. We'll start to get some cool earnings coming out. Of course, what to watch for, we've got Alphabet, which is close to lifetime highs, but not quite there. It's dumb guess time. I don't know. I mean, weaker maybe on this. I have no strong feeling. I obviously have no position because this is definitely not the kind of chart that I'm interested in trading. I guess my perma-bearish DNA compels me to say it'll be lower, but I have like almost no feelings about what Alphabet's going to do. Same with Visa. This is symbol V, like so. It's kind of just steady and boring and just kind of hanging out there. I suppose lower on that one as well. Here's Texas Instruments, TXN. Maybe positive on this one. I'd love to see negative because I've got those SMH puts, but this looks, stable. And there's the long-term trend line. It's been steadfastly above that after it leapt above it right here. So, so far I'm thinking like, Alphabet maybe weak, Visa maybe weak, Texas Instruments maybe strong. And finally, and this will probably be the most heavily watched one, Tesla. For personal reasons, I would love to see this one just go moonbound. But my dumb guess is that we'll see some weakness here only because for years now, it's just been lower high after lower high after lower high. Now, strictly speaking, we did beat this former high by a little bitty bit. So to be an honest chartist, which I try to be, the lower highs have kind of stopped. But the trio Fibonacci's there have time and again seemed to have a suppressing force against further price ascendancy. What I will say is that if we get surprised and this thing just jumps, then we'll probably be on our way to 300 or just shy of 300. So no positions in any of these, just to be clear. All right, well, this has been fun. Good luck to you. I know a lot of you are probably on the edge of your seats for this afternoon, so I'll see you tomorrow afterwards. Bye-bye.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with, sadly, the closing bell. Sad enough, this day has to end. I've had so much fun with you today.
Yeah.
I really, I learned so much today. I learned stuff I even forgot today that you taught me. It's amazing.
Just remember, every day is Christmas.
Every day is Christmas. Not Christmas for the E-mini S&Ps. They're up $1.75. NASDAQ is down 24 and change. Your mighty Russell is up 31 on a percentage basis. That's up a little over 1.25%. When everything else is basically unchanged. The Dow up 29. Volatility in by 25 cents. Volatility down almost 2%, 1.5 to 2%. Volatility big move lower on a nothing day. Would you agree?
I would agree that it's a nothing day. I don't think I know they've moved 20 some odd handles. We're at
1 million E-mini S&P.
Yeah, that's
today.
That's the smallest number we've had easily in like.
Smallest number this week. It's only between
No,
days.
I know. But smallest number we've had in probably the last about 7 trading days, I would say. Yeah, it feels like we're dead. Feels like absolutely dead today. And what's weird about that is that I thought after yesterday and after Friday there'd be some, get a few more swings, but we did not see it.
I did. You had some stocks that got taken down a little bit. Adobe down 6. I'm throwing out a couple of these on the top here that I want to trade. Netflix down 4.5, AMAT down 2, Tesla down 3, week all day. You know it has earnings. Google's another one.
Yeah, Spotify up 35, so that was a stock that never really came back much, and UPS never came back at all. Actually, went even lower today. That stock's a pig. So a bad earnings trades. That's all I'm putting up. Mm-hmm. Speaking of earnings, since we're on the topic, and since you have Google and Tesla,
the two.
We did a piece today on a quantitative newsletter called Cherry Picks. And it's Dr. Data and Nikki Batt put this together every week. It comes out once a week. It's free. Goes out to all our customers. A few 100,000 people get Cherry Picks. But this one, Ryan, if you could throw it up on the screen.
6 years of quarterly earnings moves is what you're trying to get to. Yeah.
We showed something like this before, but a little more detail today. And it should be in downloadable form. So you have just tons of, there's all your quarterly earnings info.
From about 2018 to 2024.
Yep. 6 years, everything up there that if you kind of want to see anything in the past. Past performances doesn't mean much with respect.
You see on the screen the green and the red?
Yeah.
Just from a look, how's it look to you? More green, more red, what does it look like? Just a quick glance, like a heat.
Looks a little more greenish.
Yeah, and I think those green moves are actually a lot stronger too. 21%, 24%.
Yeah,
they're. You look at the downside, 16%. Just at the quick little look.
We did a research piece today. Well, actually, not just today, but we've done a research piece yesterday on earnings and took a look at kind of just, how much movement to expect, how much is the expected move and how much do they actually move. And it was a pretty good piece. We did it yesterday. And then today, Vecchio came on this morning and we had this whole discussion about the size of the earning moves so far this year and how the huge percentage that was inside up 3 and down 3%. And it's way bigger on paper than in actuality, the tradable numbers. That's the only reason I talked about Spotify and UPS, because they were both outside the range. We talked about us liking Tesla more than Google because there's a little bit more juice in Tesla. Yeah, scroll down, Ryan, on this one just a sec. So you can see the upcoming earnings calendar, and that data made this downloadable. But then there's all the upcoming earning dates if you care. I'm playing them super small and super conservative this time around. Learned my lesson last quarter.
You admit you're not that good at it, is what you're trying to say?
I'm not very good at it at all. Got slapped and not feeling like I want to get slapped this quarter. So we're going to take it easy. I have a few earnings plays on for tonight.
All right, well, let's talk.
I put them on earlier, so I haven't done anything relative to the close. So let's go Google first.
Google it is. Go ahead. It
So
doesn't matter if you trade Google with the L or just the G, right?
Doesn't matter.
They both have around the same tight markets on the options.
Yeah, Google's a weird stock in the sense that it has two stocks that are virtually the same. Just depends on kind of, class.
One has the dividend, one doesn't, but they're all going to move the same. Goog without the L doesn't have the dividend.
I trade Goog L. I don't know why. I trade Goog L. I don't really have a reason for it. I put a position on prior to today. So I just
August?
Yeah, in August. I just tweaked the strikes. It's a crappy total Johnny position. Like it's not even
Please tell me you don't have the 160 puts on.
160 210.
160 210.
I don't like Google. It's not
$1.32 credit over 24 days. $12 expected move.
It's a trade
195. So you're trying to go 2 times or so more than the expected move. You're playing right field right now. If this was a baseball game and I was the manager, which normally would be the case because I'm the brains of the operation, you'd be way out in right field. And we would go, a little bit further over, Tom. A little bit, yeah. Hug the line in case something comes to the line. So my center fielder, who's really my athlete, could get the ball.
I hate this play more than any play. My fear in Google, okay, if I'm going to be open about my fears.
Because we're always honest. You could be open. No, you're honest. Go ahead.
It's a $12 expected move. I hate the premium levels there. Hate them.
The IV rank is good, right? 79 on the IV rank. You would think that would be high on
if I was to bet on direction, like if you want to put another little bet in here on direction, I would sell 2 puts and 1 call.
2 puts and 1 call would give you long delta. Close all watertight doors, ladies and gentlemen. Close all ooga. We're going down. We're going down.
If I was going to play it and I want to play it directionally, and I don't, but I would be selling 2 puts and 1 call. Instead, I'm just 1-to-1. It's a crappy strangle.
You want me to call home or something? See if
I don't care about it.
$4 for your account to see if you can play it.
Ask her.
A little bit bigger.
Ask my wife if it's okay.
See, I'll ask.
Let's go next slide.
Okay.
And
slide? There's no slide. There's just me and you right now.
Next.
Want to go to the next stock?
Tesla.
You got it.
Yeah. Okay. Little Tesla, because I don't really care about Google. And the reason I don't care about Google is because yesterday's research piece that we did showed that that Google's actually, the implied move in Google is actually less than the last couple of actual moves over the last 4 years. So I'm going to stay away from that because for some reason, the implied move is very heavy price-wise, a little bit richer, and which means that the implied move is greater than the actual move is in Tesla. And
almost 22. Let's just call it 22. 21.90 expected move. We'll call it 22. It was earlier today. It was $23 expected move. I mean, coming in by $1 with a day to go, I don't think that's really contracting volatility.
We actually made some money in Tesla today because the position that I put on yesterday actually came in today. Shockingly, not huge, but about 20 cents.
Okay. Are you going to take your money and run like a thief in the night?
No.
Sure?
I'm not you.
Be prudent.
I'm not you.
Put a winner on.
Okay. I'm not you.
It'll be a first for today.
I am wearing big boy pants. Okay. Tesla, I'm short the 180.
You have a positive P&L today. You don't want to lose that.
Tesla, I'm short the 185 puts.
Tesla, August?
Augie 185 puts.
185 puts? I had to scroll down to get to them.
Tell to the judge. Okay. I'm a little outside 2 times the expected move. That's exactly where I want to be.
That's way outside the 2 times the expected move.
I am short.
It's a $247 stock. You're the 185 puts.
What's the expected move in August?
Oh, in August. I was going for the expected move for, $30, $60 would be the
$60 is the $60 is 2 times the expected move. 240.
Doing 2 times the expected.
Excuse me, let me do the math.
Tonight.
247 minus 60 takes you down to the 185 puts.
Got it.
On the call side, stock, like I said, it's 247. If you add, now remember, there's a lot of call skew in Tesla.
A guy like you with a lot of call skew, 350.
350. but that's before.
Am I right?
Yeah, but that's before the stock dropped today.
I win $4. I win a Cupid doll. Beautiful.
So
unbelievable. So you got the 350, 185, and you're an ex-market maker, right? At one time you were like a
big shooter.
You were the man, right? You were the they, right?
Yeah.
Wow.
So I'm gonna add some 350 calls to this.
So you're gonna go more like 2 calls, 1 put?
Yeah.
Google's going down. Tesla's going up. Just remember I said that.
No, I said the other way around.
I know you did. That's why I said, just remember what I said.
Wow, look at this. S&P's down 9, S&P's down 9, NASDAQ down 70. That's good for the good kids.
And the Russell up 25.
That's good for the good kids. Yeah, I'm going to sell some more, lay out a couple more calls in Google. In Tesla. There's nothing about Tesla that I love, but nothing about this company that I love. And Elon's pissed me off. So this is a little bit of a spite trade.
And how well do you normally do on spite trades?
Not too well.
So you know it going in, right? So you have expectations. You set expectations.
Spite trades have not been good in my life. Most of my spite trades have not paid off.
Okay.
But I feel like I talked about it, so I got to get there.
Do you do it because of pride? Why do you do it?
Yeah, pride.
Okay.
I'm almost at a full spite number. All right, done. So
beautiful.
I'm 2 to 1.
Now that I heard that, can I give you a couple more from my friend Peter, who sends me all the earnings trades? I really appreciate it.
Sure.
ENPH, do you care?
Oh yeah, that has earnings today. You didn't tell me that before. ENPH, because I have a position on in there. I did not know. Stocks.
Thank the viewers, especially Peter, for letting you know.
Can I tell you, this is one of the hardest stocks in the world to trade.
It doesn't look like it goes anywhere. You sell it when it goes to 130, you buy it when it goes to 95.
Oh my!
Seems easy breezy. It's just a big channel here. Anybody could basically see that. You have a hard time seeing that?
Yes, I have a hard time making money in this stock. Extremely hard. We're up a little money in it today, but
what do you have on right now?
I have the 105, 107 strangle.
105, 107. Oh, so you're short the at the money put and just out of the money call, but basically delta neutral because of call skew.
Yes.
If I know you, a guy like you, you're probably gonna buy this.
Give me the other stocks. Yeah, we're gonna just widen the strikes because I didn't know they had.
You're gonna widen the strikes. A guy like you probably gonna go down to what? The 80s and up to the 140s.
Something just like that. Now, give me.
If I had to guess, did I get the strikes right?
Pretty close.
Oh my God, I could be Tom Sadloff. I just have to think like a Johnny.
No,
have to think like a Johnny.
No, you couldn't.
That's awesome. That's great.
Give me the other stocks.
And you'll notice it basically has no delta again.
Yeah, give me the other stocks.
It's great. And you got, that's good. You got about $1.60 worth of premium.
Other stocks.
I don't even wake up for $1.60 in premium.
I know you don't. No other stocks.
Visa?
No.
Texas Instruments, TXN?
I do not have a position in there.
TMO.
What is TMO?
I don't know. That's why I said the symbol.
TMO. I don't have a
Thermo.
No.
Are you sure?
No, 1.5 million shares is not worth trading.
General Dynamics, and BSX. Don't know what that is either.
PSX. Boston Scientific. Again, that would have at least a little more volume, but I'm going to pass.
Okie dokie.
So it turns out we have ENPH, Google, and Tesla. That's enough for me.
This BSX doesn't have a downtick.
No, I know. Boston Scientific, isn't it the robotic company?
Afraid of that. I don't blame you.
Yeah, I think it's robotics. I'm not sure. All right. Other stocks that we came around in. So let me ask you a question. I had a little bit of a disaster going on in CrowdStrike, and we salvaged it. We are now winner chicken dinner. Stock's up $5 today.
Had a good range today in crowd, down to 258, up to 277. It opened here at 269, and it's sitting right here at 269.
Do you keep the dream alive?
I think you have to, but I don't know why, but I want to lean long delta in crowd.
Do you keep the dream alive, or do you
close it and lick your wounds and go home like the Giants?
Oh, I don't lick my wounds.
Well, I mean, get back to even. For you,
no,
that's a victory. I forgot who I was talking to.
No, we're up money.
Oh, you're up money?
Oh, yeah.
Like lunch money?
No.
Oh, like dinner money?
No, like Michelin star money.
Like Michelin star money? We were eating foam? I love it. Yum.
I'm going to roll the calls down and neutralize the position and keep it on.
Okay.
Tiny...
You're going to roll down the calls.
Roll down the calls.
You have a little long delta right now.
Tiny little bit of long delta.
Okay, let's just paint the picture here. We're contrarians, right? Remember who we are. Do you remember who we are? Do you remember what team we play for? Do you remember what team you play for? Make like it's not Saturday night, like it's Monday through Friday. Monday through Friday, you're a contrarian, right?
Yeah.
Okay, beautiful. Stock's gone from 380 to 270.
Yeah.
You're not going to lean with a little bit of long delta, a little tiny bit.
I'm short a $5 put and a $4 call. Is that long delta?
Probably not with the call skew, if I had to guess.
No, if it was call skew, it'd be the other way around. But
you'd be able to go further out of the money for the same delta.
I'm long, short a $5 put and a $4
in August?
Call. Yeah. It's about flat.
Okay, $5 put got a 20 delta.
Yeah.
And the $4 call has a 21. Okay,
It's flat. My deltas are flat.
Your delta's flat?
I'll leave it on for tomorrow. All right, let's see what else you got. Come on, give it to me. What else?
To be technically correct here was 0.58 delta, which makes you a little bit short.
Let's see what else do we have here to scroll into the close. We got a little bit long crude oil today because a couple people have emailed me. Not a big deal. Just
crude oil off of its lows though. It traded down to 76.40.
I know. It's the only commodity that we actually added to a position.
$1 off of its lows. That should have worked out okay for you.
Scratch.
Your entry couldn't have been that horrible.
Scratch.
Okay.
Scratch.
All right.
Okay. Anything you do here into the close for tomorrow?
For the market,
how do you play the broad market with all these earnings coming out today?
Oh, I don't think you do an overnight SPX trade. I wouldn't.
I would not do an overnight SPX trade. Not at all.
Okay, so I think you abstain just because you got Tesla and Google. Although, what do you think the move is on? Are they going to be inside the expected move? I mean, you're playing for them to be inside the expected move, but you're so far out of the money that if we went a little bit over the expected move, you probably would still make money. But I'm asking you, do you think it's going to be inside the expected move?
I'm playing Tesla inside the expected move. I'm playing Google inside the expected move. I think Google's higher, Tesla's lower.
I think you're right. Volatility down 25 cents today, 14.85. Not really showing you anything that they're worried about this earnings. The market's not for sure. I tend to agree with you.
Yep.
Oh my God, we're in horrible trouble now.
We're dead.
We're dead.
Let's see. We got.
Hey, can we do one public service announcements before we do anything else? Yeah. What's your assumption?
tastylive.com/assumption. tastylive.com/assumption. Send us your assumptions for tomorrow. We'll do them at 8:40 tomorrow morning. We don't need your full trade ideas. We just need your name and where you're from. And
Social security number would be good too if you want to throw that.
Go to tastylive.com/assumption. Give us your trade assumptions, and we will post them for you tomorrow morning and make a trade around your assumption. Also, while you're on that site, tastylive.com/events, and you can still sign up for Toronto this Saturday. We have a little bit of space left this Saturday in Toronto at the Civic Opera House, 10 a.m. So tastylive.com/assumption for assumptions for tomorrow. tastylive/events for the show on Saturday.
What are you going to bring me back? Are you coming home on Saturday or Sunday?
I'm going to bring you back some poutine.
No, I don't want poutine. That's too messy to travel. I almost said a bad word. I would like a bagel from Toronto. Can you do that for me?
What? In actuality, you want a Montreal bagel. Probably
You're
not.
going to be in Toronto.
I know. That's why I'm
I
saying.
don't want you to do all that traveling.
You don't.
Just bring me a Toronto bagel.
Okay. There are no such thing as Toronto bagels.
Oh, so all of Toronto, they don't have bagels?
They have bagels. They're the same.
I would like a Toronto bagel.
They're the same as Midwestern bagels. If you want a Montreal bagel, you got to go.
Oh, you had to say it like you wanted to. Like you say it like you're all up.
I'll tell you what I'm going to do for you. So one of our clients is a baker, and he comes to every show, and he brings me.
Yes. I've met him.
Jean-Luc.
Yes, he's a wonderful gentleman.
Great.
Yes.
Great guy. Brings me stuff every time.
Yes.
I don't want to put him on the spot here in case he's listening.
Yes.
But he brings stuff, and only his stuff.
Right.
If he brings me croissants, I'll bring them back to you. Whatever doesn't get eaten by Saturday night.
I'm looking at you. I got my eye on you. Don't disappoint.
Because his stuff is great.
His stuff is great. Very good. Yes. I've met him. Did you say you were going to bring me back something because I've been such a good subordinate biatch or something like that? Is that what you want?
No, I said they're going to bring you back something because you're annoying. All right. Well, we're not going to stay on. Let's just see here for a second. I'm going to see if there's anything else I want to talk about before we flip over to these guys. Don't think. Not really. Anything else jump off your screen at you? Coin being down $7 today is, I think, under what it should be down, given the fact that Bitcoin dropped, almost 2,700 on the.
Yeah, it's under 66,000 now. We were quoted around 66,700. It's 65,800. It's dropped about 1,000, as you said.
Which is weird on the day that the ETH ETFs came out.
Right.
And I don't even know the symbol.
Ethereum ETFs?
Oh, here. Peter just wrote me, I'll bring you guys bagels from Montreal. See, now that's a good dude because Montreal bagels are actually really good. So
you don't have to do
Peter,
that.
you don't have to do it because he doesn't need any more bagels.
ETHE is one of the ETFs, but I hear it's the one that has some of the highest fees, almost 2.5%. I don't know why you would want to.
ETFE?
ETHE.
Well, E2HE.
I think that's the grayscale one with some of the highest fees, and people are moving out of that to go to ones that have lower fees like FETH and ETHA, just to name a few.
Down
I don't know why you would want to do that when you could just buy the Ethereum Cash.
I'm not sure either, but for sometimes like you can't hold it in certain accounts.
I got it.
And the other thing is,
then it makes sense. Yeah.
I think you can short this, right?
It doesn't say it's hard to borrow or anything like that.
It doesn't say it's hard to borrow. So I think that's the other thing, you can short it. Look at these little spoo doggies here on the close, down 15, down 87 on the other side. You think they leaked
$10 off of their lows for the whole session overnight included.
You think they leaked Google or Tesla? Something weird. Anyway, this is a good thing. Maybe I'll cover.
Maybe they know that the bat did IWM call ratio spread. That's right, Sadnov. Short delta and IWM right near the top. That's right, Sadnov. About 15 handles ago.
Well, I'm going to cover some short futures that I've had on all day, just because.
A future's bigger than my ratio spread? Oh, so you had to prove that you're a big shot. Yeah, that's really condescending, but whatever.
Covered a couple of futures down here, down 14, which is nice. All right, let's bring in the boys.
Okay, let's do it. Who do we got? I think we got special guests, Thomas, Chris, and Anton. How are you, gentlemen?
Thriving.
Hungry.
How you doing?
Thriving? Did somebody say hungry?
Anton said hungry.
Figured
that was Chris, actually.
Oh, Chris said hungry. Oh, because we usually get you as the hungry one, Anton.
Thomas, what's your adjective?
What's that?
What's your adjective? Are you hungry? Or
I'm thriving. I guess I'm hungry. Lunch was pretty good today, so.
Okay.
I'm a big fan of Velvet Taco. Can I just go on record?
Good.
It's
The
better.
brisket?
You downplayed it. It's really pretty good.
The brisket is fire.
Yeah.
It's good stuff.
Yeah. I like
Now,
the
why
chicken
would you
tinga
tell
taco.
Tony that you can
It's
give him the
delicious.
leftovers?
Anton, we didn't save you anything, man. It's all gone. Sorry, dude.
I saved
Why
you
would you
something,
tell Tony you're
Anton.
going to
All
bring
right, well,
in my
I kind of
bagel?
like.
Oh, see, Anton wants his bagels. He'll be in tomorrow, he said.
Oh, Anton, no bagels on Saturday in Toronto, so you're in luck.
I know you said you're going to bring Tony back the leftovers, but you're not going to bring him back anything.
No, of course we're not. Whatever you get first crack, and whatever you don't want, you can even cut them in half, and then we'll give the leftovers to Tony.
Hollow it out. Hollow one of them out and bring it in.
Hey, Anton. So anyway, we only got a couple seconds here. Chris, I'll fire it off to you first. They just dropped them about 20 handles in the S&Ps and almost let's call it 60 handles in the Nasdaq. You think they leaked? You think they leaked the numbers, or is it just weak hands puking out, day traders puking out?
Weak stock dive. Sorry, Anton, don't want to interrupt you. Go ahead.
I have to. Sorry, I'm going to let you go, Chris. I just have to ask Tom one question. What do you think our earnings is going to be?
What did he say?
He wants to know what you think earnings are going to be in Google.
What do you think the earnings are going to be?
I think I was playing it Google up, Tesla down.
Okay, Chris, you know exactly what to do now. Go ahead.
Go ahead, Chris.
These are the weak little paper hands that are getting out of the market out of the way. Obviously, earnings can go one way or the other here, but this is really a technical purgatory for the market, right? We're still holding the uptrend from the April and June swing lows in the S&P, but we really haven't gotten back above the 1 week moving average yet, and we tried to today but failed. This is not great price action on either end, so I think more patience is required here if you're a short-term directional trader.
All right, that's a good answer, but it wasn't my question. Anton, what do you want to say?
Never answer the question you're asked, Tom. Answer the question that you want to.
What did you ask me?
Got that, counselor.
Paper?
What?
What did you ask me, Tom? What did you ask me?
No, nothing. I'll go to Thomas because he's here. I think this is a sell-off of their pre-earnings. People getting, either little leakage in the number or just, weak hands.
If there's a leak, I want to hear about it, but like weak hands. So
yeah. I think it's
making all to do about it.
I think it's just day traders getting hey, I'm flattening out. I will say I didn't buy in that rally yesterday. I thought it was a hook. So, all right, Anton, quickly, what do you got?
I mean, it's two-sided action. How am I the one convincing you that thinks everything's random, that this is just
You're not convincing me at all. I'm just trying to give you a chance to say your piece.
How could this be anything but just two-sided action that's coming after a low of volatility? This is what happens. Volatility goes up. We tend to have sell-offs into the close, rallies midday, these random, 10-point moves either way. This is normal. It happens all the time.
Chris, up or down in Tesla?
Down.
I'm with you there. Up or down in Google?
Up.
Oh my God, we're on the same side. We're dead. We're dead, Niedermeyer.
Oh. Hold on, I have to close my puts. Sorry,
I gotta go make some.
Hurry, guys! You only got 4 more seconds. Hurry! They don't give you any more time.
Yeah, the bell's about.
You're dead. There's the bell.
Oh my
now
God.
your bet is made. Sadnov, the futures just rallied 4 handles. Do you think it's strong hands buying them?
No, but I guess we got a good price. Hey, just playing the game. Just playing the game, boys. Well, looks like you guys have a full squad today, so we get to hang out and listen to you. Any last words? Any of you? Thomas? Chris?
Yeah. Maybe.
How is it that the first week that the market's actually down and getting teetering, where's Spivak and Radigan?
Oh, yeah. I don't know, but yeah, where are those guys?
Something called personal time off. I don't know, Tom. That seems unprofessional.
Totally unprofessional. Yeah.
Never heard of it.
Totally unprofessional. Anton, go ahead. You want to say something?
I was just going to say, if I can be excused for the pitch, I have another engagement.
Yes, you can, Anton. Yes, you can.
You're excused. You're excused. All right. Goodbye, guys. Have a
Thank you, guys. We're going to take a quick 90-second break and come back. We got more Tasty Live with Overtime with these 3 gentlemen right after this. Peace.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
If you have any questions, feel free to toss them in the chat.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
If you have any questions, feel free to toss them in the chat.
Google earnings are out and they're okay. It's Tuesday. It's still July 23rd, 2024. This is Overtime. I'm your host, Chris Vecchio, and where are my usual compadres? Not here. The Bears have been scared away. We have Permaball Anton Kulikov and my fellow strap hanger on the bull ride, Thomas Westwater. Maybe things are different coming out of today. Stocks do their usual rigmarole, at least what's been recent bias, which has been for a higher Russell and weaker or sideways NASDAQ and S&P. Bonds slightly higher across the curve, although they do come in a little bit by the end of the session. Yields bump up. Gold, silver rebound and holding key levels. We go to energy markets where oil declined to the exact head and shoulders target of 76.40 and bounced. So maybe that bear run is over. In the world of FX, the yen continues to strengthen, much to my own personal dismay now that I'm no longer long. Alas, that's my own problem. As we turn to the charts on this Tuesday, we see that the S&P 500 down by 0.12%, 56.04 here. We technically closed at 55.99 at 4 p.m. Eastern, 3 Central. Google earnings providing a little bit of a bounce. Same for the NASDAQ, which is now down by only 0.08% of the session. Your Russell is the leader, up by 1.18% today, and a trade that continues to run. What was a pretty steep pullback at points last week has ultimately been cleared out in reverse. So, Thomas, let's just start with you here on this Tuesday. A fairly unremarkable day as we gear up into these earnings reports. Google out here at the top of the hour. What was initially a decline, we are now trading back a bit higher. Let's go to that 5-minute chart to take a look at this price action. Is this good enough for the bulls, right? Is this another earnings season, going to you, that all we need is companies not to miss and take the air out of the AI bubble?
Yeah, I mean, we're below our key EMAs and stuff on the daily. It's not quite where I want to be for getting along just quite yet. Google, it's up a bit, still under its expected move by a good amount though. So I'm not sure how much upside is going to carry over into tomorrow. I'm not sure. I think Tesla numbers just hit. I'm not sure where that stock price is at. As we move into next week, we're going to get more of the big tech names. So I think next week we could see a bit more upside if we get good numbers. Through the rest of the week, I'm not too keen on taking a long position just yet. Would like us to technically get at some better levels for NQ above 20, preferably 2100. I'd like to see before taking a stab at the long side. So I think I'm going to continue to wait and see how these numbers play out, earnings and rest of things into next week.
Anton, before I go to you about today's market action, let's just talk about the numbers that are coming across the screen here. Google did beat earnings expectations, 189 a share versus 184 a share expected. Revenues, 84.74 billion versus 84.19 billion expected. Those are the good top line numbers. Here for Tesla, the EPS misses 52 cents versus 62 cents expected. The revenue was 25.5 billion versus 24.77 billion anticipated. Anton, for so long this year, Tesla has been part of the terrible two. It's been one of the stocks that has struggled alongside Apple. Only recently did it regain its stature, perhaps, as a member of the the Magnificent Seven. Do you think this earnings report ends that trade here? Should we be more concerned about Tesla moving forward? And if so, is this a problem for the broader NASDAQ if one of the recent contributors to the run-up higher is now flailing and flagging to the downside?
Well, I think the biggest key to look at, and I know this sometimes I sound like a broken record, but it does give you the most predictive power in terms of how much price action to see, and that's volatility. And right now, quite frankly, we are just coming off of a week, last week, where volatility did spike quite significantly. I mean, not to the tune like we saw in 2022 or even earlier than that, but it was significant because it was such a it was a long period of very low volatility for a while, right? And when that happens, even though volatility doesn't spike that much on a nominal basis, it does tend to shake some stuff in the market, namely the lack of two-sided action that we see, right? And the reason that's important is because if you're going to be trading something like earnings, it is very possible to see maybe an initial swing lower, and then later in the day or later in the week, you get kind of a reversal higher, and the market goes with it. And it's just kind of like this all over the kind of more frothy markets from the standpoint of you're not getting a lot of like raw volatility, because obviously as the S&P went up yesterday, volatility came back down a little bit, but you're getting that two-sided action. And, if you remember back in the beginning of July, even in the last, first 2 weeks of July was the best example. You didn't really have that much two-sided action. You had, like a lot of green days. Obviously, you had some days where you had a couple red days, but by and large, it was a very much a kind of cruise control type of market. Where now in the last week especially, you're seeing a lot more ebbs and flows, and I think that's not so much as an effect, or the earnings aren't really going to change that. They're more so going to play into it, right? So instead of having and again, that doesn't mean you should change up your strategy. It just means you should expect more price fluctuation compared to what you did a couple weeks ago. I don't really think there's much of a reason to think that, oh my gosh, this is the beginning of some kind of, or this is the precipice of a continuation decline or whatever. I just think it's more two-sided action. Whether we go higher or lower from here, I don't think we can say that confidently yet.
I don't think we can say that confidently either. And that's more or less where I end up when I look at the charts here for today. The Futures Power Hour episode title was Technical Purgatory for this market. And it very much feels like that's where we are. I say that because of how this market has behaved in recent months from a technical perspective. Of course, if you go back to the lows in October 23, since then, pullbacks into that 2134 EMA cloud have produced a viable buying opportunity on multiple occasions. We saw this back here at the start of the year, the bounce that we had in early April, ultimately a snag before breaking lower. But other pullbacks like we had here in June have worked out. So at least 3 of the 4 most recent occasions have produced some sort of a bounce, some support region, because typically we haven't dug that deep into the trend. We've been staying above the 5 and the 21 for the most part. Having now come back into that 2134 cloud, having run into the uptrend off of the April and late May swing lows, that's where we found our support on Friday last week. And I think that's really important because it shows that bulls still have something left. But why do I find this to be the technical purgatory? Last week, we established a swing low after CPI at 56.21 and a quarter. Today, we hit a high of 56.29 and 3/4. We tried to get back above the post-CPI swing low, and instead we were rejected. Likewise, we tried to get a close back above the 1-week moving average today. Something that since we closed below there on the 17th of July, we really haven't been able to get back above. Granted, it's only been 4 days. But the point is that this is a market where bulls have had a chance now to base and give us something a little bit more to work with. And it's not quite coming together just yet. So directionally, do you feel great as a bear right now? Probably not until you're below 55.50. Maybe a little bit deeper than that. Break the uptrend over the last 2+ months. Break the 34 EMA. Now we're cooking. But if you don't do that, you may be selling into support. And likewise, we just have an instance where former support in the last few weeks has just showed up as resistance. So bulls, not quite confident just yet. Bears, not quite confident just yet. There's still some wood to chop here. Thomas, you mentioned that you're not really comfortable taking a directional stab one way or the other in this market right now. I think that's the right read here in the very short term. This week, are you looking forward to anything at all, this Fed Communications blackout week, Thomas, to provide a catalyst perhaps to help shake the S&P out of this, we'll call it 56.30 to 55.50 trading range?
PMI is a little bit. I think the first read on GDP comes out Thursday for Q2.
Yes.
I think that could probably be, in terms of economic events for this week, that might be it. So that's what I'll be watching Thursday. Jobless claims again. I think you got to keep your eye on that as well.
Anton, 29% of the S&P 500's market cap is reporting this week. Should we care more about earnings this week or the Fed meeting next week?
I think that's it's kind of hard to say because it's rare that we get a single event that changes the course of the market trajectory speaking. Like it's very rare to have this, one set of earnings announcements or one Fed announcement to, set the market, one way or another. I do think next week we're going to get more of a clear picture, but that's kind of a tautological statement, right? Because of course, the more information you have, the more informed of a decision you can make, especially when there's a lot of uncertainty this week because of the fact that there's information coming, right? So I think the better question is, what's my strategy going into this week? right? What's my strategy, not just from a way to make money, but what's my strategy from the standpoint of, okay, I'm going to hold this position because I know there's volatility right now. And then after this clears, there's probably going to be less volatility. So I'm going to be able to adjust. And personally, from experience, I think some of the best things to do right now, even if you don't want to get long or short, take some positions in some kind of neutral directionally neutral short-term trades, kind of like these iron condors for a weekly basis, on a weekly cycle for the S&P 500. The reason I say that is because and again, this is just speaking empirically from my personal experience. So this is no trade recommendation. This is this isn't. We do actually have some studies based on this, but what I'm about to say is purely, I get this mostly from my experience. It's very easy to sell premium on a short-term time frame when there's so much stuff happening this week, and it tends to be that more often than not, you're going to see a market that doesn't move much at all compared to what's expected. And in fact, we're seeing that play out partially right now. Okay, we just had Google and Tesla earnings. Okay, right now I'm looking at tomorrow's expected move, which was about 35 points, just like before the close. Okay, it's dropped to 29 points, which is about 15-20% in a matter of 25 minutes, because, and again, you're looking at Google earnings. Google's unchanged right now. Tesla's down, $10, but the effect it had in the S&P and the NASDAQ isn't as much as was expected. That's why the expected moves are dropping. So again, this tends to be the norm. Now, could there be a blowout announcement? Absolutely. But if you're going to play the game statistically, right, and you don't want to get long or short necessarily, the next best thing, play the range as it's given. Play the higher volatility opportunities as they're given, and stop worrying about the actual, oh my gosh, is this going to be the event that moves the market one way, or is that going to be the event that moves the market forward? All we know is volatility is higher. So let's first get through this week, and we don't have to get long or short, but let's take some opportunities on the table. And then next week, after all this stuff passes, then we'll look at the market and say, okay, do I want to continue longer term with a neutral or long or short position? So I think you just got to take it one day at a time and take the opportunities in front of you, as opposed to trying to figure out what direction the market's going to go after the fact.
Anton, you mentioned tomorrow's move was expected to be under 30 points. It's now basically 28.5. We can see here in the right column when you go to the trade tab and head over to the table on top column, top row there, excuse me. When you look to the right-hand side, we see one day to expiration, 28.75 points priced right now. That's what you're referring to. Anton, you mentioned a weekly potential, looking through the end of the week for the market to stay range bound, perhaps. I think that's a viable way to consider looking at this recent price action, insofar as recently this area between 56.20 and 55.50 has been producing a little bit of congestion. Again, former swing lows post CPI and the uptrend off of the April and May swing lows, this green line here. So this is a bit of a congestion box right now. If we were to think about what a condor would look like, bracketed around those levels, going a little bit north of the resistance, giving you some space to get out of the position in case a breakout starts to accumulate. And it looked like it was going to do that earlier today. As both of you know, because I sent you both the same hourly chart around 10:19 this morning and basically top tick the market. But 56.50 selling.
I noticed that, by the way. You thought I didn't notice that. I did notice that.
No, you are the person to notice that, because you are the one person who is better at top ticking and bottom ticking the market than anyone. And I don't mean that in a bad way, Anton. There are some days you're like, this is the low for the day, and literally it's the exact low for the day. And then there are other days where it is the exact high for the day. And so you're either completely right or completely wrong when you ever make the call. We never settle at the same. So I appreciate that, because it's like, oh, nice, this is going to be a 2% mover today. I just don't know we just don't know which way it's going to be. I was that person today. But if you sell the guts of 56.50 call and 55.25 put, that basically gives you the trading range that you were looking at here, and going out another $25 for the wings gives you a 65% probability of profit on a 3 days to expiration iron condor. And you're risking just under 3 to make 1. Which at 65% probability of profit in an environment with a 25/6 IVR, like that's not the worst thing in the world. We can make that work. But I think that's how we should be approaching this for the next few days. If you want to be bullish, let's see 56.20 and above in ES. And if you really want to be bearish directionally, wait for 55.50 or below. Until then, it's just going to be a grind fest, a chop house. And the earnings themselves may actually contribute to more of this choppiness and sideways action, guys. I was looking at the stats for all earnings releases for all companies, not just in the S&P 500 this quarter. Thus far right now, 200 through 4 p.m. Eastern today, prior to the Google and Tesla results coming out and everything thereafter. So up until 4 p.m. Eastern today, 280 companies had reported earnings for the second quarter. 54% had earnings stock moves with positive returns, while 45% had negative returns. The average return for a company was 0.5% to the upside, with now an even 52% of companies seeing their stock price change between -3% and +3%. If the average stock in this market is effectively pinned, and this is a week where we're going to have the bulk of the S&P 500 earnings releases, 29% of the entire market cap weighted index this week alone, the highest density for this earnings season in particular, we may have reasons to think we're just going to say stuck in the mud. So, Anton, there's two ways to approach this. Shorter term, I think the condor works, but I want to go back to a long-standing conversation that you and I have been having for this year, which is to say, what is the appropriate tool to take out of the toolkit? VIX is back under 15. As your data has shown, we shared this not only in a research special a few months ago, but we brought it onto the Futures Power Hour as well, where when the VIX is below 15, historically, the directional move for the S&P 500 is going to be up more than 60% of the time on those occasions. If we find ourselves with the VIX under 15, right, and the S&P 500 is getting back above its post-CPI swing low of 56.21 and a quarter, I think we got to go back to that first quarter toolkit. We have to go back to the long at the money call spreads. The glove fits. It may not look like it, but that's been the prudent environment to put that kind of trade on. And vice versa, if we get below 55.50, this then becomes the environment where being long at the money put spreads perhaps becomes viable because the VIX is likely going to be north of 15. And oh, by the way, we're heading into the seasonal part of the calendar, August, September, beginning of October, where over the past 10 and 20 years, volatility has, for whatever reason, tended to ramp up. This year, seasonally, volatility has tracked that path fairly well. And so if this is a normal year, one would think that we're going to have a little bit of pain ahead. So I have my game plan on both sides, guys. I don't know what you guys are going to do. This week, I'm looking for chop. If we're above 56.20, I'll get long, so long as VIX is below 15. If we're below 55.50 and VIX starts to go above 15, I'll put on those at the money put spreads and look for a deeper decline across the board as we make our way to the vacation time, which has been, Anton, I've been very, is this the last hurrah for bulls? Would I put on the call spreads on August 1st? I don't know. But we have to not think about those things. We have to just apply the remedy that the market calls for. And your studies have proved that this is the best strategy to apply when you have those conditions in place.
Yeah, and we talked about this last Friday, and I said this intentionally because it was such an important point to make at that time. Right? On Friday, I said, after today, this is basically where you turn the corner and see, is this basically the beginning of more, or is this going to be just a dip that we had quite occasionally, even in this bull market since November? And right now, I can't really say that a different playbook than the one we've been using is applicable. Because again, like you said, volatility is below. Like, here's the thing. If we had another down day yesterday, volatility would have expanded significantly more. You would have basically had a VIX that went from, what was the high on Friday? It was like 16 or 17, something like that. You would have had that go probably 19 or 20.
Oh, easy.
Yeah, so 17.19, or you probably have had to go to 20, right? 4 down days in a row, because each consecutive down day adds another level of rarity and fear exponentially more than the last one. So it's kind of like a snowball effect.
Before you go on, just dig into that a little bit deeper. You mentioned this on Friday. Maybe it was missed over and hasn't been mentioned elsewhere. 3 down days in a row for the S&P 500 is a rarity, right?
Yeah. Well, 3 1% down days in a row,
right?
Like we saw was it Wednesday, Thursday, Friday? That was a rarity. Okay. And every single consecutive down that you have, because the market is naturally long, it's opposite of gold, opposite of oil. You tend to have exponentially more fear. So like if, let's say 1 unit of fear is added after 1 down day, 3 units are added after 2, and 7 are added after 3, and then you can see how that starts to compile. It's more and more and more. But again, the fact that we didn't have a 4th, it almost like takes whatever you had and melts it almost back to 0. Even though you had those 3 down days, any reduction in volatility, it happens a lot quicker, a lot more significantly, unless you have a continuation. So my point was on Friday is that, okay, just listen, I know it's rare, but again, we've seen this throughout the bull market, and again, we have seen so many times where right after, for no rhyme or reason, there's always a reason after the fact, right? Because it's easy to do that. But for no rhyme or reason in the moment, the market just turns around and reverses. And on Monday, that's exactly what happened. So again, now that volatility is back close to 15, you have to ask yourself the question, okay, I know that there was some quote-unquote technical damage done Friday, Wednesday, Thursday. But given VIX is at 15, given that this is still essentially a bull market, do we change our direction just because there was some fear added into the market? And I don't think you can say so. For the same reasons we couldn't continue staying short the last few, sell-offs. I mean, even in April, at the end of April, I was saying, hey, Chris, listen, I mean, I don't know exactly what I said, but I think I was being more optimistic than you were. I think. Not sure.
I got long the S&P on April 18th at 11:30 p.m.
Good for you. Well,
just say I caught the day of the low. I'm just saying that low buy off 40 points. That's pretty good being a bull. Okay. Pretty good bullish behavior.
Okay. Oh my gosh, you're the best. You're the best trader ever. Fine.
No.
Than me, and
I'm smoother brain than you, right? Like the line goes up, so I'm gonna keep trading it up.
one word in one sentence. Don't throw the baby out with the bathwater. You could have some short time periods where you have some short premium trades that are conducive to this. But next week after, if you have volatility drop, don't try to, top the market again or top tick the market. Save that for Chris. Only he can do that.
Thomas, I'm waiting to see if we have price action akin to what happened the last time. We go back to that daily chart real quick just to exemplify why I'm pointing out this area. We had that pullback into the 2134 EMA envelope, and that produced the low, and eventually we started trading higher out of there. It took a few days to get some of that momentum rebuilt. But what do we see here? We have a big swing low on May 23rd, and once we really establish ourselves back through there, yes, we did trade sideways for a few more days, but once we established ourselves back through there, the market was able to find its footing and start rallying again. That's why this 5620 is so important to me. Let's get back above there. We don't need to make progress. Just hang out between like 5620 and 5650 for a few sessions, and then we can start going once more. So Anton, I think we have a pretty easy. This is the great thing about the horizontal levels. If X, then Y. If above 5620, bullish. If below 5550, then bearish. If in between, then directionally agnostic. Anton, the Nasdaq's a little bit of a different beast because it has seen a bit of a more concerted pullback here. Currently trading at 19,960 here after hours following the Google and Tesla results. This feels more tenuous. How would you be playing this particular NASDAQ compared to an S&P, given the difference in volatility readings? 20s, low 20s IVR in the S&P, whereas you have a 48.7 here in NQ. Do you opt for put spreads if you want to express the bullish view instead of call spreads?
Yeah, I think you do. I mean, it's similar to what we were doing with the Russell. Russell volatility was high. We were still bullish the S&P. Therefore, we kind of, at least in my opinion, I know you were less bullish, but I was under the conviction equity indexes go up together. Yes, the correlation wasn't as strong as something like NASDAQ and the S&P, but still an equity index. So if you're going to go bullish the S&P, I was going to go bullish the Russell, but through a different vehicle. And with the NASDAQ right now being where it's at, I think it's starting to act kind of like a Russell. How the Russell was acting back in 22 and 23. You start to look at it, and well, for the first half of 24, realistically, you start to look at the NASDAQ as the short put spread candidate if you're going to go along with long call spreads in the S&P. And I don't think you overcomplicate. I don't think you complicate it more than that. I think, again, volatility is where it is. So you use the tools in the toolbox. And again, the only thing I will say, and this may differ with some other people, I don't like to do pairs trades with equities, except in like extreme circumstances, like the Nasdaq and the Russell. That was the clear. But with the S&P and the Nasdaq, the correlation is so high. I'm not going to go short the Nasdaq because there is a technical difference between the Nasdaq and like in terms of the charts, technical difference in the chart and the Nasdaq and the S&P, where the Nasdaq may seem more bearish. I'm not going to go short the Nasdaq and long the S&P. That's just not something I do personally. So if I go long one, I go long both. But the difference is the strategy and the tool you use to go long, right? And that's mainly determined by the volatility.
Thomas, this has been a fascinating pullback in the Nasdaq. Maybe it's a bearish rising wedge. This is the deepest we've seen the market oversold by stochastics going back to the lows that were carved out in April. So again, we talk about a market that like needs to find its footing. This would be a really good place to do so if you're a bull. Otherwise, a drop to fresh monthly lows would be a change in behavior inconsistent with the rebounds that we've seen previously. Do you think going into next week, Thomas, that the Fed is perhaps the reason why the market could continue to go down, that they may signal not just an openness to cutting in September, but an openness to cutting in September for all the wrong reasons?
I mean, yeah, the Fed could, of course, change the sentiment in the market. I kind of think a lot of this is about politics too. The decline right here, the threat of more protectionist policies against China retaliating with, their own tariffs or whatever trade actions they want to use. I think we'll shake out of that, though, over the coming weeks. It's going to be interesting if the Fed changes its tone at all, given the changes we've seen in the political landscape. I don't think they would explicitly signal any changes in their intentions or anything like that. But that said, I think listening for maybe subtle cues or changes in any of their policy stances or what they're saying, maybe we get something to go off of on that front. That said, like I said earlier, I'm not exactly a buyer right here, especially in the Nasdaq, but I think it's easy to explain why we've seen the bigger pullback there. When the market's been going up, tech has been leading, especially in the Magnificent Seven or whatever you want to call it. So it makes sense that when you get pullbacks, that these names that have more air in them, so to say, more air is going to come out on the way down. So, of course, next week, the earnings really picks up with the Mag 7. So I think we'll have a lot better of a picture next week, especially probably after Microsoft reports.
You mentioned this politics being an important part of this equation, and I think that people are really underappreciating, particularly in the financial world, at least FinTwit and retail traders. They're not grasping how important the changes that have happened since June 27th have been. I'm going to get on a little bit of a soapbox here about tariffs because I was reviewing the data, and part of the reason why I felt so strongly about this being such an influence is because if you look back to what happened in March 2018 when President Trump announced the tariffs for aluminum and steel, there was a very sharp negative reaction by the U.S. dollar. The dollar was down over 1% that day from high to low. And from when the debate took place on June 27th to when it became clear on Thursday, July 18th, that President Biden was going to resign, the dollar was getting slammed. The dollar was getting slammed because the market was pricing in those tariffs that you're talking about, Thomas. I have a very strong negative disposition towards tariffs because they are good in theory, but ultimately they end up terrible in practice. The theory is that you're going to protect domestic industries, but in practice, it means enriching a small segment at the expense of the broader economy. And none other than Adam Smith espoused this point in A Wealth of Nations. Anton's favorite author, John Maynard Keynes, did this in The General Theory of Unemployment. And more broadly speaking, the empirical data collected over the past 400 years suggests that protectionist tariffs are a bad idea. But I'm going to go into 3 specific reasons why they are. And this is something I wrote up like 6 years ago, and it still is true today. But 3 main reasons why these tariffs are a bad idea, and why an unwind of Donald Trump being the far and away clear favorite and that potential down ballot drag probably ends a bit of this tariff-induced trade where rates were up, where companies that would import a lot of raw materials from abroad were getting hit. The domestic producers are doing really, really well. The Trump basket up, the Biden basket down. Point number 1, protectionism always ends up with a bias because it serves to protect domestic producers in competition with foreign producers. This means protectionist policies like a tariff favor industries in competition with foreign manufacturers over those who are not. So, for example, tariffs on imported manufactured goods might be good for domestic U.S. manufacturers, but they'll be bad for literally everyone else, particularly U.S. agriculture or U.S. service jobs who are not in competition with those foreign producers. Secondly, protectionism by its nature leads to political artifice. Only those in preferred industries with their goods protected benefit from tariffs. Their profit margins are kept intact or boosted, but the costs, the retaliatory tariffs from foreign governments or a lack of access to cheaper substitute goods, are shared by everyone in the economy. This makes it a useful tool for politicians to secure political support from, say, disaffected workers who have seen their jobs move abroad for cheaper labor. For instance, if the government slaps a steel tariff or a tariff on imported steel, the U.S. steel industry will notice the benefit right away, while the rest of the country will perceive that they are paying more for any goods with steel in the industrial process. All the additional surplus created is captured by the producer while the consumer foots the bill. This is bad policy on its own, but it gets substantially worse when unprotected industries plead with Congress for similar favor. And then protectionism ultimately leads directly to political corruption as politicians become more pressured to start protecting every single industry at home. Over time, members of Congress are more likely to be bribed by their corporate executives and titans of industry to keep those tariffs in place because they're going to protect the profit margins after all. There's 2 particular examples in history of tariffs gone wrong. Of course, the Tariff of Abominations of 1828 was enacted to protect northern factories from foreign competition, but mainly to promote U.S. industry after the War of 1812. While this helped the nascent industrial processes in the North, it led to significant market incongruities in the Southern agricultural economy. The impact on the South was so severe that it, along with another tariff in 1832, led to the nullification crisis in South Carolina. As history tells us, the theory that a state can threaten to nullify federal law proved to be a fairly significant development because Southern states, along with South Carolina, justified seceding from the Union in 1861 on such grounds of the tariffs that began in 1828. The second other significant example historically is the Smoot-Hawley Act of 1930, a precursor to World War II, just as the Tariff of Abominations was a precursor to the U.S. Civil War. This was the last time that America embraced a protectionist policy under President Herbert Hoover, levying taxes of up to 50% of imported goods. It was widely considered to be a blundering mistake that crippled global economic activity and helped accelerate the decline into the Great Depression. And the global free trade only ended when Congress passed the Reciprocal Trade Act of 1934, which gave the president, then FDR, the power to negotiate bilateral trade deals with other countries without congressional approval. However, by that time of 1934, the global economy had been broken long enough for fascism to rise in Europe. And then, of course, World War II came. I'm going to get off my soapbox here. I feel very strongly against tariffs. That's not to say that I don't think that some industries need tariffs or some countries need tariffs along the way. But the way that these tariffs are situated and have been pitched to the American public as an economic policy would mean higher inflation moving forward, which means a more shallow Fed rate cut cycle, which means the Fed is less able to help the economy moving forward if it and runs into trouble. That would be bad for the dollar if tariffs are in place. It's good for the dollar if the tariffs are potentially not going to be there. So the dollar rebounding since Thursday is important because Thursday night, as Ilya knows, as Dylan Radigan knows, as Victor Jones knows, is the night that I got a call from a very close friend who said that Biden's officially dropping out on Sunday morning. And Anton, I was happy to share that news with you, which ultimately proved correct. So there's a bigger picture going on here right now in this market. And the picture is that there's now an unwind of the trade and the conditions that have been in place since June 27th. The conditions for that trade to unwind are in place for the next few weeks because whatever bump that Trump would have received post-assassination attempt and RNC perhaps is being papered over by the candidate switcheroo between Biden and Kamala. And there is typically a candidate bump in the polls following the conventions anyhow. So if Kamala just took away Trump's steam from the RNC, then Kamala probably gets her own bump come mid-August. And if the polls keep moving towards a more competitive race, then the base case scenario for the market becomes gridlock in DC, which means the tariffs aren't likely there, which is all to say that the price action of the dollar is probably going to be done. And we probably trade higher here henceforth. And this Russell outperformance of the NASDAQ probably narrows, and if not reverses in the coming weeks. So should the bulls be really worried? No, I think if we get 5620 in the S&P, you can feel fine about it. All right. I'm done. Thomas, please respond to my diatribe there. Did I sound like a madman, political hack, or should we actually be thinking about the market responding to the presidential election cycle in July?
Maybe you should go over to CNBC, but go pull up a chart of soybeans really quick. So China, the retaliatory tariffs that they put on in 2018, they raised the tariffs rate on U.S. soybeans from 3% to 25%. Now, the assassination attempt was on the 13th. They're saying market opened back up July 15th after that. And, the fear was Trump's odds, rose a lot. The soybean market said, China, this whole trade war retaliation, they may target soybeans again, increase that 25% even more, because that 25% is still in place from 2018. The market sold off soybeans, but then they said, wait a second, China may try to front load purchases before Trump gets in power and they escalate this even more. Soybeans start going up. Market's saying, maybe China will buy all these soybeans before then to get what they need. Now they've been getting the tariffs in 2018. What it did to U.S. farmers is it pretty much shift China's source of soybeans from the U.S. to Brazil, and they're still on Brazil. So it's caused a lot of damage to the U.S. soybean market. The soybean sales for the U.S. were $3.1 billion in 2018. That was down all the way from $12.3 billion the year before. So tariffs pretty much slashed the U.S. soybean export market to China in a quarter, right? So, you're kind of seeing these, you said that China targeted agriculture products. They did, soybeans especially. You kind of see some of those fears not only in the financial markets, equities and things like that, but looking at soybeans and other commodities, you're seeing that trade play out as well. And of course, Monday there was also decent inspection numbers for exports on the week, but they usually don't move the market that much. I think it was kind of you can see the political trade priced into soybeans there.
Thomas, you brought up a good point about the trade war impacting demand for U.S. soybeans. This is a quick chart here of U.S. exports and Brazil exports of soybeans. You could see that once the tariffs kick into place, the red bars here begin to decline and those purple bars explode higher. That's the difference. This is Brazil absorbing the demand from China that the U.S. gets rid of. And so that's kind of the point. Retaliatory tariffs, it's not just the U.S. puts tariffs on things and everyone else goes, well, I guess that's game over. Right. It usually leads to weaker demand for U.S. goods, and in turn, it's going to mean lost jobs. The George W. Bush steel tariffs are a really good example of the good in theory, bad in practice. A study that was done by the Trade Partnership Worldwide, which is obviously a lobbying group. They pointed out that based on the companies that were directly impacted from the steel tariffs, it was a net negative consequence. 200,000 Americans lost their job due to higher steel prices in industries not directly related to the tariffs. That was $4 billion in lost wages from February to November 2002 alone. More American workers lost their jobs in 2002 to higher steel prices than the total number of people employed by the steel industry itself. In total, by the end of that year, 187,500 Americans were employed by U.S. steel producers by December 22. 1 out of 4 job losses occurred in metal manufacturing, machinery, and equipment. Every U.S. state experienced employment losses from higher steel costs, and the analysis showed that American steel consumers bore heavy costs from higher steel prices caused by shortages, tariff tariffs and trade remedy duties, among other factors. How did the dollar do during that climb? The dollar, and I have a chart here that I made from 6 years ago. This is what the impact of, here is when the tariffs were going to be considered. The red line in May 22 is when the steel tariffs were announced. Green is when the tariffs are lifted, and that's when the decline ends and when you begin a sideways period of trade in the US dollar. So tariffs on, bad for the economy, bad for the dollar, reduces growth potential. That's bad. Reduces real growth potential. That's bad. Higher inflation. Gosh, Thomas, this is a bad idea. So if we can get to a scenario in the market here politically where the market goes back towards gridlock being the base case scenario, and then quite frankly, it doesn't matter who's president because you're only going to get continuing resolutions coming out of a Congress that's gridlocked. It doesn't matter if Harris or Trump is president at that point in time. Mega cap over small cap dominance. Why would we think anything else unless there's a recession going on? I have a hard time playing into that. Anton, how are you, as someone who is, I don't want to say politically agnostic, and you're certainly not someone with their head in the sand like an ostrich when it comes to news, but you're a very disciplined quant. You're more of the Sosnoff camp than I am, right? You come from the data, the numbers. What does the historical distribution of returns say? What's the volatility profile? Do you care about election seasonality? Do you look back at what happened in 2020 or 2016 or et cetera, to get a guidepost for how markets may respond during this time? Or do you not care at all about what's happening in politics when it comes to making decisions, if it's something like ESNQ, ZNZB? How do you deal with this exogenous noise into your trading decisions?
No, I'm not as, that's good. Such a can of worms I can take this, but no, I'm not the person who's going to say markets, it doesn't matter, because I think quite frankly that's a lazy response, especially to somebody who is trading, with your own money, or even if you're a portfolio manager. I mean, to say that just the election doesn't matter, I think is a little bit of a lazy response. But I also don't think that many people think that. I think what Tom means by that is that your tangible P&L will not be different if you know what's going to happen or you know what's going on in the markets versus you don't know at all. Your tangible P&L as a trader, statistically speaking, is as probable to be positive as it is negative, regardless of what you know or don't know. That's his perspective, and there is some truth to that. And I think a lot more people say that there's more information that actually isn't as relevant when you think about a historical distribution. That's where the historical distribution comes in. So I'll give you credit that it is important to know what's going on, because you can reposition things in your portfolio in order to either reduce risk or even amplify risk if you want to, if you're playing for something. But I don't think it's necessarily the information. Mostly, right? There are exceptions, and I think when you look at something like a macro policy, like tariffs, right? I mean, and I'm on 100% agreement with you. That's one of the things I think the Keynesian camp and the Austrian camp agree on. The only question now is I'm not sure why Keynesians think that the central banks have an exception to that rule, but we're not going to go there. That's a different conversation for a different time. But in terms of economic tariffs on goods and services, I think, knowing that may slow down the effect of interest rate cuts, right? That's important to know, not necessarily because it'll tell you what side to take, but it'll allow you to adjust your portfolio to have a little bit less risk going forward, or more risk, depending on, what's your composition of your portfolio. So, and again, it's kind of a wishy-washy answer because it doesn't necessarily answer the question. But again, if the question is, does the information matter? I think absolutely it matters. But I don't think it matters to the standpoint of, oh my gosh, am I going to go long this versus I wouldn't have gone long this if I didn't know this was happening, right? I think that's a very rare occurrence where I'm like, oh my gosh, now I know this piece of information. Now I'm going to go long this. And I'm saying unless you're insider trading, that's a different scape, right? Because I mean, here, bonds is a good example, right? I'll just close this with an example. We talked on Sunday, and we were going to go long bonds, but we were already long bonds, regardless of what we were talking about on Sunday. And a lot of times, I think that's the effect, is that even if you know a piece of information that you didn't really know before, and this is why a lot of times we agree on air on our positions. I come at it from a completely different perspective than you do, but a lot of the times we get the same trade result, or at least bias in the markets. Totally different perspectives, yet we have come to the same conclusion. So does the information actually matter when it comes to that conclusion? If I came to the same conclusion you did about a variety of things in the past, but I had no idea that you were that the reason you were doing the same thing was for a myriad of different reasons that I didn't even know existed. You know what I mean? So that's why it's so hard to actually prove that information actually matters. The reason it's hard to prove is because if somebody who literally doesn't know anything places a trade, and somebody who does know something places the same trade, and both make money, how can you attribute that to the information? It's really hard to do that statistically, actually. And the way we conduct science actually admonishes us not to put a lot of emphasis on a singular event that may like you pointed. I'm not saying this is an example, but this happened here, and then this happened to the chart, and then this happened here, and the chart ended. Now, that could be a cause and effect relationship, but I think 99% of the time people think it's more of a cause and effect relationship than it actually is. So I hope that gave some clarity to your question. I'm not sure if it answered it directly, but I think it's important to take this with a lot of grain of salt.
Yeah, right. I was just trying to think of an example in my head, right? If let's say the last day of any given month, let's just say the last day of July, hypothetical. I don't know this to be true, but the last day of July is green 100% of the time, right? Or is green 90% of the time. And it just so happens that 90% of the time that it's green, every time that it's green those times, it rains that day. If I get to a decision to trade the market long on the last day of July, and I look at the data and I go, oh, it's going to be it's going to be a cloudy day tomorrow. Market's going to go up because every time it's cloudy on the last day of July, it goes up. And you go to a different data set and say, well, the market's always green the last day of July. And we both arrive at the same conclusion. Is it because it's a sunny day or rainy day? Is it, what's the it doesn't really matter. We obviously know that the weather doesn't influence the markets, although it does influence people's moods. And so maybe if it's raining, you're feeling worse about things. And so that makes you more bearish. I digress. You can skin the cat more than one way. It's difficult to point your finger to any particular catalyst as a turning point, although they do occur. And I do want to put that caveat in here as to why I do believe in these things, because I have an old chart.
I just think you have to, a lot of people, I think that in one succinct way, the counterfactual position, a lot of people don't consider the counterfactual, which is so important when talking about economics and history.
This is the Euro chart during the Eurozone debt crisis. There's 2 weeks that stick out to me in particular. Here, the week of July 23rd, 2012. This is the week that Mario Draghi said that the ECB will do whatever it takes to save the euro. This is the first time he made such a declaration during the crisis. The ECB is going to do whatever it takes to save the euro. You guys have problems? We're going to fix it. The other date is here in May, the first week of May 2014, when Draghi effectively declared that we were definitively cutting rates and that we were going to be cutting. And there's no going back. And that marked the top for the euro for since then. We actually haven't traded higher since then. Nevertheless, there are some catalysts that you can point to as a direct A to B. The ECB says they're going to do whatever it takes to save the currency. The currency stops falling. But for something like this, Anton, if it's because of a market being overbought, and 95% of the time when the market's overbought in these conditions, you tend to get a pullback, or 3 red days that are 1% down is super rare. So VIX can't go any higher unless you get a 4th one. I feel like we're more or less all on the same page here. More clarity is needed, and that's the only thing that matters at all. We have 4 minutes left here, guys. Let's talk about what happened in oil here today, because that was a pretty steep pullback. and then ultimately a rebound. Let's go to that daily chart. 76.96 here. I guess the good part first, I wish Radigan and Spivak were here for this because all three of us have been short oil for the past few weeks. We're looking at a $76.40 target here, and that was the exact low for today's session. $76.40. Why? The distance between the high and the neckline was exactly $3.60. And so $3.60 less 80 gives you $76.40. So from my perspective on oil, if you were short, the trade's done, at least for that reason. The head and shoulders pattern is no longer a valid reason to remain short. I don't have an oil position on now. I'm out. And I don't intend on putting anything on directionally in the near term. What intrigues me, however, is the fact that for the better part of the last year, this is a market that's traded between 85 and 70. And we are sitting at $77 in the CLU4 contract. Anton, a 20.4 IVR. You and me, when we first started working together, doing Futures Power Hour together, getting to know each other, we made our friendship over iron condors and crude oil the first 6 months of 2023. Why not go back to that right now?
I don't see why not. I mean, finally, oil volatility. I was looking at this the last couple of days, has finally ticked up to a level where I think you can justify doing it. I mean, again, a 26% IVX is still on the low side, but IV ranks 20 when it was lower, a couple weeks ago. I don't think it's a wrong way to look at it. I think you absolutely can. You just gotta still keep your size small because volatility in oil has been a lot higher before. And if you do get that, you want to take advantage of it even more. So start small, but I think it's time to introduce that trade back again.
I'm with you, Thomas. We got oil covered here in the final few minutes. Let's talk about these precious metals. Gold prices broke the uptrend from the June and early July swing lows. We are trying to climb back through there today. We are in the middle of a range. Should traders be looking? And this is, okay, just making sure that's right. This is a market, obviously, that has pulled back in significantly the past few sessions. Would you be directionally bullish in metals here or continue to treat them as the choppy ranges that they've been in for the past 3 months?
I think you got to keep doing a range trade here. You've had no decisive break outside of this range yet, so we're in the middle, so it's probably the perfect time to do something like an iron condor, capture that range whatever way you can.
Thomas, we have 1 minute left. Take us out here. What are your thoughts for the rest of this week? What's your highest conviction, not trade that you have on now, but what's the thing on your watch list that you are most closely ready to jump in with?
I'm going to short the next spike in natural gas, and there's a couple of reasons why. Number one, there's a deep contango in the market. We're only a few months away from the winter or the withdrawal season, which officially starts in the U.S. in November. So some people are taking a bullish stance saying that producers are going to cut right now because prices have sold off for the last month. That won't happen when there's a deep contango, especially this close to winter. What producers are going to do is they're going to hedge their costs. They're going to sell futures contracts, the December, January, February contracts. They're going to keep their production running because you don't want to cut it this close to winter. So if you do that, it takes weeks to get it back online. And into the winter, you'll see a price spike. Of course, the winter prices, those farther dated contracts are going to fall as futures are sold. The spot prices or the near-term futures are going to rise as, those are bought. Number two is the arbitrage to the east has been opening up. So the JKM premium over the Dutch pricing is rose over $2 this week. So is that natural gas? Those LNG cargoes are going to get sent east. It's still really good demand in the Asian market, which is of course why the JKM price is rising relative to those Dutch prices. And number three, exports are going to increase later this year per any forecast you look at, which is another reason why producers aren't going to cut their production right now. So any price spikes we see, I think, are going to be sold. And you just saw this with the last price spike, right? We're down 4 or 5% today. So I'm pretty strongly convicted to selling strength in natural gas.
We're going to have to leave it there because overtime is out of time for this Tuesday, July 23rd. We'll be back tomorrow, same time, same place here on Tasty Live, 4 p.m. Eastern, 3 Central, right after last call. We'll continue to have a rotating cast of guests this week as Radigan and Spivak bears have been scared away, so maybe it's time to rally the market back to all-time highs. But for Thomas Westwater and Anton Kulikov, I've been Chris Vecchio. Tasty Live at Night is up next. Be sure not to miss me and Victor Jones later today. The Price of Truth, 6 p.m. Eastern, 5 Central here on Tasty Live. See you then.
And we get slightly more optimistic in the markets today. Retail sales out of the U.S. coming in line with expectations. So not really a controversial impetus there, but we do get another interesting bit of inflation data from outside the U.S., and it is once again softer than expected. We're going to get more inflation data coming at us today, and if it continues to undershoot, the question is going to have to be, why is it that global inflation is coming down faster than generally anticipated by economists? Is that as good of a thing as it sounds at first blush? This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And that is the conversation that we're going to be having today. We're going to look at what's come out here this morning with the inflation numbers that we got out of Canada. We're going to look ahead to the ones coming out from the UK later on in the next 24 hours and try to surmise what all of that means for the way forward here and whether the message in these numbers is as encouraging as it appears to be at face value. So we begin our conversation here with what happened this morning. This is Canada's CPI report here. As we can see, it saw inflation come down to 2.7% in June. That was a bit lower than expected by economists. What we were looking for was actually a hold at that 2.9% level from the prior month. As it happened, inflation undershot expectations, echoing the PMI data that we were discussing on the show yesterday as likely to set the stage for a softer result. We got that softer result here. And so what we are looking at this point is yet another central bank that has inflation data that undershot expectations. Of course, this comes in something of a sequence. We saw that last week, both U.S. and Chinese CPI numbers were weaker than anticipated, and that this is now becoming a bit of a narrative. Now, in the wake of these numbers, we see that the outlook for Bank of Canada monetary policy has become more dovish. There was a shift here in the futures pricing for the number of cuts still on the menu. Now 95 basis points in further easing for the year. That's anticipated. Of course, that includes the cut that's already occurred in June, which of course then sets up the stage for another 3 cuts to happen this year. The probability that a cut is coming at next week's Bank of Canada meeting has in fact increased from 80 to 90%, according to statistics that were put together by Bloomberg. So we're looking at a situation here where the market saw a weak CPI number, nudged down the Canadian dollar a bit when the number came out. Yields fell across maturities for Canadian bonds, and the likelihood of a cut next week firmed up. So the story here, once again, inflation is lower than anticipated by economists for yet another major economy, and the specter of rate cuts has been pulled forward for yet another major economy. The next piece of this puzzle coming up in the hours ahead comes from the UK. Here, we are expecting to see that inflation has held unchanged this go around. It is seen here at 2%. That would be the same as the 3-year low that was set in May. However, if we take a look at the way that economic data out of the UK has been performing recently relative to expectations, what we find is that there's been increasing disappointment recently. And what that may very well do is set the stage for a surprise on the downside. Now, why might that be the case? Well, if we unpack what UK inflation has been made of recently, what we find is that energy continues to be the biggest sort of disinflationary force here. Of the 2% inflation recorded in May, nearly 7/10 of a percentage point. So call it 70 almost basis points of the 200 basis point reading was a downshift in fuel, essentially. Whereas the upside was mainly in discretionary spending categories, in recreation and in hospitality, restaurants and hotels. Now, what's interesting about this setup here is, of course, what this does is suggest that the remaining parts of the inflation story in the UK ought to be relatively amenable to what's going on with the business cycle, because to the extent that this is discretionary spending, it should be relatively susceptible to people tightening their belts and pulling away from sort of optional expenses, as it were, and refocusing on the essentials in any kind of an economic downturn, which of course seems to have begun already. The latest set of UK PMI data has the growth rate for the composite. This is both the manufacturing and the service sector taken together, down to a 3-month low. And again, as we've just looked at for the path of UK economic data, you can see right here, it's started to weaken relative to forecasts. Now, it is above that 0 line, so the tendency is still for the data to be relatively positive, given expectations, but the spread has started to weaken. And indeed, if inflation is made up at this point mainly of discretionary spending and the economy is slowing, then you have the kind of ingredients you might look for this data to disappoint. As with Canada, of course, the implication would be that the Bank of England might be sooner to cut rates. Now, if we look at where we stand currently, the expectation is that there is on the menu basically two cuts. At 47 basis points here, we're looking at almost 50 basis points or almost two cuts on the menu. In fact, the probability that we get those two cuts is implied here at 88%. If we look at the timing, we can see that the market is somewhat confounded by when the easing will begin. We can see that it's already in the market by November. So we've gone from 5.25% to sub 5%. So somewhere in here, August or September, seems like the likely time when the Bank of England might pull the trigger. In fact, in August, the probability is a formidable 64%. We can see we're already most of the way into a cut, just 9 basis points off. If this were 5, exactly, it would be a full 25 basis point reduction. As it happens, there's only 16 basis points that have already been baked in, and then 13 basis points by September. So we're, or rather 19 by September. So we're looking at the market's basically trying to nail down. Is it going to happen sooner? Is it going to happen later? And if the CPI data undershoots expectations, then of course the implication would be sooner rather than later. And we'd have yet another story where a central bank is seeing disinflation occur faster than the markets are anticipating, and thereby is being told, don't delay, start the easing cycle. As a matter of fact, this is a story that has been happening across much of the major central banks. Obviously, we've seen a rapid shift in what the pricing looks like for the Fed. The ECB has had a little bit of a wiggle to the top side here, but of course, they've already begun their rate cut cycle. The data out of Canada, as we just saw, gave us a dovish shift there. The data out of Canada and Australia is telling us that similar story. There's still no cuts expected out of Australia this year, but we can see that whereas there was even perhaps a bit of hiking speculation here at the start of July, that is giving way. So it looks like what there is, and of course we're watching what the CPI data does with this Bank of England line, the yellow one, which has been somewhat idling here, but we can see that the general thrust for this has been in the direction of a more dovish outlook for the world's major central banks. Let's call it over the past several weeks. What this lines up with, seemingly, is a downturn in global economic data. So we can see here that, according to Citigroup at least, the trend in global economic outcomes has increasingly deteriorated. Outcomes are coming increasingly worse than expectations. In fact, we can see here's that zero line. Both the numbers out of the global economy as a whole and those for the major G10 economies look very similar here, and both are now below zero, which is to say that the driving sources of demand are increasingly misfiring. The emerging market story catches up sometime later. We can see the peak in emerging markets comes after the peak in major markets and the global total, but the trend is down. There's perhaps about a month's worth of lag here, and that makes sense. A lot of the emerging markets are vendors that serve demand from the major economies. And of course, what that means is that any slowdown is likely to begin in the major economies. That, of course, is where we had the most rabid inflation, because that's where we had the most stimulus provision to combat COVID. That has also meant that that's where most of the rate hikes have been centered. So it makes sense that this would be the place where the squeeze on growth would occur first. But it also makes sense that as that squeeze tightens, there is spillover into economies that depend on that demand in order to have growth of their own. And so with some lag, emerging markets would follow downward. So what we're seeing here in this story about increasingly pronounced disinflation across the key economies, be it China and the US last week, or Canada and perhaps the UK this week, what we are seeing is perhaps signs of weaker demand. When prices are falling, it is not because demand is robust. It is because markets have a hard time clearing without the price coming down. That is to say, demand is too weak to soak up all of the supply at a given level of price, and so the price has to come down such that more demand is stirred up to absorb supply. And so what all of this might well speak to in the context of what's been going on with global economic data, which is to say deterioration, is the growing risk of a global downturn. The coming due, finally, of the bill on a blistering year and a half of rate hikes from the start of 2022 through about the middle of 2023 by nearly every major central bank around the world, with, of course, the notable exception of the Bank of Japan. In fact, the latest numbers on global PMIs from S&P Global suggest that June already marked the first month of deceleration in global economic activity, both manufacturing and services, in 7 months. We've seen a very clear build in the pace of global economic growth from a low in September, shock of shocks. The global stocks rally, as led by Wall Street, of course, begins at the end of October going into November, just as this bottoming is occurring. So from then and through May, the global economy is accelerating. And in June, pointedly takes a step lower. Now, if this lines up with what we've been seeing here, which is to say from about April, May, going into June, the economic outcomes have started to deteriorate. That, of course, is how you get this right here. That comes with this right here. Well, then the disinflation that we're seeing overshoot expectations, and the implications that that is having on what central banks are expected to do, which is to say, stimulate with greater urgency, cut rates more and cut them sooner, all of that seems to suggest that in unison, major monetary policy makers around the world are expected to find the economic backdrop increasingly intolerable and beckoning of action. So the story here may well be that just around the corner, we have the global downshift in economic performance that all of this tightening was feared to produce and has thus far failed to produce until perhaps the beginning of June. And if, in fact, and this is still an if, because, of course, there's still quite a bit of resilience left in markets, certainly the S&P 500 and the NASDAQ hovering near record highs does not speak to any degree of panic just yet. But markets are ever forward-looking. And if all of this repositioning speaks to some sort of elevated global recession risk now on the immediate horizon, then the positive story we've seen in global risk appetite, of course, as told with gusto by the performance of U.S. equities, that might be coming to an end sooner rather than later. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at where Wall Street closed and what that might mean for global markets going forward. I am on the Price of Truth with Victor Jones on Wednesdays. I am on with Chris for Futures Power Hour on Fridays. Back on with Victor for First Call on Sundays, with Tom as well. Writing for the News and Insights portion of tastylive.com, and opining sporadically on the platform formerly known as Twitter at Ilias Pivac. Thanks very much for joining. Macro Money's back tomorrow. Happy trading.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. It was I got my apps
so
all
you're
done.
Outside and you're pulling
Yes.
Can you see it from the hot tub?
Yes,
wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
And Tom, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton, if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, which does work. It's the greatest feature we have because it makes nice ice cubes. And
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water, which
you got
a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured. I said,
hey, the ice, it ain't bussin', I'll tell you that much.
I said,
Mickey,
I said we have ghetto ice here, and I got lectured. And I go,
you should get lectured.
We have mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a cup right now. Wait.
Hey, it's not a cup, it's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use. But Tom's already used his hand in all the ice.
And that mug,
nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God! Has anybody died here recently?
It's a dome mug.
Has anybody died?
The ice is so old; it has like that old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold, Nick. It's called mold.
Like it has like kind of that stale smell to
freezer
it.
burn.
Yeah,
freezer burn.
Yeah,
Oh,
exactly.
yeah, the ice is freezer burnt. Yeah.
That just means it's colder.
A little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
Not
Perfect. I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling the whole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
If you missed the live show, here's our cherry on top weekly recap.
How come I'm the only person in the office?
Tell you why.
Yeah, what happened, girl?
I had been waiting for a year and a half for for Tony's guy, this is the truth, to come fix my HVAC system.
Nobody else can fix his heat and air conditioning. He's had other people there.
It's too complex a system.
What time is he supposed to be there?
Hold on, it's him texting. Oh,
yeah. We need to stop meeting on Mondays because last Monday it was the debacle with the RV. This Monday the debacle with the missus. Next Monday we're
Hey! Update on the RV. I got a bid for it.
Reasonable?
No, 30% below asking price, but I got one.
It's literally 78 degrees and muggy outside, and you guys look like you're going to Vail.
Well, I wore a t-shirt underneath mine, which I never usually do because Beth says I never wear a t-shirt under mine. So I did it for...
We appreciate it.
I had a white t-shirt on, but I didn't want to, I thought it was like too revealing, showing all the muscles and, you know.
All the muscles? Oh, sweetie.
Have you seen? I did bring the video in. Have you seen?
No, can you play the video?
Really?
Beth, do you have the
Is this
video?
happening?
You have the video?
For the past few months, she's been trying to get Scott Sheridan together with a woman you will meet in just a few moments. Scott, your age?
25.
Occupation?
Trade at the options exchange.
How important is physical appearance to you on a scale of 1 to 10 when you meet a woman?
10.
Hey, that's some good hair.
Was that the weekend that you two met?
Yes. So Al, who was in that video, invited me. And he's like, there's a bachelor's party, and said, come with. And I said, but I don't know anybody. He's like, doesn't matter, you'll stay in my room. So we went, I'm in Al's room. It's just a regular room, 2 beds. I'm like, okay, great. And I said, what's that door for in the corner? And he's like, that's the Tom's room. And I opened it up, and it was a Rain Man suite, the 2 split level. I couldn't see Tom, it was huge. I just turned around, I looked at Al, I said, who's Tom? And 36 years later, we're sitting here.
Get the full scoop by checking out the archives at tastylive.com.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
I had to
rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live. Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain.
What is going on? Welcome back to the Bad Taste segment. Today's Tuesday, another day in the market. How are we doing today, Julia?
I'm just surviving.
We're surviving.
We're just surviving. Yeah, I feel like we have a whole lot of stuff going on this week.
Yeah.
Very exciting. I think it was like a Lenin quote, right? Where there's like decades when nothing happens and then weeks when decades happen. And it feels like that's just been, the last couple of days since we streamed last.
Weeks when decades happened.
Yeah, that's been the last couple of days.
I like that. I like that term. That's a good one. It's a good one. I know we chopped around a little bit today. I know we'll get into the market here in a second, but it was kind of sold off. Then we had a rally. Then we kind of just chopped around. But what's been on top of your mind though? How are we feeling about the overall market, volatility index, those kind of things? Do you have any thoughts and opinions right now?
I do. I got what's the word? My portfolio got shaken up a little bit last week, and now we have like a bunch of major tech earnings that just came out, and there's a whole bunch of stuff that can happen before the market's open tomorrow. But I kind of I got the feeling that I was kind of like over managing some of my positions. So even though some of my positions were just not in a great spot, I'm like, you know what? Maybe this isn't the best thing to do. I'm just gonna let them ride and see what happens. So tomorrow is gonna be an interesting day. But this is the year of trying new things and not trading earnings. How about you? Anything that's top of mind?
Every year is a year of trying new things. No, I mean, Tesla was top of mind before I go back to Tesla. I had to surrender, put in the white flag on Celsius. I haven't even been looking to see what it was doing today, but yesterday I had to surrender, put in the white flag on Celsius. We had another pretty decent down day the day before, and it looks like we were down on Celsius again today. So exited that one at 2 times the credit. Lost on that one, so was swift on that one. Didn't even question it. I was like, I'm not going to be messing around with Celsius anymore. Let me get out of here and manage and do what I got to do. Celsius, but other than Celsius, Tesla. I know Tesla ended up being a donk. I don't know if anybody watching that traded Tesla had any positions on in Tesla. I didn't, but IB rank was pretty solid. Tesla went on a massive run. I don't know what the earnings said or what the verdict was, but as of now, it's had a pretty decent sell-off since the market's closed about an hour and a half, 40 minutes ago. So
well, Tesla has already said AI, so they had to whip something else out. I mean, like the last I mean, last earnings, like they definitely, they had a strong, like the stock had a strong movement, but they didn't have a strong report. And it was based on like robo-taxi and like low cost option discussions. Smart move on Celsius. Yeah. Celsius is nobody's friend this week, last couple of weeks.
Yeah.
Maybe ever. But yeah, so I have to look and do a dive into their report. But so far it's been, pretty interesting day with earnings. Like Spotify, that was a stonk.
Did Spot stunk?
Spot did indeed stonk. It ended the day 12% up. GE was a bit of a stonk, 5.7% up. Lockheed Martin, some crazy reason. There's a lot of need for defense contracting, and so Lockheed Martin, 5.6% up. UPS was a donk, like a hardcore donk, down 12%.
Yeah.
GM down 6%. I can't even drink them anymore. Yeah, it brings too many like harsh memories back.
What's that? The Celsius, or what were we talking about?
Celsius, yeah.
Celsius,
Farming over in Japan. So yeah, that's certainly been like earnings has been top of mind for me. In terms of my actual positions, they're not happy with me. My crude position actually recovered a little bit, which is nice. But crude had like a rough sell-off earlier today. My Baidu position kind of flat for now. The Russell and the NASDAQ, part of the reason why I kept this position on is because I was kind of expecting some of these tech company earnings to sort of like reverse the trend a little bit that we've been seeing, sort of bring the NASDAQ up a little bit, lift it up, and then, hopefully lower the Russell a little bit, kind of reverse this trend, which we're going to talk about later. So I guess we're going to have to see how the markets open tomorrow. So far, great, but yeah, who knows? Otherwise, I got my Keys position, my Russell position. Micron, just in general, chip stocks have been getting hit pretty hard the last couple weeks, potentially signaling a shift in investor sentiment. And XOP, just a little bit more of that energy sector exposure, energy product exposure. So that's kind of what I'm looking at right now. Things like Tesla's top of mind now that Celsius is out of the picture. Anything else that you're kind of looking at?
Overall SPY, kind of have I sold the call spread in there. I have about 25 days left to expiration, so I'm going to need to think to what I want to do to manage that. Kind of break even-ish. I'm up about $30. It hasn't really gone anywhere. The initial sell, we've had a little bit of a rally from the last couple of days. From Friday, we had a pretty big gap up over the weekend, and then Monday we had a decent move. So that kind of gave back some of the gains that I had on SPY. So I'm kind of just being patient with that one, but that's really what my eye is on. And then VIX has just had me on the edge. If we get another leg down and we go past the low we put in on Friday, who knows what the sentiment and fear and where the volatility might want to head to. If we can do that, I don't know what may happen, but my eye's just been on that one. I'm not trying to get my hopes up. It's been teasing the whole 7, almost 8 months we've been into this year, but I hope it's still alive. Yeah.
Yeah, this whole year's been a tease. I don't know. I'm kind of excited at the prospect of a shakeup. I have
me too.
Data we're going to talk about, but just to kind of preview it a little bit. So talked last week about how there's been kind of a decoupling between the Russell and the NASDAQ, how they're usually like not the most correlated in the world, but still they tend to move in tandem. And we actually, if you look at like monthly correlation, we had the lowest correlation between the two indices ever, like last week, basically. So if you look at last week, month going back, that correlation actually dropped to negative. They moved, those moves were big enough to give them an inverse correlation.
Wow.
That's pretty significant.
Yeah.
That's something that you see during like sell-offs. Take that for what you will. But it's kind of nice that there's a little bit of a shakeup. I just have to weather the storm long enough.
Honestly, I'm always looking forward to it, especially with most of my positions being defined risk.
Yeah.
I really never mind when a shakeup does come, but because I was a little on edge with that's why I didn't really hesitate with my Celsius position, since that one was naked. Now that I have no naked positions on, I'm all for a little bit of a shakeup. So we'll see what we get for the rest of the week. We're a little early.
Yeah, we're a little bit early, but no, I'm inclined to agree. I think management, you have to be mindful of management no matter what you're trading, but it's a lot more, I think, important when you're dealing with undefined risk positions. That's when management mechanics, I think, gotta be real mindful about it and probably strict around maybe even stop losses, although that's contentious.
I was like, you know what? I'll lean on the side of discipline and managing risk rather than, Celsius sold off even more. What if we get a nice little bounce? I'm like, you know what? We're going to stick to discipline here and we'll move on and deploy the capital elsewhere.
Discipline. Also, we had a question from Organic Farming. What are some top defense stocks besides Raytheon, Lockheed Martin, and Boeing? It also counts as a defense stock. Boeing does. Lone mentioned, I'm probably getting this, Northrop. Grumman? Question. I think that's how you pronounce it. I've only ever read it. But they do nuclear stuff, and they're typically General Dynamics. I think is also another one, but I'm not real big into the defense space.
Mm-hmm.
So there's all of that. Yeah. Lockheed Martin, have a good day today. CrowdStrike actually bounced a little bit today, and man, I thought Boeing was speedrunning bankruptcy. CrowdStrike, oh man, dude, hopefully you didn't get impacted by when the IT systems went down. Did you? Hopefully not.
No, a little bit. It was one of those things where I was refreshing a lot of stuff and I didn't really understand, what exactly was going on, but how was it on your end?
Well, so I was fine. Apparently, hilariously enough, Southwest Airlines was also fine because they haven't updated their system since like 1993, apparently. They were still using Windows 3. So like of all the airlines that had technical difficulties, Southwest was just chugging along, which I think is hilarious. But yeah, it's wild to see that level of impact that like one decision that one company makes can affect so many different industries worldwide. Might have been.
What was that? Was that a wake-up call? What do you think came out of that for some?
I think I don't know, Grumpy Mike made an interesting point because we were talking about this quite a bit earlier today and on Stream for Bad Trader, which is that like several aspects of like our IT systems, or like IT infrastructure has been outdated for a while. Kind of got the vibe that like it was a matter of time before like until something broke to this scale. So this might have just been the thing that did it, is kind of the vibe that I get, but I'm not a cybersecurity expert. I'm not an IT expert, but I'm kind of inclined to agree. So it's just like, it's such an insanely complex system of tech infrastructure that I'm not surprised that like a lot of it's outdated or some of it's outdated, but still crazy to see on the scale. Otherwise, I know that I think they're going to be like the CEO of CrowdStrike is going to be testifying in front of Congress ? Sometime in the near future. So that's going to be interesting. I'm curious to see the lawsuits. Like there was so much revenue that got lost because of this. Lawsuits are going to be flooding in. I have no idea how that's going to get handled, but I guess we'll see.
Yeah, I know they have earnings, September 4th. So, I mean, that's a little ways away. We got about like a month and a half till that comes. And I wonder if there'll be a little bit more information coming out on like the legal side of things before or post earnings. So that'll be a good one.
The first thing I thought of was like malpractice insurance, right? Because like doctors have to get malpractice insurance to protect, like negligence or whatever it is, or like lawsuits that come from that. Like, what's the CrowdStrike equivalent? Do you have one? Like, I don't know, but earnings is going to be interesting. And this was one of the newest additions to the S&P. I think, I don't remember exactly, but maybe like a couple months ago. So
I mean, CrowdStrike was going ham. I mean, if you look before it even, I mean, this thing was, I don't know if we wouldn't consider it a sleeper build. I mean, I guess you could last August consider it a sleeper build, but I mean, CrowdStrike was going ham. So this doesn't do their underlying service unless you're that was sitting on the sidelines and now you're like, wow, look at this discount.
Well, I mean, to be fair, like they're still up on the year, which is crazy. They're still green on the year by like
pretty good amount,
like that. So that goes to show you how how much of a tear they were on. They had a very strong year overall. But I don't know, eating some popcorn, waiting for those earnings. And I'm waiting to see the lawsuits. I'm like, what's going to come out of this? This is, again, like such a crazy scope of companies and businesses that got affected. Like, this is such a mess. Like, how do international companies handle something like this? How does Microsoft get involved? Because it was Microsoft systems that were impacted primarily by this update. So there's so many questions I have, and I'm going to hopefully get some answers.
Well, if there was some companies that was affiliated with CrowdStrike, they definitely now are going to have precautions in place if it was the first time that this happened. So it'll be interesting to see how some of those companies move forward.
Yeah, right? Like, how,
because you don't know what you don't know, and you don't know what you're going to need until something like that happens. That's so an anomaly almost, you know?
Yeah. It's an anomaly. And it's also, here's the thing, right? Because like we work in product stuff for Bad Trader, right? Like we develop products, we release products in the App Store. It's a different scale, obviously, but there's a huge rule. You never release on a Friday.
Really?
Something gets broken, everyone's out for the next 2 days. Like people out of the office for the next 2 days, which just slows down your capacity to fix it. You never release on a Friday. You release any other day. They released on a Friday, and I knew people that were trying to fly home and their flights got delayed. So it's a mess. It's a big old mess.
Yeah.
Yeah, but that's, I think, market-wise updates. I'm trying to think what else. I think, yeah, like Tesla donked. Google, I think, might have been pretty unchanged, if I remember correctly, like very moderate donk. I think Enphase also reported. We're looking like moderate stonk. That's not too bad. So yeah, market's going to be interesting tomorrow. Definitely not. Thought Tesla had at least one more good one left in them, but I guess AI.
Hey, it might. Don't speak too soon.
Yeah, there's a lot
Don't
that
speak
can
too soon.
happen.
This might be
the
the next leg up. I don't know. I'm just kidding.
Without kernel access, nothing could have happened. That's very due to previous EU ruling. See, like this is what I find so interesting about this. Because like this is like a bunch of, I assume like international companies are going to get involved. I don't know how regulators are going to get involved. So I don't know. We're gonna have to see. But nice little tour to market, some interesting earnings that I'm excited to see on the open tomorrow. Do you want to hop into some trivia?
Let's get into it. We got 2 truths and a lie today.
Let's do it. Okay, so do you want me to do the bookkeeping? Do you want to do the bookkeeping?
You got it. But I will say one thing, guys. We do have an app. So if you weren't aware, we do have an app. Go check us out. We have it's a new sick finance app. We got new features coming out all the time.
Great.
You can go ahead and finish it off, Julia.
We do have a new sick finance app. It's over in the App Store and the Google Play Store. So if you want to come hang out with us, we got cool, written content from some of our hosts. We got some trading updates that are hopefully going to be coming out in the next few months that I'm excited about. And you can find us over in the App Store and the Google Play Store. And then additionally, if you're watching over on the Tasty Live website and you want to come throw your answers in YouTube chat, you can find us on Tasty Live's YouTube channel at Tasty Live Show. And as well, our Twitter is kind of popping. So if you want to go follow us on Twitter, Luis does a really cool job managing it. That's over at Bad Trader app. You can find us over there posting news and stock market information and such. But now, without further ado,
yes,
2 truths and a lie.
Details. 2 truths and a lie. What do we got today? Truth or lie number 1. The company Lyft was founded in 2012 as a ride-sharing service and went public in 2019. Number 2, we have the company Salesforce. Oh, would you look at that? Known for its customer relationship management software, was founded in 1999 and went public in 2004. Number 3, the technology company Zoom Video Communications, known for its video conferencing software, was founded in 2011 and went public in 2019. Out of these 3, everybody, which one is the lie? Is the fib?
Chad. Is the
fib white lie?
What could it be? We're looking for 2 truths and a lie. The company Lyft was founded in 2012 and ride-sharing service went public in 2019. Kind of tracks. We also don't know exactly what about this could be wrong, but last week was kind of dense with information. So I think it's like the dates is what I'm primarily looking at. So the company Salesforce, known for its customer relationship management software, was founded in 1999 and went public in 2004. That seems really early. But Salesforce is a pretty big company. And then
this one is tough, I will say.
I know, it's tough, right?
This one's tough, yeah.
The technology company Zoom Video Communications, known for its video conferencing software, was founded in 2011 and went public in 2019. Okay, chat, we're looking for the one lie amongst these truths. What could it be? I can't think about Zoom Video Communications without thinking of the start of the pandemic, when investors thought that the ticker for Zoom, which is ZM, was in fact ZOOM, which I think is like a defunct Chinese technology company, and they drove up the price by like 1,200%. And then they had to delist the stock because investors were that confused. And when people talk about market efficiency, I just point to that and be like, predict that. I dare you. Anyway, okay, chat, what are we thinking? Love that blob. Nice to see you. It's looking like lie is number 2. I was going to say, it seems like kind of an early date for the founding of Salesforce. In 1999 and went public in 2004. Either 1 or 2, I don't know. I also don't know, Lone. This is a tricky one.
No, this I will say this one's a little bit of a play on words that would easily go by if you don't really think about it.
You gotta really think about it. You gotta stew on it.
Yeah. This one's more of a play on words, I would say.
Now I'm trying to remember when Lyft went public, because I thought Lyft and Uber and DoorDash all kind of went public around the same time. And that was around like 2018, 2019, something like that. Absolute Beginner says 3. We are all over the place, y'all. The technology company Zoom Video Communications, known for its video conferencing software, was founded in 2011 and went public in 2019. Boo. I'm kind of leaning towards 3 because Actually, shit, I don't know. Because if Zoom was founded in 2011 and went public in 2019, but Skype was also, wasn't Skype around 2010? And then it got acquired? Oh, man. Lie number 2, I don't know, chat. You know, I'm going to go with my gut, which is that 99 and 2004 seems very early for Salesforce. I'm not confident in that, but that might also be the consensus in chat. I'm going to say number 2 is the lie. That's my guess.
Cool. The lie on this one is actually number 1, and here's what it is. So I know here, Lyft Company was founded in 2012 when the world was apparently supposed to end. I remember the movie. As a ride-sharing service, Lyft actually started out as a carpooling service. What's the difference between ride-sharing and carpooling?
That's a great question.
Absolutely. So Lyft used to have it to where you can pick other people up along the same ride. And they discontinued that to compete with Uber in that way. So it's a very small detail, but Lyft, adjusted their business model to that to compete with Uber a little bit more. But they started off as carpooling, so you'd be in the car with random people rather than having your own secure ride.
Have you ever, you know how like in a math question, they give you a bunch of numbers that are literally just meant to distract you? You don't need them at all when you have to solve the problem. That's what you did.
I absolutely
did that, and I fell for it, and I'm so mad. All right, whatever. That's fine. Carpool service. That was 2 truths and a lie. Yeah. Good job, Chad. It looks like Steve got it right and might have been the only one. All right, good job, guys. Let's go to number 2.
All right, guys. Number 2, Airbnb. Truth or lie number 1. Airbnb Incorporation was founded in 2008 by Brian Chesky, Joe Gebbia, and Nathan B. as a platform to rent out lodging and experiences. It went public in 2020 and has since become a major player in the travel industry. Number 2, Tesla was founded in 2003 by Martin Eberhard and Mark Tarpenning with the vision of producing electric vehicles. Elon Musk joined the company shortly after and became its largest investor and CEO. Tesla went public in 2010. Number 3, WeWork. Good old WeWork. WeWork was founded in 2010 by Adam N. and Miguel McKelvey as a co-working space provider. The company successfully went public in 2019 despite facing significant financial scrutiny. Which one is the lie out of these 3?
Oh man, I think chat and I are on the same page. This is harder than the other one. This is harder than the last one. All right, chat, what do we think? We're looking for a lie. First one about Airbnb, founded in 2008 by Brian Chesky, Joe Gebbia, and Nathan Bleck. Not going to try. Nathan B. As a platform to rent out lodging and experiences. It went public in 2020 and has since become a major player in the travel industry. Okay. Number 2 is about Tesla, founded in 2003 by Martin E. and Mark T.
I know.
With the vision of producing electric vehicles. Elon joined in shortly after and became its largest investor and CEO. Tesla went public in 2010. Seems reasonable. WeWork was also founded in 2010 by Adam Newman. That one's definitely true. And Miguel M. As a co-working space provider, the company successfully went public in 2019 despite facing significant financial scrutiny. Lord. Okay. Oh man, this is harder than the last one. So the only one that I'm kind of leaning towards is number 1 being the lie, because I feel like I remember something about Airbnb coming up in a trivia a couple months ago, or like a month ago, a couple weeks ago. And it was started as like an air mattress rental service, ? So I don't know, chat. Go ahead, give your answers over in chat. I am not confident at all, but I'm kind of leaning towards number 1 being the lie. So I'm going to go ahead and lock that in. Yeah.
We're going number 1?
Yeah.
The lie is actually WeWork.
Oh, shit. All right.
And this is it. So WeWork's planned IPO in 2019 was withdrawn due to financial leadership controversies, so it didn't end up going public in 2019.
That makes
WeWork
sense.
was really nice. I know.
Huge.
Yeah, it was really nice. I know there was one out here in Tampa, and I remember going in there. I was like, "Wow, this is nice." And I didn't know they were going to be going bankrupt. I don't know if you utilized WeWork at all or used any of those co-working spaces, but it was nice. But I guess it didn't. They were struggling.
Yeah, they that's an interesting one because I know that Adam Newman was like kind of a controversial figure, sort of like made decisions that arguably weren't the best for the company. But then they also had a ton of real estate exposure. You know, in 2020, when like corporate real estate just went out the window for, you know, a year, it's still not where it used to be. They were really heavily exposed, but oh man, that's okay. I was totally off. I think Crypto Psycho 07 got it right. It might have been the only one. So good job out of you. If that was a guess, even better job because it was better than my guess.
Fun facts for the day. Fun facts for the day.
Bamboozling for sure. And then the last little tidbit that I wanted to talk about, I made a tweet about this, kind of talking about my thoughts a little more. So if you want to go find that, you can find me over on Twitter. It's at FinancePhoton. But I was really surprised when I saw this because when you look at the monthly correlation between the NASDAQ and the Russell, so typically these two indices, they're not the most correlated in the world. Like the SPY and the NASDAQ tend to move together much more. But they're still pretty correlated, right? 0.78 is their historical correlation. And when you go back to 2000, we're actually just coming out of an all-time low for that correlation, which means those big moves that we had in the Russell and the NASDAQ, where we had these really big moves to the upside in the Russell and very large moves to the downside in the NASDAQ, were actually so significant that they skewed the monthly correlation to be negative between these two indices, which does not happen that much. And it's actually the lowest that was ever recorded. So an interesting question came up today over on Bad Trader when we were talking about this, which is like, is this a signal potentially for like a pairs trade? And so, because typically a lot of people use correlation to determine whether or not to put on a pairs trade, and they look for deviations in that correlation, and they put on, you know, they trade the spreads with the expectation that the correlations eventually and the movements are eventually going to revert back to their historical relationship. And so my feedback on that, I guess, was that like this divergence in the Russell and the NASDAQ kind of came about, or at least became more noticeable after CPI came out, and it came in cooler than expected, which might indicate that investors are kind of shifting into riskier assets. They're a little bit more comfortable moving away from mega cap companies and into sort of smaller cap companies. And if that's the case and that trend persists, then a short-term pair trade might not be successful because this could potentially be indicative of a longer-term like trend in the market that sort of differs from our usual expectation between these two.
Yeah.
So that being said, the part about this that we can certainly discern is that there was a lot more diversification, you know, potential in these two assets in the last month, and that could potentially continue. But in terms of it being a trading signal, I don't know. I'm a little bit skeptical because this kind of seems like a shift, I guess, like maybe one that could propagate for a while.
We will see. This looks like a pretty the visuals always help. Hearing the information, but seeing it visually relative to the other data points is always helpful.
Yeah.
Yeah.
So if that's not some decoupling, I don't know what is.
That is some decoupling if I've ever seen some decoupling, Julia. Thanks for bringing this to our attention.
I think that might be some decoupling. So I think we're just about out of time. E, is there anything that you want to kind of leave on right before we head out?
No, it's still early in the week. Tomorrow's Wednesday, hump day. We'll see what we get for the rest of the market week. And manage your positions. Use some discipline. That's what I had to do with Celsius, but that's all I got today, Julia.
Yeah, discipline. But yeah, I think that's some great 2 cents. So thank you guys, everybody, for joining us. E, thank you so much for putting together these truths and a lie. This has been a fun one. So everybody be careful out there. Good luck with your earnings. Be mindful of that risk, and we'll catch you later. We'll catch you on Thursday. Peace out.
Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
If you missed the live show, here's our cherry on top weekly recap.
you're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting?
And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Oh, yeah. It is July 23rd, a little bit after 5 p.m., and you know what that means. It's time for Tasty Live's evening show, The Price of Truth, a little podcast where we like to explore the incentives that govern our world. The idea is simple, my friends. Have great ideas, great minds. It's been a while. Come on and share great ideas. Today is no different. We have with us the one, the only, the baby-faced Chris Vecchio. Chris, how you doing, my friend?
I'm doing well, and good to see you in studio. I know how excited you are for the DNC now that you came back to the States early.
There are a lot of reasons I came back to Chicago, my friend, and let me just